has also been on the offer for sale or the OFS stock exchange mechanism. Especially, I would like to speak of the PSUs and the government divestment which is happening. I think you've seen close to 20,000 crores being raised by the government over the last couple of months through OFS. I think this is a very heartening sign that, instead of looking at privatization, which has, got its own set of challenges, for the government to liquidate, to make use of, the buoyancy in the market, which is being seen right now, to liquidate small stakes to help it achieve the minimum public shareholding goal.
That's right. So lots of various aspects which require the public market support and the investors buying those papers, the appetite really coming in. Now, Harshal, when we talk about this particular aspect, how is the investor appetite? Of course, the domestic institutional investors have done heavy lifting in several cycles from the erstwhile time when P. Chidambaram was the finance minister, and he used to be on roadshows selling India's story. And at that time, FII was more like a hot money coming in and coming out, swinging our market and giving a lot of volatility, but not as much of a stable currency. At the particular moment, Harshal, what is the sense you're getting in terms of the DII support coming in? And in terms of the valuations, are we correctly valuing the companies as well?
Well, honestly, if you ask me in terms of valuations, I feel that if you compare Indian markets to global markets, Indian markets are not really undervalued. I feel that the Indian markets have been underperforming markets. Well, yes, as much as I agree that DIIs have done the heavy lifting and are successfully still doing it, but I still feel that somewhere the FII capital is necessary for that one boost that we need our markets to remove their all-time high. But the current problem, I feel that FIIs are chasing a global theme, that is AI and semiconductors, as we are seeing in respect to Kospi, Taiwan. They are overtaking Indian markets. They're very small markets, but they've taken over Indian markets on the basis of a couple of stocks, Samsung and SK Hynix. You look at Kospi, you look at Taiwan, you look at Nasdaq, you look at Japan. They've been doing fantastic. And Indian markets since September 2024 have close to given negative returns. It has been almost 2 years of time and price correction. And the closest sector that we had to AI in India was Indian IT, which is apparently 50% down from its all-time high. So I personally feel that the Indian markets is lagging the sector that has been the sector of the flavor, that has been the sector that FIIs have been chasing. So I feel that currently that has been a flaw in the market. That is the reason why our markets have not really been performing. But I also feel that FIIs should soon start pouring in money, because once the AI bubble bursts out, the flaw that we had is going to turn into our strongest point, because the Indian markets have been proof from the AI and the semiconductor global run that has been around. So I think the Indian markets are now, I won't say that very undervalued, but I would say that they have done their fair share of time and price correction, which makes it a very attractive market. And looking at the USD INR, which is around 94, 95, it makes it a really value bet for FIIs to come in back.
That's right. And Vikram, of course, looking at all these aspects, as an investor, if you have to really roll out a few portfolio companies in the IPO, first of all, if you have a pipeline, you can share. And on the other hand, why is the equity market considered the best way of value unlocking and exit opportunity for the VC community now in India compared to many other options, including mergers and acquisitions?
Yeah, so if you look at a tech and product company, the primary way in which value unlock could happen are only three, right? It could be IPO, it could be an M&A, or it could be a secondary sale. Now, M&A is the reality of the world is in India. Like if you look at 100 million plus cash M&As in the tech product space, they are sporadic. Like we could count them on fingers of our one hand, right? Two is secondaries. A secondary buyer also is looking for a company where he can get an exit, right? And for larger companies, it's mostly, again, an IPO. So I think everything boils down to, can this company be an IPO-able company if it is a large kind of outcome that we want? The other factor that you need to keep in mind is that the denominator, which is the size of the funds or the size of capital that is getting deployed in the country, is increasing day by day, right? Hypothetically, let's say venture capital is going to deploy X billion dollars in next 5 years in India. For just to return a three-bagger, right? That X billion has to be 3X billion. Now, 3X billion ain't coming from M&As or secondaries. You need IPOs to happen,
Yes.
right?
I'm glad
So
you said that, Vikram, that our IPO market is that much more rewarding. But if I may, having tracked this for 2 decades, I would also say that you have also compressed the life cycle. Earlier, VCs used to hand over in secondary sale to the private equity, and the private equity used to take it through the growth stage and then make it IPO ready. And that particular cycle has been cut off, and VCs are directly now going for the IPO. And that compression has happened over time. So that gives a much larger benefit to the early investors as well. Would you agree?
I think cycles, I don't think have compressed crazily, because to build a large company, I think in this country, except AI, it still takes a decade, right? Now, some fund strategies may have that patience, some may not have that patience. But one essential component, Nisha, like, which is beyond numbers,
Yes.
it goes back to the founder. Does a founder want to build a generational company, right, which exists even beyond he or she existing? And if that is the answer, like 9 out of 10 times, the only answer is a publicly listed company, an institution that is created, wherein professionals come, value unlock continues. So that's how we look at it.
Definitely, very well pointed, Vikram. Over the several years, we've seen young founders really finding high point of their time when they are a publicly listed company. Pranav, I have 30 seconds. Retail participation, extremely crucial. How is the analysis and in terms of the expectation of the participation?
Well, retail investors primarily come in for listing gains. And, this was earlier guessed, but a couple of years back, SEBI did a study on this, which showed that, 60-70% of by value of retail would exit IPOs, within a week's time. So we need to be cognizant of that. And, my advice to retail investors is also always that, there's nothing wrong with the strategy, as long as you also liquidate on listing day in case it lists at a discount. But all the same, for retail investors to come in and to answer your question, you need to see some good listings. I think, like my panelist mentioned, the few listings which are lined up for July. If you have good listing pops for those, then you will see, retail application going up.
All right. Thank you so much, Pranav Haldia, as well as Harshal Dasani and Vikram Gawande for this very interesting conversation. And we are just at the beginning of the IPO wave, which is beginning from some very good quality names which are really coming to the market. First from the house of SBI, which is starting from this week itself. Thank you so much, gentlemen, for joining in. And with that, it's a wrap on this edition of The Big Question. Thank you to all the viewers for joining in. Thank you.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com. is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
In fresh escalations, the US launches a series of military strikes against Tehran earlier today after accusing Tehran of attacking commercial vessels transiting the Strait of Hormuz. The US has also revoked Iran oil waiver after the attacks. US futures, meanwhile, rebound marginally after the major indices closed lower in the previous session, weighed down by a renewed sell-off in tech stocks. Crude oil surges amid fresh escalations between US and Iran. Benchmark snapped a 4-session winning streak on Tuesday as profit booking offset early gains. Additionally, weekly expiry-related volatility kept sentiment subdued. Global cues set to drive the Wall Street today, even as GIFT Nifty hints at a flat opening. India's leading industry bodies are set to appear before the Office of the United States Trade Representative to challenge allegations of forced labor and industrial overcapacity as the US considers imposing fresh tariffs on Indian goods under its Section 301 investigation. Good morning. You're watching Markets Today with me, Shreyansi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that. Take a very quick look at the lengthy handover that we have for you this morning when it comes to tensions in West Asia that have escalated sharply once again. You do have the United States that has launched a fresh wave of strikes when it comes to Iran after alleged attacks on commercial ships in the Strait of Hormuz. In fact, according to US officials, the targets included air defense systems, missile sites, drone launch facilities, and port infrastructure as well. Washington has also revoked a sanctions waiver, in fact, that had allowed limited Iranian oil exports. And that's something that you have as a key update coming in. We'll get you some insights on that as well in terms of the resultant impact that we could be penciling in just a bit. But before we do that, Iranian media have reported multiple explosions in the south of the country, while Tehran has also warned that it's going to be taking all necessary measures to defend its national security, raising fears of further escalation when it comes to the entire region as a whole. So that's something that you're looking at as a very, very important update. And speaking of important updates, let's quickly take a look at the global setup that we have for you this morning as well. And let's start by taking a look at oil prices. And you've seen oil really, in terms of Brent, really reclaiming that $76 a barrel mark, as you can see on your screens. About a 2% uptick is something that you had coming in. The overnight move actually was much sharper, somewhere close to 3% uptick really coming in. When you talk about Brent as well, $76 a barrel is the level that you're seeing yet again emerging for Brent on the back of some of those supply concerns re-emerging. Other than that, there's WTI with that 1.9% uptick as well, somewhere close to $72 a barrel. And uptick nonetheless, but that's the important update that you're looking at. Talking about US markets as well, largely a little bit of a tepid session that you had coming in on the back of that tech sell-off really emerging to the forefront when you talk about US markets. As you can see on your screens, it's Nasdaq that's leading losses with about a 1% decline. S&P 500 also on the back foot, about 0.5% lower, and 0.3% downtick coming in for Dow Jones. And not a very exciting handover in terms of US futures as well. When you talk about that as well, largely close to the flat line. That's the US futures for you right now. Nasdaq about 0.3% higher as well, and that's the only pocket of decisive uptick, if you can even call it that, when you talk about US futures, because lastly close to the flat line, like I mentioned. When you talk about Asian markets as well, it's quite the interesting handover there as well. A little bit of a mixed move is something that you're seeing right now. So with Nikkei about 0.1% lower, Shanghai just about a little bit of an uptick, 0.2% higher right now, but not something to really write home about. But it is really the spotlight that is on oil prices right now, given all of those supply concerns that have come back to the forefront, as you can see on your screens. Let's get you all of those insights as promised. In fact, Peter Maguire, CEO Trading.com Australia, joins us on the show. Peter, a very good morning. And, it is a very, very interesting handover right now. One, you do have the oil sanctions waiver. That's something that you're looking at as a key update. Other than that, the Hormuz tensions are yet again back in focus. How are you looking at this sort of impact? A little bit of a knee-jerk move, at least overnight when it comes to oil prices.
Yes, good morning, Shreyansi. Yeah, it certainly is. It's knee-jerk, but it's still fairly positive in the sense move to the upside. Nearly 2.2% for WTI. Brent's well up as well. And the overall theme, you saw a sell-off as far as equities, US 10-year running at 455, and you've got a US dollar index at 101.15. So there's been a flight to safety as far as US dollar. Oil prices are up, and that geopolitical concern is back as centre stage. Let's see where it rolls over the next 24 to 36 hours, whether it maintains these price points or even trends higher. We've just got to see any retaliatory action from Iran, and it's very much a work in progress.
Absolutely. And Peter, let's talk about the elephant in the room right now as well. There are some global glut concerns as well when it comes to oil prices, and that's been really weighing on prices as well. What do you have to say about that as well? Do you think that that is something that the market is looking at too closely and hunting for the devil in the detail, or do you see that those concerns could really well be on sufficient grounds there?
Well, I think they're on sufficient grounds. I think Q3 in the best part of probably the second half, I'd say, that September sort of timeline, it'll really come home to roost, and certainly in Q4, if the increase in production is there, and that seems to be the mantra that all of these producers are saying, Shreyansi. There was talk that Iraq would produce up to 7 million barrels a day. So that's just the one starting point. And the fragility as far as trying to keep all of these actors together, being OPEC, it's going to be dynamic. It's going to be very fascinating how it unfolds. And we all understand what Aramco did yesterday, the Saudi producer, as far as price, so and offering a discount. So it's, again, very much a work in progress. Let's see how this year trends. But I'm going to say if the glut materializes, prices will come down significantly from here.
And when you're talking about the OPEC hike as well, that 188,000 barrels per day, thereabout hike coming in for the July quota, do you think that that's a little bit symbolic? Or do you think that, that was based on prior assumptions? How are you reading into that one as well?
Well, I think it was probably, it is symbolic. We've got to understand that the growth factor over the Northern Hemisphere summer, normally more production, more consumption. And the other turn is that this situation in Iran and America, if it does, it settles down. And, we say that today after what we've seen in the last 12 hours. But if it was to settle down over the next 6 or 10 weeks, then I feel as though that's going to carry forward. It's going to be softer inflation, more consumption, and more GDP and oil prices softening, which is going to be a benefit for consumers and naturally for countries globally.
And Peter, just before we let you go, just your top 3 factors, and I'll take the first one, out of the list as well. That's definitely commentary coming in from US President Trump, and anything that he does from here on, the US reaction really is something that we're watching out for. That said and done, which are the top 3 factors that you're looking at when it comes to oil prices?
I'm looking at any retaliatory action from Iran. That's got to be number one. That's main focus, Shreyansi. Then the US dollar, how that trends after this situation, if it does trend significantly higher from here and takes a 101.50 out, and where the prices move, and of course US dollar, US 10-year and 2-year. So I think that's the focus, and that'll run across to equities, of course.
No, absolutely. And thank you so much, Peter, for taking time out and joining us bright and early this morning, at least for us, in terms of the outlook coming in and what you could be penciling in when it comes to oil prices. But speaking of outlook, let's also talk to you about what's going to be happening when it comes to our markets as well, and whatever the FNOQs right now are indicating bright and early this morning as well. In fact, Puneet is joining in with just that update really coming in. And Puneet, it is a very, very interesting morning right now. You do have a lot of factors and a lot of global cues at that.
Well, most certainly oil continues to, of course, be one of the key ones. But when you look at the implied open, that has been a key indication on most days, I would say, in the last week as well. Today, though, it has been with rigor. So you're seeing almost a 200-point downtick, and yet again, the 24,400 mark, once again, this is, of course, led by global factors, but we're not able to sustain at that level. So you will see pressure there, very close to that level yet again. As I mentioned, 24,800 was the next level that we were watching out for. But let's continue to monitor what happens with the index level today as well, because it's been a day and as well as a week for the benchmarks to watch out for. The Bank Nifty also has been at a similar trajectory. It has been positive. 58,200 was one level that we were watching out for. Yesterday, we sustained that level despite some pressure on the banking names. But yet again, let's look at the factors that will be having an impact on these as well. So you've seen cash market yet again, the third consecutive day of buying for the foreign investors. We haven't gotten too much of a chance to say that, but it's not with too much rigor. So roughly around 300 to 400 crores, of course, given the quantum that they are capable of, it's a very lower number, but still in the green. And the index long, yet again, continues to be depressed at just the 10.7 odd mark. So still about 89 to 90% short positions being maintained by foreign investors at this point of time. You also have seen that in terms of the open interest levels we highlighted over the last couple of days, that there's not too much being built in above that 24,500 level. So you've seen levels at 24,400, 500 for the calls, but not too much ahead, which means that there is near-term uncertainty and likely to consolidate at this level. Even for the puts, you've seen 24,000, the big red candlestick there, continuing to show that at that level, the markets feel that we could see some pressure on the index, and once it breaks, you'll see all those lower levels start to get activated as well. But stock-specific action, you've seen, in terms of Cochin Shipyard as well as Strength, both of them saw massive build-up of shorts and offer for sale for Cochin. For Trent, yesterday the business update was quite weak on Q1 basis, and hence you saw pressure on the stock. And then in terms of the open interest losers, you have seen a bunch of stocks, 361 WAM as well as Radhiko Khaitan, both counters that continue to were slightly under pressure. Their longs being unwinded on Radhiko Khaitan, but overall seeing very limited stock specific action, and hence we are continuing to maintain that it's been the next couple of weeks will be about benchmarks as we go into the earnings season. But for today, expecting pressure on the start on the index.
Absolutely, and thank you so much, Puneet, for joining us with that entire picture as well. But that said and done, let's also talk about some of the stocks that you should be keeping on the top of your radar this morning. In fact, Varsha is joining in with that entire list as well. And Varsha, a bunch of stocks that make it to your list.
Yes, absolutely. Let me start with ONGC and Oil India, wherein we all know that Brent crude has jumped 6%. So these stocks will be in focus on a positive note. Well, Minda is also in focus because of entry into four-wheeler passenger vehicle seating system segment. Idea Forge has launched a 500 crore QIP. So that stock will also be in focus. Embassy Developments, we've seen a strong Q1 business update from this counter. Seagull India has received appointed dates for 3 HAM road projects. Indian Overseas Bank has seen extension of MD and CEO's tenure. Orchid Pharma, if you see, they've done agreement with Russia's with one of the companies in Russia. So Orchid Pharma will also be in focus. You have MTAR Tech, Sterlite Tech, Shilpa Medicare. We've seen rating upgrade for all of these three counters. So keep a watch on these three counters. You have Midwest, wherein mining MOU Indonesia. There's an MOU between Indonesia government and between Midwest. Religare will also be in focus as exchanges has seen approval on demerger. Advent Energy, Transition and Reflex will also be in focus on the back of order wins. Few stocks that might see some kind of pressure. You have paint stocks, aviation and chemicals, as oil rises on Hormuz attacks, and this is a key raw material for all of these companies. So these companies might see some kind of pressure. So these are all the stocks which should be on your radar as of today.
Absolutely. Thank you so much, Varsha, for joining us with that entire update as well. Let's also talk about what makes it to Brokerage radar this morning. In fact, Jasmeet is standing by with just that update coming through and a bunch of counters that make it to your list as well, Jasmeet.
Well, Shranju, thank you for that. If you look at the overall brokerage radar, we have a lot of IT stocks in focus for today. Well, the first one is InfoEdge. We have brokerage of JP Morgan on InfoEdge, where they have maintained a rating of overweight with a target price of rupees 1350. While they do make a note that the overall building acceleration is likely because of the premiumization which you saw yesterday in trade, and InfoEdge rallied nearly 14% on the back of that good standalone numbers up move. While they also make a note that Naukri building growth is a sustainability key for the company to grow ahead. While I also have Namod on InfoEdge, while they maintain buy on this particular counter with target price of rupees 1320, while they overall called the Naukri building to have the beaten what they were estimating, and that's why they're up in the terms of stock. And they also make a note that Shiksha is a record decline level because of that AI being search increased, and the company is trying to pivot through that. While the next one is Goldman Sachs on KPIT. We do know that this particular counter maintains a neutral rating on this particular stock and also cut the target price to rupees 637 from earlier 740. And they also state that they expect the QOQ degrowth to be roughly at 5.2%, while this comes in after the company has announced a 1% of degrowth in the overall revenue because of the slowdown in the European clients. While lastly, I also have CLSA on Persistent, while they maintain the stock rating at high out conviction performance with the target price of rupees 5659. While they do say that the overall Nagarro acquisition is a perfect fit for the company and that will help the company grow further. While they also state that the overall EBIT margin they expect to see between 16 and 17% going ahead for next 6 to 8 quarters. And lastly, they see the overall 4% of EPS accretion going ahead in FY26 and 28 for this particular counter.
Absolutely, that's persistent for you, Jasmeet. But, let's also just put the spotlight on the June quarter that is expected to remain challenging when it comes to the entire IT sector. Talk about some of the factors that you're looking at as a preview in terms of the key trends this quarter.
Well, if you look at the overall June quarters, rightly said, it's muted quarter for, say, for the overall IT pack for the company. And with this company, will be entering into the fourth year of no and low growth. If we look at the key trends that we are tracking down here, is the first one that the AI-led efficiency gain is something to watch out for. If they are moving from the pivot to the actual product delivery model base, that will be in focus of how the overall AI is panning out for the companies. While the second one is a discretionary spending. We did make a note that overall HCL Tech and TCS reported that they have been slowing down a few clients in the Q4. So that commentary on that will be something to watch out for. While the fourth one would be the overall guidance. After Accenture cut its guidance, we're expecting something like Infosys HCL Tech also might see a cut down in the upper end on the back of that weak spending by the clients. And lastly, the deal ramp-ups, the AI acquisition, and the overall momentum is something that will be in focus. Now, when you look at the key trends of the tier 1 companies, the top 5 IT companies, what you're penciling in is a growth between hardly 2 to 3% and this one is in INR terms. In the CC growth is in negative to 1% for top 5 IT pack. Now, in terms of the overall EBIT, we're expecting a degrowth for TCS and Wipro on the back of that wage hike coming in for the counter, while the net profit gives a mixed figure. Now, when you look at the key triggers and the key things I'll be noticing, I'll be in focus for all these 5 companies would be for TCS, we'll be seeing the overall Coastal Cloud acquisition of that's ramping up for the company, while for Infosys, HCL Tech and Wipro, the guidance will be in focus as they give the guidance in advance. So whatever you're commenting on that, for Wipro, the Q1, Q2 guidance will be in focus. And lastly, for Tech Mahindra, the focus would be on the overall telco business. We did make a note that the Accenture reported a pretty strong telecom business and Tech Mahindra having the largest exposure to telecom business. That will be in focus to see how that pans out. Now, when you look at the tier 2 companies, the mid-cap companies for IT, we are again penciling in a growth between 2 to 4%, but the Coforge remains an outperformer. We're expecting a growth of 19% for Coforge. In terms of EBIT growth, also Coforge leads again with a 12% growth, while the net profit gives a mixed figure. We can see some impact coming in for the Coforge. Now, when you look at the key things that will be in focus for each company commentary-wise, we may not see much surprise in the mid-cap as we have been seeing from quite some time in this particular quarter. But for LTM, the focus will be on the BFSI momentum. If that was slowing down in the previous quarter, of that pans out in the Q1, while the overall commentary of reaching the target of 2x by FY31 of revenue will be in focus for LTM. Now, for Persistent, the overall focus would be on the commentary in terms of the high-tech deals and how that pans out going ahead. And lastly, for the Coforge, the acquisition that they have done recently of the Encore and the timelines for that would be in focus. So all in all, we do expect a muted quarter, but any surprises is something to watch out for. And Nifty IT has been rallying over the last couple of days as well.
Absolutely, Jasmeet. But let's, it's a busy morning for you. Let's also talk about NAC Packaging as well. That IPO is in focus. You've got a strong investor response coming in by the way of subscription. And the SWOT analysis is also quite interesting.
As rightly said, it's a quite interesting counter, given we are seeing it's a one-of-a-kind company, to be honest, and the company is into packaging where they provide various polyethylene packaging and also provide sustainable packaging for various clients. And given the boom of a quick commerce and consumer, the demand of entire packaging scale is increasing. Let's quickly understand the SWOT analysis of the company and look at the strengths what the company is good at. Now, firstly, the revenue growth has been quite strong for the company. At the revenue over the compounded year of last 3 years, the company has been growing at a rate of roughly 63% over the last 3 years. While the second strength would be the market share. The company roughly has a 10% market share when you look at the overall PLWPP baggage segment for the company, which is quite huge when you look at the scale of the company. When you look at the weakness, we do note that the single customer of the client contributes roughly 70%, which becomes a key risk and a key overhang on this particular counter. The next weakness would be overall debt reduction, which is not part of our agenda, which will be in focus given the company has high debt as well. Now, if you look at the opportunities, the company is raising this fund to fund the expansion of one of its capacity factory, which will increase the export, which will be a key opportunity for the company, which will be in focus as well. While second will be the Mexican JV that the company expects to be operational from April 2026, where we expect the overall Latin American market also to scale up going ahead. And last opportunity which we would see is the agri-export, and the boom of consumer segment is something that will help company grow. In terms of the threats, we have just 2 threats for this particular counter. While the first one is the revenues have dropped when you look at the US market, and the US market contributes majority of the revenue to the company, almost quarter of it. So what we are seeing is any US related tariff or risk on this counter might impact the company considerably, as it's 1/4 of this revenue. And the second one is the material that is used to manufacture packaging is volatile. It's linked to the crude. So any change in crude price might impact the overall performance and the margins for the company going ahead.
Absolutely, and thank you so much, Jasmeet, for joining us with all of that update also coming in when it comes to this particular IPO. So keep an eye on that as well. But in terms of what else you should be keeping an eye on, Let's also talk about the USTR probe hearing as well. On the back of the Section 301 tariff dispute, you do have Indian industry that is in the USTR hearings against tariffs. They're going to be talking about forced labor allegations. You do have CII as well as FICCI that are going to be countering some of those forced labor claims under Section 301 as well. When you talk about ACMA and Spices Body, they're going to be saying that forced labor is not inherent in the Indian industry, and that's also something that they're going to be defending as well. Other than that, industry bodies are going to be taking part in the hearing, like I mentioned today as well, and India already contested some of those US findings of forced labor and overcapacity. So that's something that you're looking at on the back of the Section 301 tariffs as well, after the reciprocal duties were struck down by SCOTUS as well, and that's something that sources are suggesting to us as well. So definitely keep an eye on this one as well. That, in fact, is all the time that we have on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Welcome to India Market Open right here on NDTV Profit from the NDTV Profit Suzlon studio with me, Neeraj Shah, and my colleague Sharad Dubey. In a bit, we'll get in reinforcements, Sharad, but the markets seem to need some reinforcements, isn't it? Because let's face it, there were two problems yesterday for world markets. That one, that the chip makers are now in a tizzy of their own, and there is fresh geopolitical concerns.
Exactly, and of course yesterday in the last trading session we saw a little bit of profit booking also. Of course there was that expiry at play. We ended at the day's low level. That was a little bit of concern, but interesting a positive announcement or a positive news? Argentina goes ahead.
yeah, for all Messi fans, yes.
Yes.
But to be honest, Sharad, when I looked at that match yesterday, and I'm a self-proclaimed Messi fan, I would like to believe that I'm amongst the biggest Messi fans in India.
Right.
But yesterday, genuinely, Egypt deserved to win.
Yes.
I mean, there was a lot of refereeing decisions that went against them.
A little bit of questions, yes.
Little bit of questions, yeah. But the only caveat or the only thing that I'll submit is that independent of all of that, they were at 2-0 at the 79th minute. And then Argentina scored 3 clean goals. You
There
can't
was one
take
from
that
Messi
away.
also.
And one from Messi. So pretty good, yeah.
Yeah. So a lot of global changes are happening, and the concern is coming. The war risk premium, Neeraj, is coming back, and just wanted to understand the entire global setup, how things are panning out. The US markets, they have closed lower as the tensions has risen again, once again in the Strait of Hormuz. The indices futures, they are actually indicating that the US-Iran pact is changing. Now, US began a series of strikes against Iran after 3 commercial vehicles which were struck in Strait of Hormuz. Now, US importantly has revoked the license to Iran to sell oil after the strikes. Now, looking at the bond yields, they have jumped up as the inflation fears have returned again. Look at the 10-year bond yield, that's around 4.5%. 30-year levels have also crossed that 5% mark. And oil prices, that's the spike coming in. US, as they have launched the attacks, Brent above that $76 mark right now. And Asian markets also, we can see a little bit of tech-led sell-off is happening. Looking at SpaceX, interesting performance check. If you look at it, they have completed the largest IPO in the history. Neeraj, the amount is $75 billion, raising that amount. Listing gain was 11%. And looking at how things are moving, this trading currently right now at 149 to 150, close to its listing price, but still down almost 34% from all-time high. But concern is definitely there on the chip stocks.
And geopolitics for sure. So I think that is something that you got to really note. And because geopolitics is front and center, we turn back to James Dorsey. We love talking to him. He's senior fellow, Rajaratnam School of International Studies, joins us right now on the show to talk about what's happened overnight. James, thanks so much for taking the time out and being with us. Really appreciate your time. What do you make of what's happened over the last 12 to 18 hours? Because there have been claims and claims refuted from all parties in this spectrum.
The question was not if, but when we would see escalation and a potential breakdown of the memorandum of understanding. I think the timing is very important. The Iranians are trying to exploit the differences between US President Donald Trump and his NATO allies as the NATO summit takes place in Ankara. The Iranians may be overplaying their hand this time round, because what they are asserting, quoting Article 5 of the Memorandum of Understanding, is that they have total control of the Strait of Hormuz. The fact of the matter is that what they're doing is trying to prevent Oman, together with the United States, from encouraging shipping to go through Omani territorial waters. And there's no legal basis for that. That also means that Trump really doesn't have a lot of options. Keep in mind that this whole escalation now started with Iranian attacks on vessels, a Qatari vessel, a Saudi vessel, and a third vessel that were transiting through the Omani waters.
James, hi. Very good morning. Tamanna here. You're seeing right now that Iran's overplaying its hand, but their version is very different. What happens now when it just comes down to he says, she says, and a denial that they ever conducted these strikes on the Qatari vessels in the first place? And also the speed with which US has not just struck Iran, but also revoked those oil licenses. I think that is something which will really spook crude markets, isn't it?
Well, it's definitely going to spook crude markets and in general energy markets, and even more broader, the financial markets. The problem here is that Iran's version is different, but Iran's version is that the Memorandum of Understanding says that Iran will arrange transit through the Strait of Hormuz. Iran interprets that as saying all of the Strait of Hormuz. The fact of the matter is the Strait of Hormuz is part Iranian territorial waters, part Omani territorial waters. And Oman has sovereignty over its territorial waters. Iran legally cannot impinge on that. And that's the point where Iran may be overplaying its hand, because it's not going to find a lot of international sympathy, including among those NATO countries with which the United States at the moment has strained relations over Iran. They're not going to support the Iranian position. So what you could see is instead of widening the differences between Trump and his NATO allies, Iran may be pushing them together.
James Dorsey, thank you so much for that. I mean, it's going to be stressful this morning. Pull up the implied open, and Neeraj, there's very little surprise that you're seeing a 200-point downtick. I know it's a situation of when rather than if, but the speed of the escalation, I think, is what's going to bother markets, because so far you had a lot of statements coming in from Trump that this time if we have a solution, it'll be a final one, etc., etc. But the fact that they've revoked those oil trading licenses, I mean, what happens to all the deals that have already been made?
Yeah, good question, and well, welcome to the Donald Trump era, if you will. But yeah, Tamanna, I mean, I think out here, probably your and my guess is as good as anybody else's. But suffice to say that because crude prices are higher and because we've rallied a little bit, some bit of a downtick was given. But I mean, you looked at this space fairly closely. I don't know. Difficult to say how this one unravels, isn't it?
Yeah, I don't think either side has the appetite for a full-blown conflict, where you go back to the time when a lot of countries in the surrounding area were being struck by Iran as a retaliatory matter, and the Strait of Hormuz was completely shut. The latest that I have seen is that the Strait of Hormuz is open, and maybe the amount of freight going through has reduced, but it's not that it's shut. If it gets shut, that's the really, really dangerous bit. Tim Water, Chief Market Analyst, KCM Trade, joining us this morning for more on this. Tim, it's looking like a bleak morning, at least here before the Indian markets begin, and essentially because of what's happened overnight. But this was something that would have possibly been accounted for, because it was always a possibility as skirmish starts again.
Nice to be with you again. Yes, I mean, it has been the nature of this US-Iran relations, really. Much of this year since the conflict began, and certainly since the Memorandum of Understanding was signed, this on-again, off-again nature where it's a ceasefire but really in name only. And yes, flared up again, as you say, not entirely unexpected. And inevitably we've seen those crude oil prices moving higher, and that's just taken the mood down in the markets so far, because we don't yet know what that next move will be. Will it be a phase of de-escalation again? Or will there be further escalation? How will Iran respond, for example? So that uncertainty, yes, that's weighing on markets right now, even though it is sort of part and parcel of what we've come to expect between US and Iran in this fractious relationship.
Where do you see crude going, Tim? We saw a bit of a bounce this morning, not alarmingly, but some bounce. You've gone back to 76 on the Brent. Do you see scope for much higher prices, considering up till yesterday we were talking about the problems of oversupply?
It is still an unknown factor, you're right. Yes, it has moved higher, but not alarmingly so yet. I think the market will happily take Brent sort of trading at these sort of mid-$70 levels, $75, $76 compared to where it was earlier in the conflict. But I think a lot of the reason we saw suppressed oil prices over the past month has been because of lower Chinese import demand, and also because the market has been absorbing Iranian supply, which has been de-sanctioned, if you will. But now those sanctions have been, I guess, effectively slapped back on again. That could put upside pressure on the price, but we don't yet know for how long. I guess that is the carrot the US could dangle, is that if they can get things sorted out again, then Iranian oil will be sanctioned again, or allowed to take place again, and that could see prices moving down again. So look, I expect in the near term we could see Brent operating in this sort of roughly $70 to $80 level. Which end of that spectrum it's at, I guess it depends on whether we're in that escalation or de-escalation phase, and really it's very difficult to predict at this point. But I think, as you mentioned, I think there is mutual incentive for both sides to get things back on track. For the US, lower oil, that would certainly be helpful ahead of the US elections later this year. And Iran, I think they'll be looking for economic relief as well. So yeah, upside pressure on crude now, but certainly scope for it to pull back further if we did enter a de-escalation phase once again.
Tim, good morning to you as well, I presume. As long as oil is within that spectrum, do you reckon, yeah, it is good morning. As long as oil is within that spectrum, do you reckon that emerging markets which are oil dependent will take it well and investors investing in those markets will take it well? Because, I mean, I'm just saying oil at 100 was a different kettle of fish. People would not like the macros of countries like India, Korea, etc. At 70 to 80, whichever end of the spectrum it is it acceptable levels?
I think so, yes, if it stays there. I guess that's the predication there is if it stays in this band, I think that is tolerable for the market. As you say, oil importing countries, they've had a pretty good month. The Nifty 50, for example, if you look at the gains over the past month, I think that has certainly coincided with this period of lower oil prices we have seen. I guess there is still a bit of an unknown as to, I guess, what the effects could be downstream of the Strait of Hormuz still being effectively closed for 4 months. Markets had been taking a very optimistic view in my mind in terms of where oil has been leading up to this morning, for example, where it's been positioned for a reopening of the Strait of Hormuz, but we're not there yet. So yes, a glass half full approach being taken by the market. Is that reflective of where we'll be moving forward? As I say, once the Iranian oil was absorbed, what if China then lifts their oil imports again? I think that's when we could see upward pressure on prices, and that oversupply narrative that we've heard for the past week, that could slowly dissipate and we could be seeing a tighter market again. So yes, we've had a period of lower oil, but the big question is, will it stay here? I'm not entirely convinced.
Tim, for joining in this morning. Tim Waterer there. And I suppose, yesterday we didn't have this big overhang of the geopolitical crisis back, but it was pretty tepid the way the markets closed. And if you looked at it, I'm not talking about the implied, I'm talking about how we closed yesterday. You did have that kind of a muted end to the day and a bit of a dip before we closed off for the day. You closed in flat, but you had, apart from IT stocks, everything else pretty much losing steam. The Nifty IT was the clear winner, 2.5% up. But the rest of the pack fairly dismal. Some clear standouts, especially during the close of trade, were Swiggy, because news came in that they're moving out of being a foreign-controlled company, and the street is hoping that sets the pace for Swiggy now to move to an inventory model which has better margins, etc., like Blinkit has done on Instamart. So Swiggy stock was up. I wonder if that sustains today. InfoEdge was the other star of the day after very strong business updates, and that stock really moving through the day with strength, closing on a high. On the losing side, I mean, Trent got punished because of its Q1 updates, about 12.5% down finally before markets closed and close to the low point of the day. And Kalyan Jewellers, again, on business updates was looking quite feeble. And I think, Neeraj, we're just on the verge of the main event starting, right? The quarterly results. I think that's going to take center stage from here on. But today's whole story has become about this geopolitical mess, at least in the first half.
Yeah, unfortunately so, isn't it? Because we are looking to some revival in Q1 earnings, etc., and stuff like that. And maybe some bit of it showed yesterday, Tamanna, because if I was just trying to think of how do I piece together the trade setup today, and you think of it that despite heightened volatility yesterday, the Nifty 50 did manage to close near the 24,400 mark or thereabouts. And it's good that the conversation has shifted back to the Nifty and what the Nifty is doing, because people had almost forgotten about the Nifty because banking squarely on the mid and the small caps. I think the conversation returning there is actually a really good sign. And IT came to the support, and it's just, I'm guessing it's coincidental, or maybe the charts are telling a story, but I read at least 3 technical reports, or actually I read 1, but I got at least 3 technical reports from large brokerages / technical experts talking of gains ahead in the IT index. So that's quite something to watch out for. Could the results do it? And we'll get to know about it tomorrow when TCS announces, and more importantly gives the commentary about what it does in the quarter. But keep an eye out for this one, this particular space. It did participate heavily in trade yesterday. I do foresee, for example, what people are saying, that select specialty chemical stocks will continue to reap windfall gains in Q2 as well. I've heard, without getting into individual names, but I've heard names like Deepak Nitride, Jubilant Ingravia, which has got this acetyl segment, or Acuitas, or Navin Fluorine, etc., might all have a fairly strong Q1, and therefore you watch out for some of these names getting those benefits in the quarter, and maybe, just maybe, the market's rewarding them. Maybe the market doesn't if the commentary from these companies isn't the strongest, but otherwise it'll be very interesting to see if the market rewards specific bottom-up specialty chemical companies in the quarterly results. But well, that's the trade setup, and Tamanna can't argue against the fact that if oil behaves and doesn't really flare up too much, then the focus continues to remain what India Inc. does in Q1.
Yeah, and I wonder if IT will particularly come in for some relief finally, because of the kind of hammering we saw on Samsung. I mean, imagine a company reports 19 times growth in their profits, and the street says, no, this is not good enough. We don't know if you can do this. Abhi faith hi nahi hai.
Yeah.
So if that is the underlying sentiment of fear when it comes to the global, and I'm very loosely saying AI trade because there are a lot of bits and pieces to AI trade, but for semiconductors, etc., I wonder if that gives another boost to Indian IT companies today, just by default of being on the other side of that trade. As far as the factors are concerned, a 4-day winning streak was snapped yesterday. Profit booking was seen at higher levels. It seems investors are turning cautious and choosing to preserve capital ahead of the earnings season. The overall setup does remain constructively bullish, but the market is entering a consolidation phase ahead of the Q1 earnings season. The key trigger is whether Nifty can decisively cross 24,500, immediate supports at 24,360 to 24,300, strong support at 24,200, major support at 24,000, immediate resistance at 24,500, next resistance at 24,600. For the Bank Nifty, structurally the banking trend remains highly positive. Supports at 58,100, 58,000, and then 57,800. Resistance at 58,500 to 59,000. Just a couple of India strategy notes this morning, which I thought I'll highlight. One is from Mahesh Nandurkar of Jefferies, and he's done a June 26 quarter preview. He says revenue growth is in focus. Resilient activity and rising nominal GDP should drive a revenue growth to a 13-quarter high. Keep your eye on the price, folks. Higher energy and input costs are likely to weigh on margins for select domestic companies. Earnings are expected to remain resilient, with growth ex oil and gas and metals expected to grow at 12% year on year. Lending financials, this is without the treasury income in the mix, and non-lending financials and telecom to report strong earning growths of 15% plus for the year. Cement, pharma, indigo, and chemicals to post year-on-year decline in earnings. Here's what Rhythm Desai is saying. This is the Morgan Stanley India strategy, and his earnings preview says growth is intact in June 2026. Pickup in revenue growth momentum should remain healthy in Q1, though earnings may face pressure from input cost-led margin compression. India remains in a higher earning growth phase backed by policy stimulus, with high-frequency indicators pointing to potential upside surprises. All 10 sectors are expected to register positive revenue growth. Consumer discretionary, communication services, and industrials leading the pack. Growth in earnings is likely to be led by communication services, materials, and financials. Energy and industrials are expected to report earning declines. He likes Bharti Airtel and Axis, which will be the biggest contributor to aggregate BSE Sensex earnings, while Indigo is expected to be the weakest performer. So if it's all about Q1, is the F&O setup showing that, or are we seeing some fear because of what's happening with crude, Puneet?
Well, most certainly we are seeing some impact, and the implied open is reflecting that at this point of time. But what we have seen yesterday also, that as soon as we get to the 24,400 mark, and we've seen, the world doesn't like the Nifty at that level at this point of time, because we're seeing yet again a selling signal or some pressure coming on for the Nifty 50. For the Bank Nifty also, now 8 consecutive sessions where we've seen a bullish momentum, but failure to look at that 58,700 mark. So we ended close to 58,200, which is a near-term support, but 58,800, 58,700 continues to be a very important level, post which all of those 59,000s and 60,000 levels of the world get activated on the Nifty Bank. So the last 8 sessions, we moved to that level and then, come back down again. So something to monitor in the near term. What you have seen for the foreign investors, third consecutive day of buying in the FII cash positions, not with too much rigor, of course, but it's much better placed compared to what we are seeing, especially in the F&O markets, because yet again, that 89 to 90% short ratio continues to be one of the problematic areas of where we are just before the Q1 earnings start. And the put call ratio also just seems to be signaling a neutral position at this point of time on the foreign investor side. But the open interest distribution here is where it gets interesting, because you've seen 24,400 and 24,500 continue to see the most active open interest, but the above levels not seem to be activated as of now yet. So not seeing higher open interest at 24,800 and 24,900 for the calls. For the puts, you're seeing 24,000 has continued to be one of the important levels as well. But stock specific action, Trent, definitely one of the casualties of the day yesterday. We saw a massive buildup of shorts. So did Cochin Shipyard on the back of an OFS. But apart from that, not too much action yet again in the stock specific side of things. So the overall story on benchmarks continues. IT will of course be in focus starting tomorrow with TCS earnings. You also have LTM coming out on Saturday this time around for earnings. But all of those factors will continue to be in focus.
Did I notice extra excitement when you said LTM is coming out on Saturday, Puneet?
Well, you won't have a market reaction immediately at that point of time, thankfully, with digesting. But
let's be honest. You're thinking about, Saturday ko office aake LTM track karna padega.
Well, I hope it's not a chink in the benchmark type kind of a result, but expectation.
Puneet very suavely swatting and sidestepping that question entirely. No, but that's how result season is. We're at it constantly because there's so much coming up.
I hope it's not a trend that the IT companies are picking up like
the banks. Like the
because
banks.
That is the last thing that all analyst community is also hoping for, that a trend that was started by the banking names.
Yeah, that is true. All right. These are some of the stocks that we have on our watch list. I'm starting off with Uno Minda. What's happened? They've entered into the four-wheeler passenger vehicle seating systems space. They've announced a greenfield plant in Chhatrapati Sambhaji Nagar with a 320 crore rupee investment. The facility is expected to commence operations by the fourth quarter of FY28. Project will be executed under Uno Minda Taki S Seating Private Limited, which is a joint venture with Taki S Company Limited in Japan. Now this company is a leading global automotive seating manufacturer, and Uno Minda is putting 93 crore rupees into that joint venture. They originally entered into a joint venture with this company in 2022 September. And this is for manufacturing of market seat recliners for passenger vehicles. In the first phase, the joint venture already had a revenue of 23 crores in FY26. So why is this important? Seating currently forms 7% of revenue in FY26 for the company, for Uno Minda. And currently it caters only for two-wheelers, three-wheelers, commercial vehicles and off-road. Switching, lighting, casting are the top three revenue contributors for the company, and so getting into the four-wheeler passenger vehicle seating space is also important. Cochin Shipyard is the other one. So their OFS is of course on. That had a bit of a drag on the stock yesterday. The total size is 5.04%, including a 2.52% in base issue and another 2.52% as a green shoe option. Now the base issue was oversubscribed yesterday, and then the government has announced an expansion, that is the additional stake sale, taking the total to 5.04%. So it has opened on July 7th for non-retail, will open today on 8 July for retail investors. Non-retail subscription was already at 3.5 times, including the green shoe option. And the entire stake that the government is looking at selling is about 1,896 crores. Now, by the way, in just Q1, the government has raised over 18,000 crores via OFS, including Cochin Shipyard. FY27 collections will reach 20,417 crores, and FY27 has seen the highest OFS collections since FY21. So just on that point, the government has done well in at least raising funds on OFS, because this is the constant complaint, right? Why aren't you making the most of what your assets are?
When the timing is right.
When the timing is right. So do you think the timing is still a little off?
No, I'm saying that this time around, it does seem that here that is the case. Let's hope the trajectory continues for the rest of the year.
But let's be honest, sometimes you just have to decide to do it and hope the timing is right. Who can predict anything right now?
Yeah, but At least, I mean, see, okay, the debate out here, Tamanna, is that they've got the best of the minds advising them as well, right? Even the PMAC, Nilkant Mishra, Nilesh Shah, Sajid Chinoy, etc., and all of that. So I'm sure the government has the ears or the whispers of the market to their ears whenever they want. I think these are easy things to do. Hopefully,
but who knows what Trump will do?
That is separate. Now, these are exceptional circumstances, but the last 3-4 years, they haven't managed to do it. That's the point.
Okay, so let's, at least this time, the Q1 mop-up has been good. Swiggy is the next one on my list, and I'm kind of sticking my neck out and giving it a thumbs down after the euphoria that they had yesterday. Now, why is that? Because while Swiggy has managed to get its foreign holding below 50%, it will not in itself result in change in status to the Indian-owned and controlled company formula or the space that they want to be in, and this is something CLSA is saying as well. Why is that? Because the previously proposed alteration which they wanted, the people who run the company wanted, fell short of the 75% threshold required. So within the board they need to come to that consensus. Given the foreign shareholding is now reduced, Swiggy may again try to pass that resolution. If this goes through, Swiggy's quick commerce model may shift from a marketplace model to an inventory model similar to that of Blinkit. This shift is likely to result in better supply chain control, leading to higher adjusted EBITDA margins through working capital requirements will increase. Investec has maintained a hold with a target price of 314 rupees on Swiggy. They're saying domestic holding has increased to above 50% for the first time for the company. The control aspect is yet to be addressed, because there's one thing to be Indian owned, the second is to be Indian controlled. So the IOCC, that's Indian owned and controlled company classification, allowed Blinkit to pursue an inventory model which allows for better assortment management and led to an 80 to 100 basis point adjusted EBITDA margin expansion. This provided a competitive advantage for Blinkit over players like Swiggy, Flipkart and Amazon. This IOCC classification for Swiggy will meaningfully strengthen its assortment-led growth strategy and help bring the business closer to profitability. So the only question mark and reason is because the last time they tried to do this, the board didn't really cooperate.
Yeah, this time around, I quite like CLSA's argument as well. Let's see if that is helping Swiggy. Yesterday was a good, nice flare up into Swiggy. I was surprised to see that. Let's see if it continues. Well, 3 interesting names from Tamanna's and 3 interesting names from mine. Seagull India. They've received an appointment date, or received appointment dates, if you will, for 3 HAM road projects with a combined project cost of 4,050 crores. This is a large order win. The stock was active yesterday, very likely could be a bit active today as well. Some of this was, I think, spoken about already, but let's see if this announcement spurs the stock further. Idea Forge, the QIP floor price. So it's a QIP, it's a decent size QIP, if you will. The floor price is set at 835. They might give a 5% discount or to it. But remember, it'll all depend on the quantum of appetite that the street has for Idea Forge paper. For a very large offering from Adani Enterprises as well. And despite the floor price being lower, I think the interest in the QIP ensure that the stock does well. Could well happen with Idea Forge. So I'm just drawing a parallel to how the stock price behavior could happen. So be mindful of that. If it is actually doing well today, despite the QIP price being lower than the 5% lower than the 835 mark, which is allowed, you know that there is demand for the paper. And Q1 updates, not too many unfortunately after a barrage over the last few days. Yesterday was a quiet day, but Embassy came out with the Q1 FY27 updates. The pre-sales surged 338% to 868 crores. Collections increased 54% YOY to 496 crores. Just the caveat here, Embassy had gone very, very silent and then has come back with a bang, if you will. They're doing multiple projects in Mumbai as well. So this surge is expected and may well continue. The pre-sale surge could well continue into Q2, Q3, Q4, simply because the base effect works in Embassy's favor for FY27. So be mindful of that. But let's see if the stock has any kind of a reaction.
Okay.
And the watch list.
Yeah, I thought we'll just take a look at some of the other stocks that are on our radar before we get to our chat to Kunal Bajaj today. So going through it very quickly, we'll breeze through. Obviously, look out for ONGC Oil India as Brent crude prices have jumped. 6% nearly overnight. Uno Minda, we talked to you about, is getting into the four-wheeler passenger seating system space. Idea Forge on Neeraj's watchlist as well. They've launched a 500 crore QIP. Embassy Development has strong business updates.
Well, as we said, Seagull India, one amongst the large order win candidates today, 4,050 crores. Indian Overseas Bank, an extension of the MD and CEO's tenure, usually augurs well. Orchid Pharma, packed with Russian company. Let's see if that stock reacts to that. And NDTV gets a ratings upgrade. Keep an eye out for that as well.
Okay. Let me go across now to Kunal Bajaj as we talk about the earnings season kickoff this week. IT major TCS set to report its Q1 results tomorrow. The June quarter is expected to remain challenging for the IT sector, with analysts forecasting muted growth across Tier 1 companies, weak discretionary spendings and AI-driven pricing pressures likely to weigh on earnings. Kunal Bajaj joining in. He's equity research analyst at Choice Institutional Equities, who tracks the space. Kunal, very good morning to you. Just want to get a sense first of whether all of the activity that some of these IT companies have been doing in the quarter gone by, and many of them have had tie-ups, they've had new clients, some acquisitions in play to shore up on their AI strengths. Will that be front and center in focus when you hear from the managements this quarter?
Yeah, hi, good morning. Thanks for having me on the show. Yes, certainly to an extent that would be there, but the primary discussion and key thing to watch out for this quarter is around management commentary around demand, how the demand is, how discretionary spending is around, and we also want to understand how is Gen AI productivity, what extent of client pass-throughs are happening at the moment, and at the moment we also understand how has been the hiring trend and what is the hiring estimates for all of these companies for FY27 onwards.
What are the companies that you are tracking very, very closely? Let's start with TCS. We'll see TCS reporting tomorrow. What's in mind there? What will you be watching out for?
Okay. So overall, what we see that overall Q1 FY27 is expected to remain muted, obviously. So TCS is also on a similar thing only. Tier 1 specifically, we are seeing quarter-on-quarter basis minus 0.6 to 1%. Quarter-on-quarter USD growth we are expecting. TCS specifically, we are seeing to be broadly muted or flat. So company continues to face macro-related pressures, obviously. And on the margins front, what we understand that margins is expected to remain weak for TCS specifically because of the annual wage revisions. And we are estimating, I would say, around 150 basis points of quarter-on-quarter margin decline. We expect this to be somewhat offset by the rupee depreciation. This is also helping most of these IT companies. But overall, on a quarter-on-quarter basis for TCS, we are expecting to be a muted growth. The key discussions will be around management commentary around discretionary spending, hiring trends, as I also mentioned. Along with that, AI investments, how and what investments they are making going forward.
Okay. Kunal, I wonder if you are particularly looking out for either the results or the commentary from any one or two or three companies. Are there specifics that you're watching out for this earnings season?
Yeah, specifically, if you see, there are a couple of things which I specifically am watching out for. Firstly, around the guidance and outlook from Tier 1. So I'm pretty keen on what Infosys and HCL kind of give their guidance. So they have already mentioned the guidance for FY27. Are there any revisions to it? Are there any upward or downward revisions to it? So that will be one of the key developments for this quarter. Apart from that, we are also expecting strong growth from Tier 2 companies as compared to Tier 1. So how is the commentary different from Tier 1s is specifically to look out for going forward. And thirdly, across the board, hiring trend is something which we expect because obviously there has been deflationary pressure, and how the hiring trends will be going forward for this quarter and specifically year going on will be the key thing to watch out for.
Okay, so let's assume if the earnings season shapes up the way you are penciling in your estimates, Kunal, what would be your pecking order if the earnings and the commentary comes out exactly the way you pencil in? It won't, right? All of us are human. But if it does, what would be your pecking order? The number one and number two in the IT space, large, mid, small, everything considered.
Okay. So as I also mentioned in the previous shows, we are optimistic on tier 2 companies, obviously because of various reasons. So our pecking order would be Coforge Persistent from the mid-cap space and Infosys and Tech Mahindra in the large-cap space.
Okay, Kunal, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time this morning. We need to slip into a break on the note that we'll start off lower. The implied open suggests the 200-point odd downtick. Let's see where we start off, but suffice to say, the start will be soft. What to do in a day like that? We will get our experts on the other side to talk about it. Stay tuned.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Welcome back. You're watching India Market Open. Of course, we're bringing it to you from the NDTV Profit Suzlon studio. We have Kush Bora and Parag Thakkar in our studios on a day when the GIFT Nifty, the implied open, is showing what now? Over a 200-point downtick? Okay, thereabouts. 200-point downtick. Is there scope for a gap down and then a sharp recovery?
Sharp, I wouldn't bet on. Recovery, yes. Recovery, yes. But before all of that, first up, a very good morning. हम expiry effect की बात करते हैं, right? Let me, in a new, fresh look, show you something. If the team can bring up, the 15-minute candles for Nifty,
Again, most of your viewers would probably already know this, especially if they're doing derivatives, right? But if you see the last 15 minutes, there you go. The last two candles that you're looking at are the 3 p.m. and the 3:15 p.m. candle, right? This is the expiry effect, right? Up until the most part of the day, the Nifty is consolidating. ठीक है, थोड़ा negative bias. But look at what happened at 3 p.m. And why 3 p.m.? Because the closing is typically the last 30 minutes average, right? And hence to affect, or maybe just just to get the expiry effect. Explained much better. This is how the markets react. By the way, right now, because the markets are evolved and matured and derivatives have been around for a very long time, this is still mild. There are days when we've seen Nifty move about 1%, maybe even 2% just in the last 30 minutes. Similar thing will apply on Bank Nifty as well. Right now, Bank Nifty obviously is only for monthly expiries, right? But you will see a similar picture. You will see a very similar picture on Thursdays as well. In fact, I've said in the past, right? The Thursday Sensex expiry happens to be far more volatile than the Nifty expiry. So this is the expiry effect that we're talking about. And in the market there are trades that you make just for the expiry. Not a big fan, so be a little watchful, and that's why we say don't trade on events, especially expiry. It's a very popular trade, but like I said, if this is not your cup of tea, not a good idea to be trading in the last 30 minutes of expiry. Now, to come to the levels on Nifty, why do I say that there could be a recovery underway? In the last month, about from mid-June onwards, Nifty's moved about 1,500 points, considering the yesterday's high that we hit. Some cooling off was par for the course. Yesterday was practically nothing, right? Even if we get this 200 dip, 200 point dip, we'll still be close to 24,200. That's, by the way, the immediate support zone. That's the line which the Nifty had broken to move out and hit 24,500. So even if we open just under that, but the closing happens to be above 24,200, I think we're in good state. In fact, this might just be a buying opportunity, but because this is a big gap down and you've got results coming up, I mean, if you're not a very aggressive trader, you might want to hold that off. So immediate support after this is at 24,000. Bank Nifty, largely the uptrend is intact, but PSU banks, maja nahi aa raha hai. Except for SBI, which is also consolidating, nothing else is moving, right? HDFC Bank, which did a bulk of lifting, of course, along with ICICI, has now actually gone on and hit a resistance level. There are now call option congestions at 840 and 850. So you might see some cooling off there also. ICICI alone can't do all the lifting, right? So, that's why perhaps some consolidation on Bank Nifty, that's also, a healthy sign. As long as the 200-day moving average at 57,200, 57,300 is intact, the trend remains bullish on Bank Nifty, but expect consolidation.
And what about stocks today?
Yeah, I mean, with the kind of texture that the market has, I'm going with 2 short calls.
2 short calls, huh?
Have to, and that's the one that's paying off, right? Yesterday we gave PFC as a short call. Target 2 bhi hit hua hai. So why not continue that as a trade? So obviously that happens to be one of the continuations. The long call first. Raj Ratan wires. Now, it's been a little difficult, I'll be honest, to find calls, at least basis my framework, because volume is a key criteria and the volumes just seem to have dried up in the markets for a lot of stocks, right? But nevertheless, some of those stocks that make the cut, this is one of them. So for targets of 490 and 505 with a stop loss at 464, Rajratan Global is a long call. If it opens significantly closer to the stop loss, don't initiate. Now on the short side, Supreme Industries, again we know this one's been under pressure. The closing yesterday was very close to the low point of the day. So a very obvious shorting candidate. 3130, 3080 are your targets. 3235 is where you keep that stop loss. And PFC, like I said, yesterday's short call went on and hit target 2, closing also at the low point of the day. So continue holding that or initiate fresh for targets of 407, 402. Stop loss at 418 now.
Must say, I'm so terribly disappointed today with Kush Bora. Yeah. He didn't speak about Messi at all. I'm so disappointed. But
I have theories and I have theories. But in all honesty, with the result, what a comeback. 3 goals in 15 minutes, phenomenal.
But we spoke about it in the morning, and frankly, Egypt deserved to win. Just that the decisions were completely against them. Anyway, we'll park that for another day.
No, it's okay. I think Kush needs to get it out of his system.
So, like I said, I have theories and I have theories. There were so many clear, obvious fouls that just didn't go their way. how, why, correct? So that's why it's a bit of a heartbreak. But like I said, if you look at the end result, ठीक है, 15 minutes में 3 goal, what a stellar comeback and all that. That you have to give, but on the basis of what? So.
Yeah, but that's okay. No, fine. Parag bhai, no football with you. You're trying to talk about who can score in a scenario like this. You've always said that you like to buy when the chips are down and sell when the chips are higher. Now, I'm wondering if this is the start of a bit of a downtick if crude prices stay higher, and therefore, do you look at this as the areas where you accumulate stocks, the downtick?
So this is just, as Kush rightly said, this was expected because we had a very nice run, right? Like, for example, ICICI Bank went up from 1,225 to 1,425, 200 rupees jump. So some amount of consolidation, exhaustion in technical terms, or I would say cool off also, cannot be ruled out. So this is just a first cool off thing, and again from yesterday some sort of West Asia tensions have started. So I would like to wait, not just jump in today itself. But yeah, I'm working on lot of themes. One of them is the increase in content per vehicle in electric vehicles. That is a very interesting theme. I'm working on it because I think this huge push towards EV will continue. And here also it will happen, like for example, we saw in the companies like Uno, Minda Corp, where they actually got higher PE multiples than Marutis and auto OEMs of the world, because the content per vehicle was increasing. So their growth was much higher than the vehicle growth, because value wise they were growing higher. Right? So like that, many
it's
other
something that Motherson to me did beautifully in the 2010
Even
and 20.
Today, wiring harness is that opportunity.
Yeah. But through wiring harness, getting more opportunities, you are betting on that theme right now. You're working on it.
We are working on it, and we are thinking a lot about many other stocks which will...
When will you be ready with that?
I think we'll discuss it next week.
We'll discuss it next week.
Okay, that's a promise. What about IT? As we are going into the quarter?
So as I said, I'm slightly overweight. I'm keeping that stance because whatever negativity which are there, like TCS muted results, Infosys might cut the upper end of the guidance, HCL Tech might cut upper, which I doubt, because this $1.14 billion deal they did with that European OEM might actually, might actually compel them not to cut the guidance, upper end guidance. But let's see. But even if they cut, I think it is in the price. So I'm not too negative on IT, as I said.
What is the unpleasant surprise that can come from the IT results this quarter? And also the reverse question, what is the one unexpected positive surprise that could come?
Good question. So I would say that I'll also have to think over it. But the expectation is that, like Accenture, our Indian IT services, at least the large cap ones, will also cut their upper end of the guidance. So if they don't cut, if they keep the guidance same, it will be a positive surprise. Negative surprises will be that if they cut and they also sound alarm about the deflationary scenario playing out on the margin side also, then there will be a negative surprise.
I'm going to give you a couple of more minutes to think about it while we go to Sumit Sarkar, who's joining us this morning with what's heard on the street. Sumit, what do you have for us this morning?
Well, firstly, it's Bluejet Healthcare. Now, the company did open their QIP, and what I'm picking up from dealers is that the demand is quite strong for this counter, specifically from mutual fund and prominent PMS side. What dealers have indicated that ICICI Pru, AMC and Inam Capital are among the top buyers in this QIP. Apart from that, there is Redco Logistics. There are buy flows on the PMS and the HNI desk. Dealers indicate a fundraise announcement could come in anytime soon here. For SBI Life Insurance, there are buy flows on institutional desk. Dealers expect strong June month data to come in for SBI Life. For Solara Active, the buzz on the street is that the company could soon announce a sale of its ibuprofen unit. And when it comes to a couple of names like Bharti Airtel and Zee Entertainment, there are buy flows on DI desk. Dealers indicate that the selling pressure is largely over for both the names. And lastly, when it comes to Inox Green, there are buy flows on the large HNI desk. Dealers expect a couple of positive announcements to come in very soon for Inox Green. So keep an eye out for Inox Green as well.
Okay. Sumit, thanks for that, and we'll watch out for the allottees of Bluejet QIP when the names do come out. Thank you so much for that. Parag, Blue Jet Healthcare or some of the others in that space, right? I mean, I think it was very interesting that in the hero product of Blue Jet, where they are the dominant force, if you will, the two other players include a Morpen Labs, which got that 800 crore, or I don't know if you got a chance to see that. But any thoughts here on Blue Jet or Ally or some of the other players within that bucket?
So Blue Jet, I just went through the numbers. I think it looks reasonably valued stock. Balance sheet is also quite okay, and trailing P is also 40. So I think business, of course, I'll have to study in more depth. But I think the overall company looks reasonably decent.
Okay. Well, and 40 times multiple, of course, but
trailing
multiple. So growth multiple could be lower, so maybe 30 times, or depending on what growth they're guiding to. I'm sure the management will talk to us as they usually do once the QIP is done and they are out of the silent period. So that is something that I'm watching out for as well. Up 3% yesterday, and again a sign, right, that if indeed a QIP is out there, it may be at a discount, but if there is good demand, then the stock tends to end up higher, which is something they should watch for Idea Forge as well. There is a QIP out there, Parag Bhai. Do you look at this space, and do you have any thoughts on Idea Forge?
So I think the market cap is too low. 3,700 crore, even if it is not so much profit making, even though March quarter was very good in terms of results also. So it is under my radar, but I would say that only in March quarter they were able to show good numbers. So that depends on how FY27 and 28 shapes up. But I would say stock has rallied also a lot. That is one thing. But see, I'll tell you, I have something like, if you're paying 80,000 crore, 1 lakh crore market cap just for a dream, then it is too much. But if it is 3,700 crore, it's okay. Drone technology and all, everywhere you are hearing that same word again and again. So
that's true.
Yeah.
Okay.
So worth looking at.
Kush, any thoughts on the charts for any of these names, especially the QIP boys, if I can call them that? One is Idea Forge. The QIP is today, though. You need to be careful about that one. But the way Blue Jet did yesterday, the way Adani End did about 2 or 3 days back.
Blue Jet, by the way, has had a phenomenal streak. 8 consecutive weeks of positive closes. So there is already momentum in it, volume action also very healthy, and if you see, the immediate resistance comes at 630. So for me, this is more of a hold right now because a lot of run up has already come, but with the kind of volume action that there is, and with the kind of names coming in, I think this is a good buy but on decline. So I'd be comfortable around the 530, 550 mark, as in when it drops, if it drops. So the primary trend intact. So if you have a position, you should continue to hold. Idea Forge consolidating, there are some gaps to be filled, so I'd be a little careful on that. But yeah, Adani Enterprises, we've seen a bit of a run up. The cooling off is happening. I would be comfortable around the 2950, 2960 zones, because that's a support zone, and with the vertical rise that it's had, some cooling off I think is par for the course.
Okay, a lot more stocks in spotlight. Varsha joining in with more details on that entire list. Varsha, what else are you tracking this morning?
Well, I'll be talking about 4 stocks. Let me start with NTPC Green Energy, wherein they've commercialized first 50.4 megawatt phase of wind energy project in Gujarat, and the group commercial capacity increased to 10,671 megawatt, and total installed capacity now stands at around 10,721 megawatt. Then you have Advait Energy, wherein they've received order of rupees 51 crore, which is for supply of medium voltage coverage conductor, and the execution period is in the next 15 months. Reflex Industries has also bagged ash transportation order of rupees 21 crore. This order is from NHAI and central state government road projects, which needs to be executed over the next 12 months. Then lastly, Orchid Pharma, this should be in focus today as they've partnered with Pharmasynthesis in Russia, and now deal is to commercialize Exblifep in Russian market. This is nothing but an antibiotic which treats hospital infections. Potential opportunity stand at around $178 million for the next 10 years. So these are all 4 stocks which should be on your radar as of today.
Okay, thank you for that, Varsha. A lot to unpack and talk about. Parag, I wonder what you make of the opportunity that Cochin Shipyard is offering. And from two perspectives, we should talk about it. One, Neeraj and I were having a debate earlier about the government's OFS timing, etc. They seem to have done well this quarter. But let's start from the investor's perspective, because there's now an opportunity for retail investors to also come into Cochin Shipyard. Should that be taken?
So I would say, see, from investors' side, the stock has not rallied too much. The P multiple seems to be higher at around 53 times trailing, but this is a business with very high moat and strong visibility of order book. So in medium to long run, I think investors should not regret participating in this. And from government side, to sell stake at around 50 PE is also logical in my view. So I hope it will be win-win for both the seller and the buyer.
You're happy with that, isn't it?
Yeah, and I'm very happy that government.
The government, exactly. That's what I'm saying.
Yeah. So basically, that's what they'll have to do this year. It's because on every front. Especially, so I think definitely, and there's a great thing that they are doing, that every day something or the other comes, 2,000-3,000 crore, 5,000 crore, this they should keep doing when the markets are reasonably okay.
Yeah, there was a time when any of these kind of moves will look like selling the family silver. And
I don't believe in that.
Yeah, a lot of negativity was attached to it, but it's really silly, because if you don't manage your assets, then there's no point. You can't just attach sentimental value to it.
Just one point I'll keep repeating, that when something goes into complete favor, like some months ago metal was there, that is the time you should start selling those shares. Like Hindustan Copper, I remember, I think it was at around 700 or something. Like
you're speaking now from the government's point of view as seller,
government's point of view as a seller, because when something goes into momentum, that is the time you have to sell that. Because
so you're saying defense right now is in momentum?
Right now, though, it is defense. I'm not saying Cochin Shipyard is in momentum or something like that, but I'm saying that right now, I don't see any big pockets where government can dilute stake or sell stake through OFS, which is in momentum. But at that time, it was like Hindustan Copper above 700. At that time, it was momentum. That time, you could have sold it, but that is okay now. But this is also I would really appreciate, because they should raise 70,000-80,000 crore at least.
Oh, wonderful! They've already done about 20,000 crores.
Yeah, for the full year, I'm saying.
Yeah. So we actually had the opportunity to speak exclusively with the Cochin Shipyard CMD yesterday, Chairman and Managing Director, and here's what he said about the company's expected order inflows.
Regarding the order book, 21,000 crore which you mentioned does not include that 5,000 crore in which we have become L1 for that NGSV. So if you add to that to the order book, it will be around 26,500 crores. And that normally we aspire to have around 3 to 4 times of our turnover as aspirational order book. So we are right now, it is there. And so we are well on course to achieve our target. Normally, we guide around 12 to 15% growth over year on year.
Okay, so that was the exclusive conversation with the Cochin Shipyard Chairman and Managing Director. Of course, that full bit available on all our social platforms if you want to go back and look at it before you make a decision on whether as an investor you want to come in today or not. Now, let me go across to Parth for an interesting story we've put together. Exchange stocks have lost momentum as new RBI norms are weighing on derivative activity. Sharp declines in premium turnover are raising concerns over exchange earnings. Parth is joining in with more details on this. Parth.
Absolutely. So if you would look at the exchanges that are listed on the markets right now, which are BSE and MCX, of course, NSE will be listing in the coming time. If we pull up the performance, then BSE has fallen over 11%, MCX has fallen over 10%. This is since the month of June in 2026, while Nifty has actually outperformed them, gaining around 3.6%. So they are seeing a little bit of downside pressure. And if we look at the reason behind this, then the reason comes out to be the sharp fall in premium turnover turnovers that both of these exchanges are witnessing in their F&O segment. Now, the reason behind this is that the RBI's new framework, which came effective from the 1st of July. Let's understand the circular a little bit deeply to know what's actually going on. So, RBI has banned bank funding for the broker proprietary traders. This means that the brokers can no longer borrow money from banks and make their trades. They now require strict 100% collateral mandate for their exposure. So if they're gaining an exposure of 100 rupees, they need to provide strict collateral, 100% collateral for that as well. This is triggering a liquidity squeeze across systems, because now, of course, they require more money to make the same amount of trades. And also the traders that make the huge amount of volumes, those are the algorithmic traders, the high frequency traders, they have to deleverage right now. And this reducing trading leverage is suppressing the overall derivative volumes, and this is the reason why we have seen this underperformance in both of these exchange stocks that are listed. If we pull up the numbers quickly, we can see that in Q1 BSE averaged turnover of around 70,000 crores, but in June that came down to 61,000 crores, and in the first 7 days of July this has come significantly down to just 54,000 crores. That's a dip of 11%. That's a dip of 21% from the Q1 average. Same in terms of NSE, which has seen a 14% dip from the June numbers, almost a 25% dip versus the Q1 numbers as well. Now, if we also check out the average for the entire month, if we pull up those numbers as well, so BSE has declined 20%, NSE has declined 27%. This is the turnover. This is the premium turnover on these exchanges. MCX even more declined, 43% and 39%. Now, the impact of this is not just limited to the exchanges. This lower premium turnover will impact earnings of both exchanges as well as brokers. These include names like Novama Wealth and Angel One, because of course when you're putting trades on exchanges, you need to use brokers as well. So if the volumes are not coming on exchanges, then brokers will be facing an impact as well. Now, the overall amount of this impact is difficult to calculate at the moment, but the early trends in July are saying that this will be big. Lastly, on the analyst view, 61% analysts have a buy rating on BSE with an average return potential of 15%, while on MCX, 67% analysts have a buy rating with an average return potential of 31%. So MCX is a little bit better. So this is the entire story why both of these exchanges are seeing a little bit pressure in trade.
Okay, thank you for that, Parth. Very well put. Chandan Taparia joining in our conversation this morning. He's head technical and derivatives research at MOFSL. Chandan, very good morning to you. You know, before I ask you about what you think on the Nifty, Bank Nifty and your calls, any view on of the listed exchanges? We talked about BSE, MCX in this piece that Parth, my colleague, just presented.
Good morning, Tamanna. Thanks for having me. So the BSE, which was continuously making higher tops, higher bottom in monthly chart till last month, witnessed profit booking decline. The momentum which was seen near 4,200, it made high near 44 and took some pause. And now the structure is clearly visible about lower top, lower bottom on the daily and the weekly chart. And we believe some more decline could be there. I believe the 3,500 or 3,550 could act as a major support. But as of now, the way stock has drifted below 50-day exponential moving average, broken is rising support trend line, some more decline could be there. So looking for 3,500 to 3,550 in the counter as of now. Apart from that, we may see some limited upside in counter like MCX and CDSL. Most of these market infra counter are likely to see some more profit booking. MCX can decline towards 2,500 to 2,520 on lower side as well.
Okay, and what about the Nifty outlook this morning?
Yeah, so Nifty has been making high rise, high lows on the daily chart from last 5 trading session. It headed towards 24,500, but today, as per the global markets, it is going to negate the formation of high rise, high lows. But immediate trend is positive. Just 2 days back, it surpassed an immediate hurdle at 24,161, 24,224. That was 50% retracement of the entire down leg. So I believe the previous hurdle could act as a support. So any decline could be bought with support of 24,161. And again, the index has potential to head towards 24,650 to 24,750. So bullish bias could continue. but buy on decline could be there. And we need to look at the key support in Bank Nifty as well, near 57,500 to 57,750 in that scenario.
Okay, rupee has opened not half bad, I must say, with everything which was happening geopolitically, and what the Nifty implied was also looking at. About 0.2% of weakness there, 18 paise down. If you look at the Nifty as well, and I know it's just the first 3 minutes of the pre-open session, but directionally it's not looking like it's going to be the kind of bloodbath that was indicated by the Nifty implied. Chandan, any stocks on your radar this morning?
Yeah, so selected the counter which are in sidelines or having comparatively lower beta than the market. First is buy on Eternal. We have seen positive price action in the counter in last 4 or 5 weeks. It has been making higher top, higher bottom. In fact, any small decline is being bought. So here we can go long. Any decline could be bought with support near 279 on intraday point of view, 270 on positional point of view. For an upside target was 305. Second trading idea that will be buy on Paytm. This counter looks quite promising. Positive price action is seen in the stock. One can buy with support of 1215 for upside target was 1285. And in housing finance, we can focus on the PNB housing. This counters form rounding formations. Supports are moving upwards. So with support of 1080, it can head towards 1170. So Eternal, Paytm and PNB housing could be the key preferred idea in this market scenario.
Okay, well, the other thing is, let's just see if some of the stocks are duly reacting just before we get to the big brokerage call of the day. So some of them were marked. Swiggy had a good one, and CLSA has a note out there. I wonder if Swiggy is actually doing reasonably okay today. A bit of a flattish thing. Embassy and Seagull India. There are a couple of others that I wanted to mark in the pre-open session. Seagull, Embassy about 3% on fairly rip and roaring Q1 updates. Seagull gets a largish order, or 3 HAM projects worth about 4,050 crores, and therefore that one is marginally higher. And Info Edge did a great move yesterday. JP Morgan has come out with an overweight rating at a target price of 1350. Info Edge picking up a little bit as well. Speaking of brokerages, let's get in Sharad to talk about the Goldman Sachs view on Larsen & Toubro. Sharad, is the central plank that Middle East is now getting a bit contained?
Well, that's true, and Neeraj, the rebuild phase which is happening, especially L&T is likely to be a major beneficiary of it because they're having the highest number of revenue contribution coming in from Middle East. Goldman Sachs have given a maintained buy rating and a target price of 4,500 rupees per share. And they have stated that as of FY26 and Middle East accounts for almost 40% of the total order book and 36% of the total order inflow in the fiscal year. Now, the direct exposure to both renewables and clean hydrogen, that stands at around $55 to $96 billion of sector scope which is there. That means the potential which can be there, and the capex prioritization after the rebuilding which starts in Middle East is something where the brokerage is bullish on, and there is a multi-year visibility which actually reduces the earnings cyclicality as well, and that's why Goldman Sachs is bullish on L&T.
Thanks a lot for that, Parag bhai. खुश तो बहुत हो गया आप. L&T पे positive view है.
So basically, I am not overweight on L&T in my portfolio. But see, this Middle East thing, so it has again sparked off, so nobody can say. And I think L&T has also clarified that you should look for H2 only. H1 is gone actually because of this Middle East related.
I think a company of that size and stature, it'll be wrong if they give a different comment every other quarter, right? So therefore they are saying first half भूल ही जाओ. हो गया तो अच्छा है, but वरना भूल ही जाओ. Correct. But is this whole construction activity? I mean, so for example, L&T is one. Seagull has gotten this 4,050 crore 3 HAM projects. A bunch of these corporates in the recent past have gotten large order wins. Is the construction sector coming alive, Parag bhai, or is it too soon to say?
No, I would say that, see, with crude oil coming off, I have already said that I'm slightly more positive on government infra side, capex side, things that now with OFS is also happening. So government intent is very clear that they don't want to disturb this capex cycle. And in fact, they are only doing the heavy lifting, right? The private sector has to just, only 5-6 corporate groups are doing large investments. So I would say that if you have to keep the ball rolling in the country, keep creating the jobs, you have to do this. So I feel that government will do it more aggressively as we move forward.
Just on the crude sensitives, and I just want to pull up the early moves on some of these. ONGC is up naturally, expected after that 5-6% spike in crude prices overnight. So is Oil India. On the other hand, Indigo seeing a bit of pain this morning, as is Asian Paints. Let's pull up, in Interglobe there, 2.5% down. We talked about Asian Paints also 2% down. Let's pull up the oil marketing companies, your HPCLs, BPCLs, IOCs of the world, and see what's happening there. All of them under pressure, about 3% down as well. Do you think that this is a space and a trade which one needs to just stay away from because of the volatility, or is there a trade there, Parag bhai?
So I have stayed away from it mostly. Although the space looks interesting, but it is too volatile for anybody to take a call. But I would say that ONGC and Oil India are very low PE multiple stocks. So even if, and government this time has made it very clear that they don't want to cap their gains if crude oil goes up, and they offer a good dividend yields also. So I think they are defensive bets, but not everyone would like to chase them, because you cannot predict, right, what is going to happen to crude oil.
Chandan, just wondering how you are looking at the other side of that trade, and Interglobe, for example. How is it looking to you on the charts? And I also want to ask you about Swiggy, which was up and about yesterday and looking like it may start weak today.
Yeah, so first to comment on Indigo, this counter witnessed some recovery in last few days, but again, some pause is visible at higher levels, but structure is now turning upwards. If I look at the price behavior on weekly chart, it has started to form higher tops, higher bottom even after a consolidative move of last 3-4 days. So I believe if any decline happens because of the market volatility, that could be bought. As of now, 50 to 80 could be immediate zone to accumulate the counter. If it comes near to that level, one can accumulate with support near 5100 for an upside target towards 5400 marks. Talking about Swiggy, already we suggested to go long on counter like Eternal. So somehow positive on this sector. Swiggy is one of the names which is beaten down in last couple of months. Recently it made all-time low near 235 and recovered well. So risk-reward ratio is quite favorable, and after a long time, the counter has surpassed above 50-day exponential moving average, and this happening after 130 trading session. So support-based buying and bargain buying could happen at lower levels. Even on the last day, the counter witnessed huge trading and the delivery volume near to 3.3 CR in a day, and forming a double bottom and surpassing its falling supply trend line along with negation of lower top, lower bottom. So because of that, some decent recovery could be seen from lower levels. One can go for long side with support near 256 for an upside target towards 280 marks.
I want to look at some of the sharp movers from yesterday. Let's see what's happening to Info Edge this morning. Let's see what's happening to Trent this morning. Both of them on either end of the spectrum. The Info Edge is continuing its momentum. Trent, of course, some of those losses have been paired, but I'm not seeing any big bounce back there. Persistent is the other one that we should see. CLSA has maintained a high conviction outperform on Persistent with a target price of 5,659 rupees. It outlines multiple Nagarro acquisition benefits. Combined entity targets mid-teens organic growth. Management sees 16 to 17% EBITDA margins ahead, and deal expected to boost FY28 earnings per share. I'm just wondering, off the IT pack, is Persistent looking like a key one to watch out for you? Or you think all of this is priced in?
No. So basically, Persistent is definitely one of the good quality performers, and their growth rates have been very good. But I have, for example, Coforge, Emphasis, TechM, TCS in my portfolio. So I would go with them right now. Let's see how the result season passes and how the guidances of Infosys and HCL Tech pans out. Of course, I have HCL Tech also. Sorry.
Yeah, but these guys have bought in that growth company in Europe, and they are talking about it in fairly high terms. Let's see if they deliver. But must say that the bashing that Persistent got after that announcement was done, because it was a fairly large acquisition, it has recouped some of those losses, which is a good thing. Kush Bora, how do the charts look here? Simply because it's managed to recoup a fair degree of that battering that it received.
Coforge persistent emphasis. Coforge persistent emphasis. These were the three stocks that were always on the buy radar.
Okay.
If you hadn't bought, I think the dip, even in hindsight now, turns out to be a good opportunity for you to get in, right? Now, like you rightly said, it's actually recouped all the losses that it had, with the gap down opening, with that announcement. Even now, the structure looks positive. Even now. So if I didn't have, I would actually look at Coforge, Emphasis and Persistent, all three of them positively.
Chandan, maybe we spoke about this earlier, but I mean, between a Persistent and a Coforge versus an HCL Tech and yeah, maybe that's the strongest large cap IT name. Out of these three, which one looks the best to you from a derivative as well as a charts perspective?
Yeah, so we were quite positive, and we are in fact positive in two IT names. One is the Coforge and second is the Oracle Finance. Resilience was clearly visible at the time of decline in the entire sector, and at the time of recovery, these counters will do well. So quite positive on the Coforge, and we have noticed that every small declines were being bought. So now with support near 1450, it can head towards 1600 marks. And talking about Oracle Finance, major trend is positive, has been making a high top, high bottom. It seems that consolidation of last 4-5 days is giving fresh leg of rally. So with support near 10,600, look for 11,600 marks. So positive on the Coforge and Oracle Finance in the entire this IT technology space.
Okay, Kush Bora, your top call for the morning.
Yeah, I'm going with that short call on Supreme that we mentioned just a while back, reiterating the targets 3130, 3080, stop loss around the 3235 mark.
Sorry, is that Supreme Industries? Supreme Industries. I wonder if therefore Astral is also short. Kush Bora, very quickly, 10 seconds.
Has been under pressure, but I would prefer Supreme as a short trade right now.
Okay. So we've gotten ideas from Chandan Taparia and Kush Bora. We'll start off lower. The question is, do we stay there or do we attempt a recovery? I think some of it will depend on what crude prices do, to be honest. But let's see what we do this morning. About 145 odd, 150 odd points, no surprise there. Banks are down. I reckon IT, which was the stellar mover in trade yesterday, maybe that is giving a little bit of support, but nothing too dramatic. I mean, it's lying flat, absolutely flat. Mid caps are down, small caps are down, and that was the case yesterday as well, by the way. The broader markets didn't quite perform. Like people say, second half mein de diya. And that's what happened really to a lot of these stocks, a bit of a meltdown into a lot of those names. Market breadth is not looking all that great. Let's get the heat map up on the screen and show you what is moving and what is not. Very few winners. ONGC, no surprise, crude price flare up about 1.5%. Dr. Reddy's, Max Health, TCS Infi. So very defensive bent this morning because there is fresh uncertainty in the Middle East and you don't know, frankly. You hope that it will not move adversely, but fact remains we don't know as yet. What is not doing well? Shriram Finance, no surprise there. Usually the high beta name whenever markets crack or gain. Indigo, again, no surprise, crude price flare up. We'll see that bit of a downtick. Will this see buying at lower levels? Chandan believes it could. Let's wait and watch. Bajaj Finance, Asian Paints, again, crude sensitive down. L&T, Middle East sensitive down. Eicher Motors down. Geo Finance, JSW Steel, Bajaj Finserv. I mean, the list is long, frankly. Reliance, 1.3% down. So that is putting pressure on the index as well. But, I mean, per se, no surprise, the showstoppers on the downside remain Indigo and Shriram Finance, completely fine. Dr. Reddy's is dope, piling on the gains now, 1.2%, and the quantum of green just increasing a wee little, but well, let's see if it actually manages to do more. For now, very few gainers, a lot of losers.
No, I don't know if we should be relieved that you have an only 120 point downtick, because this could have technically been much worse. Let's pull up the India VIX first. You're seeing a 5% spike this morning. No surprises there. You're a tad above the 12 mark, 12.23%. So the fear gauge is active today, which is a cue for the bears. Declines, much ahead of advances. A little more than double, more than 1:2. So 1568 declines to 624 advances. I want to look at whether there's any better luck in the broader markets, and looking at the advance decline ratio, that seems unlikely, but less intense than what you're seeing on the Nifty, both about 0.35 and 0.37% down on the small cap and the mid cap index. Let's pull up the heat map, the sectoral heat map, and that will give you a sense of what is working. It's a clearly defensive play. It's just Nifty Pharma that's up there, 0.95% up. Healthcare as well in the same space, and IT pretty much just holding its head above water. What's really hurting? as expected when you have a 6% downtick on crude overnight. The oil and gas Nifty is 1.36% down. PSU banks are also flailing. Nifty rural is 0.72% down. Some data coming in yesterday about while you have water levels coming back, etc., and the rainfall deficit coming down, but the Kharif sowing coverage pattern is really muted because of the lack of monsoon in June. So watch out for all of those spaces as well. I'm going to look at specific stocks, and Oil India ONGC we should pull up first up, of course, because the crude impact front and center on a few of those counters, of course, in a positive way for them. 1.5% up on Oil India, and on ONGC there's a 1% up. But on the losing side for this entire pack, I'm going to pull up Interglobe, Asian Paints, HPCL, BPCL, IOC, 2% down on Interglobe, nearly 2% down on Asian Paints as well. That whole lot feeling the heat. HPCL worse off with a 4% cut this morning. Let's pull up RCF, the top gainer on the NSE 500 before we opened for trade, about 1.5–2% up. So there's an OFS that they've announced, and there seems to be an opportunity for a large land value unlocking in the Chembur area of Mumbai for RCF as well. So that's got maybe some interest coming in. Want to see what's happening to Swiggy. It had a huge spike when we opened up for trade, completely flat today. So not quite negative, but not continuing in that momentum. Order win impact for Seagal, is that showing? So not really, but 0.28% down. Uno Minda also on our watch list because they're foraying into seating for four-wheelers. Nothing much happening on that stock. So it's a bit of a muted day, I would say, Neeraj, and the street not finding enough reasons to celebrate quite anything.
Yeah, not at all. But you know, from a trade perspective, so many people would want to know what to do with the crude sensitive. So let's start off with them first up. Interglobe Aviation should come up, even though there's a bit of a recovery in the Nifty. Indigo very likely could be lower in trade, and just want to know what to do with that stock. Chandan, you were saying that you expect the stock to move higher. It's actually bounced off the lows, but at circa 2300 or 2282 or whatever it is, that 5282, sorry, or 5300. Is it a buy at these levels?
Yeah, so buy on decline has to be applied. However,
buy
if negated higher. Okay. Yeah, so buy on decline will be there. I'll use any small dip to buy with support at 5100 for upside move towards 5400. One can accumulate 2 times as well.
So based on the opening 5 minutes, Chandan, I know you usually wait for 5–10 minutes, but based on the opening 5 minutes, is there something that catches your eye?
Yeah, so talking about other name or looking for Indigo?
No, other names, Chandan, the market or other names, as the case may be.
Yeah, so I'll focus on Zydus Life, safety and momentum both. The counter has given a consolidation breakout on the daily and the weekly chart. Opened slightly lower, made the open low. So with support of 1145, looking for 1200, 1220. And Indigo also can be bought with the view that some smart rally can be seen in the counter. So selective pharma name in focus, as I mentioned, Zydus, one can keep on radar if someone looking for only one counter.
Interesting. Okay, well, Chandan, thank you for that. And Kush Bora, your opening thoughts? I mean, the market's trying to stage a bit of a comeback. Don't know if it will succeed. Or any specific stocks that stand out for you in the first 5–6 minutes of trade?
You know, very interesting opening. We've not even remotely come close to the kind of opening that was being suggested by GIFT Nifty. I wouldn't celebrate just yet. Like you said, in your opening comment, second half mein de diya. Possibility that we might perhaps see some muted moves, perhaps some downticks from here as well. But I maintain, as long as 24,200 is intact, Nifty is in good stead. Bank Nifty also consolidating good stead. Not an immediate long trade. If in fact we did open about 200 points lower, then it would have been a good base for a long trade from those levels. Not now. One stock that seems to be making a comeback after a massive sell-off is ZF Commercial CV. It's at the 200-day moving average. In the last few sessions, the volumes on the way down completely dried out, as was the case for a lot of stocks, by the way. But like I said, it seems to be making a comeback, so I'll keep this on my radar. If you do initiate a long position, keep your stop losses at 2250, 2300 zones.
Mm-hmm. Okay. Well, not surprised that auto ancillary is coming to the fore. Parag Bhai is an early identifier, then the chart starts showing, then Kush recommends the trades as well. It works out beautifully for a lot of times, so let's see if it does the same this time around also or no. But Kush, great spotting there, and great spotting on some of the stocks that have worked so beautifully the last few days. Parag Bhai, we spoke about auto anchs yesterday, right? Or in fact, this morning as well, because you mentioned that how some of the names are trying to do the inroads and increasing content per vehicle. I would love to know, how do you think about 3 auto names which probably stand to do the best? And I'm not wanting to talk about Bajaj Auto because the street now knows you like Bajaj Auto. So TVS, Maruti, M&M. These 3 are the consensus brokerage favorites. Which amongst these do you like and why?
So I think in the order you said.
Oh, is that so?
In the order you said, yeah. But TVS is a company which has done amazing things, right? Gained market share. Now, if you see their monthly volumes, they are higher than even Hero, which was not the case 2 years earlier, right? So they are present in every price point, every segment, whether it is ICE scooter, EV scooter, everything they have done phenomenally well. The only thing is stock is slightly expensive, right? Maruti and M&M, of course, again, M&M on EV side, they have done phenomenal things. The only problem was that if the monsoon would have been very bad, then tractor volumes would have collapsed in the second half. That was the only negative thing about M&M, which I think should not hopefully happen now.
Yeah, just an update on that. Coming from the BMC, from the Mumbai perspective, due to rainfall that occurred in the last 24 hours, the water stock in the 7 reservoirs supplying water to Mumbai has reached 41.36%. There's a 12.5% increase in water stocks in just the last 24 hours. So at least you have that one problem taken care of more than anything else, I suppose. Just talking about the monsoon impact and that whole fear of a deficit monsoon may be receding to some extent. What are the kind of companies that will see the most benefit? And you spoke about M&M,
yes,
but there was a whole consumption slew of companies which would have been impacted very badly had the monsoon been as bad as it seems to be. Can't say the last word on it yet, but at least so far the amount of deficit has definitely come down.
Correct. So the potential negative impact persons were companies were Mahindra & Mahindra, Hero, some select FMCG companies where the rural salience is very high, like Dabur and all, Dabur, Colgate, those kind. But I think there, you know, you are not going to stop rushing if monsoon is not there. So I would say the impact would be lesser in FMCG, but the impact would have been much higher in the discretionary consumption if the monsoon would have been really bad.
I think so. Okay, another stock that I want to talk about, and Chandan, I want your view on an Info Edge. We'll get Chandan's view in just a bit on an Info Edge, and an RCF is the other one. You know, let's just pull up both of those counters. Info Edge, another strong 4% gain. Let's look at what's happening with RCF as well, which we mentioned, and see what's, you know, if it's continuing its gains that it started with, about 2% up. But Info Edge specifically, a lot of value-added services seems to have added to its business updates. Parag, is this a counter that's looking good because you're seeing that 4% uptick on top of another solid move yesterday?
Yeah. So stock was hammered down also very badly. I think it went up to 945 when it was low. And of course, it's a great management. They have been always early identifiers of high growth businesses like Zomato's of the world, so Eternals of the world. So I think it's good that the stock has bounced back. It is a quality company which was available at very reasonable valuations at 945, 950 or so. And recovering nicely, and I think the billings have increased, right, for them.
Yeah. Yeah, most certainly. Which is why I think the stock was doing so well yesterday as well, and in today's session too has done really well. I wonder if this is now kind of close to topping out from a trade perspective, because it's done too much too soon in a scenario when the markets are not necessarily doing this. So that's the key thing to watch out for. You know, the other thing, Parag bhai, I was reading a set of brokerage notes around chemicals. Right, Kotak has one, Elara has one, etc. And there are some companies which will potentially benefit quite significantly from the the commodity gains that could come in to them, and the pricing gains and windfall gains that can happen. So there are 4 or 5 names being spoken about: Navin Fluorine, Acutaas, Deepak Nitrite, Jubilant Engravia, and a few others. Do you like the chemical space, or is the China factor too large an impediment?
See, I'll tell you, there are cyclical elements to this, right?
Yes.
So you have to track that particular commodity. You have to track the demand supply of that particular commodity. As you rightly said, China's competition into it. Navin Fluorine is slightly different because they are going up because of their CDMO contract also, which is structural. But in other cases, I think you need to track those chemicals very closely. And I'm not tracking it very closely, frankly speaking, as much as I track banks and all.
Okay. But just to round up that conversation, Kush, very quickly, 30 seconds on any of the chemical names.
Navin Fluorine and Acuitas. Stellar runs, nothing to suggest that that trend's coming to an end. Perhaps some consolidation along with markets, but these are the picks that you can focus on. 74.50, 74.25 support zones could act as a stop loss on Navin Fluorine, and Acuitas maybe slightly lower, about 30 to 3,300 zones as a support zone, but these two stand out.
Okay, thank you so much, Parag Bhai, Kush Bora, for joining in today. Let's move to our corporate focus, and KSH International is in the spotlight on the back of a newly incorporated manufacturing facility in Maharashtra. Before we speak with Rajesh Hegde, the company's managing director, Puneet joining in to set up that conversation for us. Puneet.
Well, thank you for that. 4 key points here. 14,000 metric tons is the capacity that the company has added in Supa, Maharashtra. Another 16,000 will come in by the year end. So the total they will go to is 60,000 metric tons per annum. What they have also mentioned is there's additional room for another 12,000 metric tons as well. So it's a huge capacity expansion given the company's scale over the last 20 to 30 years. But when you also look at in terms of the demand momentum, they currently expect the domestic CTC demand to be around 40,000 metric ton, and that to increase by almost 3 times going forward. In terms of the EBITDA per ton, that also has increased to 67,000 rupees per ton. Management has indicated for FY27 that this could go between 67 to 74, but the company has been a big beneficiary in the HVDC transformation that we've seen in the country. So key clients like GE Vernova, T&D, as well as Siemens Energy are some of those benefits. So the questions will be around the growth that is expected, because FY26 the company reported a 60% revenue growth. What is the next 2 to 3 years with this new plant commissioning will be something to watch from this conversation.
Hey, thank you for that, Puneet. Rajesh K. Hegde, Managing Director at KSH International, joining in. Mr. Hegde, very good morning to you, and thank you so much for speaking with us here at NDTV Profit. Great to have you on. Tell us a little about this new manufacturing facility and the kind of capacity that you have commissioned here, how you expect it to increase to your overall balance sheet.
Yeah, so the new capacity that we commissioned at the Supa plant, this is overall it's going to be finally, when it's all done, it's going to be another 30,000 tons of incremental capacity, where the other 3 plants are contributing to about 30,000. So overall we'll have about 60,000 tons. This is being done in 2 phases. The first phase, which we have already completed, which is about 14,000 tons, which takes our cumulative capacity to about 44,000 tons. By the which is available for this entire fiscal year, and we are in the process of adding the balance 16,000 tons to take it to overall 60,000 tons of magnet winding wires.
Okay, and how does this add to your total capacity? Do you have demand for the additional capacity that you're adding locked in already?
Yes. So, like I said, I mean, overall, we'll have 60,000 tons of capacity eventually by the end of this financial year. And, primarily 75% of this is going to be more tilted towards the specialized winding wire, which is used in the transformer, wind generator segments. And also going into the 765 kV, feeding into the 765 kV and the HVDC demand. So, we do have, a good visibility for the full year, when it comes to the capacity.
So that's fine. What is the current capacity utilization that you will see?
So last year we ended at about around 71% because, we added the capacity more in various phases. But overall, if you see at a company level, it was about 71%.
Okay.
Rajesh, good morning. Neeraj here. And
good morning.
I understand that copper pricing is not a problem for you because you are completely a pass-through. So let's leave that out. Right. I would love to know what's your view on the recent government changes on what is arguably your biggest segment, which is transformers, T&D, etc. Because now Chinese players have been given a 2-year window in that cohort. Now, if that comes in, manufactured in India, maybe does it increase the opportunity size for you? Have you already had some initial feelers, etc.? What's the sense there?
So the recent government ruling that the way we've interpreted it is that there are 4 companies that have been given this permission, of which one of them is a transformer manufacturer who's located in India, which is TBEA. And the other 3 are more related to GIS equipment, where none of our products are actually used in GIS, in the GIS segment. When it comes to the transformer, segment where TBA has been given, I think the interpretation is that they will manufacture transformers in India for the Indian market, where I think, some time ago, there was some issue where they were not allowed to participate in the large government tenders. So, to cut it short, I mean, it will benefit us because TVA also happens to be our customer.
Okay. And one can see that while you've spoken fairly eloquently about the future in your con calls, your recent past performance has been very strong. Q4, in fact, in some sense, you could argue was a banner quarter for you. Do you expect that kind of momentum to continue for FY27? Because it does seem that everybody's talking about one thing, that there's probably going to be enough solar and wind capacity. There isn't as much transmission and distribution capacity to ensure that power reaches, and therefore this is a multi-year cycle. What's your sense of how you can have growth for the next 1, 2, 3, 4 years until India reaches that 2030 targets?
Well, if you look at our company, we are not just dependent on the local market. We are more a global player, where about 30% of our production is exported to global companies around the world. And all of this feeds into the T&D segment. If you see, if you see this segment in India, coming to our growth, last year we grew at about 20% We are, very positive about, achieving this kind of growth in this year because we have the capacity available with us also. And we've seen most of the customers are also having very strong order books. And I think that should help us achieve our target for this year as well.
Sorry, Rajesh, I'm a bit confused. Did I hear you say 20%? Because I thought that when I looked at the numbers, and maybe I'm wrong, correct me here, but I thought your revenues grew about 60%, your profits grew northwards of 60%.
I'm talking about volume.
Okay. So what does that... Okay, fine, excuse me. So what would that volume growth per se translate into in terms of revenue growth or EBITDA growth as the case may be? Because it's passed through for you.
So when you look at, last year we closed off at an average of about 67,000 rupees per metric ton, EBITDA per ton. Last quarter, we closed at about 74,000. So obviously there's an upward trajectory out there. But going forward, we expect, there's a lot of things that contribute to the EBITDA per ton. Is the product mix that we do, the exports that we do. But we've, mentioned in our previous call also that we should be comfortable, between that 67 to 74,000 range that we have provided.
Okay, just trying to understand what is the sort of demand outlook that you're seeing, because your current demand is fairly strong. You spoke about not too much of an impact of Chinese companies being allowed to come in, but do you have visibility of sustaining those levels of demand, Mr. Hegde?
Yeah, so if you look at, 75% of our production actually goes into the T&D segment. And if you look at the T&D segment, right now, almost every customer of mine is in expansion mode or already expanded capacity. Some of them are doubling, and this is happening globally. It's not just in India. And we also, we are the largest exporter for specialized magnet winding wires around, from the country as well. So normally we work with these customers on a long-term basis where, some of these customers have vintage of almost 20, 25 years. So we expect, the same momentum. If my customers are growing, obviously we would also grow along with the customer.
Okay, thank you so much, Mr. Hegde, for joining in today and speaking with us. That was Rajesh K. Hegde, Managing Director at KSH International. Let's just pull up the stock price while we were speaking to the management and what we've seen over there, about 2.5% up right now. It's interesting to see on the point, Neeraj, about the kind of panic we saw in the market. We should pull up the Hitachi Energies of the world and that whole cohort of stocks which had suffered. The kind of GE Vernova TND, the kind of panic we saw that morning when this announcement was made that Chinese companies will be allowed to sell was massive. And you've seen some amount of recovery in that since then.
Yeah, in fact, yesterday or day before, I think each of these stocks was up about 7 or 8%. So if you pull up maybe the 10-day chart or 1-month chart in two stocks, GE Vernova TND and Hitachi Energy, you will see a sharp slide on the day this Chinese announcement came in, and then a fairly strong recovery as well from those levels as well. So keep them at the back of your mind. Of course, this company is a different kettle of fish. They say they supply to some of the they supply to the transformer sector and that one Chinese company as well. So those are the key things that you got to watch out for when it comes to the business that we just spoke to. And then the question really will be that as the management of KSH said, that can they actually, because of the multi-year agreements that they are having with the global companies, can growth continue? For FY27, they're predicting the same growth as FY26. Very interesting conversation. The stock up 2.5%.
Yeah. The other thing that we've been speaking about is the monsoon and whether we've actually seen enough of rain to make up for the deficit so far. And notwithstanding, Mumbai will always have some amount of flooding, so that's not the only parameter. We're talking about nationwide. So monsoon deficit has eased as all India rainfall deficit has narrowed to 24% as of July 5th. The deficit stood at 43.1% plus a week earlier. GP Sharma, President Meteorology and Climate Change at SkyMet, joining in to speak more about this. Mr. Sharma, what are we seeing? Are we seeing the worries about El Nino easing? Are we seeing maybe just some amount of cover up? How are you looking at the situation?
Thank you, Mr. Manna. Early days. It is start of the season, I will say, not even halfway through as yet. And June we saw. It left a huge deficit. Good thing. Like you said, the deficit is covered now. We are in the normal bracket as far as the pan-India rainfall is concerned. Could see good monsoon, vigorous monsoon rather, over especially the central parts of the country in the last about almost 10 days. Sitting in Mumbai, you will appreciate more. There has been a deluge day after day. And it's nothing special as such. Mumbai possibly it's one city which experiences these heavy rains in the month, the El Nino season particularly. I remember 2023 El Nino year. Again, it is holding the all-time record for Mumbai in the month of July, 1,771 millimeter rainfall. This month already we have crossed about 1,100 millimeter, way past the normal rainfall. So yes, the monsoon has been active. It's a good rainfall across the country, most parts of the country. Deficiency, particularly the central parts, which were reeling under the deficit of almost about 50%. It's a 0-0. The break even. Okay, rather marginally plus also. So situation has improved, but then a little too early to say that are we out of the expected crisis on account of El Nino? Because El Nino is still there. Okay, it is becoming stronger and stronger. At the moment, yes, we are in the weak phase of the El Nino, but we are transiting right now to the moderate one, and it will remain moderate conditions only of El Nino throughout the monsoon season. The peak of it will come past monsoon season. I will say even November or so, and the strength also will gauge around that time only. And but notwithstanding, moderate El Ninos, they have spoiled our monsoon earlier also, 2002, 4, 2009, including some severe droughts. So we keep our fingers crossed that monsoon behaves But then as of now, yes, July looks better. We are going to have a pause in July activity also, maybe another 3 days, wherein all these areas which are deluged with the monsoon rain, they will also have a break. There will be a pause, almost about 10 days for these parts. Yeah. Yes, Mr. Manna.
Okay. So then in Mumbai, for example, and in parts of Maharashtra, there will be a pause for about 10 days. I want to understand that when we talk about a deficit figure, and Mr. Sharma, this follow-up questions to you. When we talk about a deficit figure reducing, so that now doesn't change no matter what happens next, right? So the basic monsoon deficit that we started the season with has come down. Is that a fair assessment?
Definitely. That is a fair assessment. You said we have already come down to about 17% now, started with June deficit of 40%. At the moment, between 1st and 7th of July, and if I include the rains in the past 24 hours, I expect it to be further lower. It will come down to about 15%, which is within the normal bracket. Okay, deficit of about 8%, 10%, or that doesn't matter much, provided the distribution remains good. That is what we are worried about. At the moment, the pockets which have been perpetually deficit, that is, I'm talking about Bihar, East Uttar Pradesh, still they are there only. Even despite rainfall activity over most parts, they are deficit by over 50% even as of now. Maharashtra has recovered. Maharashtra, all three landlocked subdivisions, Vidarbha, Marathwada, Madhya Maharashtra, they were deficit by large amounts but recovered now. Except for Marathwada, it still remains there. But then there is a good recovery across, and good recovery at the time when it is needed the most. At the time, the sowing operation, I think the acreage has increased now. That's a good sign. Okay, but then, yes, the monsoon will go a little slow, as I said, starting with 10th onward, till about 20th or so. But that time, good thing is the rains will be there over those parts which are deficit at the moment. Northeastern region is highly deficit. They will have rains. Bihar, East Uttar Pradesh is highly deficit. They will have rains. So possibly they will also make up the large deficit which they are reeling with at the moment during that period. Yeah.
Okay. Thanks, Mr. Sharma, for that. Stay on. Let's welcome in Anshuman, who is the Director of Water Resources Division at Terry, joining in on the conversation as well. Anshuman, thanks so much for joining in. This is Neeraj here. Good morning. What has been the impact of earlier the deficit and now the deluge, as we've gotten it into various parts of the country on reservoir or on water levels, if you will? Anshuman, can you hear me? Okay, I think there is a bit of a lag there. Maybe that frame is frozen. Anshuman, can you hear me? I'll try again. No, I don't.
I can hear now, yeah.
Okay, perfect. Anshuman, I was asking you, what's the impact of the deficit first and now the deluge of rainfall on reservoir levels?
Sure. Thank you for having me first, on this show. As we have, observed that the initial time we had a deficit of around 40%, it has started reducing considerably. We've come to 27% or so. The impact on the reservoir specifically is because it's dependent upon the monsoon. We have had, as on July 2nd, the major 166 reservoir that we have, they had around 26% of their capacities, roughly around 47.7 BCM. And this is around 39% lower than the last year at the same time period. So the deficit is already there, although the reservoirs are dynamic in nature and they would have water accumulation over a period of time as we'll see the rainfall come in. So this will fill up a bit, but I believe the overall deficit, as we see this year's overall projection to be below normal. So we have to expect a little bit of deficit, although the deficit as of now should reduce as we move ahead and as the monsoon come in the mainland.
Okay. Sorry, Anshuman. What is the advantage or what is the imminent relief to the agricultural sector of this reservoir deficits reducing?
So it's very critical because the agriculture and the crops are dependent upon a lot of rainfall and the reservoirs that we have which source water from these sources, and it also impacts directly the the groundwater as well. So the water availability should increase as we see the rainfall coming in, and therefore the sort of availability of water in general for agriculture and other requirements will improve. Although, as I said, we still have to plan better because we do expect the rainfall to be not optimal and full as we expect in the other years. So we'll have to be prepared for a deficit for sure.
Okay. Okay, this is good to know. Gentlemen, thank you so much for this very quick conversation. It was just important to take stock of how the situation is and really appreciate the candid feedback from both of you. Really appreciate your time. Okay, so deficit first, deluge later. Things seem to be improving. Will they go back to normalcy? Probably not, but is this good news? Yes, it certainly is.
The market needs good news today.
For now, yes.
Yeah, 157 points down on the Nifty. And across the board also a bit of pain coming in, but it's also a morning for comebacks, I would say. Pull up a Kalyan Jewellers, and this stock in a lot of pain yesterday after its updates, right? Now seeing a 5% uptick. MCX, we talked about the kind of pain that you saw in some of those exchanges because of moves on derivatives and options. 3% up there. Inox India in focus. There's been a multitude of order wins which have been announced this morning, and that is looking good. And also it's fantastic for a company called NAC Packaging, which is listing today. Look at where the rates have settled in the session before the company actually lists. Now, this is a company which was subscribed 87 times and it settled at 186 rupees on the BSE versus an issue price of 170. That's a bit of a rare sight, Neeraj. Both a company that is subscribed several times over and then sees a good listing as well.
Yeah, I mean, okay, we now had maybe 2 or 3 instances only wherein that number has been very positive.
The oversubscription number or the
listing number, the listing gains. One company in the recent past, but otherwise, but 10% in the current market scenario, not too bad at all. But yeah, you know, it's interesting, Tamanna. I mean, we need some good IPOs coming in the second half of the year.
Yeah, I mean, not just the big ones, but the good ones.
We are not saying the big ones are not good, by the way, just FYI.
I'm saying not just the big ones, but also good. And I don't know what to take this any further. Let me go across to Mahima. She has a very interesting story lined up for you. And this is how we're looking at it. Stocks that markets have loved, but not necessarily been loved by analysts as much. Mahima joining in to explain that.
Yeah, so I'll start with the 2 stocks that we're going to discuss about, which markets have loved but analysts have not. And I'll try to tell you as to how we've come to this conclusion. The 2 stocks on the list are one, Laurus Lab, where if we take a look at the Bloomberg consensus estimate, the return potential right now is a negative 26%. And the second one is Astra Microwave, where the return potential is a negative 17%. Now, how have we actually come to this conclusion? What we've tried to do is we've taken the total markets as the universe. We've tried to stick to stocks where at least 10 analysts are tracking this, and then what we've done is we've taken stocks that are trading above their highest target prices and stocks with significant run up in the last 1 year. And considering all of these criteria, only 2 names have come up. One is Laurus Lab and the second one is Astra Microwave. If you take a look at the performance of both of these, 1 year Laurus Lab has seen a gain of 102%. Year to date is also up 38%. And Astra Microwave has run up around 70% in the last 1 year, and year to date has seen a gain of around 83%. Now, why has this happened? If we take a look at Laurus Labs first, overall this company has transformed from an ARV focused company to a diversified CDMO player. The CDMO revenue has grown sharply for this one, with some quarters even seeing a 50% plus growth. Not just that, EBITDA margins have expanded from low teen levels to around 24 to 27%. Capex is also rewarding. They've invested around 3,000 crore over the recent years, and that's now rewarding the company. They've expanded into the microbial fermentation capabilities as well, and global pharma outsourcing theme is also gaining strength and benefiting the company as well. Overall, investors have started valuing this company from a growth perspective instead of just a generic API player. The next one, Astra Microwave, what's worked for this company? We're
but overall, focus on proprietary IP, radar systems, EVW systems, and RF products is what has helped this company grow. They've moved from supplying components to now an entire manufacturing company of subsystems and complex systems as well. Plus the consolidated order book of over 2,600 odd crores, FY26 inflows grew 29%, and strong execution for ISRO and defense satellites has also happened and helped the growth of the company. Plus operating cash flows have turned sharply positive in FY26. Defense Indianization is something that has been a tailwind for the company, and management has guided to a 3x of revenue by FY30 to 31. And lastly, if we take a look at the valuations though, not painting a very a good picture, because overall Laurus Labs 5-year average is at 79 times, 1 year forward trading at 61 times, so not very cheap. And similarly for Astra Microwave also, 5-year average is around 60 times, and 1 year forward P looks like around 54 odd times. So both of these stocks not cheap, but something to look at, because both of them have crossed the analyst estimates by quite a bit.
Interesting filter to apply.
Very interesting filter to apply.
Stocks that markets love, but analysts don't. So the long and short of that story is that you should always have your own assessment in place. All right, let's talk about CleanMax. CleanMax has kicked off FY27 with its highest ever quarterly renewable energy commissioning, and we're going to be hearing from the management shortly. But Varsha first joining in for more.
Well, they've commissioned 530 megawatt in Q1 FY27, which is highest ever quarterly addition that they've done. Also, the operational renewable portfolio increased from 3.6 gigawatt to 4.2 gigawatt, which highlights strong execution and project delivery capabilities. Now, total operational portfolio stands at around 4.2 gigawatt, and the RE power sale this contributes 3.5 gigawatt. Now overall, if you see, the biggest growth driver for this company is AI and data centers, which contributes 42% of the contracted capacity. This share was only 14% 2 years ago, and the capacity grew from 260 megawatt to 2,400 megawatt. So management is actually seeing AI-led power demand as a major opportunity for this company.
Thanks for that, Varsha. Well, let's get in the management to talk about all of this and more. Kuldeep Jain, founder and managing director of CleanMax, joins in with more details on this commissioning and what does it mean for the time side. Kuldeep, thanks so much for joining in. You commissioned, 530 megawatts in Q1, the highest ever in your history. Was this a one-off because of project timing, or does it indicate a structurally higher execution run rate?
So Neeraj, what we've guided is that this financial year, we will add a minimum of 1500 megawatt. We're obviously targeting a little more internally so that we can undercommit and over-deliver. But yeah, it's been a record quarter. Till a couple of years back, like two years back, 500 megawatt would be what we did in a year. Now we're doing it in a quarter, right? And it really is down to two things. One is record high demand from corporates for cheaper, greener power, right? And the second is, of course, we have over time ramped up our execution capabilities to be able to deliver at this scale. So both go hand in hand.
Okay. Kuldeep, what about, just wanted to understand the model that you have. You mentioned B2B. Usually B2B businesses would have lower ROEs, lower margins, and you are saying that you actually have a higher one. So could you just explain that model to us and the returns and how it will work?
So Neeraj, our model, I founded this company in 2011. Since then, 100% of our business is directly with corporate. So it's direct to consumer, the consumer being a corporate, right? It's direct to consumer. If you look at who are our consumers, about 83% of our clients are AA, AAA or multinational. So we are really serving the biggest and best corporates. 42% of our volumes come from data and AI customers. We in the last quarter alone announced new deals with Meta, Google, and Apple. As a result, our tariffs are higher. So, we have 2,600 megawatt contracted yet to be executed, but that is at a tariff of 3.81 compared to in the utility segment. The comparable tariff would be somewhere about 2.75, but going direct to consumer, like in any industry, allows you superior pricing, allows you greater choice of customer, greater repeat business. And yes, because our comparison is with utilities, it is also then lower bad debts or lower receivable number of days. So, we get paid on time every month.
But I'm still inclined to ask you, why are tariffs higher? Because I think B2B businesses, tariffs would be lower, right?
So, Neeraj, in the utility business, we are the B2C. We are direct to consumer. Consumer is a corporate, but we are B2C. The alternative is you participate, what the utility companies do, they participate in a reverse auction with a utility who is a power distributor. So they don't actually sell to a consumer, they sell in the wholesale market, and the power distribution company sells to the eventual industrial consumer. In our model, we sell directly to the industrial consumer. So the utility companies like an Adani Green or a Acme or NTPC Green are in the wholesale part of the market. We are in the retail part of the market. So logically, we enjoy a superior pricing, superior return on assets, return on equity.
Okay, so if that is indeed the case, could you give us a sense of the growth visibility? Because, I mean, you have a contracted renewable portfolio of what, 5.2 gigawatts or 5.7 gigawatts, and there's new contracted capacity as well. Could you talk a bit about that?
So, Neeraj, at least for the next 3 years, including this year, next 3 years, we see EBITDA CAGR at least 50% or more. Right, so giving you a slightly longer term picture than just this year's capacity addition. But yeah, if you look at the amount of capacities we have contracted and the run rate at which we are putting it up, I think a 50% kind of CAGR for at least 3 years is pretty visible to us right now.
Okay, so 50% EBITDA CAGR. What about operational capacities? You've crossed 4.2. Where do you expect the operational portfolio to reach by end of FY27? 5.2 or higher?
Something like that. That's the guidance we have given to the street, that it will be about 5.2 gigawatt or so of total operational capacity.
I hear you. Okay. Now, data centers, right, such as the STT, GDC, Iron Mountain, Princeton Digital Group, etc. All of these are emerging as major customers for you in this category. How large can this whole data center opportunity become for you over the next 3 to 5 years?
So, Neeraj, if you just look at the pure rear view mirror outlook, the business contracted with data and AI clients grew 10 times in just 2 years. 10 times in 2 years. We grew from 240 megawatt contracted in March 2024 to about 2400 megawatt contracted with them. We've just announced big new deals with Meta, Google, and Apple, and continue to keep doing a lot more with all the data center clients we have, like Equinix, NTT, STT, Iron Mountain, Princeton Digital, L&T data centers, and so on. So all of them, they are growing tremendously. And we've had the benefit, Neeraj, for ever since we started, we've really focused on that segment. Our first rooftop project was for a data center. First solar group captive plant was for a data center. First wind project was for a data center. And therefore, we've benefited from the wave which has come because we've always been serving them. We've just grown with that wave.
Okay. Okay. So therefore, if data centers is good, you reaching 5.2, etc., 50% EBITDA for 3 years. If what happens post 3 years if data centers are indeed such a big opportunity for you?
I agree, Neeraj. And while it's not a prediction, here's an interesting number. When you say that someone's setting up a 1 gigawatt data center, right? Like, for instance, if Google is saying we are putting up 1 gigawatt in Vizag or any such example, each 1 gigawatt of data center requires about 6 gigawatts, 6,000 megawatt of renewables, which combines with about 3,000 megawatt of storage, right? So each gigawatt of data center requires a 40,000 crore rupee capital investment in renewables to supply about 75% of the electricity requirement of the data center. So 1 gigawatt of data center is equal to 40,000 crore rupees capital investment in renewables to supply And therefore, if you think about, yes, end of this year will be 5 gigawatt and, then will be 7 gigawatt and so on. Yeah, those are immediate, those are locked and loaded. In our business, next 12 to 24 months is sort of locked and loaded. But if you look beyond that, yes, I agree that just the immensity of what is happening in that space. So if that space needs 10 gigawatt of data centers in the next 5 to 7 years, that's 60,000 megawatt or something like 4 lakh crore rupees of capital expenditure. And yes, today, we as CleanMax enjoy about 35% market share of all hyperscaler business in India. And hyperscalers are important not just because they are huge, big companies, but half of all the new energy contracts in North America entered into by the hyperscaler. So it's the market. Right. And in India today, we enjoy 35% market share of the hyperscaler contracts in India.
Okay. And lastly, Kuldeep, with execution accelerating significantly for you, what will be the funding requirement for FY27 and 28?
So, Neeraj, given we just IPO'd, we listed in early March, we are well set from an equity perspective. So we have the equity capital we need for the next few years of growth. Right. And of course, then in terms of debt or fundraisers, there's the standard borrowing program, which comes with every project. We also have co-investment partnerships where with people like Apple as well as Osaka Gas, where we co-invest in renewable projects together. Both of these joint ventures have CleanMax with a 51% share, and Apple and Osaka Gas may have that 49% remainder share. So I think about 2 months ago, Apple invested 100 crores in that joint venture. And I think last December, Osaka Gas put in 200 crores in that joint venture. And of course, we intend to do a lot more with them. So, yes, in a nutshell, no new equity raises for the next 2 years. Lots of partnerships and co-investments, which we quite like that model. And standard debt raise program with banks or tapping debt capital markets.
Okay, Kuldeep, really good talking to you and all the best for the quarter. We look forward to talking to you maybe in our studios post your Q1 numbers. But thanks so much for speaking today. The stock showing that bit of a spike, something about what the management said appealed to a few investors, I reckon. Doing okay, great first quarter performance. Let's see if that continues. Very interesting conversation, Tamanna, with that one. But that stock is doing well and the new listing is doing well.
Yeah, 8% debut for NAC packaging that has coming in, which is great. After the kind of oversubscription, it's already 7 times oversubscribed. It had received, of course, a strong response. But what's the company all about? What are the strengths? What are the weaknesses? Mahima joining in for more. Mahima.
Integrated packaging solutions. This includes manufacturing. For especially packing for laminated woven bags, plus pinch bottom glasses, plus block bottom retail shopping bags, etc. Now, if you take a look at this SWOT analysis for this one, I think the biggest strength that they've had is their customer retention, because that has gone quite up in FY26. It's improved sharply to that 88.3% mark versus that of a 65% mark in FY25. Revenue has also seen a good CAGR growth in the last 3 odd years. Plus, they have a 10% market share in India, and which they've said that they'll grow from here on. I think in terms of weaknesses, there's a single customer that is holding around 17% of the revenue. So that might be on a risky front. And revenue growth, though the customer retention has been increasing, the revenue growth overall has been decelerating in terms of FY26. In terms of opportunities, I think the new Mehsana plant that they're aiming to open with this fresh issue is going to give them a huge capacity expansion and is also going to increase their utilizations. The Mexico JV, which is operational from April 2026, is also now accessible to Latin American markets, and this could pose a huge opportunity of growth in terms of orders. Agri exports and food processing boom will also likely directly have a positive impact on the company. In terms of threats, I think currency fluctuation is one. Plus, we've seen as to how volatility in crude prices has led to an impact on the raw material that this company uses, for example, PET chips, etc. And that is something that could weigh on their overall margins. Lastly, in terms of withdrawal of export incentives could also affect their earnings. So this is the overall view of a SWOT analysis of the recent listing of NACPAC.
Okay, Ridhima also with us, and Ridhima actually at the National Stock Exchange. Ridhima, you must have heard a bit of what the management has said, getting a sense of what's happening at the stock exchange, some euphoria there on the listing of NAC Packaging.
Absolutely, absolutely, Tamanna. The stock has listed at a premium, as the grey markets had suggested, about 10% premium, if I'm not wrong. And it had seen a very positive subscription also from the retailers as well, about 20 times. The management has also said that their focus will be on developing their Gujarat facility and to make it an integrated manufacturing unit. And also, apart from this, their main focus will be on the debt repayments also. And if you see the performance of the company has shown a strong performance, around 11.8% of revenue growth and 26% in the net profit, and even the margins have expanded by 18.5%. And a little bit more about the company manufactures polypropylene bags, the packaging bags, and sustainability is also one of the key trends which they will be catching on. And also their main clients include companies like Drool and in Indian market, and in the international markets, global clients like Cargill are their main clients, and around 71 international clients, around 1,950 clients is what the company commands. And the strength of the company is definitely the integrated manufacturing unit, and the key weakness would be the commodity prices, which can keep fluctuating at this point of time. So that is something we need to wait and watch.
Okay, thank you so much for that, Ridhima. So NAC Packaging there in focus. Nice to have at least one IPO get off to a strong start, 10% up right now. Let's look at what Q1 is going to look like, because that's the lull, right? Everyone waiting for that, even as markets today are getting over this geopolitical hitch which has come about in the last 24 hours. But they're likely to see strong revenue growth led by financials, metals and telecom. However, higher crude prices and input cost pressures may weigh on margins, keeping profit growth under pressure. Somit is joining in with our analysis. Somit, their notes out. We've seen some Q1 business updates. What's the picture looking like basis the information we have so far?
Well, for the first quarter, revenue growth is expected to be quite stellar or quite strong, but the same would not extrapolate into a higher profit growth because of the margin pressures that are expected to come in. And this is largely because of the West Asia conflict, which have kept raw material prices on the higher side, and hence EBITDA margins would be under pressure, which would reflect on the profit side as well. Few sectors, firstly to highlight, financials, metals and telecom are expected to be the key earnings driver, and on the drag side it will be the oil marketing companies. Now if you look at this table is clearly putting out what is the kind of growth and what are the key themes that we are seeing. For revenue growth, we are expected to see the strongest in the last couple of years. 16 to 17% growth on the revenue side is expected ex the oil marketing companies, but earnings growth, as I mentioned, would be positive but lower compared to what the revenue growth is, and this is largely because of the margin pressures. Biggest positive sector-wise will be financials, metal, telecom, capital goods and select IT names. On the flip side, the biggest negatives will be oil marketing companies, followed by cement, pharma, chemical and autos, because of the margin pressure that these sectors would see in the first quarter of FY27. The key macro issue during the quarter was the Gulf West Asia crisis and sudden rise in the higher crude oil prices that impacted the quarter. But when you look at the outlook for the second half of this financial year, better margins are expected as commodity prices have eased, and this would clearly reflect on the margins from the second half of this financial year, is what the consensus view is coming in. Now, when it comes to financial, that will be the only biggest sector that is expected to see a good and a positive growth, and this will be on the back of healthy loan growth, stable asset quality, manageable net interest margin pressure and improving NBFC outlook for the financial sector. On the flip side, the worst quarter for the oil marketing companies because of inventory losses, volatile crude and weak marketing margins. In fact, marketing margins were negative in the first quarter of FY27. Metal, that is expected to be a surprise quarter here, or could be a surprise quarter because of higher metal prices, better realization and operating leverage benefit coming in for the metal companies in the first quarter. Now this table clearly gives out clearly gives out on what can be expected from which sector. On the positive side, we have financials, NBFCs, metals, telecom and capital goods. Neutral side, largely inline sectors would be IT, consumer, capital goods, real estate, retail and auto. Few segments of capital goods are expected to report pretty much inline set of numbers. But when it comes to negative, we have oil marketing companies, cement, chemicals, pharma and few auto OEMs that could report numbers on the negative side in the first quarter of FY27.
Wow. Okay. Well, strong, or you could argue that the earnings outlook could be a bit mixed, and a lot of focus will be on the commentary in a lot of sectors as well. Thank you, Sumit, for that. Let's take a quick break. On the other side will be the conversation with Manish Sonthalia of MK Investment Managers.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really.
Back with India Market Open. Pull up the indices once a moment for you, because before we get to Manish Sonthalia, and we down, we making feeble attempts at recovery, but until crude cools off a little, I would reckon today could well be this kind of a day. But is this a warning sign, or will the markets digest this? Manish Sonthalia, Director and Chief Investment Officer of MK Investment Managers, joins us on the show. Manish, great having you. Thanks so much for joining in. I mean, this flare up that has happened overnight, it's the last thing we needed, right? Because the markets were kind of getting used to a new normal for crude. Maybe earnings will show a good space, and then you have this impediment, speed breaker, whatever you call it. Does this mar the optimism, or is it a wait and watch approach?
I don't think it is a wait and watch, Neeraj. I think it's a buy on dip. The ceasefire has fructified. Yes, you will see flare ups time and again.
because of the nature of the deal and the relationship between the two countries. But as long as Iran is able to transport oil through the Strait of Hormuz and Iran is able to supply and sell those oil to their partners, there shouldn't be too much of a problem. I wouldn't read too much into the restart of the Iran-US war. I think these things are part of the course. Yes, you would have ups and downs during the day, and for the moment we can see that there is some flare up. But really, I wouldn't be too much concerned. I think the deal is done, and yes, you will have frequent repercussions about violations of ceasefire and each party blaming the other side. But as long as the oil is flowing through that strait, we shouldn't be too much of a problem.
Okay, so having said that, then the focus shifts squarely to now, in the near and immediate term, to what comes out of the earnings season, right, Manish? Would that be a fair assessment?
Yeah.
Okay, and if that is the case,
absolutely.
How are you thinking about this Q1? Because there will be a few winners, maybe a few losers, but could this be very similar to 2020, Manish, wherein when pushed to the wall, India Inc. shows its ability to be resilient around margins, even if not around revenue, and will that shine through?
Yeah, so, it was widely anticipated that Q1 earnings is going to get dented because of the spillover effects of the war. And, the war ended towards the fag end of June. And now the focus lies on how Q2 and Q3 would shape up. Having said that, I think Q1 looking at around 8 to 10% growth on the Nifty 50. That's part of the course. Oil and gas is going to be a vulnerable sector out here. Metals is again going to be a vulnerable sector out here. But apart from this, I think things should be pretty fine. You have a lot of tailwind in terms of price realization playing out in the top line growth. There will be implications on margin compression across the board. But valuations have become far more palatable. So, except for IT, which is basically quite headwinded in the overall scheme of things, FY27 should be north of 10 to 12% sort of an earnings growth for Nifty 50. And the first quarter in that context would be around 10% sort of a growth. So, I think market would have to look through and would be broadly looking through the Q1 numbers because of the implications of the war. Focus shifts on Q2 and Q3, but there will be certain sectors which will be quite resilient and certain sectors which will be feeling the pain. So that's how things are stacked up.
Where is it that you foresee pain, Manish, both on Q1 numbers as well as potentially the commentaries? Are there sectors wherein both of these things could mar the sentiment?
Yeah, so if you look at automobiles, the volume growth is going to be very good across PVs, two-wheelers, HCVs, everything. But margins are going to be an issue. Similarly, if you look at consumer names, there is going to be a tailwind in terms of prices that you'll likely see on the top line growth. We have heard commentaries from the staples companies talking about mid-teens sort of value growth on the top line for Q1. But again, margins are going to be an issue because of the crude-related derivatives that plays out on the raw material, bill of materials of the FMCG companies. That is likely to be the case. Top line is quite muted even for the consumer durable space as we step into the first quarter of the result season. And margins, again, are going to be an issue. So these are some of the spaces. If you look about, the treasury gains of banks, that's likely to be somewhat impacted. But, pharmaceuticals, again, a whole lot of supply chain bottlenecks will have implications both on top line and margins. So these are some of the sectors where there's going to be implication on top line and the margins per se.
Okay, where is the reverse, Manish? Where is it that you believe that things could actually turn out to be good, both on the developments that are happening around the sector, as well as potentially the quarterly performance? Is there a space like that?
Yeah. So the whole world knows about these spaces. So these are advanced manufacturing, high-tech manufacturing, aerospace, defense. power transmission, energy transition, anything to do with them. They data center and all of these will be seeing massive tailwinds on the top line, the EBITDA and the bottom line. The only question out here is that what valuations are they palatable? Because this tailwind is not only for this quarter, but the whole of this year and next few years. But what is it discounting? Is it discounting FY28? Is it discounting FY29 or 30? That is the call you have to take.
Okay, let me twist this and ask you, Manish, where is it that Manish Sonthalia is, in the current construct of the market, happy paying top valuation premium to a story which might be justifying FY29, because FY27 and 28 is just way too expensive. And there are plays like that, right? I mean, aerospace and defense, in some aerospace companies, the valuations are probably expensive even at FY29 levels, if you will. So where is it that you are comfortable within this expensive cohort, and why?
So energy transition is here to stay, right? So if you don't find valuation palatable from a large cap perspective or well discovered names perspective, you look into the mid and the small cap names. Same goes with deep tech, right? If advanced manufacturing, semiconductor, these are well discovered plays, the top line growth is going to be there, but valuations are probably discounting FY29 and 30. Look at robotics, deep tech, again the mid and the small cap space. So all these spaces are going to be relevant from an FY30 perspective. Where the valuations have not got fully discovered is the space that you want to be. And there are enough opportunities. You have to open and look with your eyes where these spaces are. And a whole lot of these names are available in the mid and the small cap space.
Okay, interesting. Manish, the one, how do I say, the one pickle in the minds of the street versus the minds of the chartists, because yesterday it was uncanny that I got at least three notes from technical experts who are pretty good at their craft, telling me that they see gains in IT ahead. Now I'm trying to understand whether there is a fundamental merit in that argument currently, that there might be gains to be made in IT stocks ahead. And I'm not talking about buying them and hoping that they will do well, because technical chartists are actually seeing on the charts that the stocks will move up. So is there a fundamental case for that to happen?
Look, the sector and the stocks within the space has fallen so much, both on the count of earnings cut as well as valuation cut, that you are really pressing the extremes on this space. I get the point that there is AI disruption and a lot of business models will be thrown out of the window. But nothing moves in a straight line, either on the downside or the upside. In this case, the downside, the fact that it has fallen so much, and this is particularly relevant from the chartist or the technicals point of view, is that there is likely to be some bounce before the next round of selling happens. So, I would agree to the fact that since fundamentally valuations in any case have fully justified, the fundamentals of the sector per se. You have 5% free cash flow yield businesses, large companies, 12p, Infosys has 3 digits. I mean, all these things just look too good to be true. On the other hand, you hear news like Microsoft is also entering AI services implementation, which will be basically a major competitor to Indian IT services companies per se. These are basically long-term problems which Indian IT services companies will have to deal with. So I would believe there could be a 20 to 30% upside from the current levels. You have beaten down the sector just a bit too much. In the short run, there could be a bounce, and maybe the long-term trajectory still will hold that it will unfold till the business models of Indian IT services companies plays out.
Okay, fair call. Manish, are you a sports fan? Are you watching tennis or football?
Yeah, football is something which is good, but disappointed at some of the major countries are out. Like Germany is out, but still, match is quite exciting. Let's see.
Yeah, did you see Argentina last night?
Yeah, absolutely. I mean, what do I say? What a comeback.
What a comeback. Yes, indeed. I know some people are disappointed, particularly people in my studios. My producer who is producing the show right now is very disappointed that Messi won, because he and I almost had a bet that Messi will not. And I'm so happy that I won per se. But yeah, Manish, enjoy the rest of the Football World Cup as well as Wimbledon. And let's hope that Djokovic viewers does something special. Manish, thank you for joining in today, of course. But
thanks for having me, Nikhil.
No, the pleasure is ours. But this is the charm of the sport, that the OGs, the ones who've done this for years and years, are still doing it. Djokovic and Messi right up there. Yes, you may have the Sinners and the Alcarazes in tennis, and you may have Mbappe and the Haalands in football, but these two are still up there, making their presence felt and making it count. They are not just out there to fill the numbers. Messi is the top scorer in the FIFA World Cup 2026 as of now, and of course the top scorer in the World Cup scores per se. And it was special watching him win. Yes, maybe Egypt deserved to win, but you can't take away the fact that Messi had a clean goal. He assisted in the first one as well, and Argentina had a dramatic comeback after being 0-2 down until the 79th minute. So, well, all credit goes to that team. And with that little sporting addition, it's a wrap on this leg of India Market Open from the NDTV Profit Suzlon Studios. Thank you so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin sees a cool off but still stays above the $63,000 mark. US pushes strategic Bitcoin reserve strategy. Glassnode's report says Bitcoin accumulation is building. And lastly, Solana hits a $5.77 billion of tokenized asset volume in the second quarter of calendar year 2026. Interestingly, Bitcoin has defended the $63,000 mark as technical cool-off is being seen due to the macro factors. And also remember, the long-term positions were also liquidated. Now, if the levels of $63,000 of level support is held up, there could be a chance of a short-term relief bounce. Also, White House is defining governance and custody for US strategic Bitcoin reserve holding. That's about, you could say, 330,000 Bitcoins. Next to watch would be any formal decisions on which any agency will control the reserve, plus whether the Congress advances the Bitcoin Act or authorize new Bitcoin accumulation. Glassnode's on-chain report points to Bitcoin accumulation, which has strengthened across multiple wallet cohorts, suggesting that patient buyers are stepping in while price action still looks a little bit uncomfortable. Looking at Solana, they have closed the second quarter of calendar year 26 with almost $5.8 billion in tokenized asset spot volumes. That is a quarterly all-time high, a figure that exceeds the entire $775 million generated across the second half of 2025 by more than 7 times. And before we wrap, here's a quick check on changes to the crypto prices over the last 24 hours. Largely, we see there is a dip coming in Bitcoin and Ethereum between 1 to 2%, but the sell-off is there in XRP and Solana. As for Bitcoin, let's look at the support and the resistance range. That includes between $62,000 to almost $65,000. Now, time to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. Looking at the overall crypto setup, the market outlook looks like a little bit of corrective consolidation. The important number to track is the $63,000 levels. If that is held up, a relief bounce is likely, at least for short term. But yes, there is some sector specific profit taking which we are seeing. But overall, medium term or long term basis, the potential sentiment could be positive, driven by the rally if the volume increases on buying, and the Bitcoin resistance levels at the technicals ranges in a very short range, but around $64,000 to $65,000 levels. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Watching Ask Profit here at NDTV Profit. I'm Mahima Vachharjani and with me is Puneet Zaveri, and this is a show that gets all your stock related queries answered. While you start doing that, it's important to take a look at the markets and not a very good day. I mean, we've seen a good run up in the past couple of days, but the Nifty 50 today is down by about 0.6%. Below the 24,300 levels now what we're seeing. Yesterday we saw, of course, markets closing below the 24,400 levels, but we've reached the 24,300 levels as well. In terms of the VIX, let's try to pull that up because The spike in the VIX is suggesting that there is volatility in the markets right now. Almost an uptick of 5% is what we're seeing. Let's also try to pull up the heat map of Nifty 50, and you have ITC losing the most grounds, down by about 2.4 odd percent. Geo Financial Services, Interglobe Aviation, of course, is on the back of rising crude prices. The downtick coming in on Interglobe Aviation, Shriram Finance, Eicher Motors, Maruti Suzuki are some of the other names which also continue to be under pressure. But on the flip side, something that's holding up is Dr. Reddy's, but not significantly, because you're just seeing an uptick of around 0.9 odd percent on this one. Wipro, though, doing fairly well, up 0.8%. Adani Enterprises also up by about 0.8 odd percent. Adani Ports also up by about 0.6 odd percent. It's just that the strength of the market is not looking very positive, and that's reflected in that advanced decline ratio that you see in the Nifty 50 as well. The Bank Nifty also trading with cuts of about 0.4 odd percent, breached the 58,000 levels, now trading below the 57,900 levels. Let's also try to pull up the sectoral heat map and see as to what that chart is looking like. And you have realty still seeing some gains coming in there, up by about 0.8 odd percent, followed by pharma and metals, but FMCG is taking a knock, down by about 1.4%. Oil and gas also seeing downtick for around 1.2%, and you have media also seeing profit booking. Let's also quickly pull up the advanced decline ratio because that gives you a picture as to how the broad end of spectrum is doing. It is under pressure, but not as much as where the broad end of spectrum goes. So, where the benchmarks go at least. So you have around 1,000 odd advances versus about 1,500 odd declines, but the mid cap 150 is down by about 0.1 odd percent, and so is the small cap 250. So that's with regards to where the markets go. But let's start digging into your queries, and to answer them, we are now joined by Vaishali Parekh, who is the Vice President Technical Research at Prabhudas Lilladher Capital, and Gaurang Shah, Senior Vice President at Geojit Financial Services, joining us. Welcome to both of you, and a very good morning to the both of you. I'll start by taking the first question, which is from S. Sundararajan, who is asking about Vishal Megamart. Wants to know if this current market price is the right entry price for this one or not. Vaishali, I'll come to you on this one. Do you think the charts are looking attractive enough?
Hi, very good morning, Mahima, Gaurang and Puneet. I think talking about Vishal Megamart, it's just been consolidating. So I would say if one has to buy 115 for short-term basis is the near-term support. I think it should continue with a range of 110 to 125 for now. Only if this stock moves above 125, this could give you a good strength from there on. But for now, I would just take it as a range-bound movement, and these are the levels to watch.
Got it. Well, good morning to you as well, Vaishali. But as we look at some of the other stock-related queries, Container Corp is the other one that we are focusing on. Mohit, who's from Ludhiana, is writing to us. He wants to know about the counter. He's holding shares at 512 and wants a long-term view of Container Corp at this point of time. Gaurang, very good morning. Welcome to the show. What's your view about Container Corp?
Hi, Puneet. Thank you for having me on your show. Morning to Vaishali, Mahima, to you and to all your viewers. A small disclosure before I go any further. All recommendations that I'll be sharing with you this morning on your show, Puneet, they are part of our fundamental research team recommendation. From a long-term point of view, our company Geojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So, Puneet, look, with Concord, the thing is that divestment, then land monetization, etc., levels of almost 700, 800 plus at one point of time, and then there has been terrible amount of underperformance in the stock, and things don't seems to be heading anyway. We used to cover Concord at one particular time, but then because of that underperformance, we have dropped the coverage. My sense is that there are better sectors and stocks to look at from a long-term point of view, because we are talking about long-term point of view. I think there are better stocks and sectors to look at. No specific comments on Concord.
Okay, all right. The next one that we have is from Venkat Ramani. She's nicely squeezed in 4 stocks and wants a view whether which one she can go ahead and invest in. Vaishali, she's asking about Uno Minda, Sirma, Coforge as well as Zydus Life, and she is saying that she wants to invest around 50,000 in either one of these or maybe two of these and wants to know from a 12-month perspective which one is looking attractive on the charts. I'll repeat the counters: Uno Minda, Syrma, Coforge, Zydus Life.
So I would prefer Uno Minda because right now this has not really participated and technically it is very well placed. So you can see a good run up from here on. Talking about Zydus, I think Zydus has already done quite a bit of up move. So for now, it's not a buy. It can be bought, considered at later levels once it gets corrected, perhaps at around 1000 to 980 levels. That would be ideal to get into the stock. So for now, if you have to choose, I would say go for Uno Minda. That is one of the stocks, and Syrma still looks good. So that's already in a very good established trend, and I think it's ready for still further upside. So I think of all the stocks, I think these two look good, better to me.
Yeah, got that view, Vaishali. But let's just quickly cut in to the Tata Sons chairman N. Chandrasekhar, who's speaking at the Tata Motors annual general meeting, and quickly listen into what he has to say.
Registering a significant growth of 15.3%, nearly twice the industry average growth in the fiscal year. In the second half of the year, the company emerged as the second largest player in the market with a market share slightly in excess of 14%. The company reintroduced the iconic Sierra and also introduced multiple powertrains across the entire portfolio and launched petrol variants of Harrier, Safari, and also the all-new Ultras. The India business revenue reached 58,465 crores, a year-on-year growth of 20.7%. The EBITDA margin remained around 7%, and the PB2 grew by 33%. The balance sheet has remained quite robust with a cash balance of 6,710 crores. Importantly, the company is gaining the mind share. Nexon and Punch continue to be among the top three vehicles. Sometimes they are number one and number two vehicles, sometimes they are number one and number three vehicles consistently for the last few years. And the CNG powered cars and SUVs significantly outpaced the industry growth. The company remains firmly committed to the EV transition, and cumulatively since our launch in 18, we have sold 3 lakh electric vehicles. Looking ahead in the next 5 years, the company has a big ambition. Basically, the decade between FY20 and FY30, the company wants to achieve a 10x growth in volumes with an ambition of 1.2 million plus vehicles and achieve a market share of 20% from the current 14.2%. In all, the company is on a growth trajectory and it will continue to focus on launching products that are aspirational for today's consumer. As I mentioned, Jaguar Land Rover had a tough year, primarily due to the cyber attack, in addition to all the issues that they also faced due to the supply chain. And the production came to a pause for almost a couple of months. This resulted in the company having a degrowth in terms of revenue terms of 21% over the previous year and delivered close to 23 billion British pounds. The company also saw the leadership change, a transition from Adrian to Balaji. We want to place on record our most sincere appreciation to Adrian Model, who did a splendid job during his tenure. And on a consolidated basis, your company generated revenues of 3,35,582 crores and a PBT of 2,519 crore. Overall performance reflected the temporary disruption in JLR, while the return to normal production sustained demand momentum in the India PV business provides strong confidence going forward. The board has recommended a final dividend of rupees 3 per share, subject to your approval today. Beyond business, your company remains deeply committed to inclusive growth and sustainability. The community initiatives of your company in India continue to create meaningful and lasting impact, impacting 18 lakh citizens across 105 districts, primarily focused on marginalized communities. The company's focus has been to improve the quality of life across underserved regions and empowering communities, particularly women.
Well, that was, of course, N. Chandra speaking at the Tata Motors PV annual general meeting. Some important commentary that we have heard, but the ambition continues to be over this decade going to FY30 as well. But Gaurang, we also had one question from Dr. Sethi on Tata Motors PV. He was holding shares at 420 odd, but some of the commentary is very, very positive, right? Going to almost 12 lakh vehicles from roughly around 6 lakh right now. So they are having a lot of ambition with the growth. But how are you looking at this counter now?
Well, so Puneet, I think a lot has happened in terms of impact of JLR, etc., etc. We used to cover this company when it was a combined entity, and post that we have a positive coverage on both Tata Motors PV as well as Tata Motors CV. I could not get whether there was any inputs for JLR from the management as they were speaking about the business and the future growth. My sense is that the contribution from Tata Motors domestic business is going to come in thick and thin. Maybe a kind of a business strategy change or some kind of newer launches as far as JLR is concerned will definitely also help the balance sheet to improve. Overall, I think in terms of the EV portfolio, there are a lot of variants available in different categories. In going into the future, as I was listening to the statement, you and me, I think we could expect many more EV launches, and of course that will have a positive traction on month-on-month numbers, and of course a positive impact on the quarterly numbers as well. We have a positive coverage on Tata Motors PV.
All right, so that's the view coming in on Tata Motors PV. I think we've got Mohan waiting by, calling us from Mysore. Mohan, a very good morning to you. Go ahead, ask your question.
I have just bought 15 shares of Zentech at 1,374. So just want to know, can I have these shares for long-term perspective?
Okay, I'll take your question again with Gaurang. Gaurang, what do you think of Vabag in the water treatment space? Though, of course, sitting on a very high valuation, but overall the stock has also seen a significant run-up, right?
Yes, so this is one of the stocks, Mahima, which has actually done well, likes of Hitachi Energy, likes of MTAR Technologies, just to name a few. On VATech Vabag, well, this is a capital goods engineering company in the mid-cap, small to mid-cap category, associated with water treatment, effluent treatment, and desalinization of water. There is a huge positivity in terms of order book. And that is one of the primary reasons why we've seen an outperformer from VATech Vabag or VATech Vabag, however you want to pronounce it. We maintain a positive stance from a long-term point of view, and our sense is that not only the execution of current order book will translate into positivities, but the company is possibly going to get much stronger orders, not only from domestic, but from the overseas market. They have a decent presence in the Middle East as well. So this conflict-related kind of impact was there from short to medium term, but long-term positive. If you want to add on to it, you got in. First of all, you bought the stock at a very decent level. Don't put all whatever additional investment you want to do. Don't put everything at one time. Start at current levels, and on dips you can add on.
Got that view, Gaurang. But the next question coming in, another caller from Hyderabad. Ravi has a stock query for us. Ravi, very good morning to you. What's your query?
Yeah, very good morning. Yeah, I'm holding Canara Bank shares 473, bought at 115. Since it's been an year, I'm holding this, and the stock is also falling gradually.
Okay.
So shall I book my profits and switch into some other counter?
And do you have any other banking name in your portfolio, Ravi, or is this the only one?
ICICI.
ICICI, got it. And this you want to keep for the long term as well, Ravi?
No, not as of now. Since this stock is already trading under support level, just want to book my profits.
Got it. Well, Vaishali, would you recommend that at Canara Bank? As Ravi has rightfully highlighted, there has been correction from the top. What's your view?
I would say now finally keep 120 as a crucial support, or maintain that as a stop loss, because if this stock goes below 120 and for near term, it can go towards 115 or so. So 120 should be the level to watch. I think in all likelihood, you can see a bounce and look for a target of 135 if that is so, as the near term target resistance.
Okay, all right. So that's the view coming in on Canara Bank, but it's time for our rapid fire round now. Gaurang and Vaishali, try to keep your answers as short as possible. The first question that we have is coming in from Prashant. He's asking about Eicher Motors. He's got around 12 shares at the levels of 6230. Vaishali, from a 1 year perspective, a good hold?
Hold.
Vijay from Chennai wants to know about DMart. Vaishali, he wants a short-term target. We've seen a correction post that quarter 1 update, but what's your view?
So currently at 4040, stop loss of 3900, short-term target 4300.
Okay, the next one is on L&T. Kaushik from Vadodara has got 10 shares at the levels of 3320. He wants to know if it's a good time to average or wait for the earnings. Gaurang, what would you recommend?
Go ahead and add to it and hold on for long term.
The next one is on Grow. Our viewer Naveen from Bengaluru is holding shares at 200. Vaishali, I know it's a very short-term, a very recent listing also, but any kind of target that you have?
220 to start with.
Okay, GMR Airports, from a long-term perspective, a fresh entry right now makes sense, Gaurang?
From a long-term point of view, yes, we expect footfalls to increase and more connectivity will have a positive impact on the earnings of the company.
The next one's on GE Power. Jeet from Kolkata wants to know if it's a good time to enter this counter. Vaishali, would you recommend that?
Yes, I think buy this with a stop loss of 875 and look for 930.
The next one's on Lupin. Vaishali, Manav from Mumbai says he's holding 45 shares at the levels of 2287. Should he add more, and what should be the target?
I would say for now, avoid. Book partial profit.
Komal from Dubai is holding on to ITC, almost 3,000 odd shares at 350. Gaurang definitely, taking that brunt because of that taxation change at the start of the year. But should she still continue to hold this counter, and asking if she should add more? Is there enough evidence for that?
No, enough evidence would have been, confirming Puneet if there was clarity in terms of any other investor. She's got 3,000 shares. We have a positive coverage. She can add to it in case she's got not overexposure to ITC.
Okay, the next one is on BEL. Nagbabu from Andhra Pradesh wants to know if we can invest into this from a long-term perspective or any other defense name that you like, Gaurang.
We have a positive coverage on BEL. Other than that, we like Mazgaon Docks. BEL definitely positive impact in terms of order execution and earnings visibility.
Next one's on Hindustan Zinc. Vaishali, Pavitran from Trivandrum is holding shares at 574, asking if she should continue to hold this stock and a target.
Yes, hold and keep adding at every tranche. Right now, we've seen a positive move, but 480 acts as a support. So continue buying, adding in tranches.
Swiggy, Harsha from Vijayawada has bought 50 shares and wants to know whether to hold, sell from a short-term perspective. Vaishali, on the charts?
Short-term perspective, 240 is the support and 290 would be the target. So hold and you can add.
Aditya Kiran from Hyderabad is holding on to TCS at 2952 and wants to know if he can average this at the current level. Gaurang, results just around the corner. What would you recommend?
So I don't want to commit a suicide over here. I won't. Expectation is quite high, Puneet. But yeah, from a long-term point of view, we are positive. Let's hope the numbers deliver.
Bhaskaran from Chennai wants to know about City Union Bank from a slightly short-term perspective of 1 month. A good hold, Vaishali, on the charts?
Hold for a target of 235, 240 for months perspective.
The next one, that we're getting in, and it's on Piramal Finance. Our viewer wants to know if it's a good time to enter this counter, Vaishali, at the current levels.
No, 1800 was a good level to enter. Look for a target of 2400.
Well, that was the last question of this edition and this round of the rapid fire. But stay with us. A lot more stock-related queries on the other side after this very short break.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing.
Welcome back. You're watching Ask Profit right here on NDTV Profit. A very quick check because you've seen in terms of the Nifty 50, and let's pull up that counter now. Continuing to be under pressure. Since some slight recovery over the last half an hour or so, and hopefully we build on to those gains. Now very close to that 24,300 mark as well. I also just want to quickly point out the small cap index too. That's the other one that has been in focus now. Over the last couple of weeks, largely seeing more benchmark related moves, especially on the large cap side of things. Individual movers are also dominating, but yet again, you're seeing some buying at the lower levels on the small cap 250 and the BSE 500 also, before we take your stock related queries next. And some of those moves like Balaji Amines, Hikal, Alcal Amines, the Amine plays yet again back in focus just before quarter one starts. Kalyan Jewellers now second day running up almost 4.5%, as well as Lodha that's seeing again another 3.5% kind of move right now as we speak as well. But Let's continue your stock-related queries, and if you haven't already, do start sending in those queries on number that is flashing on the top of your screen right now. Next one that's coming in right now, it's from Bindu, who's from Hyderabad. She wants to know about TD Power and if it's a good bet for the long term. Gaurang, I don't know if you have any coverage on the counter, but within the power space, you've seen a lot of action, a lot of reaction as well come through, right, over the last few months. Anything that you like in the smaller mid-cap space amongst the power ancillary companies?
So we have positive. In fact, there is a lot of choice, Puneet, to be very honest. We have positive coverage on power ancillary, power transmission and distribution, and power generation. CG Power has a play of chip semiconductor EMS. And you have PG Electroplast, you have companies like ABB's, you have companies like Cummins, positive coverage on Hitachi Energy as well. Thermax is the other one that we have positive coverage. And we believe that the additional power generating capacity which is going to come from the next 3 to 5 years, Puneet, is going to be extremely positive for the entire power sector, whether it is power generation, power transmission and distribution, or modernized power equipment manufacturing place.
Fair point, Gaurav. And you've seen, we also had the management of KSS International today, another beneficiary of that HVDC play in terms of hires, and the interest continues, right? Your stock's up 130% since it listed back in December 2025, has been on a great run. But the next question coming in, and we actually were talking about power. Another one that's coming in is on Genus Power. Murthy from Bengaluru has bought shares at 330 odd. Gaurang, does this one also make it to your list? Gaurang, that's for you.
I'm sorry, Puneet, I had lost your audio. Is the question on Genus Power?
Yes, Genus Power. I was asking if it also makes it to your list, since we just spoke about the other power ancillaries as well. Murthy had bought these shares at 330 odd.
Unfortunately, we don't have coverage, Puneet. Sorry about this.
Anything on the charts, Vaishali, that you like about Genus Power?
I would say yes, it is showing signs of improvement and it's already in a trend. Right now it's consolidating. So I think my view stays positive as long as 280 levels are held on as support, and this stock needs to cross 350, 360 levels. So if that is so, then I think this would show more conviction of further upside going towards 400 levels. So for now, yes, it's a hold and buy with the support of 280.
The next one also, Vaishali, this one's on Prestige Estates. Our viewers bought these shares at 1500. This is Sunita from Delhi. Wants a 3 to 4 month view on the stock. We've seen a massive recovery, Vaishali, from that March 38 level to trading around 1100 odd at that time. But is the momentum coming back to that 1800 mark from where it slipped initially?
Very likely, because overall full realty sector is showing a lot of strength. And talking about Prestige particularly, yes, it's already gone one way from 1300 to now nearly 1700 and now currently at 1680. So I would say keep a stop loss of 1640, and I think very likely the stock can go 8 to 1800 and perhaps higher.
Got that view. But the next question, and this one also, and as Vaishali rightly spoke, right, about a bunch of realty plays that continue to be in focus as well. The next question coming in on DLF. Our viewers bought these shares at 590 odd, so recently posed the correction. Wants a long-term view. Gaurang, anything that you like in the realty space, and is DLF one of them?
DLF definitely happens to be one of them, Puneet, but just a word of advice and caution that real estate sector has gone through a lot of changes in terms of policy, in terms of discipline coming in. But despite of that, Puneet, the real estate sector happens to be a high beta sector. In good markets, you will see outperformance. In bad markets, you will see real estate sector leading from the front. But yeah, positive on DLF, Godrej Properties, Oberoi Realty, Shobha Limited, and Prestige Estates.
Okay, all right. We've got, I think, Murli, who's calling us from Hyderabad. Murli, a very good morning to you. Go ahead, ask your question.
Yeah, good morning. Good morning to all the panelists and you both. My query is on Engineers India. I have 35 shares remaining at an average of 118. So I wanted to know what is on the 6 months, 1 year view. Because I booked some profit when it was almost 52-week high. So I wanted to know, should I hold on till it reaches that level?
Okay, got your
any other sale after exiting this?
Okay, got your question. I'll take this up with Vaishali. Vaishali, you heard Murli. What would you suggest on the charts?
So I would say right now it is showing a lot of strength, but I think always discipline is to be maintained. So 220 should be taken as your stop loss. And I think if market continues overall, this sector shows strength and this stock is to continue with its upward move, it can go towards 270, 280 and perhaps even 300 levels. So hold with a stop loss. Very likely you will get higher targets.
Higher targets on EIL, got that view. But the next question is from Keshav, who's writing to us from Chennai, and he wants to know about Walchand Nagar. He's bought these shares at 241. Gaurang, this one has been a key beneficiary, right? I'm actually talking about the stock Walchand Nagar on this one. But what would you recommend here, Gaurang? Because it's one of those nuclear energy plays, right? And always comes into focus when that policy move comes through. I don't know if you have coverage, but what's your view on the space, if not directly on Walchand?
Well, so extremely exciting. And I think there are a lot of players which are available. And some recent listing is also something that has been attractive. On Walchand Nagar, unfortunately, Puneet, we don't have a coverage, so I won't go into specific. But this is a process which is going to take time. Nuclear energy, new energy sectors, clean and green energy, etc., etc. So remain extremely positive on the sector. And the fact of the matter, Puneet, is that India was a power deficit country. It is, and hoping that in future it is going to be power sufficient with the kind of capacities that are going to be added.
Okay, all right. The next one that we have is coming in, and this query is on Siemens Energy. Our viewer says that he or she has bought it at the levels of 2840 from a 1 to 1.5 year perspective. Accumulate more, continue to hold, or what should be the course of action? Gaurang, I'll stick with you for this one.
So, Mahima, we had a coverage on Siemens Limited when this was a combined entity. Of course, then Siemens Energy, got listed as a separate entity. Again, I'll speak on we have positive coverage on Siemens Limited currently as I speak to you. On Siemens Energy, we don't have a coverage, but as I was elaborating a while back about the entire power generation, power transmission, distribution, and power equipment companies, there is a lot that is going to happen for all these verticals of power over a longer period of time. It's a strong company, very strong balance sheet, very well managed. Won't give specifics since we don't have coverage on Siemens Energy.
Got that view, Gaurang. But the next question next caller actually from Hyderabad yet again. Dilip has a stock query for us. Dilip, very good morning to you. Welcome to the show. What's your query?
Good morning. Good morning. So my query is on Gravita India. I bought 1,000 shares around 1803, and I bought it around 6 months ago, but the stock went again up. So I wanted to know the 1 year view on this.
Got it. And you looked at the charts, Dilip, or the fundamentals while buying the counter?
Fundamentals.
Fundamentals, got it. Gaurang, any view on Gravita India?
Also, again, stuck between the devil and the deep blue sea. In specific comments, I will restrict from being buy, sell, and hold because we don't have coverage on Gravita India. But the sector overall, Puneet, looks well poised in terms of improvement in earnings and future growth. Since we don't have coverage, I won't give buy, sell, and hold on Gravita India.
Anything on the charts, Vaishali, because this was another those 2024 stocks, right? I think within that here you saw a very big move, and that high hasn't come back yet again. But does anything on the chart suggest that the last 1 year has been largely flattish?
I would say actually, yes, it has gone through a very long consolidation. But seeing the long-term chart, I think it's very much in trend. And I think one can continue holding. To start with, look for a target of 2,100. And in all likelihood, this can again go towards 2,500 levels also. So 1,600 would be the stop loss and look for these higher targets.
Okay, all right. The next one that we have is on BSC, and this is from Manav, who's writing us from Gurgaon. He's holding 10 shares at an average price of 2,300 since past a year. Says it's lost its momentum, but what should be the course of action from now? Should he book his profits, maybe re-enter? Vaishali, what would you recommend?
So I see a bit of weakness coming in, profit booking coming in. So if short term is the view, then I would say book profit for now. And if you still want to hold 3,600 acts as the final stop loss. Below that, it can go towards 3,400 or so. So keep stop loss of 3,600 and hold on. Can go towards 3,800 to 4,000 to start with.
Got that view, Vaishali. The next question coming in on FIAM Industries. There's been another player in the lighting space that has done well for investors. Our viewer, Mahalakshmi from Hyderabad, bought these shares at 2055, currently sitting on good gains, asking if she can buy another 100 now for the next 1 year. Gaurang, been a beneficiary, right, of the GST rate cuts as well. What's your view?
Well, so again, a strong player in the sector, and yes, very well poised in terms of future growth. Earnings, I've looked at the earnings, Puneet. So the company's balance sheet again is strong. Earnings visibility is very, very strong. I can't give any specific buy, sell, and hold because currently we don't have coverage on FIAM Industries.
Okay, all right. The next one that we have is coming in, and this is on JB Chemicals. Siddhi from Mumbai says she's got around 519 odd shares at the levels of 2207. Whether to continue to hold, Vaishali, on the charts? She's sitting on profits of 1.3 lakhs, by the way.
I would say quite overbought, so book partial profits.
Another one, Vaishali, on Suzlon as well, because our viewer, Suraj, is actually holding these shares at 58.8, but he's bought 20,000 shares. So he's currently sitting on a loss of almost 75,000. What would you recommend here? Is there still any kind of up move? Because we've seen, of course, a recovery from that 40 odd level, but at 54 seems to be that level that's not been cleared for a while now. Anything that you can offer?
So I would say right now there is no damage to the trend. It's just the regular because market, any stock is not going to move in a one straight line. So there is some profit booking consolidation happening. I don't see any problem till 50 levels. Only if it breaks 50 levels, then can you see some negative view. But for now, I would say it's just consolidating. I would say it's a range of 50 to 60 for now. Either ways, a breakout or a breakdown could decide the next trend. So for now, according to me, please continue holding.
Okay, all right. The next one that we have is coming on MCure. Our viewer Nandagopal says he's bought it, I think, at the levels of 1700 and wants to know as to what should be the target for 2026 for this one. Vaishali, I'll stick with you. For MCure, what are the targets that you're seeing by the end of this year?
So I would say 1750 should be taken as the support, and for by the end of this year is hard to tell, but well, the next projected target is 2200.
2200, got that view. The next one coming in, and this one's on the pharma space. Our viewers already holding Aurobindo Pharma, wants to add another one, and this is Mr. Iyer in the pharma space itself. Gaurang, any potential addition that you like in the pharma space right now apart from Aurobindo, and what would be your recommendation to S. Iyer?
So across the board recommendations in pharma, Puneet, small cap, mid cap, large cap. Aurobindo Pharma happens to be under our coverage. That's a disclosure on my part. And I believe that this is one particular sector, despite of what is happening in India or overseas in terms of geopolitical tension, is relatively less impacted. So from a long-term point of view, first of all, hold on to Aurobindo Pharma. You want to add to it, start at current levels and add on depth should be the strategy.
Okay, all right. The next one that we have is coming in, and this is on Kotak Mahindra Bank. This is from Kumud Sethi, who's bought 100 odd shares at the levels of 411 in 2025. From a 3 to 6 months perspective, Vaishali, what are the charts recommending?
This has been very sluggish. So I would say currently what I'm looking at is HDFC Bank looks more attractive, but I think this Kotak Mahindra Bank for 3 months perspective, 360 as stop loss and 400 as target.
Watch out for any moves here though, because you're also seeing and expecting a management transition since Mr. Vaswani has decided not to continue. That's what the filing has put through. So Q1 will be crucial in terms of what is the management expecting going forward, at least in terms of that transition going through as well. But another one coming in from Viru, who's from Bengaluru. He is holding on to electro steel castings at 105. So he's currently sitting on the loss. Vaishali, he's essentially asking what he should do right now, because last 1 year has been painful for the stock. Any kind of momentum now visible on the charts, or is that still expected to continue?
The one which is at 76 rupees, right?
Yes, you're right.
So I think the stock has taken good beating, and currently it's attempting to come out of its negative phase. So, but I think no clarity still. 70 should be taken as a support. If 70 levels break, please exit. And if we see some further strength coming in, it can go towards 90. The trend reversal or strength can be confirmed only above level 90. So follow a range, 70 as your stop loss, and 90 would be the near-term resistance.
Okay, all right. The next one that we have is on Crompton Greaves, and this is from Ashok Kumar, who's writing us from Ludhiana. He's bought around 2,000 shares at the levels of 307 last year, and he wants to know whether to continue to hold or sell. Gaurang, what would you recommend for this one? Because he's already sitting on a loss of over 82,000 rupees.
Crompton Greaves, unfortunately, I don't think we have coverage. Sorry, is this Crompton Greaves Consumers?
Yes.
Yeah, okay. So again, we have an accumulate stance. I know the stock has underperformed. I heard that the acquisition price was 300 plus. Currently, the stock is trading at about 265. If you have investable amount, you can definitely add to it.
Got that view, Gaurang. But next one, and this one's on Ramco Systems. Our viewer Ashok, who's from Bengaluru, is holding these shares bought at 932. Vaishali, another counter, of course, taking that beating because of in their IT space, but this one's also been a very rank underperformer. Would you recommend him to exit or keep the faith?
I think Ramco Systems is doing very well. It's in a very strong uptrend, right from 450 to 875. So I would say book partial profit.
Right, okay, so that's the view coming in on Ramco Systems. The next one that we have is coming in, this is on Eternal. Naman Jain has bought it at the levels of 215, 1300 is the quantity, and wants to know whether he can continue to hold this. Also seen a recent good up move. Vaishali, on the charts, what would you recommend? Because, he's sitting on decent profits of 4 lakh rupees and, considering that the earnings will come very soon, do you think he should continue to hold or book partial profits?
Well, so normally we never play results, but technically speaking, I would say it's in a good uptrend. Keep a trailing stop loss of 270. This can do 310. So that's the way to look at it. My view is not on basis of results.
Got it. Well, on Ramco Systems also, of course, the last 2 days have been good, but the last 5-year returns at 41%, underperforming the Nifty as well. So something definitely awoken over this week in this particular counter. Let's look at that performance also if we can for our viewers, and definitely see about most certainly the results to watch out for as well. And you see the sharp up move that's happened over this particular time frame, but the last 5 years. Very, very sleepy kind of a story to say the least. And the next one coming in on our radar right now, and next question, this one's on Yasho Industries. Akhil has actually bought these shares at 688, so he's in massive gains on this counter right now, holding on to 50 shares. Vaishali's question being if he should sell out right now or continue to hold.
Yasho Industries, I'll just have a look.
Trading currently at around 2,900 odd, and Akhil has bought it at 688.
I think it's still going well. It still, I think, looks like ready for a new round of momentum. I would say 2,700 is the support level, and this can go towards 3,200 to 3,500 levels. So view is quite positive for now.
Right, so that's the view on Yasho Industries. The next one that we have is on C Info Systems. Our viewer wants to know if this stock is on the verge of breaking out or not. Vaishali, what are you picking up on the charts?
Sorry, come again. What's the name you said?
CE Infosystems. The ticker should be MAPMA India for this one.
Okay, one sec. I'll just see that.
Yes. Let's try to pull the chart up while, Vaishali is trying to pull up the chart as well. It's down by about 1.4% today. And let's also pull up the 6 months chart and the 1 year chart and see as to how the stock is done. In the last 6 months, it's down almost 42%. And, in a year also, if you can try to see as to what the returns are, 47%. Vaishali, were you able to pull the charts?
Yes. So I'm not so gung-ho about the stock right now, but purely with a technical view, it's making a double bottom at 800 levels. From there on, it's attempting to show a bounce. Now, clarity comes only if the stock goes above 1,000 levels. Once you see the stock going above 1,000 levels, then you can gradually look for higher targets of 1,200 and so on. So that's the way I would consider this stock.
Got that view, Vaishali. But the next, and let's now start with the rapid fire round in this edition of the show. Vaishali as well as Gaurang, you know the drill. The first question coming in, and this one, it's on ICICI AMC or HDFC AMC, which is a better pick now. And this is Puneet Saxena was asking us this question. What would you recommend, Gaurang? Anything that you like?
HDFC, AMC and Nippon India. These are our two investment ideas in AMC pack.
Okay, Kalyan Jewellers is the next one. Bharat Marfatya wants to know if it's worth buying today. We've seen a disappointing business update, Gaurang, plus there's a block deal also that's happened today. Any recommendation?
I would prefer Titan Company, Mahima. That's very well placed in terms of long-term investment.
The next one's from Rajagopalan on Sign DLM. He wants to know, Vaishali, if it's a good time to buy. Again, not been performing too well, but what's the chart showing you right now?
I think it's getting better. To accumulate, add more at 500 levels.
Sterling and Wilson Solar, Shankar from Bengaluru is holding 450 shares at the levels of 230. Price target for the next 1 month, Vaishali?
I think give it a miss right now.
Next one's on MCX. Gaurang, I don't know if you have coverage, but Sunil Kumar is holding these shares at 2450. And Gaurang, largely because with the NSE IPO on the anvil, you're starting to see questions coming in on BSE as well as MCX and the valuations. How are you seeing it?
I think there's a lot of place to coexist for more platform providers, Puneet, whether it is commodity market related MCX, whether it is equity market related BSE or NSE likely to be listed in the future. And if Indian stock markets are going to do good, then yours and mine fortunes and everybody's fortunes is going to be quite good. So, short to medium term, you can have, people wanting to shift from one to another, expecting it to get a premium listing, etc. But the future of Indian capital markets looks quite strong to me. And along with that, all these strong entities will also do well.
Okay. The next one that we have is on MTA Tech. Mahesh from Maharashtra has bought at the levels of 7550 and he wants to know whether a 1 month trade or maybe even a swing trade is recommended on this one, Vaishali?
Can do 6800 stop loss and target for 7500 for 1 month perspective.
On Reliance Industries, Kishore is holding shares at 1364. Gaurang, he wants to know in 12 to 18 month view, should he continue to hold?
Definitely hold. I think a lot has happened and a lot is likely to happen with the kind of announcement that have been made in AGM. So my sense is that first of all, hold on to it. If you got in at elevated level, you can hang on to it at current levels again from a long-term point of view.
Okay, the next one is on trend. RK Bakchi from Chandigarh is holding 150 shares, bought at the levels of 4035. From a 1 year perspective, Gaurang, what would you recommend? Of course, it was the accident of the day yesterday, but overall, from a fundamental perspective.
Well, it was a free fall, Mahima, to be very honest, with 10 to 12% correction trend. We have a positive coverage from a long-term point of view. Those who got in at higher levels, hold on, have investable amount, add to it. Those who want to fresh invest can definitely do that. We have a positive coverage on trend.
Pawan Kumar is asking a question on Samvadra Motherson. He's bought at 126, Gaurang. And we had a chance to speak to the management about the newer possibilities like aerospace consumer. Is that something that you like in the space?
So this particular has been news flow has been buzzing and the stock has reacted quite positively. Yep. From a long-term point of view, we do have positive coverage on this company. Continue to hold on.
Okay, Praj Industries, Praveen from Pune is holding 325 shares, bought at the levels of 625. From a 9 months perspective, Vaishali, what should he do?
I think add more at these levels.
All right, okay. So that brings us to the end of this rapid fire round. Vaishali and Gaurang, thank you so much for taking out the time and helping us answer all those questions. And with that, viewers, like I said, completely out of time with this edition of Ask Profit, but do stay tuned in. KYC comes up next.
Superstar Stocks of the Day, presented by Tata Azura, Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where I get you the hottest companies and also the interesting stories about their growth or is there any alpha to be made from the next stage onwards or not? But before that, try to guess the company which we are getting in KYC today. We have heard about it a lot. It's a Hyderabad-based defense company. A lot of defense companies are there which are based in Hyderabad. Of course, DRDO is there. There's an ecosystem. Also, the company has recently announced a drone system capacity expansion. Interesting, right? Let's look at how much returns the company has given. The stock is up 19 times in the last 5 years. And Motilal Oswal Mutual Fund has roughly 6% stake in the company. But what's the company we are talking about? The company in focus is Zen Tech. Recently, it was in news as well. But why are we calling them? So many India first announcements this company is doing. We'll try to decode this company layer by layer. The first question is definitely going to be on the overall propulsion, the drone propulsion system. It is full Swadeshi. There's no China, only India. Other questions to be asked in our conversation would be decoding India's IDDM framework. I'll give you a hint, the management is involved in policy making as well. International expansion plans, though right now it is just 7%, but the way India is putting itself out as an exporter for defense is something to watch out for. Another important question we'll ask is the domestic order book. How the inquiries are shaping up. Is there a much more client confidence coming in the second quarter and the first quarter? The capacity utilization levels and the capex levels, what are they planning, or will they focus much more on the existing facilities itself? The acquisition plans, lot of startups, lot of new age service solutions around this defense theme is there, and they already have a good stake. So are they hungry for more? We'll have an entire conversation with Ashok Atluri. He's the chairman and MD at Zen Tech. It'll be a very interesting conversation, I must say. But let's try to understand, what does the company actually do? What are the important levels to look at? It's just not a drone company. It is a defense company, especially on the tech front. That's why we call it a defense tech company. Let's understand a little bit more about, this company. They have training, simulation and systems. Also, there are 4 other important services or products which they give. There is bundling also, counter drone solutions, that's the second portion. The third one, automated weapon stations. The fourth one, there's a very interesting and a lot of interest, the combat robotics and drones. This is the future I'm talking about, by the way. And the last one, R&D and production facility. That's what they have in Hyderabad. That's where the most of their work happens. They have applied for more than 200 plus patents and shipped over 10,000 systems. That's where a moat comes in. They have an arm, Vector Technics. They have recently expanded the manufacturing capacity as well to almost 3 lakh units annually as well. So these are the key details, but how does the order book picture look like? It's heavily skewed towards the domestic side, especially Ministry of Defense. The orders come in 93% of them, minor 7% of the order book. It's roughly coming in from international. The order book, I'm going to give you those details, but it's a KYC rating for you. It's around 1300 crores. It's India's first integrated smart border suit. That's what they have announced recently. And also a lot of another announcements. They have the largest fully integrated drone propulsion manufacturer. They expanded their capacity, I mentioned. And one more India first announcement they have given, AI powered fully integrated anti-drone system. So you can see India first announcements are coming in from Zentech, and this is something which the street is quite bullish on. Apart from the recent announcements coming in from Zentech, let's also talk about the key investments. This is where I feel the alpha is there and the market might not have factored in that. Unistring Tech Solutions, they do electric warfare. That's the first investment. Second investment, RE Simulations and RE Labs, Naval Sim. So you can understand what's the value going, in the future. Third investment also I'd like to point out, TIS Aerospace. They are into drones. Fourth investments, these are the names you should note it down. A lot of announcements are coming. Announcement recently came on Vector, also for propulsion tech. These are the ecosystem players, and the company has a majority stake. यानी कि consolidated numbers में इनके भी benefits आएंगे. Now speaking of benefits, what may work for the company? Strong industry tailwinds, India's IDDM program, and various programs are there which may work for the company, and important acquisitions are at play. Management seems like more bullish on acquisitions also, and we have seen the benefits coming in in these announcements. Now the FY27, the execution part is something where bullishness comes in from the street versus FY26 as well. Another important point is the debt reduction. So of course they are growing ahead, their order book is going, but the debt is also reducing, and that is also helping the perception of the stock. FIDI are increasing their stake in the company as well, and that's a proper thumbs up. But what may not work? So many things are happening. Will there be an execution risk? It happens in every business model. So that's what I have mentioned, that working capital days, they have increased. इतना काम कर रहे हैं तो पैसा भी आना चाहिए. So of course this is something which the company needs to work on, and the valuation, stock has gone up. It's expensive than the averages. That's what a little bit of concern comes for me when I am analyzing Zen Tech. But another way to analyze is through our KYC ratings, and I have twisted a little bit of our KYC ratings today. And today, of course, from the cash flow, we'll have out here will be order book analysis, but income statement, balance sheet would be there, and of course look at that return ratio, sorry, wouldn't be there. And also let's talk about the shareholding pattern, how things have moved. I'm going to give you the DIFI's holdings coming in, and also the street cred, and the numbers are mind-boggling. That's sure, but you have to stay put with us. Valuations, we'll try to understand how things have panned out over the last 5 years and the outlook going ahead. Company ka soch, guidance aage jate hue kya rahega. Let's start with the first one, income statement, and see what has happened. Long-term analysis mein dekhe, it's pretty strong, good growth coming in. Of course, this is of course the CAGR growth I'm talking about, and these are almost 40% plus beat, PAT, EBITDA, and even revenue. So that is something which we'll be watching out for. Of course, sorry, this is the balance sheet which you're talking. If you could just get the income statement, and this is where we see the numbers, however, in the first quarter were kind of mixed, and the margin profile, it seems like that has changed as well. And because of that, I'm going to give it a neutral rating in my analysis. This is the number I'm talking about. At 43% was in FY24, but the way the expansion is happening, there are expenses also, right? And that's where a little bit of weigh down in the margins do come. But nevertheless, it is still a high margin business, 35% plus. So that is something which is pretty neutral. Balance sheet, I really like. The debt levels are literally non-existent right now. That is aiding the factor. Cash balances are pretty much decent. So the capitalization is pretty strong. The equity base has also increased, and the institutional participation has gone up. So I'm going to give this a thumbs up where it comes to the balance sheet. After income statement and balance sheet, let's talk about cash flow, and that has also done well. And the payment terms, of course, from the government, the way things happen, have improved a lot in the industry, and that's what we can see that, when I talk about the cash flow segment, be the operating from cash flow segment, or even the conversion which is happening, this has also turned positive after gyrations coming in the year FY24 and FY25. So when you analyze the cash flow segment, you see a good way of numbers coming in. So I'm going to give this a thumbs up as well. So apart from the three basic numbers, the order book picture, this is also very much important, and it has been growing up slowly and steadily. It was around 675 crores in the second quarter. It has gone up, it's almost doubled by the fourth quarter itself, and almost 93% of it is domestic. So order book picture is pretty strong, so I have given this a thumbs up for it. So after these 4 ratings, I'll talk about the shareholding. Promoters, you see the stake was around at 55%. That has come down, but FIs and DIs have lapped up. Look at that number. It has gone up to 6% when it comes to the FIs and DIs. Motilal Oswal Mutual Fund has almost 6% stake. Some AIFs are there, but look at that, it's 10%. So good institutional ownership is there, and that is what actually is a positive sentiment as well. So I've given this a strong thumbs up. But let's talk about street cred. What returns has the company given to the investors? Medium term लीजिए, short term लीजिए, or long term लीजिए. January from lows, the stock is up 52%. Congratulations. If you have made a medium term investment for the last 1 year, the stock has been largely flattish, and this year itself 36% return. But if you're a long-term investor in this theme or in this company, you must have made money. Last 5 years, the stock is up 19 times. Look at that multi-bagger stock which has come in. I'm talking about Zentech here, and street cred, I'm going to give this a strong thumbs up. But remember, when stocks go up, the valuations also become expensive. 5-year peak valuations comes in at 12-month forward P of 64 times. Compare that with the 5-year average, it is 40, almost you could say 40 times, and currently slightly above that average. On the expensive side, it's trading at 45 times. But of course, the entire sector has, re-rated, but still expensive right now. So I'm going to give this a thumbs down when it comes to my analysis. The last one for you is the outlook. The management commentary is important, so I've taken that from the management commentary itself, which is already in the public domain. FY27 is likely to have a better, stronger execution as compared to FY26. Let's pull out the second point. Is the large orders are expected to be announced going ahead. They have been announcing a lot of expansion and tech, and this is what we are looking at. In capacity enhancement, that is also at play. But I feel the dark house, of course, after the product portfolio expansion, can be those important acquisitions which the company is doing. So these are the important outlook pointers, talking about the company and the industry as a whole. And I'm going to give this a thumbs up as well. But let's give you the entire picture. What are the total KYC ratings for Zentech for today? And it's largely done really well. A sea of green coming in, balance sheet, cash flow, order book, all have done well and shown good improvement. And on the other hand, we have, of course, the shareholding and street cred, which has done really well, especially the institutional participation coming in, stock being a multi-bagger, and also right now the momentum is strong. But because of that, the valuations are not attractive, but the outlook, medium term and long term, remain really strong for the company and even the industry as well. So the total KYC rating is on the higher side of the averages. It is 6.5 out of 8. This is what I'm talking about. The company has done really well, and that's what the bullishness is coming in this counter. But there is more to the story, and to do that, we'll be joined in by Ashok Atluri. He's the chairman and managing director at Zentech. But I would like to give you an interesting snippet about him. Is a pivotal role he has played in shaping the national defense policy. That is a very important point. And also, he's the co-author of Buy Indian IDDM policy and Make 2 categories as well. So it's a matter of pride for us to have a chat with him. But this chat will continue, but shortly after a break.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India's unshakable news habit. NDTV.com is India's #1 English news website.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I'm looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff.
Welcome back to KYC. Now we are joined in by Ashok Atluri. He's the chairman and managing director at Zen Tech. A lot of announcements coming in, but the recent announcement about the drone propulsion system, what does this mean for the company? Any kind of guidance you can give on that, sir?
The expansion of vector techniques of the capacity is something that we have been planning for a long time, and getting the announcement was in consequence of all the efforts vector team had done till now, and it's a complete stack of the propulsion system. What we find is that the demand is not only for India, but even from very, very advanced countries in Europe and in USA. And there are some proposals that are being evaluated by the Vector team for possible joint ventures with those companies at this point in time. So yes, in terms of again, this is going to be a very competitive business, and we expect while the absolute profits will be added to the companies in the consolidation, but I think the margins will be much more would be lesser than what we conventionally get in our systems like counter drone systems and simulators.
Ashok sir, how do you decode India's IDDM framework? What does this mean for the company as well as the industry? What are the changes we are looking now?
IDDM actually, again, I had only suggested to Mr. Parikar in 2015-16, and fortunately he was the only person who could get it, in the sense that he said unless it is indigenous design, Make in India by itself was not enough, and IDDM was required. But in addition, what he understood was IDDM is a category in which there may be only one player. Because when you're creating some IP for the first time, it could be India first or even world first. To ask for 3 vendors was foolhardy, and a clause was included in that single vendor is also acceptable. That was a phenomenally sea change, and no bureaucrat, no politician till then had accepted it with what Mr. Manohar Parikar did. And so, now cut to 2026, it has been evolving as a system. And I think now in the proposed DAP, this is being seen as the, most important category. And everything by default, they plan to categorize as IDDM. And unless, even for earlier, it was only for regular procurement. But what I understand is even for fast track procurement, OCPP, across all categories, this will be categorized as, default IDDM. So when it is categorized as IDDM, the focus of the industry will not be just, doing, TOT and manufacturing, but actually trying to innovate and build IP within the country. I think that will be a big change. And I think, what India is slowly moving, exports will actually, will almost go, beyond what the government has set the target of 50,000 crores. If we really get this act together, and I think we will become a net exporter of defense equipment in a few years if this is really focused and, the intention is carried out.
Right, Ashok sir, let's talk about the export market. Right now, it's below the 10% mark of your total order book. But the way India is being projected, for an exporter of defense related products. How do you see this panning out for your company and even the industry?
So yes, again, what we are seeing in worldwide is that there is a lot of demand for counter drone system I don't have to preach that, in the sense that after Israel-Iran war, everybody wants, everybody says that Shahid drone won the war, and, everybody wants a counter to Shahid drone. But again, when we say, actually, we also build this hyperstrike, which tackles Shahid kind of drones. And it's much, much more powerful than, much more faster than the Shahid drone and counteracts very effectively. But again, the thing is that we should not be preparing for the previous wars, but for the next wars. So I think that's what we are trying to offer, not only to India, but also overseas. And in terms of simulators also, again, I keep saying that 5 years back, no one thought that there's going to be a war, but then the Armenia, Azerbaijan started, Ukraine, now, we see so even Thailand and Cambodia, the Buddhist nations are also fighting. So now the question is not, if, but when the war will come, and all the countries want to, prepare themselves for a war. And we have seen Agniveer, something that used to take 2 years. Using our simulators, they were able to compress it to 3 months, the whole training cycle. So everybody wants to prepare for war and faster. So, and we are that, sweet spot where, we do both training and counter drone systems. And, we are getting a lot of inquiries, and, but again, the materialization of order is what is important for us. And we expect that, probably by this year, and some good news will be there in that area.
Right, but let's move on and let's get our focus on the domestic side. That's where the bulk of your order is coming, 93% to be precise. But want to understand how the client confidence looking like, where is the demand inquiries coming, which segment, the action is there.
So, immediately, we have been saying that the simulator orders have to come through. So we expect that orders to, again, they're very close, but it's still not in the hand. I originally said that by first quarter we'll be getting it. But I think it's a matter of, it's not very late. We still feel that we are very close to start getting the orders. And that will be the first thing. But the second, the larger chunk, in addition to simulators, will be the counter drone systems. And that will start happening I think towards the second half of this financial year.
Right, and talking about the capacity utilizations, what are the numbers one should look for, and of course the future also what's happening there, and if any capex kind of amount has been earmarked?
So, for the current year, there is no requirement of expanding the capacity. I think we will be able to execute with the existing capacity. But for future, we are expanding. But again, as I said, that most of the production is outsourced by us to the supply chain. We have a very capable supply chain. But again, but the critical components and the final assembly testing and packaging is done at our location. So for that, we are increasing our capacity so that we can do even the quality checks, etc., at the vendor places and at our places are being upgraded as we speak. So I think the capacity constraint is being handled for the next year, but not immediately. We are, I think, sufficiently equipped. But for the next couple of years or so, we will start upgrading ourselves.
Of course, there are some price hikes also. How does this business model work? Is there any kind of a lag to pass on the rising costs as well? Just wanted to understand any kind of impact, Q1, Q2 for that.
So, the long-term, not only long-term agreement, once you get the order and, the electronic components and the, RAM, the memory prices, etc., have gone up. Fortunately, they are not that significant part of our costing. But, I think as we go ahead, that will have some a couple of percentages impact on the profits of Zen, significantly, because we have export market at the, margin where is the place where margins are, we get substantial margins. So I think overall the impact may not be significant, but anyway, not more than a couple of percentage points.
Fair enough. But I feel there's a lot of alpha there in your arms which you have invested. Are you looking at any kind of acquisitions in any areas? Because that's where the street is very bullish on.
So, we raised through QIP about, about 1,000 crores at that point in time. So one of the, proposed usage was, buying of, acquiring companies which are, which actually fit into our scheme of vision for the future of the company. And in this regard, we are, we continue to look. We have acquired almost, 5-6 companies at this point in time. So there we are looking to acquire more companies. And again, we are very conservative. We don't want to overspend and try to get something which would, hurt the overall company. And we know that there is a lot of euphoria and people are spending a lot of money. So we are very cautious. One of the companies that we acquired, ARI. About a year plus back, we acquired 140 crores and now, it's generating profits of up to 40 crores for us. So, so we have to be very cautious. We can't be, and what is the value we are bringing to the company and and is it really synergistic with what we are doing? So if these two things happen, we will acquire more companies. And absolutely, to your question, yeah, there is a lot of appetite for new companies. And, not only for existing technologies, we have some Pareto technologies in mind to go into the future. If there is something in that area also, we would love to acquire companies in that area.
So a lot of positive acquisitions is something which the management is talking about. It's always a pleasure to have you, Alturi sir, with us, and best of luck for the future. So that's the management coming in you could say, the very interesting take coming in from the management, especially on the acquisitions front from Zentech. Very interesting. But of course, remember the stock has run up and valuations might not be that attractive right now. For interesting stories like this, stay tuned to KYC and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honor?
Hello and welcome. You're watching Markets at 12. I'm Nisha Podar. Now, NAC Packaging made a decent stock market debut today, listing at a premium. The company is now focused on expanding the capacity through a new Gujarat facility. My colleague Riddhima spoke to Alpesh Patel, the MD of NAC Packaging. Listen in.
Sir, now, the IPO was about 439.5 crore and the fresh issue of 380, about 250 crore was earmarked for the Gujarat facility. Now, what are the plans and the timeline for the project to come into the full utility, and what will be the capacity utilization post the project ends?
Ma'am, first of all, thank you. Unbelievable loves and affection about the company from all my investors. Again and again I say कि very much thanks. जो company के plans है, जो already we are into the packaging and specialized packaging, जो pinch bottom bags है, तो उसके लिए ही expansion majorly कर रहे हैं. तो our company is located nearby the Kadi city, Borishna village, nearby the Ahmedabad, Gujarat. So we have an existing unit and that capacity is 26,000 metric tons. We have a rented nearby facility and it is almost 15-16,000. So currently we have a 40 to 43,000 metric tons capacity of the producing the specialized bags. Out of that we are right now using 85 to 90% capacity, and the future we are also expanding this capacity to like a new additional capacity of 49,000. But our existing capacity, some of the rented capacity we are leave it, and some of the capacity we have old technology, old machinery, so we remove from the company. So altogether after expansion, it is almost 69 to 70,000 metric ton we will produce in further like next year. Our planning is like 4 to 5 months after rain, we start the building and then after our commissioning our machineries, everything, so 4-5 months for that. And 1.5 months for the trial and everything. So almost next year, November 2027, we are planning to, again, we come up with the new capacity, with the energetic product, with the new product, with the new technical product. So this is our plan for futures.
Right. Also, what's the mix of international and domestic clients, and where do you see more demand going forward in the coming year? As you said that, the company has got 70 plus international markets where it goes to.
We are looking always, India is our self baby, matlab our baby. So India is always never neglect, because India have a huge buying power. So always India is and India is a growing, developing. So India making India. So we are supplying bags to lot of Indian companies and making India to global. Like we are exporting more than 71 countries. So all over the globe, like USA, UK, Germany, France, Italy, Brazil, all the developed countries, we are exporting, and we are trying to more and more customers from global. So we add all the customers into our portfolio, especially Cargill is already on our board. So we are trying to get more and more global customer into our company's portfolio.
Also, so it's more leaning towards global or Indian? And also one of the clients contributes around 17% to the revenue. If you could throw some light on that.
Yes. See, our focus in both the way, like globally and India as well. Right now we have 57% revenue comes from the global. So same way we are also trying to expand our footprint into the global. And the domestic also, always all the lot of company, those who are come into the new brandings bags. So India is also growing. So we are definitely India focused. So that's two things there.
All right. Also on the raw material, the volatility, especially with the Middle East war, also polypropylene costs had risen up because of the crude oil. How will you manage this risk going forward?
Company have a very good forecasting systems. Like we have SAP S/4HANA implemented before like 2017, and today we are working on SAP S/4HANA. So we have a very good forecasting system, and top of that, we have a very good refinery in India, like many big refineries. So we have a 30 years experience with them, and they are providing all the raw material on time and very reasonable everything's price and everything's. So we honestly saying for these difficult times, particular neck packaging or Indian companies not face much more problem due to the local refineries and support.
All right. Also, the financial performance of the company has been robust. If you talk about revenue grown by 11.8% in FY26, and even the net profit or the PAT was really robust. What sort of a guidance do you have for the company going forward in the next year?
See, very honestly, we know how to make the bag. We know how to sell the bags. So same way the past like 3-4 years we are working, and we are same way we are working for the futures. So all the God grace result will come.
All right. Lastly, now sustainability is a big trend in the market. How will you take on this trend and make the most for the company?
Very honestly, our bag is 100% recyclable bags, and our company is 100% focused for the all the government compliances. And one more proud things, like right now we are exporting our product to Europe, and Europe have a 30% recycled content you have to use in your product. So we are using that 30% recycled content in our products. And the best part, it is not a quality compromise. It is a proud moment. We are using a 30% recycled materials. So that kind of scenario around in the market coming up. So our companies are taking all the initiative to use this kind of recycled materials and everything. So now it is a 100% we believe this recyclable and plastic sustainability is like, I strongly believe no plastic compared to not plastic. सो प्लास्टिक के बहुत सारे सर्कुलर इकोनॉमी में बहुत सारे फायदे हैं. आप अगर उसको अंडरस्टैंड करोगे देन यू कैन रियलाइज कि हाउ इट इज द बेनिफिशियली टू द पीपल.
All right, so new listing there. Let's take it straight to the market and do a check on what's really transpiring. And yes, the revival of US-Iran tensions in the Strait of Hormuz has really had its impact on the market. First, the crude gets impacted, and therefore our equity as well as the money market both aligns with the way the crude rises. So at the current moment, remember 24,500 levels which Nifty 50 had crossed comfortably and was giving a lot of consolation to the market participants. That has been shed at the current moment, 0.66% down. No let up in sight seen when it comes to the market today because of also the global cues in particular, which is really driving the market. Crude prices, a sharp rise of over 3% above that 75 to $1 mark is a dampener when it comes to the sentiment as well as the crude oil prices, and as the supply chain constraints when it comes to our energy availability really resurfaces. So that's what is really showing up in the market. It's a broad-based impact that we are really seeing, because if you take a look at all the sectors, barring a little bit of realty as well as a slight bit of metal, other all sectors are in the red zone. Pretty much negligible gains when it comes to defense and pharma, which is trying to stay afloat in above the black line. When we talk about oil and gas, it is a downer straight coming in linked with the oil prices and the crude oil impact that we are seeing. FMCG also on the downer, and it's the second day on the trot also because of the business update, which was disappointing when it comes to Trent yesterday. On the other hand, the financial services Nifty Bank is really taking charge when it comes to the dampener coming in the market. At the current moment, in terms of contribution to Nifty 50, it is a huge amount of erosion that's really taking place. First from the private banks, and also single-handedly from big boy Reliance Industry, shaving off about 24 odd points from Nifty 50. So take a look at that particular counter as well. At the moment, 160 odd points lost on Nifty 50. Feroz Aziz, who's the joint CEO of Anand Rathi Wealth, joins in now to discuss more about the market and how to deal with this kind of a volatility, Feroz, when we have Trump on the other side really, being one of the biggest deciding factors for first crude oil, and therefore our markets looks like a tough situation.
Nisha, I think it's not such a tough situation. Of course, Trump has infused a lot of volatility in the global markets. But I think India has thrown up a very low volatility. Nisha, if you notice the numbers, this is one of the tightest ranges Nifty could be in. If you heard me say a couple of months back when the war broke out, markets cannot fall more than 8-10%. So the markets didn't fall more than 8-10%. So 25,179 was the day when the Friday, 26th of February, when the war broke out. Nifty was just about 4% higher than where we are today. And market's lowest point, which was 22,313 on 30th of March, is a range of 11-12%. But it couldn't sustain there and came back to 23,000 very swiftly. So point I'm trying to make is, if you mathematically measure the volatility of Nifty on an Excel sheet, volatility is measured in the new nomenclature of standard deviation, which an Excel sheet has a already inbuilt formula. You will see that S&P 500, say, almost about 5% lesser standard deviation is what Nifty 50 has thrown up, in spite of having 1/10 the number of stocks. NSE 500, which has 500 stocks, has thrown up 5% more volatility. In fact, Nasdaq, during one of the days of the war, it fell in one day 8%. So I personally think Indian investors have to be more mathematical about their pessimism or optimism when it comes to their market participation. That's point one. Point two, of course, are we back at the peak? Are we the worst performing market for the last year and a half? The answer is yes. But there's one thing, silver lining in dark cloud, okay? Any time in the past, if Nifty has delivered 2 years of negative return, I have tested 26 years on a monthly rolling. Any time when Nifty delivers 2 years of negative return, the next 3 years, average return is 21%. And on 9th June is when we slipped into a 2-year negative return zone, which was last month. So if anybody can actually muster courage to buy now, you will be rewarded adequately. Mean return is 21.6, median return is 20.6, worst return is 4.3, and the best return is 56% compounded for 3 subsequent years. जब उम्मीदें कम होती हैं, तभी संभावनाएं ज़्यादा होती हैं.
That's right. It's also the firepower to hold on for a longer period of time if you have to accumulate on down days, Feroz. That's also one of the aspects. But when we look at the other factors, of course, crude is one of the biggest factors, but we are just getting into the earnings season from tomorrow. And on the other hand, monsoon has played truant with us a lot as well. Now looking far better than what we expected, but the damage is done to the crop momentum as well, and probably rural economy and consumption could get impacted. The specialists have to talk about that. What's building up and baked in the market when it comes to these two factors?
Again, Nisha, if you go back just a month back, when on your shows, maybe I would have told that there are 13 instances in the last 50 years where crude jumped 50% or more. And 11 out of those 13 instances, crude came back at least average 28% down within 1 year. There were 2 instances where it didn't come back down, and they were not supply shocks. They were demand shocks. COVID and GFC recovery, when the economy was recovering, those are the only 2 times crude didn't come back. It is a writing on the wall that crude is not a very rare commodity. A supply shock cannot hold crude eternally for a higher price. Now, you heard Saudi reducing their prices to prop up demand. So point is, supply shocks of crude. And on the day when it touched 121, 122, I had said that the peak is behind us after today. Okay, and today you see 70. As a country, when you look at it, as a crude trader, you have to look at what was the peak, what was the trough, what is the movement. As a country, which is what I think all of us as Indians have to be worried, because that's a non-discretionary spend. I can't sit at home. I can stop buying gold, but I have to buy crude. So the average price, the mean price for crude this year, I had quoted 84 to 85. Today it is 90. I think in the subsequent 9 months, the crude will be mean, and medians are more important for a country because country is not trading in it. Country is non-discretionary consuming, right? You can avoid electronic goods, but you can't avoid crude. So I'm very happy that the crude projections of the mean and medium seem to be coming true already.
And as we speak, Feroz Aziz, there is, market is losing more steam at the current moment. Take a look at Nifty 50. It is dropping 2.7% downtake. And that is also on account of this particular escalation because of the US strikes and the reports to suggest that it has really escalated and made parts of the deal with Iran ineffective. And that is coming in as a big dampener when it comes to to India's energy requirement and more so the global and the geopolitical concerns really resurfacing. So the market is on a downward trajectory yet again. Feroz Aziz, what do you make of the market and the outlook for today with this particular news really reflective that both the sides have really acted and therefore a part of the deal is becoming ineffective, which was the positive momentum that all the markets were taking comfort from, is now shed and eroded?
Nisha, like you rightly said, the whole euphorism or optimism was on the basis of the deal. And the deal itself seems to be on a sticky wicket today, right? So you're absolutely right. From a news standpoint, it's a very bad news. But the impact of the news seems to be reducing. This was also predicted that during an event, after some time, the event's impact of the bad news, the same news coming over and over, starts reducing in impact. So I'm very happy that you're absolutely right that it couldn't have been worse from a news standpoint. But the impact is 0.7% down after 4 days of an up move. Thankfully, we are not back to 22,313, which is what the recorded number was. So you're right. Why does this happen that the volatility after an event reduces if incremental bad news keeps coming? Is because the weaker hands don't wait for 4 months. The weaker hands sell in the first 10-15 days. So one thing as a hypothesis, which I'm trying to say is news can keep going bad. It will not have the same impact. Otherwise, this could have had a 4% impact today, or we could have had a gap down of 700 points, 500 points. That's what you saw in the initial part of the war. So why is that happening? Is because Nifty has two largest sectors, which is banking and financial services is 37%. Nifty IT or IT is 12.2%. Both these, which form 50% of Nifty, are not at their peak valuations. They are at almost 2 sigma. 2 standard deviation lesser valuation than the mean they have quoted for the last 10 years. That's a very good news that there is enough steam in the cylinder that the two sectors which form 50%, maybe oil and gas is another 10%, FMCG is another 12%. So these 4 sectors contribute 70% of Nifty, and the first 2 of them are down in the dumps. So there's very little frothy ownership in the stocks which represent the sectors.
If you can hold on to your thought, this is a big development coming in and the impact of the market is starting to show, but not as much. Let's take a check on crude also after Iran's foreign minister has really spoken about parts of the deal which was struck with the US, now partly ineffective because of the strikes. And they are also blaming US for this particular escalation. The war of words have really started after the missile attacks that was seen over the last 2 days on Strait of Hormuz, and then US also retaliating and attacking Iran. So that is a big development coming in. The impact on the market needs to be seen. Narendra Taneja, energy expert, also joining in. Narendra Taneja, good to have you on NDTV Profit. What do you make of the recent escalation once again? Do you think this war is far from over?
Well, you see, I mean, this limited military action threats from the United States, from President himself, every third day is part of the negotiation. That's to put pressure on Iran. And military action by Iran, we have seen this morning against Bahrain, just now against Kuwait. I think that's all part of the negotiations to put pressure on America. America keeps saying, look, you agree what we want you to agree to. Even if you don't, we are going to really finish you off. And Iran says, all right, if that's the language you want to speak, here it is. So I think it's just part of the negotiations. The markets, of course, react whenever there is a military action, especially if it's kind of against countries like Bahrain or Qatar or, Kuwait, these major oil-producing, gas-producing countries. However, I think this is going to continue. This probably until the time the two parties agree that, look, this is the final deal. And that may not happen in immediate future. It may take 6 months. It may take even 1 year. And in the meantime, as negotiations progress, you will also see military actions being part of it. Military actions against tankers, against LNG ships by Iran, and at the same time, a threat by United States, and even military action by United States and even Israel. Is all going to be part and parcel of the whole thing. That's how they are going to negotiate. Let's not forget, Iranian people, they just lost their supreme leader, and people are angry. and his son is now in power. He's in the cockpit of Iran. So to expect that everything is going to be as smooth as butter, that's not going to happen. And for the United States, they just want to, on the one hand, want to have this perception, global perception that they won the war. And at the same time, they want the end of the whole thing on their terms. So it's not easy. It's a tough job. But I am personally think that, let's not be too optimistic, but as of the way I look at it, all this is going to be part and parcel of the whole thing. And I think markets have probably started realizing it, especially oil and gas markets.
That's right. Feroz Aziz, in the short term, how do you take this particular news development coming in? How much more downside because of this knee-jerk reaction, and also the hopes of the war really ending for good have been dashed?
See, I think I would say, short-term downsides could depend on a few large players selling or buying. So I would say that more than 4-5% fall is very unlikely. Now, people say 4-5% is 1,200 points. That's the nature of the market. So that's possible all the time. Having said which, I personally think for you to fall something more than that is what an investor needs to be worried about. And that is unlikely on the day of the war breaking out. I had said that. I'd also said, please muster courage and buy small caps. And you see the kind of broader market rally which we are seeing. Small caps in April itself outperformed Nifty by about 13%. So I will continue to look at the domestic sectors which are beaten down, largely IT. The AI capex cycle will start. So I would look at not just the Nifty, I will look at these two sectors more closely. And if you're a trader, then you will have to have stop losses. But the volatility after an event like this doesn't go up, it goes down. And that's mathematically provable if you look at all the events, because we look at derivatives very closely. Derivative indicators say that we are in the oversold zone. You will have lower downsides. Of course, anything can happen, but I think traders could have stop losses. But I would be more inclined towards the long side than the short side, given here. And broader markets will do well, because if you look at now in a couple of days, AMFI will release the last month number. We do some algorithmic testing to figure out how much money is expected to come. 35,000 crores is the net sales in June, in my judgment. Of course, the numbers will be ratified, but 34,409 crores is our estimate. ELSS is the only category which will have negative. Value and contra might have negative, but mid cap and small cap will have cumulatively 10,000 crores of influx the month of June. Of course, we will know the precise numbers after AMFI. This is algorithmic backtest.
Right. Right, fair point, and some important data that you shared, and of course 1,000 points away, Nifty 50, when we talk about when the war started to now, a little over 1,000 points. So that's the delta we are really looking at. But let's also take a look at the OMC counters, and they had already been under pressure because of the war situation really cropping up again. Narendra Taneja, the measures that the government really took of giving the temporary relief on losses of the OMCs, the contingency funding and everything. How far will it go in averting this situation which has cropped up again? What's your view on how OMCs will tackle this, and how much could be the damage more?
Well, I think we are slowly, OMCs and our economy are slowly kind of moving back to the comfort zone, in the sense, I really don't think that the war is going to escalate to the extent that, it gets out of control. Then we are back to the March or April or May like situation. I don't think that's happening. And my sense is the government of India's view is more or less the same. Let's not forget that Iran knows it very well. If things end along the line the MEU has been already agreed upon, it's a win-win for Iran, because that means the foreign investment will start flowing into Iran, especially in the oil and gas sector, and their sanctions will be lifted. That means Iran's economy will be mainstream. At the same time, the Islamic Revolutionary Guards and they will remain in power. That's precisely what they wanted. They got a new lease of life. They will at the same time be mainstream. They will become part of the global economy. Majority of sanctions will go away. Countries like India will, get back to business as usual, may even start investing in Iran. So that's my sense. And that's what the US also wants, because they want to exit. They're tired of the war. US has realized there's no point continuing, and they want to exit. The only thing they want, President Trump, that, with this perception that they won the war. So probably Iran and the US kind of find a middle ground. It may take 1 year, it may take more than 1 year, but that's probably where we are headed. That means the government of India and government of India's oil and gas companies, like HPCL, IPCL and GAIL and others, ONGC included, which is an upstream company. I think, we are probably, as I slip into the comfort zone, which means that they have to start working on the medium to long-term plan in terms of new energy security doctrine. However, these companies' balance sheets came under tremendous stress. We all saw that. Government will basically help them to rebuild their balance sheets or rebuild their, financial health, which may take a couple of months. But by the time we are into the festival season, the Dussehra and others, I think that then the government will let them decrease the price of petrol and diesel, which means by middle of September, probably price of petrol and diesel may go down by 5 rupees per liter or maybe even 6 rupees per liter. By that time, the situation in the Middle East would have also eased. So that's the kind of scenario I'm quite reasonably confident about. And my sense is the government of India and majority of these companies too, whether public sector, private sector, they more or less have got the same view.
All right. Thank you so much, Narendra Taneja, as well as Feroz Aziz. Out of time on this show, but take a look at Nifty 50. It's receding fast at the current moment, shaved off 190 odd points, and that is really showing off in terms of the geopolitical concern. Rupee is also depreciating from its earlier already depreciating position. So keep an eye out on the market. A lot of action on the other side, but it's a wrap on markets at 12. Thank you so much for tuning in.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome back to NDTV Profit. You're watching Trending Stocks with me, Puneet Zaveri, and as well as my colleague Sharad Dubey. But you're watching it from the NDTV Profit Suzlon studios, and it's an important day for the markets. You're seeing a lot of individual movers today, and hence as we cover all of those trending stocks that will be buzzing in trade today. But let's first start with what's happening with the market, Sharad, because another day where we're seeing multiple key triggers, of course led by geopolitical issues, and that's having an impact on the Nifty 50 right now.
Exactly. Good afternoon, Puneet. You're bang on. You're right. That's one of the most important reasons. Yesterday, the markets closed at day's low, and today also, coincidentally, we are at the day's low level for both Nifty, and let's pull out Nifty Bank also to see what's happening. On a scheme of larger things, Puneet, this is largely, you could say, a little bit of technical cool-off, which was needed after a rally which we saw last week. Yesterday's session and today's session, both places we are seeing sell-off, and it's happening for both Nifty Bank. No major move happening in the small and mid cap also. Let's look at the key factors today of what's happening here. Overall, the sentiment is on a cool off. The support range is very important, 24,000 to 24,200. We are almost there. Nifty Bank, let's pull up what's happening there. We'll be looking at the support range for that as well, 57,300 to 57,700. So these are very important levels you should be tracking. Retracements is something to look at, but the option data is suggesting consolidation with a slightly negative connotation going ahead. But apart from this, another important factor should be the buying interest. This is back in the realty segment, and that's on the top gainers also after the expiry. So definitely there is a good momentum play coming in the real estate. Rupee remains volatile over the last two sessions, but the yields have gone up because of the geopolitical tensions. The global AI trade sell-off is continuing, and interestingly, KOSPI has entered bear market. Can you imagine? It's up 70% this year, but still it has gone into the bear market, and that's a concern coming in. But for today, two important things to track. Of course, the US FMC minutes is there, but be prepared. The Q1 earnings starts tomorrow with IT names and TCS starting. So Puneet, a lot of homework will be coming in for the markets and us as well.
Well, most certainly, and tech continues to be an important quarter yet again. We are baking in some weaker estimates at this point of time, but commentary continues to be very important. But let's look at the watch list now, what we have on what's trending in trade today. Embassy Development is the first one, stocks up almost 4%, pre-sales up almost 3.3 times, and hence buzzing in trade today. Silver Touch is another smaller counter, up almost 4%. They've won an AI native order from Rights, and hence that stock continues to be buzzing today. What's also doing well is Orchid Pharma, up 10% right now. They have a new $178 million agreement, and that's leading to those positive gains on this particular counter. Info Edge continues to be the stock of the week, I guess, because you've seen that good positive update come through for Q1 for the company, and now brokerages are chiming on. JP Morgan has now maintained an overweight rating on the stock, continues to be positive. That's also led by that 15% growth that we've seen in billing as well. But Thermax is the other counter. Kotak maintains its sell rating, but they have increased the target price for this counter to 4,200 now. And the next few key counters that are buzzing in trade today. A new listing, NAC Packaging, has listed at the 10% premium and continued to be there at this point of time, hence doing well in trade too. Apart from that, Inox India up 4%. During the day, we've seen a 939 crore multiple order wins come through, and hence you've seen that stock react on trade today as well. EKS continues to be building onto those gains, up almost 7% now. Brokerages are bullish, stocks at a record high as we speak as well. But Sharad spoke about quarterly earnings. You're starting to see impacts on the quarterly updates come through as well. PNGS, Reva, of course, out of the PNG basket now, reported a strong Q1 update, and stocks up almost 3%. And it has been a month as well as the last few weeks of QIPs and demergers. Idea Forge is another one, now opening its QIP at 835 rupees per share. The other few stocks, and you're seeing some moves on the amine space, so both Balaji as well as Alkyl Amines at an 8-month high for both of those counters, while Anantraj is one of the top volume buzzers, and Eternal is now at the levels that it has highest been at in the last 5 months. So continue to monitor this as we go into a very crucial Q1 for Eternal as well. Amongst the others that are doing well, Adani Energy, Akums Drugs as well as Ather Energy, all of those stocks continue to do well between 2 to 4%. All are at 52-week highs, and those are some of the key crucial ones that we have on the trending stocks watch list as well. But Sharad, back to you to take it in the rapid fire round.
Thanks a lot, Puneet, for that. Joining us, we are having Deven Mehta. Good afternoon, Deven. It's always a pleasure to have you with us at NDTV Profit. We start the rapid fire round, and I'm going to take a lot of cash counters today, especially embassy development. Good buying momentum coming in, project announcements, the Q1 updates is there. Of course, the stock has corrected a lot from its highs, especially what we saw in 2024, 2025. But do you think the buying or the volume interest is back in this counter?
Good afternoon. If you consider Embassy's development chart, I think there is a resistance around 67. Now, if it breaches and closes above 67, then we can see some further up move towards 71 and 75. So closing above 67 is much more important. Definitely the volumes are good. Those who are holding can hold with a stop loss of 61.
All right. The next group of stocks, of course, we are going to ask is on the amine stocks. Thermax is the stock I'm talking about. Interesting view coming in from the brokerages. Your take on the technicals?
I think we have seen profit booking from higher levels. If it breaches 4550, then we can see some further correction towards 4350, 4350. One should avoid buying at these levels.
Looking at the order wins, let's focus on Inox India also. Your views on this counter, and do you think there is something more to be made here, or it's a consolidation kind of a counter right now?
No, I think the way stock has bounced from the support of 1780, definitely the way it is holding these levels, one can try to buy this particular counter at current levels as well. 1780 can be the stop loss. The stock can again move towards 2100 levels. So definitely one can enter this counter.
Right, brokerages are turning quite bullish on AKS India. Yesterday we saw Nuvama, today IFL Capital. Stock has been going up, but valuations is a concern also. But for a trader, good time to book some profits off from this counter?
I think booking 50% profit at least should be a good way of trading this particular counter. One can book 50% profit, 245 can be the trailing stop loss for the remaining quantity. It can gradually move towards 300 levels.
Right, let's get in Alkyl Amines and Balaji Amines. Both of these stocks in tandem are doing well in trade. And of course, some positive industry development is likely to be there in the coming days to come. But on the charts, do you think there is more sustained momentum, at least till their earnings for the next 2 to 3 weeks? Any trade can be made from here?
Yes, definitely. Considering both the amine stock, I think Balaji Amines looks more favorable as far as risk reward is concerned. The way volumes have increased, I think this can stock move towards 2750 levels. So one can try to accumulate this particular counter with a stop loss of 2060 for the target of 2750. The overall structure for Balaji Amines looks good. Even Alkali Amine is good. We have seen a golden crossover in this particular counter, but a dip towards 1890 will be a good buy for this counter with a stop loss of around 1770 for the targets of 2220. So yes, both the stocks are looking good. One can try to accumulate those stocks.
All right, these are the views coming in both the amine stocks. That's the end of the rapid fire round. But over to you, Puneet. What are the Google trending stocks?
Well, thanks so much for that, Sharad. Definitely the IPO continues to be on a radar. NAC Packaging also trending on Google today. It's one of the few ones, very important ones as well, because you've seen now the IPO market starting to heat up. So good positive reaction coming through is welcome with both hands at this point of time. Vedanta yet again back in focus at 275 odd rupees. Kalyan Jewellers is yet again seeing a second day running up move of almost 6%, while you have seen some decent moves coming through for the other counters as well. Cochin Malabar Estate is one of the other ones that is buzzing in trade today too. But Deven, before we let you go, just a quick question on Kalyan Jewellers, because since the quarterly update, stocks continue to do well. Do you expect that momentum to continue?
Yeah, definitely. The way stock has bounced from lower levels, I think this rally can continue towards its next resistance of 395. So those who are holding can hold with a trailing stop loss of around 360 for the target of 395. One should try to book profits at 395 levels.
Devin, we let you go on that note. Thanks so much for joining in and giving us perspective. But let's also focus on an important management conversation now. CMAC is continuing to be in focus. One of its key vessels, which was stuck in Dubai, has now made its way back. And last year, FY26 was a record year for the company as well. So it's important to just take a note of what are some of the key expectations at this point of time. Naveen Mota, he's the whole-time director and president operations at CMAC Limited, now joining in to discuss some of those key aspects. Naveen, good afternoon. Thanks so much for joining in. It's Puneet this side. Just a first question on what we've seen as one of the key vessels which was stuck in Dubai, now back again. When are you expecting those operations to start essentially in this year? And what is, if any, time loss that you could have? Are you expecting that at least for the next 3 quarters, you will have the services of that vehicle continuing to be in operation?
So one of our vessels, CMAC Paladin, which was stranded in Dubai since March this year, and we are now, the vessel is back in India, and as we speak, the custom clearance of the vessel is underway, and we are hoping to put the vessel back in operations very soon. Maybe by within this month itself, we will be able to put the vessel back in operations.
Sir, good afternoon. This is Sharad here. Wanted to understand now, since there is a normalization at play, and I want to talk about the FY27 growth guidance. Will it be more than 15% now? Because there must have been some pending demand also. Now it seems like there is a normalization at play. So how do you talk about this guidance going ahead, especially for FY27?
Yeah, so all the factors we have already factored in when we have discussed during our phone call and our earlier discussions. So I'm quite sure that we will be able to meet this guidance what we have given earlier, and maybe get a tad higher also.
Naveen, seen in terms of operations as well, the growth continues to be very strong, right, as you were mentioning as well. But do you think that you are at this point of time guiding a little lower, because your growth from FY26 compared to FY25 has been strong? You'll have Agastya as well as 2 other O&M contracts come through in this year. So are you currently under-promising, maybe on par to over-delivering, and is the margins expected to be around that 40 to 42% range? Would that be a fair assessment?
See, definitely there will be growth will be there, as I told that whatever we have promised, it will be there, and there may be some slightly some kind of I would say that bumpiness will be there. So we have factored in that also while giving the growth forecast. But whatever we have committed, definitely that will be there.
Right.
And our margin number remains as what we have committed or we have discussed, around 40%.
Okay, so that was the guidance, 40 to 42% coming in for the EBITDA. But I want to understand a little bit more about your ONGC operation and maintenance contracts. Going ahead, of course, they have some non-India contracts also which are there. How do you see this developing? Because there is some kind of oil and gas infra repair theme also on, at least in the Middle East. So there will be a use for your services. So wanted to understand how the guidance playing out for the O&M space.
So after this war, there is a strong demand for the vessel because now infra has to be again put back in place, and there is so much of activity at every level, where all the countries, all the governments are thinking of being independent, so that if next time if this kind of event take place, they are not held to ransom. So everybody want to be becoming more independent, and that will mean that there will be more activities worldwide. Particularly, we are seeing that Saudi Aramco and Qatar, they are the hotspots which are going to give the fresh growth impetus.
And Naveen, just in terms of the new vessels as well as more of a medium-term aspect, because you've seen almost a 300 crore capex in FY26. You've guided for a $70 million capex in FY27, but just in terms of deployment, you already have almost 8 vessels that continue to be in operations. Of course, a timely maintenance would be factored in. But where are you expecting the medium-term growth to be? By FY28, you will have another vessel. So I think you must be going to almost 9 to 10 vessels from 8 currently. Do you expect that a 1,400 crore revenue over the next 2 to 3 years is on the cards as well?
Yeah, the way the things are planned internally and the target of what we have given for the acquisition of the vessels, yes, definitely we look at it that we will be able to reach that revenue targets.
And as we've seen, Naveen, also in terms of in this particular time frame, your revenue growth, as you mentioned, has been quite solid. In terms of your growth, is it going to be more back-ended, or how are you seeing the current picture? Because you've had a lot of demand in Q4 as well as start of Q1, essentially being hampered for your customers. So will this be a year where the growth generally, which was more H2 led, will be more seasoned through across Q2 to Q4? Would that be a fair assessment?
See, historically, if you have seen the number of CMAC, there is always a lumpiness in Q2 because that is a monsoon season and part of the fleet remains without having any kind of work. So over a period of time, we have added vessel into the fleet which are working round the clock, or like the vessel which has been deployed in Saudi, so that work round the year. So definitely there will be growth in the number compared to earlier previous year, but the impact of that seasonality still will be there.
Correct. Well, we leave it at that. Thanks so much for joining us, Naveen, giving us perspective about CMAC. We will, of course, touch base with you post your quarterly earnings as well, but thanks so much for joining in.
Yep.
Well, let's continue with what we have on the show today as well, because IT continues to be one of the biggest things to watch out for in this week. They'll be coming out with earnings tomorrow, starting with TCS. And Jasmeet is now joining in to give us some perspective of what could be the growth aspirations as well as the commentary. But Jasmeet, a weaker quarter is what we're looking at, but what are you watching out for?
Well, Puneet, thank you for that. If you look at this particular quarter, generally H1 for the IT companies is stronger, but in this quarter we're expecting a muted to no growth for IT companies, and this would mark the 4th consecutive year where we are seeing no growth to low growth for IT companies. So here are the top 5 key trends that we are tracking down here. While the first one, we are unlikely to offer any meaningful relief for the IT stocks, even the Accenture had cut down its guidance. So we don't see much movement in the market altogether, and already stocks have been penciled in the same as the stocks are down about 23% on Y20 basis. While the second thing would be the overall AI-led momentum. If it's creating the efficiency and if the stocks are moving from the pilot model to the actual delivery model, that's something which will be in focus. Well, the third is the old discretionary spend. We did know that HCL Tech call out there was some discretionary slowdown and the clients have moved down their budgets to the next year. So that will be something in focus of how that's planning for the company. And TCS being the first company, it will act as a bellwether for the entire sector and set up the context going ahead. Well, if we look at the fourth one, Infosys and HCL Tech, the guidance guidance will be in picture, given some brokers are penciling in Infosys and HCL Tech might cut the guidance, the upper end of the guidance, on the back of that slow movement in the deal momentum. And the last one will be the deal ramp-ups, acquisitions, pipelines, and how the overall momentum is setting up for the company. Let's quickly understand the tier 1, that's the top large cap IT companies, and what we are expecting from that in terms of the revenue growth. In INR terms, we're expecting a growth between 1 to 2%, but this is in INR terms. The growth is much lower when you look at the CC terms, and it's negative 1.5 to positive 1%. In terms of the overall EBIT, we see impact coming in for TCS and Wipro, negative 3%, and that is on the back of the wage hike we'll be seeing in the Q1. And net profit is been divided between negative 1 to 2%. Now let's quickly look at the things that will be in focus for the large caps. For TCS, we'll be focusing on the Coastal Cloud acquisition, of how that's adding to the inorganic growth for the company. For Infosys, HCL Tech, as we mentioned, the guidance will be in focus if they're trimming any guidance for the upper end of the guidance for the entire year. Well, look at Wipro, the key focus remains the next quarter guidance. Brokers are penciling in the guidance of positive 1 to positive 2%, but then it was negative 2 in the previous quarter, which will be in focus of how that's shaping up. And when you look at the last company, HCL Tech, the overall momentum would be in focus. And for Tech Mahindra, the guidance of reaching that 15% mark, if any commentary on that, will be in focus. And also, Tech Mahindra has the biggest telecom business, and Accenture had seen a good momentum in telecom business. So any up move in that will be in focus. But let's quickly understand the mid-cap companies. For tier 2 companies, you're penciling a growth again between 2 to 4%. We don't expect a positive surprise in the mid-cap companies, but Coforge, being the outlier, is expected to grow at 19%. Majority of the growth can be expected coming in from that Anchor acquisition, as it will be a 2 month of addition in the Q1. In terms of EBIT growth, again we are seeing between 2 to 5%, but Coforge again increasing by 12%, seeing the gains. When we look at the things that will be in focus for the mid-cap companies, we don't expect much positive surprise, but again they expected to grow better compared to tier 1 companies. Now going stock-wise, for LTM, the focus would be on the overall guidance of reaching the 2x growth by FY31. Apart from that, the BFSI momentum, we did see a slowdown in the Q4, but the Q1 momentum BFSI will be a key focus for this particular counter. Well, the next one would be the Persistent and Coforge. The proper analysis for the Coforge would be on the Encora deal ramp up, and for Persistent, the commentary would be on the overall deal wins and the details of the Nagarro acquisition, which is being a great positive by the brokerages as well. But lastly, the timeline for Encora for Coforge will be in focus. So far, this is a picture of IT. It looks pretty decent so far, and pretty decent as of now, with no to low growth, which is already penciled in. But any positive surprise will be a key focus to watch out for.
Well, thanks so much for that, Jasmeet. But let me go across to Lancelot Dicuna. He's the CIO of ValueX Wealth, connecting with us now as the fundamental guest for today. But Lancelot, good afternoon. Thanks so much for joining in. It's Puneet this side. ITS in terms of expectation also continues to be bare bones, right? In this quarter, a lot of expectation on the commentary. What are you watching out for? Is there a preference that's continuing to be within that mid-cap space compared to large caps?
Yes. Good afternoon, Puneet. I think what we are also looking at is there is going to be pressure on revenues and revenue growth for the IT companies, especially on the large cap side. I would think that in terms of cost, there would be some focus on trying to reduce cost as well. So they may, maintain the net profit levels. Maybe there will be no growth or little to negative growth, but definitely I think the focus will shift to cost management as well. The other aspect that we are looking out for is how quickly are they ramping up in the AI related business, and the growth from that business is what's going to drive the next leg of growth going forward. And so that is going to be an interesting aspect to watch out. And if there is, growth appearing to be much faster than anticipated, then probably there could be some re-rating, because valuations of most of these companies have already hit very low levels, and it looks unlikely that unless the profits are really going to sort of dip substantially, the valuations are already low, and we should see some improvement based on the outlook for the next year.
Right. Outlook is something which we'll watch out for, but the host of other stocks are also buzzing in trade. What are these stocks? What are the themes? You're joined in by Varsha for that. Hi Varsha, what are the stocks?
Well, 3 stocks I'll be talking about. One is of course Inox India, wherein they've received multiple orders since May 2026, and the order approximately is worth around 931 crore. Then you have Orchid Pharma, wherein they've partnered with Pharma Synthese in Russia for this is for commercialization of Exblifep in Russian market. This is nothing but an antibiotic which is used to treat hospital infections, and the opportunity spread for first 10 years, and which has a potential value of around $178 million. Lastly, RCF is in focus, of course, for 1,500 crore fundraise through FPO, but also because Finance Ministry had earlier proposed monetizing CPSC land assets through REIT structures, and hence RCF has actually amended their object clause. Now, because of this will create a legal pathway to unlock value from these land holdings. These land holdings are not yet monetized, but it has a future potential for the monetization of these land, and hence we are seeing RCF also buzzing in trade.
Thanks a lot, Varsha, for that analysis. A quick view. We discussed 3 stocks. Lancelot, hi, Sharad here. We discussed Orchid Pharma, Inox India and RCF. Out of these 3 stocks, fundamentally for the long term, which would be your bet?
So actually, if you look at, the 3 companies, I think Orchid trades at a very high PE multiple, almost 190. I think Inox, while the multiple is about 65 times, yes, the growth is looking good because there have been, there is a growth development coming in on the LNG space, which is one of their major growth areas. And we've seen in the last year as well, growth has been about the LNG business constitute about 28% of their overall sales volumes. So I think Inox could offer the highest growth because even EBITDA margins have seen good growth, and profit has been seen about 17-18% growth. So we should expect that growth to continue, and maybe that would be an option to look at.
Got that view, Lancelot. But an important story now, the government is evaluating a phased shift towards higher ethanol blends with E21 likely by 2027, but E25 will only be considered after scientific as well as technical validation, what sources are telling NDTV Profit. Now, India's ethanol capacity is sufficient to support the higher blending targets, and my colleague Sesha is now joining in to give us some more perspective on the same.
Right, the government is likely to slow the proposed transition to petrol blended with 25% ethanol following concerns over the rapid rollout of E20 fuel. The nationwide rollout of E20 petrol has triggered a debate over mileage and the overall vehicle performance. Amidst these concerns, the government is evaluating a phased transition to higher ethanol blended fuels, with the rollout of E21 likely in 2027, followed by E25 around 2029, according to sources. Now, however, the move to E25 will be subject to scientific and technical validation of the fuel and its use in vehicles. Petroleum Minister Hardeep Singh Puri has also clarified that there would be extensive consultations with stakeholders before any final decision is taken on the rollout. Sources say that India currently has an ethanol production capacity of around 2,000 crore litres, which is considered sufficient to support higher blending levels in the near term. The government also maintains that the E20 program itself was rolled out only after extensive scientific evaluation and is aligned with global best practices. Now, to give you some stats, 20% ethanol blending is estimated to save India nearly 4.5 crore barrels of crude oil annually, while generating foreign exchange savings of more than 1.9 lakh crore according to official estimates.
Well, thanks so much for that, Sesha. But Lancelot, we leave it at that, a shorter chat today. But thanks so much for joining in and giving us your views. But viewers, out of time on this edition of Trending Stocks. Thanks so much for joining in. From Sharad, myself, everybody who put the show together. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit.
Iran has accused the US of undermining ceasefire commitments after Washington launches strikes in response to Hormuz shipping attacks. Tehran has also warned it will not tolerate any interference in the Strait of Hormuz. Onto the markets now. Nifty hovers near 24,200 as global uncertainty and oil volatility looms on benchmarks. Oil and gas and FMCG lead the decline, with Reliance Industries and L&T among the top losers. Oil prices extend their rally as the US and Iran exchange strikes, as well as a war of words in the Persian Gulf as well, and Brent climbs towards $77 a barrel after Washington targets more than 80 sites, raising fears of further supply disruptions. Orchid Pharma shares surge over 11% after the company signs an exclusive licensing and supply agreement with a company that is Russian to commercialize its antibiotic in the Russian market, opening up a significant long-term growth opportunity. South Indian Bank in focus after RBI approval for the appointment of Mahesh Muralidhar Pai as its managing director and CEO for a 3-year tenure. New ND's term starts from October 1st, 2026. Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about Nifty or Zentech for that matter, both of the benchmarks holding on to a lot of pressure right now, as you can see on your screens as well. Nifty just about close to that day's low level as well. And when you talk about Zentech as well, that cut is actually much deeper when you talk about Zentech as well, about 500 odd points, 550 odd points there, about lower. And when you talk about the broader indices as well, you're looking at a little bit of outperformance, if you can even call it that. And when you talk about the entire list of sectors as well, it's quite interesting what's playing out right now in terms of oil and gas being the top sectoral laggard, followed by FMCG, financial services, media, rural, bank, PSU bank, all of those sectors on the back foot. What's holding up quite resilient right now is realty, metals as well, holding on to a little bit of strength in an otherwise tepid market. But when you entirely talk about some of the list of losers and gainers as well, you do have something like an Aegis Logistic that's down about 8%, and a bunch of your IT counters that are trading with some pressure, so Emphasis down about 4% Coforge as well, trading lower, Geo Financial Services, Shriram Finance, Interglobe Aviation, as well as Max Healthcare and HUL. Some of your top losers from within the Nifty 50 pack. And when you talk about some of the stocks that are holding up quite resilient, it's an Eternal with that 2% odd uptick coming in, Trent, Bajaj Auto, some of those counters that are holding on to a little bit of strength in an otherwise tepid market as well. So that's something that you're looking at. When you talk about some of the constituents in terms of the realty space that is buzzing away right now, if you can call it buzzing away, but you know, it's just about holding on to a little bit of resilience, something like Anantraj, Macrotech developer, Sobha, as well as Godrej Properties and DLF, holding on to a bit of strength from the entire realty pack, holding up resilient in an otherwise tepid market. But let's also move on and get you the entire word coming in terms of commodities as well, because it's actually oil prices that are very much in focus right now. Let's also talk about that as well in terms of the update coming in. Now, you do have oil prices that have been trading with an uptick, and right now you do have a little bit of spike up that you've seen in terms of Brent as well. Slight bit of spike up since then has really given up some of those gains as well when you talk about Brent as well, and WTI hovering close to Brent, of course, hovering close to that $77 a barrel level. And even when you talk about WTI as well, somewhere close to $73 thereabout a barrel. When you talk about some of the factors to watch, it's actually quite interesting in terms of everything that has been playing out with the oil markets. And let's get discussing all of that, because in terms of the price moves, of course, you do have $77 a barrel. But when you talk about factors as well, a bunch of things that you're watching out for. And top of that list is really everything that is coming out in terms of commentary. In terms of the Hormuz disruption as well, you do have Iran's foreign minister who's come out and given out comments in terms of everything that is happening, where he's saying that US is responsible for the escalation right now, and everything that happens from here on is the US's responsibility. So let's also explore that in terms of the resultant impact that you could be penciling in when it comes to oil prices. In fact, Dinesh Somani, founder of Pro IntelliTrade Services, joining us on the show right now. Mr. Somani, pleasure as always speaking to you. Just wanted to try and understand what you think about oil prices, and do you think that this sort of escalation and this sort of spike up that you've seen coming in, right? Do you think that this is a little bit of a knee-jerk reaction, or do you see this really sustaining?
The market was highly oversold. We have seen a fall from $100 to $67, and this pullback rallies toward the $73 mark, is just a 9% gain from the 67, which was the low created by WTI crude. I think probably the three vehicles, which were commercial vehicles, which were attacked by Iran, in retaliation to it, the US has imposed the sanctions again, and I think the peace talk is almost getting over, or is getting least significant these days. And that's the reason we had just seen a pullback rallies. But overall, I think the supply is going to resume. I think things are going to normalize. It was just a pullback rally, which was quite a bit expected from $66 to $67. I think $75 WTI crude is a major resistance. I think probably prices are going to ease out further from here.
No, absolutely. And about the factors as well, why you think the price is going to be moving up. First, I just wanted to try and get a sense of the numbers as well. What kind of price levels are you then penciling in? And then let's get talking about the factors. But first, you know, what are you looking at in terms of the upside here when it comes to oil prices?
The maximum upside which I could see in WTI crude is $77 to $78. Probably downside we may again see $64, which was the pre-war level. I think market should stabilize for a month between these $14 range from $64 to $78. The reason for the major pullback is technically, if I see, it was a highly oversold market. RSI was way below 30 mark, and a pullback rally was expected. The news came in and it triggered a fresh hike, a 3% gain overnight. And probably we are seeing prices close to 69,50 level in MCX market. I think these are against the resistance. The 7,000 mark would act as a sentimental level. Prices are going to have pressure from these level as well. Supply is going to resume slow and steadily. But these things and the spike and the news, that would create a spike of $3 to $4. That's max what I expect. $78 is the maximum which I feel.
No, absolutely. And so just about close to the kind of levels that we're seeing, just about a couple of dollars shy of those levels that you've pointed out as well right now we're trading at with Brent as well. Just wanted to try and understand some of the factors that are making it to your radar. Of course, the top of that list, and this factor is really spoken for itself, right? You do have Iran's retaliatory reaction and commentary coming in. On the back of that, just a little bit of spike up really coming in when it comes to Brent prices has really given up some of those gains as well. Just a few minutes of that knee-jerk reaction kicking in. Just wanted to try and understand which are the top three factors that you have when it comes to oil prices that you're really watching out for right now.
Right now, if I see the sanction that is being imposed on Iran is a major factor. Secondly, the three commercial ships were attacked by Iran. That is also a major factor. In retaliation to it, the US has also attacked the bases of Iran and the surrounding countries. These are the reasons for the spike, and just a $3 to $4 spike is there. Usually in such cases, we are such a, I mean, the geopolitical tension reasons, we can see prices moving too high, but as of now, the prices are just $3 up. But overall, I see supply would resume slow and steadily. Everybody wants to sell crude. I mean, anything about $70 is a good level for the Saudi Arab countries and all the countries which are producing the nation. Secondly, OPEC countries would increase the production as well, and I think the prices would supply would resume the market sooner or later.
Absolutely, and Mr. Samani, we'll talk about the resultant impact as well. But just as you mentioned, something that makes it to your factors as well, that you're watching out for oil prices. It's quite important to take stock of everything that is happening with the latest developments right now. Let's get talking about just that as well, because Anju Gupta, strategic geosecurity expert and author, joining us on the show right now. Thank you so much for taking time out and joining us. I really wanted to try and understand what you think about the Tehran's commentary also that is coming in right now, in terms of how the US is responsible for everything that happens from here on, and for the escalation as well. They've come out with very stern, very serious commentary right now. What do you think about this particular development as well, in terms of the comments coming in from Iranian Foreign Minister?
Good afternoon to you all. Thanks for having me on the show. Well, I think the immediate reaction that has come from Iran is about, a general license that has been suspended by US Treasury, which had allowed Iran to sell its oil. And I think that really hurts them. So this is the immediate provocation. And what is the background? The background is that over the last couple of hours, or I would say a day, two vessels have been hit in the Strait of Hormuz, one of Qatari and other of Saudi. And as a result, US carried out attacks on Iranian infrastructure, as they call it, along the Strait of Hormuz, which they thought was used for these attacks. And Iran mounted its own counterattacks on US assets in Bahrain and Kuwait. And as a result of that, US has now imposed the sanction, while US is also taking military action. So my assessment is that we are seeing a bit of an escalation of an ongoing theater that we have seen since the signing of the MOU and resumption of the energy flows through the Strait of Hormuz. Both sides are trying to expand the Iranian route as well as the Omani route. So US is backing the Omani route, while Iran wants to protect its own route for the majority of the vehicles to pass through. So at the core of these clashes lies this intention of both sides to dominate the Strait of Hormuz.
No, absolutely. And Ms. Gupta, I also wanted to try and understand what you think about the path forward from here, right? Because there's a lot of war of words that is happening. Of course, there's a lot of action that is happening in the Strait of Hormuz as well. What do you then expect in terms of the implications going forward? Because both the sides have a lot of talking and a lot of action that they have to do, which they've already talked about when you talk about some of these comments that you've highlighted as well.
So what has happened is, since let's understand why the MOU was signed. The Islamabad MOU was signed to basically, so to say, end the war. That has been the consistent position of the US, that we want to end the war and get talking. But what we have seen is that both the sides have been trying to shape and hence dominate the Strait of Hormuz, because both sides have great interest in that. My assessment is that this will probably not lead to complete closure of the Strait of Hormuz, but yes, the tension is heightened, and thereby there is much greater risk to the Omani route as well as to the Iranian route. So we might see some more attacks on some vessels that may not be either protected or pass through the Strait of Hormuz with the consent of, say, Iran or Oman. So we might see more of this because of what the Treasury has done. Because Iran would definitely like to get its own oil out, while it allows the other countries to get their oil out. So this is an escalation, but I do not think it is getting into, and there'll be a war. I don't think it's going to get to that stage at the moment. So both sides are testing waters. Both sides, it's a war of nerves right now. And you would realize that there is no talk about the nuclear issue, which was at the core of this war to begin with. Why? Because both sides are involved in this. So I think this will continue. And in the meantime, The countries which are friendly with probably both the sides will try and get their vessels out and get their vessels in. It has become a little risky. Let's hope that it resolves over the next 2-3 days.
Just a very quick follow-up that I wanted to get in terms of just a yes or no in terms of whether you concur with the statement coming in from Iranian Foreign Ministry as well. What they're saying is that essentially some of the terms of the deal are in direct conflict with some of the actions of recent actions when it comes to the US as well. Do you concur with that statement? Do you think that there is a stark contrast in terms of what was mentioned in the MOU that was signed and some of the recent actions that have come in? And does that really topple the MOU on its head then?
It's difficult to give you an answer in yes or no because it will be play of words. So
yeah, just a quick one then. Yes.
So my quick one is that it does not topple the MOU because I think both the sides need the MOU to live on. So this is muscle flexing on both the sides because they want to dominate the Strait of Hormuz. Legally, technically, one through the Iranian waters and other through the Omani waters. So that is something which has been happening since the MOU was signed and the Strait of Hormuz opened. So the MOU, I don't think stands toppled. I think they'll get talking maybe another round to Islamabad soon or maybe elsewhere. But I don't think it's going to topple. But yes, the risk to the traffic is enhanced, which could mean delays, which could mean insurance costs going up, which could mean oil prices going up, gas prices going up. That we can definitely expect.
All right then, thank you so much for helping us out with that entire update also coming in terms of how we should be reading into the latest developments as well. Mr. Somani, just a quick word from you in terms of gold prices as well, holding on a little bit steady right now, but do you think that that's likely to change? And do you think that there's going to be a little bit of a knee-jerk reaction coming in for gold as well?
I think $4,200 is a major resistance as of now. 4060 could be a good support. Anything fall around 4060 should be a good buy. Upside potential is 4130.
Thank you so much, Mr. Somani, as well as Ms. Gupta, for taking time out and joining us on the show here. So there you go. That's the entire assumption that you have for what's going to be happening later as well and what you could be penciling in when it comes to all of those tensions. The market, of course, reacted sharply to it, has since then really given up on some of that reaction as well. But let's also get you some more news and updates. The government is evaluating a phase shift to higher ethanol blends, with E21 likely by 2027. E25 will be considered only after scientific and technical validations in terms of the word coming in from the sources. And India's ethanol capacity is sufficient to support higher blending targets. Sessa is standing by with some more details here.
Right, the government is likely to slow the proposed transition to petrol blended with 25% ethanol following concerns over the rapid rollout of E20 fuel. The nationwide rollout of E20 petrol has triggered a debate over mileage and the overall vehicle performance. Amidst these concerns, the government is evaluating a phased transition to higher ethanol blended fuels with the rollout of E21 likely in 2027. Followed by E25 around 2029, according to sources. Now, however, the move to E25 will be subject to scientific and technical validation of the fuel and its use in vehicles. Petroleum Minister Hardeep Singh Puri has also clarified that there would be extensive consultations with stakeholders before any final decision is taken on the rollout. Sources say that India currently has an ethanol production capacity of around 2,000 crore litres, which is considered sufficient to support higher blending levels in the near term. The government also maintains that the E20 program itself was rolled out only after extensive scientific evaluation and is aligned with global best practices. Now, to give you some stats, 20% ethanol blending is estimated to save India nearly 4.5 crore barrels of crude oil annually, while generating foreign exchange savings of more than 1.9 lakh crore according to official estimates.
Alright, and that's the word coming in when it comes to ethanol as well. But let's also talk about Indian industry bodies, including CII, FICCI, as well as ACMA and spice exporters that are going to be participating in the USTR hearing today to challenge US allegations of forced labor and overcapacity as well. The hearing is part of a Section 301 probe that could lead to fresh tariffs on Indian goods. Rishabh joining in with some more details here.
What you have is a very interesting development in the US 301 investigations that are going on that eventually will lead to tariffs being levied on various economies that trade with the US. The development is, of course, that you have Indian officials that are going to testify in front of the US trade representative, and they're going to counter the claims of the US that essentially claim that India has been deploying various covert techniques to sort of to take undue advantages of the trade dynamics. And the two allegations that the US side has made is, of course, one is of forced labor, the fact that there is the use of forced labor in various industries across India, as well as overcapacity, that India is distorting market dynamics with overproducing certain goods. So those are the two claims that India is set to counter. The US has already proposed an additional 12.5%, and this is due to their findings on the forced labor part, and that is something that India is going to counter. And apart from the government, now what you're going to have is industry bodies come up and essentially say that India's framework does not even allow any sort of forced labor to be working. So how can it be possible that this is happening in India? What you're going to have is the two largest industry associations, CII and FICCI. Both of them will be countering the US's narrative. Apart from that, you're going to have the Auto Parts Manufacturers Association, the ACMA, as well as the All India Spices Association, that's also going to be against these claims of forced labor being used in these various sectors. So this is going to be a very interesting one. Remember, India, on a government-to-government basis, India has already told the US that it is not indulging in any of these, and it has urged them to reconsider this additional 12.5% tariff that they plan to levy. But now it's going to be industry bodies that are also going to be testifying and going to be participating in this public hearing. So a very interesting development, and one that we will keep our eyes peeled on.
Absolutely. Thank you so much, Rishabh, for getting us all of those important developments as well when it comes to this one. Let's also talk about Axis Bank as well, which is seeing a leadership churn, as reports are saying that 3 senior executives have quit the bank recently. When you talk about the stock trading with just about 1% thereabout of a downtick, Piyush is standing by with some more details when it comes to this one.
That is right. Bloomberg today reported that 3 senior executives at Axis Bank, particularly in the trading department, in the treasury department, have put their papers. These 3 executives, according to Bloomberg, are Anil Agarwal, Vikas Shinde and Jimmy Tawadia. Now, these are not key managerial personnel, but they are senior executives, like we mentioned, part of the treasury team. On the other hand, Axis Bank has sort of become, the talent provider for the industry. We have seen how earlier, just very recently, Puneet Sharma, the bank CFO, put his papers to join HDFC Bank as its CFO. Last year, we saw how Mr. Rajiv Anand, who was the Deputy MD at Axis Bank, joined to lead IndusInd Bank after the whole crisis unfolded, and he took over as the MD CEO of IndusInd last year. Vivek Gupta, who was the wholesale banking head at Axis Bank, has joined Intellect Design Arena as Chief Customer Officer. We are also aware how in 2020 Pralay Mondal, who's the CSB Bank CEO now, he had left Axis to join CSB. Even Arjun Chaudhary, who had come in from Citi to Axis, joined Graham Finance as its MD CEO last year. We also saw Ravi Narayanan, a former Axis Bank official, joining SMFG India Credit as its MD and CEO. And finally, Mr. Jayaram Sridharan also joined Piramal Finance from Axis Bank way back in 2020. Back to you.
Absolutely. Thank you so much, Piyush, for getting us all of those important developments as well. So that's a massive leadership churn that you're looking at when it comes to Axis Bank, and we'll get you more developments as and when they unfold. But we're also getting reports from Milind Colony in Nashik. Let's talk about that as well. The entire area has been cut off after water began overflowing the bridge, disrupting all access right now. Large parts of Milind Colony are now submerged, making it extremely difficult for both vehicles or, for that matter, even pedestrians, of course, to move through the area. For the latest from the ground, we're joined by NDTV's Tejasri Purandare, who's going to be reporting from the affected area. Let's take a listen at that.
Continuous downpour in the past 24 hours have not only resulted into waterlogging in Nashik, but also the water level in several rivers over here is also continuously rising. You can see in the pictures over here, we are currently reporting from a Milind Colony, and in the pictures as well, you can see that what the condition over here is. And in fact, the entire area is submerged into water. Usually it is very comfortable, to cross this road. On my right hand side, if you can show the visuals over here. But as of now, you can see that the river has crossed its normal boundaries and is flowing with a tremendous force. Also, in fact, the road leading to that side of area is completely underwater. Otherwise, this area is normally accessible, but the current is extremely strong and water is moving rapidly through this area. People have been advised to that side to stay in their homes because water has also started entering their homes as well. But this entire area from where we are reporting right now, and people that side, in fact, we have also been asked to move from this area because continuously this soil is very much loose, and it is also, in fact, getting loosened as the water is flowing with a very heavy speed. We'll also speak to the officials as to what they have to say. What do you have to say, sir? What is the condition right now since you're here on the ground? In the past 24 hours, we have been seeing that there is a heavy downpour. लोगों को क्या संदेश है अभी अलर्ट रहने के लिए?
हम सुबह से रात से ही लोगों को, हमारे अधिकारी कर्मचारी जो फील्ड पे काम कर रहे हैं, वो सब उनको सतर्क कर रहे हैं कि नदी किनारे मत आइए और आप जो काम आपका होगा आप घर पे बैठे ही काम करिए और घर से बाहर निकलिए मत निकलिए। जो जरूरत से जो काम होगा इसके बारे में आप घर से बाहर निकलिए। ये बारे में हमारे टीम पूरी अलर्ट, इसके बारे में नगर पालिका महानगर पूरी अलर्ट है इसके बारे में। और हमारे मैडम
वहाँ से जो कनेक्ट है वो पूरी तरह से इस रास्ते से कट गया है इसी रास्ते से पूरा कट गया है। इधर भी पूरा पुल पे पानी भर गया है, इधर भी। और आप यहाँ पर अभी मौजूद है हम यहाँ पे, और इस बाजू पे हमारी से टीम खड़ी हुई है उस बाजू में, और इस बाजू में हम खड़े हुए हैं। दोनों ही जगह पे टीम तैनात है. Teams have been deployed, viewers, at several places at here as well. And on that side of area as well, here also you can see that officials are alerting them to stay in their houses. Advisories have been issued. But again, next few days, I will say, will be very much crucial for Nashik and nearby areas.
No, absolutely, and thank you so much, Tejasri, for getting us all of those details. That's all the time, though, that we have on this edition of the show. Thank you so much for tuning in.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
At NDTV Profit, every day is a new day, buzzing with news, information, analysis. A lot of it. That is why we separate the news that is urgent and important for you from what is not. News that influences outcomes across markets, policy, and the corridors of power. At 6 p.m., we turn our attention to the critical conversations that matter. I'm Vikram Oza, bringing you The Big Question, Monday to Thursday at 6 p.m.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Good afternoon, you are watching Small Cap Bazaars on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So let's see what's on the show today. Firstly, we'll be speaking with the management of RBZ Jewelers. Now, there has been strong update coming in from all the jewelry companies. So how has Q1 fared for the company is something that we'll try to get an answer from the management on the show. And what's the way forward is also something that we'll try to get to you today on the Small Cap Bazaar show. Apart from that, we'll be speaking about stocks like Orchid Pharma. Now, this is on the back of expansion of its products in the Russian market. The stock has been buzzing. In fact, the stock is up nearly 18% in the last 1 month. When it comes to Gem Aromatics, that stock has at its highest intraday level in the last 8 months, and in the last 1 month, the stock has recovered nearly 34% in trade. When it comes to Jindal Drilling, that counter has been buzzing given the fact that oil prices are up, and this is one counter which always reacts whenever crude oil prices increases. But if you look at the volumes, they are nearly 12 times its 20-day average. The stock has snapped its 2-day losing streak, and this is its largest single-day gain that we are seeing in the last 2 months. And lastly, when it comes to Vaibhav Global, that stock has hit its highest level since Feb 2026, and the single day gains that we are seeing in trade today is the most in the last 3 months. So what could be the potential reason behind this move is something that we'll try to decode on the show today with our fundamental guest. Now, if you look at the market, given the fact that again there is chatter of war starting in the Middle East because of the Iran and US attacks, market is down nearly 180 points in trade, but we're trying to find some support. Nifty is trying to find some support around the 24,200 level. The Nifty Bank Index, that's also down more than 300 points in trade. And if you look at the sectoral indices, apart from real estate and metal, all other major sectoral indices are trading in red. As you can see, Nifty Real Estate Index is up 0.7%, while Nifty Metal now largely flat in trade, up just 0.1%. But on the losing side, we have Nifty Oil and Gas because of the oil marketing companies being hit the most. Nifty FMCG, Nifty Infra, all down close to around 1% in trade. Weakness coming in all the sectoral indices. Similarly, something that we are seeing in Nifty Small Cap, but Nifty Small Cap, when compared to the benchmark, is still fair. It's largely flat in trade. But what are the key indices, key stocks here that have been buzzing in the small cap index?
stocks are actually in focus on the back of volumes. You have TB International, 14 times of its 30-day average volumes are trading. Stock is up almost 15%. You have Gem Aromatics also buzzing on the back of volumes at 36 times of its 30-day average, up almost 12%. Heikel, if you see, that stock actually is up 31% in last 1 month. Today it's up almost 8%. You also have Mirza International. Let's pull up that chart as well. Mirza International is up almost 10% in trade. It's up 30% in last 1 month. So a lot of stocks are actually buzzing on the back of volume. Saraswati Commercial is up 49% in last 1 month. Today it's up almost, if I'm not wrong, there you go, 10%. On the losing side though, few stocks which are trading negatively. You have Kaushalya Infra, then you also have Kothari Industrial, which is down almost 4.5%, Sarthak Metals, Regency Ceramics. Not much stocks, but yeah, stocks are buzzing on the back of volumes. But one stock which is in focus is RBZ Jewelers. We all know that gold companies are actually coming out with Q1 updates, Q1 FY27 updates, and we want to know how Q1 has been shaped up for RBZ Jewelers and what lies ahead for next 2 to 3 years. To speak on that, we are here joined by Mr. Harid Zaveri, who is joint managing director and chief financial officer at RBZ Jewelers. Sir, welcome at NDTV Profit. Pleasure to have you. Sir, strong business updates we are seeing from jewelry companies for Q1 FY27. How has Q1 shaped up for you? What kind of volume picking have you seen up?
Volumes have been positive in Q1, and despite the government, the comments of the Modi government had a comment, but then the effect moderated, and we are able to see that when the gold price fell down, there was a good increase in demand. Also, then the month of April, Akshaya Tritiya went on well. So, in overall, quarter is positive.
Okay. At the end of the fourth quarter, you did not give a guidance because of the multiple macro issues. But given that most of them have receded now, any guidance that you could share for FY27 on the revenue front, on the profit front?
See, in this financial year, we are opening 4 showrooms. That is 2 large format and 2 mid formats. Now, considering those changes as well, I really feel that we are forecasting a good upside. But to give figures on this will be quite early. Let us see how stores roll out, and let this quarter. I think the next quarter, what we are thinking will be mainly driven by the job box services. But in quarter 2, there will be a large format showroom of Surat that is getting open. But let us again wait for any kind of a guidance or anything that we are announcing. Quarter 1 it is finished, and now I can really say that quarter 1 was good in terms of we are volume positive, and that speaks about it.
Okay. On the inventory front, yes, gold prices are still on the higher side, but from the FY26 peak, they have come down. So, any inventory losses that you would record in the first quarter, or investors should expect at least in the first half of this financial year?
So, nothing as such. We are quite comfortable with our inventory levels. As we said before, that we keep a cushion of 20-25%, on the book level with respect to the market price, as we follow the weighted average price mechanism. Hence, there is a negligible impact, even though international prices have slided by 30%. In INR terms, there is hardly any impact on gold prices that we are witnessing to see. A surge of 162,000 was there, but it slid down to 150 and 147. So, 150 was actually a consolidated level that, we had before, and it has maintained. So, we are not seeing any, in fact, there is a cushion already that the company has with respect to inventory levels.
Right. And sir, so no, official guidance for FY27, but you're opening 4 stores, which you just spoke about for over the next few quarters. What revenue contribution do you expect from these stores in FY27 or 28?
So revenue is, like how the Ahmedabad store has performed. Similarly, we are anticipating that Surat being 90% the size of Ahmedabad should perform in a similar fashion. So behavior of the large format stores generally remains same, and it will take around 3 years to mature. But we see a good amount of revenue share, a couple of turn that we expect from the inventory that we actually deploy. And thus, I think the maths can be actually done by the analyst for that.
I mean, the next leg of growth for you, of course, is retail expansion. What was the contribution in FY26 and where this contribution can go? What's the target for 27?
So the contribution on the top line was 408 crores was contributed by retail, and remaining was contributed by wholesale services. The total value of merchandise sold that RBZ had was 1,251 crores. So, because the job work services does not add up to the top line contribution. But we see that this year the quantity or the volume contribution for retail and wholesale would be 50% at least. And we see that adding these 4 stores would make that contribution. I think the contribution, once it comes to 50-50 level, it will show that there will be quite an increase in retail revenue as we go ahead. Yeah.
Right. So, as you said that you're not sure, considering the situations that we are in, so you're not sure about the FY27, but you are expanding your retail expansion. Then what's the vision for RBZ Jewelers when it comes to top line or bottom line for the next 3 years? In the next 3 years, if you could share that vision with us, some target you might have with you for the next 3 years.
Sure. I mean, we are really scaling up in Gujarat. We really want to be a dominant player in the market of Gujarat and Gujarati as of now. We have done in this year, we are doing 25-27 exhibitions. A few of the exhibitions are out of Gujarat. That is, we are exploring how the market.
So we'll get back to you, but before that, we have to listen to Donald Trump, who's been speaking on air live.
The fact that I'm very upset with NATO, that we pay far, far too much. Billions and billions of dollars too much, because it's unfair, because we're protecting them. So we protect them, but they're not there for us. Think of it. Doesn't work. But I want to say this is a great leader. They're lucky they have him. It's their biggest asset. You want to know the truth? So, Mark, would you say a few words?
Absolutely. Thank you so much, Mr. President. Dear Donald, let me start with Iran. We discussed it last night at the Presidential Palace. I think what you did, degrading the nuclear capability, crucial for Israel, the region, for Europe, degrading the ballistic missile capability of Iran, crucial for Israel, for the region, for you, for the whole world. And then trying to bring this to a peaceful end. They attacking ships yesterday. I think what you did last night was absolutely necessary. It was a very strong response. And I'm with you on this. It's really important. When it comes to NATO, what you have achieved, and this is a huge win, and I just want to say this again, the last 2 years, Canada and European NATO nations spending $215 billion more in 2024 and 2025 and 2026 compared to 2024. This is staggering, 258 billion. In the meantime, almost 200,000 jobs in the US being supported by all the investments by countries in the United States in the defense industrial base, buying from the defense industrial base from the US companies. So here you see you have been able to really get them to step up, to do this. And when it comes to Iran, I know you're disappointed. We discussed it a couple of weeks ago. I would say these are isolated cases. 5,000 planes taking off from European airports in support of Epic Fury. It was Europe as one big platform of power projection for the United States, helping with Epic Fury, including countries you mentioned, Germany from day one, France, and many others. We discussed the Bucharest airport, which was closed for a couple of days for commercial traffic because you needed it for Epic Fury, and they were totally
United
fine.
Kingdom wouldn't let us use the island for 2 weeks, so we had to fly back.
No, so I'm saying you're right. There are isolated
and
cases.
Italy was very bad, having to do with their bases, as you know, and a couple of others. So
But still, generally, 5,000 is huge. And you mentioned Spain. Even you got Spain to pay 2%. They made a huge step in last year. So there are still issues we have to solve. But hey, also even on Spain, I would say they got to the 2%. And I know you have a very strong relationship with the United Kingdom, the King, but also you personally always with Keir Starmer, who is now leaving office. He has now also committed to spend another $20 billion extra, 15 billion pounds on defense. So I would argue without you in this chair, this would not have happened. It is, of course, because of Russia, but also because of you. So grab to win, it's there. You did this. It was The Hague, and now they are implementing. And on Greenland, you and I made a deal in Davos. I will make sure that that deal is step by step being implemented. That you can deploy, if you want, the Golden Dome on Greenland. You have your trilateral talks. Mark was leading them from your side with the Greenlanders and the Danes. When it comes to if they would change their constitutional position in the kingdom, etc. But hey,
I mean, just so they understand, Greenland is very important for the United States, but it's not important for Denmark. In fact, when Denmark was overrun by the Nazis in less than one day, Hitler beat them out in one day, took over. They asked us to take care of Greenland. In fact, we took Greenland, and then stupidly we gave it back. We shouldn't have given it back to them because we're the ones that need it. We need it for protection of the world, not just the United States. And
well, that was the US President Donald Trump speaking about the attacks that were done yesterday on Iran and various other issues. With that, let's slip into a short break and we'll address small cap news on the other side.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
Welcome back. You're watching Small Cap Buzzers, where we discuss all the small cap stocks which are buzzing. But Vaibhav Global, let's see what that stock is doing. The stock is buzzing in trade, of course, on the back of volumes. Let's see what that. So the stock was up almost 10 to 12%. It's 6% in trade. Buzzing on the back of volumes. Also, the stock has seen high gained almost 10% today. Volumes today are 6 times of its 20-day average and has gained almost 45% since April. But this stock was actually very much in focus during COVID times, and post-COVID we have seen the stock not giving much returns, but it's up almost 45% since April. But what are the key triggers of this stock in buzz today? Let's bring in Parth to give us more details on that.
Absolutely, Varsha. Buzzing, Weber Global was buzzing in trade today. In fact, at highs in the morning, the stock was up almost 10% today. If we start with talking about the company a little bit first, then Weber Global is a digital retailer of fashion, jewelry and lifestyle products. They have a global presence and they have a very vertically integrated end-to-end business model with a strong customer visibility actually of around 10.7 crore households globally. If we talk about their Q4 and FY26 highlights, then FY26 was an investment payback year for the company, as the management mentioned in their latest con call as well. The key reason behind this was that their German operations became EBITDA positive for the first time in FY26 for the entire year as well. Their in-house brands as a percentage of revenue crossed 50% of their B2C sales, which was 1 year ahead of the targeted guidance which management had given earlier. Also, another bigger segment of the company, that is the digital segment, was 44% of their B2C sales, and management has clearly given a path to increase that to up to 50% by FY27. Lastly, about the management guidance as well, for FY27 they are targeting a revenue growth in the range of 9 to 11% and also an EBITDA margin expansion in the range of 50 to 100 basis points. Also, German operations, which I just mentioned that they turned EBITDA positive for the full year in FY26, will be converting from a drag to a contributor now in FY27 earnings. Also, their other geographies like in US and UK, they are expected to reach a growth rate in the double digits from a long-term to a medium-term perspective as well. So these are the key triggers that investors need to look forward while tracking Weber Global.
Well, thank you, Parth, for that. But meantime, there has been a sharp fall in the market. If you could see Nifty, as Donald Trump was speaking about the Iran ceasefire getting over, Nifty has fallen by nearly 100 odd points. We are trading around 24,200 before that speech, and right now we are trading around 24,100. And now we are very close to breaching, I believe, the 100 DMA. We are very close to breaching the 100 DMA in trade. Something that we need to watch out for. On the sectoral side, the stocks that are dragging the most index is ICICI Bank, Reliance Industries, Bharti Airtel, HDFC and L&T. And if you look at the sectoral indices, Nifty FMCG now is a top sectoral loser, down around 1.5%, followed by Nifty Private Bank Index and the Nifty PSU. So it's largely led by the banking names. When it comes to, apart from that, if you look at in the Nifty 50, the top loser right now is Jio Financial Services, down around 4%, followed by Shriram Finance, down around 3%, Maruti Suzuki down around 2.5%, and Indigo down around 3% or in trade. Iran ceasefire is off now, and that is one of the major reasons why the markets are down. Markets are down more than 250 odd points in trade. In fact, this could be one of the biggest intraday fall that we have seen in a while coming in for the benchmark index. But Orchid Pharma, despite this fall, stands tall. Let's get in Varsha to understand why Orchid Pharma has been gaining.
Well, the stock is up, of course, on the back of companies' market entry in Russia. So they've partnered with Pharmasynthesis, which is nothing but a pharma company in Russia. The deal is for commercialization of Exblifep in Russian market. This is nothing, but the drug is an antibiotic which is used to treat serious hospital infections. Now, this is the first new chemical entity from an Indian pharma company, received approvals from both US FDA and EMA. Now, the deal structure, if I were to talk about this, the company will get exclusive rights in Russia. Orchid will manufacture and supply the finished goods, and Russian partners will handle the registration and commercialization. Onto the financial opportunity has potential. This partnership will have a potential value of about $178 million, which is spread over the first 10 years, and the size reflects strong demand from Russian hospitals as well. So overall, this is a novel antibiotic which is being developed by Orchid Pharma, and now Orchid Pharma will be entering into Russian markets, and hence analysts are expecting a huge growth when it comes to this molecule in Russia. And also They're also commercializing US and South African markets as well. But so this is one of the reasons why Orchid Pharma is up today. But the next stock which is in focus is Gem Aromatics. Let's pull up that chart as well. The stock is buzzing on the back of high volumes, and we have Jasmeet with us to give us more details on that.
Well, Varsha, thank you for that. As rightly said, the stock has been buzzing on the back of the volumes, and we don't see a recent trigger. But let's quickly understand what does the company do. Well, the Gem Aromatics company operates as a specialty ingredient manufacturer, where to manufacture essential oils, chemical-based derivatives, and other value-added derivatives as well. If we look at the portfolio, the company has about 70 odd products. Now, in terms of the overall stock performance, we do make a note that the stock is up nearly 34% in this particular month and has been rallying in trade. And if you look at the overall performance from 52-week high, it's down about 38 odd percent. And even the current gain is not satisfying that level of 38%, still down with 38 odd percent. If you look at the overall IPO, the IPO did come last year in the month of August, and since then the stock has been tanking and currently below the IPO price. Now, a bit about the key recent triggers and what can be the reason why the stock is buzzing. Well, the first one is the board approval for incorporation a subsidiary in the Brazil. While with this, the company will expand their portfolio in the Brazil as well. And as of now, Brazil contributes about 7% odd. So with this expansion outside India will help them expand the geographical expansion as well. That's the first key trigger. While the second key trigger is the promoter buying the stake. In the Q4 of the company, we did know that the promoter purchased nearly 1.9% stake, showing a positive momentum. And currently, promoters hold about 57% odd. If we look at the Q4, it was a turnaround quarter for the company. We did note the revenue, so an uptick of nearly 40% odd at 110 crore, while the overall EBITDA also nearly doubled and up about 124% odd. In terms of margin, even that has improved at the base level from earlier 8.9% to 14.2% odd, while the company has turned profitable in the Q4 again from a loss of 5.3 crore, which we saw back in the Q3. Now, in terms of the other key metric of geographical spans, company has the highest percentage of revenue coming in from the Indian market, about 56% odd, while USA contributes 28% odd, Brazil currently contributes 6% odd, which is expected to increase once they have that established subsidiary in the Brazil geography. Now, in terms of the outlook, the management stays confident of reaching that 1,000 crore benchmark, 1,100 crore benchmark by FY28, which is wait and watch as of now, and with the margins of FY28 between 16 to 18% odd. On the outlook for FY27, they expect the performance to be better and closer to what was in the FY26. And given the easing of geopolitical tensions so far, we can expect a good turnaround for the company in the coming time as well.
Right. Well, got that view. Well, thank you so much, Jasmeet, for all the details. Moving on, Jindal Drilling. Let's see what that stock is doing. The stock is up on the back of volumes of 12x of its 20-day average, snaps 2-day losing streak. But we have Shivam with us to give us more details on that.
Well, yes, the stock is witnessing a strong momentum in today's session, and starting with a small brief about what the company's business is. So, company is an offshore drilling services contractor in India's oil and gas sector, and also provides mugging and directional drilling services to oil and gas sector. As this company is directly involved in activities which are related to crude oil, so crude oil's price also becomes an important factor to note. In terms of OPEX and cost, the crude oil prices were at a high of around $119 per barrel in February 2026 due to the Middle East war, which has now reduced to around $72 per barrel. So this decrease in cost has also provides some sort of cushion to the company's financials, and also this will drag down the drilling cost and rigs cost. Also, eventually the quantum of OPEX is also expected to come down. Now, this could be one of the reasons the stock is seeing a positive momentum in today's session. And moving on to the Q4 highlight, the company's Q4 financials was on the softer side a bit, where the revenue has saw a decent increase sequentially. However, the OPEX and depreciation has saw a higher increase, and that has resulted in margins which were under the pressure. Also, in terms of outlook, the company has guided for 350 crores of EBITDA by FY27 and currently conserving cash for rigs refurbishment.
Got it. Thank you so much, Shivam, for all the details. And hence, stock is up almost 14% in trade. But viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing
Welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. And looking at the markets right now, there would be some, I presume, because you've seen comments coming in from US President Donald Trump, and that's just taken off all the sheen that you had, even if any, that was getting built into today's trading session. So you're now down almost 375 points after President Trump, while mentioning quite a bit, has told and has said that according to him, the ceasefire is largely over, according to his opinion. I think those comments have just taken out all of the momentum out of the markets right now. We were down about 150 to 200 points. Let's look at the heat map also. And actually, let's stay with, because we are just touching the 24,000 mark yet again on the index. In terms of the sectoral heat map, of course, you're seeing all of those get into the red right now. You had about 6 to 7 sectors in the green at the start. Just about an hour ago, all of that has now changed into the red. The heat map also showing you that pain that is bound across the board. Only a few handful of players that are doing well right now, but you're seeing Jio Financial, Shriram Finance, the auto pack is now down, Maruti Suzuki is down 3%. So it's really a battering that we're seeing right now in the markets. You're also seeing Brent crude also spike up almost 3.5 to 4% now. And a lot being said by President Trump right now in his comments that has come through as well. He has also mentioned that he thinks that the negotiators are actually wasting their time with Iran right now, and hence you're seeing that pressure go across the board. We saw that continuing now below, unfortunately, that 24,000 mark as well. So we'll probably get our technical expert also to get in and give us some perspective also. And that continues to be a pressure moment at this point of time. You're not seeing that pressure stabilize at all at this point of time. So the Nifty Bank, we spoke about 57,700, 58,200, all of those levels now out, with the Nifty Bank down 1,000 points. Let's look at the constituents also of the Nifty Bank, because private banking space continues to be under pressure and taking it on the chin right now as well. You're seeing that pressure across the board. All of those stocks now in red. BOB down 2.7%, and any kind of momentum that was also getting built on HDFC Bank has now lost out as well. We'll probably try and get you another market voice to get us some more perspective on this. But clearly, all of those comments have just taken too much sheen out of the markets and the momentum right now as well. But let me welcome in our technical guest for the show, Sachin Janardhan, market expert on the technical side of things. Sachin, very good afternoon. Thanks so much for joining in. I wish I could say that the markets are at a space or looking at like that. Similar to your background, but that's completely not been the case, right? How are you looking at the index, because we've broken 24,000 yet again? Are you seeing that further pressure? I know it's very volatile right now because just this has happened in the last 15-20 minutes, but what are you seeing?
So yesterday, what happened actually, we have to understand, and then in that context, we can actually say, because yesterday we have touched Nifty 24,500 levels, and we were unable to close above that levels, and we have seen it has made a high of 24,530 and closed below 500. So why 500 level was crucial? Because there actually 200-day EMA was present, and we were struggling to close above it, or we were consolidating near that level from past 2 days. So as soon as we have closed below that, today gap down was very much like expected. But now the 24,200 levels are also broken on a closing basis. If we are, then we are actually heading towards the 23,800 level. That is the last hope technically. If we are not if we are holding above that, then that is good. Then again we can go towards the 24,200 and again 24,500 levels. But if we are breaking down below 23,800 levels, then we are heading towards 23,000 and 23,200 levels on the downside. So these are the levels which we are looking right now.
Got that view, Sachin. But let's also look at the mid cap and the small cap also indexes as well, because you're seeing that continuous pressure, similar 1.2% downtick, and all that momentum lost out on the mid cap 150, the small cap 250 also down about a percent and a half almost right now, and that pain continues as well. So that's the technical view as well. Let's also get in Sameer Dalal of Natwarlal and Sons Stockbrokers now joining in. Sameer, very good afternoon. Thank you for joining in today. Just, first a quick view on the markets, right? Because all of that momentum that we were just starting to build, I think today we were down about 150 points in the morning because of that attack by US on Iran yet again. And now those comments, right? I think it's just taken all that momentum out. What are you currently seeing? And because, the pain continues across the board right now.
Yeah, so it's still early days, Puneet, to be very honest. We don't know how much this is going to escalate and what impact it's going to have. But the market is obviously giving a knee-jerk reaction. Market thought, this problem of Iran was behind and was playing that, things will now normalize and business will take over as usual. Obviously, nothing works the way we want it to work. But having said that, hopefully this doesn't go too far beyond. And again, rational minds prevail and things normalize. But of course, if it does escalate further, if something starts up again, crude prices spike up again, all bets are off the table, because then again, oil prices go up again. We reach the same kind of situation we were in some time back. So we got to monitor the situation. If things don't ease up, then obviously the downside opens up all the way down to 23,000. Having said that, if it does ease up, I think the markets, this is a good time to start accumulating, because if crude prices remain around the $70 to $75, because the tensions are easing, then I think India has a good pathway to grow. So we need to monitor the situation. It's very difficult to call out what is going to happen, but a little bit of caution, but quite optimistic that hopefully sensible minds prevail.
But Sameer, before we move forward also, because, you mentioned that all the way down to 23,000 could be a possibility, right? But what would you actually buy then at this point of time? You are mentioning about certain pockets that you should look at. Is it banking? Because that continues to be under pressure yet again. What is something that you like right now? In what spaces are you looking at right now?
Yeah, so absolutely. Banking is a sector that we continue to like. We think, look, even in this rally that entirely happened, if you look at it, HDFC Bank has really not moved up. It was some of the smaller banks that moved up, IndusInd, IDFC, Axis and ICICI have really not done too much. I mean, they've just gone back to where they were previously. They've really not done anything major. So that is one space which can do well, given the fact that we've had decent loan growth, right? The monsoons have picked up some pace, which is going to definitely help the Indian economy. So, the risk of NPAs from the rural sector obviously could reduce. We were thinking that they may see acceleration, but given the fact that the monsoon's seen a decent uptick, that is something that may not happen. So we think that side, the NPA problems will not happen. So that is definitely one. We still keep saying the same thing, and we said this when the war started. We are saying this now. The shift away from being so dependent on imports of crude and petroleum needs to change. And the government needs to take quicker steps towards that. We've seen Delhi government passing on a resolution that after 2027, electric vehicle, petrol and diesel, petrol scooters will not be registered. Electric two-wheelers is mandatory starting 2027. If all of these things start happening and the dependence on crude reduces, then that is a space the power sector will see a great fillip and an uptick. So we remain extremely positive on that entire space, be it from the generation to the transmission, distribution, the ancillary players, the companies that set up the distribution network, producers, all of it across the entire vertical chain will do well, and especially renewable, where the setups can be quite quick, which can ensure that India's dependence on imports reduces. That is another space. The other space, then again, like we said, if electrification in vehicles starts seeing an uptick, companies that are focused on that, I mean, some of them have already run up, like Ather Energy has gone up like to another extent, but I mean, the valuations are just off the charts. But Ola is still something we think that could do well. There's Greaves Cotton, which could get a fill up. Tata Motors PV, which has taken a bit of a backseat. That is something that could drive up. Mahindra and Mahindra has been consolidating. So that is another space that we can see an uptick. And then companies that cater down to the auto ancillaries of that, like Sterling and Wilson Solar, Motherson Sumi Wiring, all of these guys can start doing well. So, these, I said Sona Comsta, I didn't mean Sterling, and it's Sona Comsta and the auto angs. These are counters that can continuously do well.
Got it. But let's also, stay with this market coverage as well, because, you're really seeing pressure right now building up and continuing at this point of time. Even for the Bank Nifty, we're below that 57,000 mark. But, and let me actually welcome in Devin Choksi, MD of DR Choksi Finserv as well. Devin bhai, thanks so much for joining in on such short notice. And probably we'll try to connect with him yet again, but and I think we seem to have just lost that line. But look at the Bank Nifty yet again, and I'll probably get a question with Sachin as well, because now below that 57,000 mark, and we've breached 56,900 as well at this point of time. So the pressure clearly there. Sachin, very quickly, as a level that you're watching out for the Bank Nifty, because I think between that 55,500 to 57,200, you don't have too many supports, right? So what are some of the levels that you're watching out for?
Actually, there is a gap which was earlier presented around the 56,800 and 57,200 zone. So that gap actually right now has been filled. If we are closing below 56,800, then we have a real problem in Bank Nifty. In that case, the next support levels will be around 55,700 and 55,200 levels.
Got it. And let me try connecting with Devin Choksi, MD of DR Choksi Finserv as well. Devin bhai, if you can hear me, thanks so much for joining in. It's Puneet this side. We yet again, right, we were just discussing about all of those comments from President Trump taking out all the momentum and the sheen out of the markets right now. How are you seeing this downtick currently? Because we don't, and it's still fresh, but seeing a consistent pressure across the board, across the markets. What are you currently making of this?
So yeah, good afternoon, Puneet. Well, I think we were probably anticipating that this ceasefire is not going to have a calm beyond a point, and that's what probably I think is getting validated now. Largely because of the fact that I think the terms are not clear with for acceptance by Iran. That is one thing which is very clearly known to all of us. And as a result of which, I think this is not going to prevail upon. So frankly, we can only hope that I think from here onwards, I think we do not repeat the past, what has happened in earlier period. If that does not happen, then I think it is relatively, I think, easy time for all of us. But should it go into the same kind of a treatment which happened in the past, then once again, I think it will be very unfortunate. So it's clearly uncertain, not very sure about how market will want to react hereafter. Maybe I think the market recovered and it is basically now adjusting to the recovery gains now. Nothing more than that. But if the situation prolongs and if it goes in adverse direction, definitely it's not a good sign actually.
And Devin bhai, you speak about, of course, we are tracking them so closely. I mean, just back again, just a tad above the 23,900 mark. But before today, actually, we had that positive momentum build all the way up to 24,400, and all those spaces and conversation had shifted towards the earnings season of and segments that were doing well, banks, auto, private banking, as you would like it. Are you looking at certain opportunities now within these spaces, as we've seen back in March as well? Is there something that you like in terms of the stability of these businesses led by the domestic momentum? And are you looking at it yet again if this correction persists, if this volatility persists?
So the stability part and the growth momentum continues in some of the sectors in the companies therein, and that includes the likes of power ancillary. It also includes the lending businesses of NBFC as well as, I think, corporate banks, and also includes, I think, a good part of manufacturing side of the activity, where probably the thrust is also getting brighter with the export-led initiatives under the FTA. So from that perspective, nothing is wrong with the domestic economy. Domestic economy continues to thrive and thrive better. The challenge would be that if internationally things do get disturbed again, and again, I think we are back to those kind of hindrances which up till now affected all of us in the industry, then possibly I think you are likely to see the derailment of some amount of activities, and that cannot be ruled out. So too early to say. I think every day the changes come up as far as the statements are concerned, and everyday actions are different. So I think too early to conclude on that aspect. But yes, I think we are watchful. And if any correction happening in some of these areas which I mentioned, I think that will be a good opportunity to buy into them. That is how we look at them.
Correct. And Devin, you make a very important point, because right now things are just too volatile, and you're seeing just a blatant correction across the board, across mid, small caps, large caps as well. So, and hence it's important to get a voice like yours to just calm the nerves a little bit at this point of time. But is this also something that you would advise investors to look at, that to keep patience at this point of time, rather than taking any kind of big bold bet in terms of deciding to shave off some of the positions? Would you just that would be the advice to investors right now, to keep calm and to wait in as the volatility continues globally? Because we've seen, of course, within the shipping groups, within the margins impacted because of higher costs for all these companies in Q4 as well as expectation in Q1. So would that be the same advice right now to investors, according to you?
When the fundamentals of the economy and fundamentals of the corporate sector remains firm, at that point of time, volatility becomes the best friend of the investors. In fact, they get opportunity to buy at lower levels. And that's what we would like to tell investors, that yes, currently uncertain situation, and for which the prices have actually started correcting of stocks. And should this particular correction go deeper in case, then in such situation, I think it would be a good buy opportunity, because we do believe that Indian economy and corporate fundamentals remain absolutely resilient and quite firm. In fact, I think the dependency on the crude comes down. Every systematic challenge that we get, dependency on the crude comes down, and India is basically moving faster in the area of renewable energy and the storage mechanism. So we remain relatively more bullish about the prospects going forward than giving up on this nervous sentiment.
Got it. And Devin bhai, just one last question before we let you go also, because, as we mentioned that Q1 is just upon us. We'll have earnings coming up from TCS tomorrow. Banks will start in next week as well. So is that something that you're watching out for as well, that a lot of those bad news and impact on margins, higher cost, largely were priced in, of course, before today's move? And is that in terms of commentary that you will be also watching out for from all of these companies?
Yes, certainly. I think most importantly, the IT companies are expected to come up with the kind of news flows pertaining to how the AI is getting adopted into their business environment, what kind of new order generation that they are doing in their business environment through the AI. The likes of HCL Tech, likes of TCS have already gone on record saying that how many new order books they are creating based on the AI-related projects that they're getting. So yes, I think those kind of positive commentaries definitely one wants to listen from the companies and the management. And do believe that I think leave aside some sectors where I think the profit margins would come under a little bit of pressure because of the completely haywired logistic cost for some of them. But otherwise, the top line growth in most of the businesses which we are reviewing today it remains absolutely strong and convincing. In fact, surprised us that I think June ended quarter, many of the businesses I think have reported very, very strong top line growth. So they may have slight impact on the margin front, but otherwise I think it could be well offset by way of the higher number of growth on the top line side though. So yes, I think we believe that I think opportunity-wise things are moving quite positive in this direction. India is showing very, very high level of resilience to global shocks as we conclude from whatever we have observed till now.
Fair point. Devin bhai, thanks so much for joining in, actually giving us that hearty perspective as we try to look at some recovery. It's still very, very early to see, but we're continuing to be under pressure right now, almost down 2% on the Nifty 50. The Bank Nifty also is the other one because we're almost down 500 points on the Nifty for today itself. Down 1,300 points now for the Bank Nifty as we close in at that 56,900 mark. But Samir, let me actually come back to you on some of these updates that we've seen, right? I mean, from the FMCG pack also, I think barring a couple of those like DMart, which were disappointing, as well as Trent, how have you seen the quarterly updates go through? Because that becomes the next key one and the next key monitorable, right, amid the volatility?
Yeah, obviously they do become something that you have to look at, but you can't just look at top line growth because most companies have only given out what their revenue kind of looks like, and maybe some of them have given what volume uptake is. I think it's more important to see what is the profit impact also, because certain times costs have gone up, which they may or may not have been able to pass on some of these players. So they've had to absorb, hits. So if even though we may see top line growth, if you don't see profitability growth, I always have this saying that the revenue is for vanity and profit is for sanity. And I believe that. So it's more important to wait for the actual results to come and see what comes in the profitability number. Now, you said that Trend was large extent disappointed, but you got to look at it like this. Trend growing at 19% is not a bad number. Also, given the fact that a lot of their products are actually brought in much earlier than when they sell it, because the lead times to market are 1.5 months to 2 months. So they may not find that much pain. But certain FMCG products whose lead cycles are maybe 15 days or 20 days would have faced the impact of the margin hits that could happen because of higher packaging costs and higher raw materials based on crude derivatives and things like that. So you can't just look at the top line per se. I say, yes, you have to look at the profitability, and that we'll get to know in due time. But if some of these FMCG players and some of these consumer stocks which have reported not guidances, but given their updates, they are positive in nature, I would have to agree that they show positivity, but we'll only know the real picture after the results actually come out.
Fair point. And of course, as we wrap up this conversation, Samir as well as Sachin, thanks so much for joining in, because largely became, of course, a market chat because you've seen such pressure across the board. You've seen crude oil also back above that level of $80, and the Nifty currently hovering just a tad below that 23,900 mark here and there. So it's still continuing to be down about 2%. Let's just quickly look at the PSU banking index that continues to be under pressure. So you're actually seeing the financial names continuously being under pressure also, and hopefully something that will continue when India market close as well. But viewers, thanks so much for joining in. Stay with us, a lot more action on the other side.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
बरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hi, thanks so much for joining in. You're watching NDTV Profit. This is India Market Close. We're coming to you live from the NDTV Profit Suzlon studio in Mumbai. And it's not a pretty picture. My name is Alex Matthew. With me is Mahima Vachhrajani. Let's jump straight into it. Pull up the intraday chart for the Nifty 50. If you're tuning in just now to business news and to NDTV Profit, what is at the end of the screen there? Mahima, you're actually covering.
There you go.
What is a big slide, unfortunately, in the equity markets. And this is what you're seeing in the benchmark Nifty 50, because the broader markets are also seeing this. I'm going to tell you what else is happening, because beyond the currency, beyond the equity market, you're seeing this in the currency market as well. Pull up the USD INR. The USD INR has seen a massive spike, and you're currently trading at 95.5. It's not something that you see every day. Pull up the crude price as well. Brent crude, which, and let me remind you, was trading at $72 to the barrel at the start of the week, is now trading at $78. If we can pull that up and show that to you. Why is all of this happening? You're seeing some of that on the screen, but it's because of statements that have been made by Donald Trump and certain statements that have been made by Iran as well that have to do with the ceasefire and the possibility of that ceasefire ending. In fact, while we're waiting for crude oil prices to come through, okay, it's actually come through 78.25 as things stand. Mahima, before we get into anything else, we should listen in to the kind of statement that has come through from Donald Trump. In fact, before we get into anything else, listen to that.
We attacked very powerfully last night. The very dangerous people from Iran. They're sick. There's something wrong with them. We said, go and do your funeral stuff and instead of that, they start shooting rockets at chips yesterday. And so we hit them very hard last night, very hard. I would say 20 to 1, 20 times tougher. And I told them every time you hit, we hit. And of course, they're dirty players, so they go after everyone, probably including me. I've been number one on their list for years. And they're a bunch of scum, you want to know the truth. They're scum. And so we don't like them. I don't like them. And they're evil people, and it's the denuclearization of Iran. And we're going to denuke it. We're not going to let them because they're crazy and they can't have a nuclear weapon. And they go around killing people. They've killed thousands and thousands of our soldiers. They've killed hundreds of thousands of innocent people. To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. Steve Witkoff, Jared Kushner. But they have to come back to me. As far as I'm concerned, it's just a waste of time.
Okay, all right. So he's effectively saying that the ceasefire is over, and ultimately that is what you're seeing play out on the screen. I just want to pull up the broader markets as well.
I think also just to point it out, right? Just in last 25, 30 odd minutes, we've seen a downtick of 520 odd points in the Nifty, and that's not something that happens every day.
It
well
isn't.
below the 23,800 levels now.
And we're at the low point of the day for the Nifty 50, for the mid-cap index and for the small-cap index. Pull those up as well. And then, Mahima, maybe you can take us through. So mid-cap index, yes, down about 1.9%. Pull up the small-cap index as well, down 2%. Mahima, the heat map for the Nifty 50 looked very different at the start of today.
Yeah, it did. And now it is looking completely opposite of what it was, right? Because you just have three names in the green right now. ONGC on the account of crude spike is seeing gains about 1%. But you have Geo Finance, which is losing the most ground now, about 5 odd percent. Shriram Finance also down 5%. Indigo, the only stock which takes a knock when crude prices go up significantly. Maruti, Tata Consumer, Bajaj Finance, Tata Motors are also some of the counters that continue to be under pressure. But the advanced decline ratio that you see on the chart, right? Just three names in the green. Except for that, everything in the red on the Nifty 50.
And that's reflective. I can't remember the last time you've seen such a dramatic shift in the sentiment midway through a session. And that's exactly what you're seeing on the screen at the end of the screen there. The widening of the gap between the advances and declines, because ultimately exactly what you anticipate would happen would eventually happen, which is that a risk-off sentiment comes through. And remember that running up to today, pull up the 1 month chart for the benchmark Nifty 50 or pull up the 3 month chart for the benchmark Nifty 50. Since the bottom in March, what you will notice is that you've climbed quite a bit. This is the 1 month chart. If you pull up the 3 month chart, it'll be even more evident, right? So from those low points where you actually hit, you've actually climbed quite a bit. And this is more stark for the broader markets. We're joined now by Deep Pal, who has joined us in the past to speak to us about some of these geopolitical issues and how they've emerged. But take us through how you see these things developing and what it means for the cessation of violence that we've experienced in the recent past and what it means for the globe right now.
Hi, thank you for having me. And as we have spoken earlier as well, the cessation of violence, as you put it, has always been tenuous. And we have talked about that, right? Even after the MOU was signed, even after the agreement was signed, even after conversations began in Switzerland, we have always seen that the two sides, US and Iran namely, they have had trouble finding the middle where both of them agree. And I think the shorter instances of violence that we have seen continue, firings here and there, in the last day or in the last 48 hours, what we have seen is them expanding to include countries beyond just Iran. In fact, the hit on Kuwait, Bahrain, on US facilities in Bahrain and Kuwait, followed by the US military action against Iran, what essentially has done is it has expanded the geographical scope of the conflict beyond what we had immediately seen. To me, what this means is that it stalls the agreement. We have already seen Vice President Vance delay his travel to Switzerland once in the last week. I think conversations will continue still through intermediaries such as Qatar and Pakistan as they have. But at the same time, I think negotiations on sanctions relief for Iran or conversations in Iran's nuclear program are going to be secondary until the security situation stabilizes, until the two sides find a way where they can ensure that the kind of attacks that have been happening on from both sides, they can find a way to stop that. And what we're seeing happen in the market, the obvious effect is on crude, which has gone up. And I think the market is now trying to price supply disruption risk rather than peace.
Well, the other aspect, of course, is the fatigue from the rest of the world. Ultimately, you have three entities that have been a part of this conflict, but the repercussions of that have been felt in various other parts of the world. And so, from a diplomatic sense, do you think that this increase in violence will be different from what you've seen in the past in this conflict itself, or do you anticipate a devolvement even from this stage and a worsening of the situation on the ground in that West Asia region?
Look, what hasn't changed is the fact that neither side, neither Iran or the US, really wants to have a continued kinetic action-filled situation in the region. Israel's story is obviously different. Their objectives have been different from day one, and that is a whole separate part of the story. Their action in Lebanon against Iran's proxies, we have seen that continue. They have not been comfortable with the MOU or the agreement that US and Iran have decided to continue talking about over the next 60 days. So Israel is a whole different cup of tea. But as far as US and Iran are concerned, it is going to be very, very difficult to find a way to come back to a middle or come back to trying to find a middle. Irrespective of what President Trump says in terms of the MOU or the ceasefire or whatever you want to call it being effectively over, what continues to be true is that neither side wants to fight. But at the same time, there are these very definite red lines that exist for both of them that will compel them to have to retaliate. Even earlier, we have seen, if you remember, instances where they have fired missiles at each other's facilities, key infrastructure, and they have immediately come out and very strongly said that this does not harm the prospects of ceasefire, or this does not break the terms of ceasefire. That is not what they're saying this time, right? And that is the most worrisome factor. Even if they don't want to fight, unless they can find a way where they can agree to continue talking, to find a middle path that works for both of them, they will feel compelled to attack.
Deepal, hi. Mahima also joining the side. Since you mentioned in your last line that now we'll have to see as to what is the scope of negotiation from here on. But do you think there's more scope of diplomacy? Because we, considering how the sharp fall that we've seen, overall in the markets as and when the commentary came in, that's quite steep. And it seems like we could be, back to square one. So how do you assess that, and what are the factors that you'll be watching out from here on?
I think diplomacy will continue, Mahima. I think at least as far as the intermediaries are concerned, such as the role that we have seen Qatar and Pakistan play, that will continue. They will continue to take messages back and forth. Whether or not Iran and the US agree to meet again in Switzerland anytime soon for direct talks, that seems uncertain at the moment. But I think conversations will happen in the background. As far as the security situation in the region is concerned, I think what the Iranian strikes on Bahrain and Kuwait and US facilities in these countries, what that does is we will see the Gulf states and others in the region basically prepare for a situation where peace continues to be difficult to find. There is a continued threat of violence erupting at any point in time. We have heard of certain parties reaching out to Iran on their own for certain kind of security guarantees against certain promises, and which I think will continue happening. Along with that, what they will possibly also want to do is strengthen their security around their own critical energy infrastructure, while seeking to avoid direct involvement in the conflict. Separately, as I mentioned, Iran will continue its operations against Iranian proxies, which increases the risk that these proxy conflicts undermine any kind of conversation that whether the intermediaries or the two primary parties might want to have in any way.
Dr. Pal, as always, thanks so much for taking the time and for contextualizing that for us. Pleasure speaking with you.
Likewise, thank you.
It just goes to show how quickly something can turn on its head. Things were looking good and we were once again focused on earnings, and just as you thought that things would go back to normal, you had a situation where there's an escalation in the conflict in West Asia. But what does that mean for the Indian equity markets, and which specific counters should you pay close attention to? Somit joining in to tell us about that. Somit?
Well, yes, the Iran ceasefire is now over, and which are the companies that stand to get impacted because of this? Because crude oil prices would spike up if the war-like situation continues now going forward. So HPCL and Indigo could be the most vulnerable to the oil spike. HPCL, because higher oil prices means lower gross marketing margin, and Indigo so far was protected because government did not increase the ATF prices, but now there are high chances that the ATF prices could increase, and that could start impacting Indigo going forward, followed by BPCL and IOCL, again from the same basket of the oil marketing companies because of higher crude oil prices. But which are the other companies? Paint, there are Asian Paints, Berger Paints, Kansai Nerolac negative because 40% of the raw material cost is oil and oil derivatives. Multiple FMCG companies face a negative impact because higher crude oil prices lead to higher palm oil prices and higher packaging costs. Packaging materials like PET bottles, HDP containers, laminate wrappers are all oil-based polymers, and an increase in crude oil prices leads to higher packaging costs for FMCG companies. On the auto side, it's Castrol and Gulf Oil negative because nearly 50% of the raw material cost is crude related. Tire companies, Apollo Tyres, Seat, again a negative impact. Synthetic rubber, carbon black and various other chemical. Prices of these are a derivative of crude oil prices. Higher crude oil prices means higher prices of these raw material. Apart from that, there is Indigo, which also stands to get impacted. As I was mentioning earlier, nearly 40% of the raw material cost is fuel. For cement companies like Ultratech Cement, it's again negative. Nearly 40 to 50% of the cost is directly or indirectly related to crude oil prices. And lastly, when it comes to chemical companies, a host of them like SRF, PI Industries, Deepak, Navin Fluorine, Aarti, Deepak Fertilizer stand to get impacted because various raw material prices are related to crude oil prices, and higher crude oil prices would mean higher RM prices for these companies, which could have an impact on the margins. And the sector that stands to get benefit is the oil explorers like ONGC, Oil India, Vedanta Oil and Gas, Antelope Ceylon, because higher crude prices means higher realizations and higher earnings. And as a thumb rule, a $5 per barrel increase in crude oil prices increases the EPS for ONGC and Oil India by around 7 to 12%. So keep an eye out for these companies in trade. ONGC and Oil India are the only ones, I believe, trading in green so far.
For getting us those details. That's a holistic list of stocks that you need to keep in mind considering crude price rising. But let me also welcome in our guest for the day, Rajesh Palavia, SVP Technical and Derivatives at Axis Securities, joining us now. Rajesh, a very good afternoon to you. I think in the last half an hour we've seen as to how markets have kind of turned tides, right? Just want to get a sense now that we are well below the 24,000 levels, in fact below the 23,900 levels as well. What are the key levels that you'll be watching out for on the benchmarks from here on, both for the Nifty 50 and the Bank Nifty?
Yeah, hi, good afternoon. So it's a very sharp sell-off in the market post this statement from the Trump. I think market has, now witnessing a serious profit taking. Looking at the setup, 23,800 will be the first level to watch for in this correction. I think looking at the intensity of supply pressure, I think that level may also get challenged to hold. And if it breaks, then I think 23,650 would be the next level. So 23,800 to 23,650 could be a possibility of a down move for the Nifty in this kind of pressure. On the higher side, 24,000 may act as a supply zone as the major calls writing is activated at 24,000 at this moment. So I think that may act as a supply zone for any kind of minor pullback. So I think the news flow will be the major trigger for the market. And I think the way this geopolitical news flow is now, coming, I think market will, remain under pressure and profit taking will be there across the board. On the Bank Nifty, again, major support zone is already broken. Now Bank Nifty is also slipped below to 57,000 mark. So I think if it continues to trade below 57,000, I think we could see further more liquidation in banking stocks also. Again, large cap bank as well as PSU banking baskets are, attracting more pressure in this sell-off. Even financials are also, taking hit, especially in last half an hour of trade. So I think maybe banking may slide further. Bank Nifty could slide further towards 56,200 if it continues to trade below 57,000. So that's the view at this moment for both the indices.
Rajesh, specific advice for those people that might have been long and wouldn't have had a chance to really act as quickly as they might have wanted to because of the kind of rapidity that this is turned around. And on the flip side, I don't know how many people would have been short in this situation, at least domestically. So what is the kind of advice that you would give to the traders right now on the index?
So as we have seen that, market was, getting confidence when the ceasefire was announced and, they were, trying to, conclude some deal. But again, this news flow is again, shaken the confidence of the market. Those who are still stuck, not able to exit, I think in these kind of market, it's very difficult to take decision on the position, whether one should exit or whether one should average out, because, every news will change the market sentiment. But looking at this news flow, I think and the other asset class are behaving to this news is clearly showing that maybe we may see again escalation on this geopolitical front, and maybe one should keep trim down their position as the near term support area is already broken for indices as well as for most of the stocks. They were able to give the breakout on the near term chart also, now trading below to 20-day 50-day moving average in this supply pressure. So I think one should trim down the position and just observe what kind of development is taking place on a geopolitical front. Then only one should again enter in the market, because maybe we could see further more round of selling pressure as global markets are also reacting to this news. And maybe in their evening session, maybe we could see further more sell-off in the global market that may give impact to our market also. So I think one should trim down the position because these kind of supply pressure, it's difficult to take adjustment in their position for trader especially. So it's a tough time for trader to adjust all the position. So better to trim down the position would be the strategy in this kind of
trim down your positions and maybe stay on the sidelines till there's some clarity that emerges on the geopolitical front. At the same time, it's important to talk about stocks that have significant developments, and one of them is Orchid Pharma, and for good reason. They've got a Russia partnership for one of their drugs, and that opens up a pretty significant opportunity. It's pared some of those gains. At one point of time, Orchid Pharma was trading with gains of 10%. It's now trading with gains of just about 5%, but it's still the stock of the day. Going across to Varsha now to talk about how big of an opportunity this could be for the company. Varsha?
Well, the stock is buzzing on the back of partnership with pharma synthesis in Russia, and the deal is for commercialization of Xblifep, which is an antibiotic in Russian market. This is used to treat serious hospital infections. It's nothing but an antibiotic. Now, this drug is the first new chemical entity for Indian pharma companies, and they also received approvals for this product from both US FDA and EMA as well. Now, the pharma synthesis who gets what? So this gets exclusive rights in Russia, number one, and the Orchid will actually manufacture and supply the finished product, and the Russian partner will handle the registration and commercialization. Now, onto the financial opportunity, this partnership has a potential value of around $178 million, and the opportunity is spread over first 10 years, which reflects, a size of almost $1 to $2 billion. Now, moving on as to what lies ahead when it comes to this counter, of course, the peak sales from this product are expected in the next 4 to 5 years, and the Orchid is expected to enter the US sterile formulation market as well, and they are also bullish when it comes to FY27 also. The peak sales are now expected in in next 4 to 5 years after launch, and the company will also invest in fill finish and formulation capabilities when it comes to their US opportunity. The target opportunity for US is around $1.2 billion, which is huge considering the whole product. But onto the FY27 growth targets, that is they're expecting 10 to 15% of growth and EBITDA margins around 12% for FY27, and the growth is expected to come from mainly from the ROW, that is rest of world market. So overall, the FY27 seems to be bullish, and this product will actually lead to huge gains when it comes to financials for Orchid Pharma, and hence we have seen the stock go buzz in trade today.
Absolutely, it did go up as much as 10%. Varsha, thanks so much for that. In the equity markets, and specifically when you're looking to invest in companies, the value strategy is something that's pretty popular. You think of Warren Buffett as a big proponent of that, and you have several proponents of that strategy here in India. But value can mean something else entirely. In fact, you're taught those values as children. Can you invest in companies that are virtuous and that have good value? That is, I think, the thinking that BSE had when it launched the BSE Satvik 100 Index. And to talk about that, I'm joined in studio by Mr. Ashutosh Singh, who's the Managing Director and Chief Executive Officer of BSE. Mr. Singh, thanks so much for taking the time. I hope I've introduced the topic correctly, and that was the thinking. Can you tell us the thinking behind it?
Sure. So first of all, thank you for having us on the show and speak about an index which we consider a very important innovation in the capital markets. So let me preface my response on what the index is by firstly saying what the index is not. Okay. So this is not a religious index. It's not based on any central religious doctrine. So there is no theological interpretation of the index required. Satvik at its core, the BSE Satvik 100 Index at its core is India's first values-driven index or / way of life index, which is rooted in the Indian tradition, age-old Indian tradition. We've implemented the 3 core Satvik principles in making this index. One, it's compassion for living beings. Non-violence is the second one. And the third is avoidance of toxic and harmful substances. If I could drill down a little bit more, like with most indices, every index has a parent universe. So this index, as its parent, has BSE 500. In India, there is a harmonized industry classification structure. So each of the companies that are listed on the exchanges belongs to one of the 192 basic industries. So what we've done through our internal research, we've identified 35 basic industries out of these 192 that are not in compliance with the Satvik principles, which I just talked about. So it's an exclusionary framework, identifies companies whose primary business or primary way of doing business is not in compliance with those 3 Satvik principles. So in summary, I think it's an attempt from our side to give a choice to investors to make their capital allocation decisions in line with their personal belief systems. So that's what, that's the long and short of what the index is.
It's interesting because, in the first line, you did clarify the fact that it's not basis any religion or anything. Absolutely. So that was an important point to clear. Because we've seen a lot of things rotating in social media. But, I also want to understand as to when you gave the weightage to different constituents in the index, what was the ideology behind it? Because we've seen that around 40% still goes in financials. And how, what is the period in which you will again probably reevaluate the weightage given to each of these stocks?
Oh, so that's a good question. So while the starting point is BSE 500, and in the BSE 500, we've identified those 35 basic industries, excluding companies belonging to those basic industries. From the universe that's left, you select the top 100 most, most liquid companies with the highest market cap. So that's how the construction is done. And weightages again is done on basis free float. So once you've identified the top 100 companies, after applying the exclusionary framework, you assign the weightages basis the free float of each of the constituents in the company.
So very interesting. So your traditional model of fixing an index and identifying the components and the weights therein, it's just that you've added a filter over that to say what are the exclusions that won't make it to the list.
Absolutely.
Okay, absolutely. So that's clear. What is the kind of response from the AMCs and from mutual funds? Because ultimately, they're the entities that will allow for the mobilization of public funds into this index.
Right. So I think the short answer for basically how an investor takes exposure to the index is when asset managers decide to launch passive funds, ETFs and index funds on the index. We are very positively surprised by the amount of inbound interest we've received, and like you said, the chatter on social media is also very palpable. Now, how much of this initial traction, translates into product launches by mutual funds and then subsequently to AUM build-up, it remains to be seen. But we are hopeful because we are having conversations with asset managers whenever we launch a new index. This is no exception. We take the idea to asset managers and see if they find merit in the idea, and those conversations are ongoing. So at this moment, that's all I can say.
Yeah, it's been fascinating to have you in studio. It's been a bit of a crazy day, as you know.
Oh yeah, absolutely.
A lot happening, but I think this is a breath of fresh air. Thanks so much for taking the time.
Thank you so much.
All right, well, back to markets, and let's take a look at how things stand right now. Pull up the benchmarks and see where things stand. Rajesh, we were talking about individual strategies as well. There you go. So the benchmark's trading with cuts of about 2.3% or thereabouts. Broader markets also losing ground well below what was the low point of the day and now plumbing new lows. But individual stocks, Rajesh, even in this kind of a scenario that look good to you, and what are the trades that you might initiate on an individual stock basis?
So I think in this kind of market, to remain short would be the right strategy, as most of the stock has already broken their important support area. So I think banking and financial is one sector where we are seeing a lot of supply pressure. So I think Bandhan Bank is coming in my mind, like one can go short here as stock has broken the important support area of 200 on a daily chart. So I think, and its stock is now slipped below 220 50-day moving average. So one can go short in Bandhan Bank. On the downside, it can slide further towards 185, 180 kind of zone. So go short with stop loss of 200. Target is 185, 180. On the long side, we are keeping one stock on our buying list, that is Nykaa. This stock has done well in last couple of weeks, and the way stock is trying to hold at higher level despite of these kind of supply pressure. I think if it's able to defend a 312 kind of level, one can buy in decline with stop loss of 308. And again, we expect that once market stabilize, this stock has potential to extend gain towards 330, 335 kind of zone.
Rajesh, just a follow-up to that and the trades that you've talked about, right? The tendency when you look at these kind of gashes is to perhaps try and time it and say, should I enter at these levels? But what would your advice be? Is this something that an investor should consider doing, or would you wait for at least a day or two to see how things settle?
I think one should wait for another couple of days, because this news flow will keep everybody on the sideline, and I think buyers will be on the back foot in this kind of environment. So maybe we may see stock prices may go down further as buyer interest will be lesser and seller are in panic to exit from their positions. So I think we may see a price hit in even in the quality stocks also. So investor will get opportunity in this panic, but I think one should wait for another couple of days to settle down this kind of supply pressure. And one interesting thing which is happening is now we are entering in the bullish gap area, which was created at on the 14th of June. So I think that gap is also now challenged by the Nifty. So if we slip below to 23,800, I think that gap may filled, and maybe we could slide further towards 23,650 as we discussed in the opening of the show.
Right, so that's the take coming in on, of course, the indices plus the stocks that we discussed with Rajesh. But let's also take a look at what Somit has for us today. He's joining with us and giving us all the chatter from the dealing room that he's been hearing. Somit, what did you find today?
Well, the chatter was much more interesting before this news came in from Trump's side that the ceasefire is over. But few stocks still that dealers have highlighted in trade. Firstly, it's DV's Lab and Page Industries. There are buy flows on institutional desk is what dealing rooms are indicating. At least this was before the news broken, and dealers are expecting strong Q1 numbers from both the names. For delivery, there are some sell flows on the HNI desk. Dealers are expecting a block deal very soon here. For SBI, there are sell flows on the DI desk. Dealers are indicating that a large insurance company was a seller in trade today. For Varun Beverages, the stock is down, but there are buy flows on the HNI and the PMS desk. Dealers are expecting or indicating that the selling pressure is largely over and Q1 would be very strong. And Unichem Labs, that counter, despite the fall in market, still has maintained its 20% upper circuit in trade. Now, dealers are indicating that some funds have been buying in trade today, which has led to this upper circuit. And secondly, they're also saying that the Q1 earnings are expected to be quite strong for Unichem Labs. So keep an eye out for this counter. It has hit an upper circuit of 20% despite the more than 2% fall that we have seen in the benchmark index.
Absolutely. A few and far between those stocks. Somit, thanks so much for bringing us those details. And keep an eye on the stocks that Somit has highlighted. On that note, I'd like to thank Rajesh for joining us today. Pleasure speaking with you as always, Rajesh. And hopefully the next time we speak, things will be better. We have to slip into a very quick break, but on the other side, we'll talk about the short-term strategies that you might want to employ and everything that you need to pay attention to at this hour. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
बरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching India Market Close, and as we speak, let's try to also pull up the Nifty 50 chart and see as to where it's trading at, with cuts about 540 odd points now at nearly the day's low point is what we're seeing. A 2.2% of a downtick is what we're seeing on the markets, and this is on account of the commentary that we've recently received from Trump with regards to the ceasefire now probably being over, and that's taking a toll on the markets left, right and center. If we can try to pull up the mid cap 150 and the small cap 250, even the broader markets have significantly taken a knock. The mid cap 150 is down by about 1.8 odd percent, and the small cap 250 is down by about 2 odd percent. To take this conversation ahead, I think for the markets, we're now joined by Gurmeet Chadha, who's the managing partner and CIO of Complete Circle, joining us now. Gurmeet, a very good afternoon to you, and thank you so much for taking out the time on such a short notice. But your quick take as to how these developments have taken place. We're seeing, both the benchmark and the broader markets taking a knock. What should be the factors that one needs to kind of watch out for from here on? Because we were talking about earning upcycle on the one side, and now there is another announcement coming in geopolitically, which is weighing on the markets.
Yeah, I think it's a little unfortunate considering that Indian markets had just begun to find some feet. We were seeing the not only the broader market moving, but the breadth improving in last 40-50 days since the time ceasefire was in place. I think we need to monitor 2 or 3 things. I think first is crude prices. if it can remain around 80-85, I think the market will take some breather there. Also, the positioning has been very negative by FPIs, although the cash selling has reduced and we've seen some buying, but the net position continues to be short. I think yesterday also they were 89% short. So today's sharp move has also got to do something with it. But I think we should wait and watch because, if let's say some people intervene and if some things are restored, and I hope they do, the entire reaction can be reversed. So to me, it is now wait and watch and track crude prices and supply chains and see if there is more disruption happening or not. And I think that to me is the key monitorable here.
Gurmeet, the tendency is for people, and good afternoon to you, the tendency is for people to try to time this. And just before the start of the earnings season, which a lot of people might have said was looking more promising than anything else based on the kind of information that companies have already released, what do you think the approach should be in this kind of a scenario?
I think immediate reaction today, anyways, we are towards the close, I think should be avoided. But companies with earnings update have been very strong. For example, I think defense is one space where India just signed MOUs with Indonesia. We had the Defense Acquisition Council approving 52,000 crores worth of additional, military equipment purchase, largely electronics, missiles, and drones and anti-drone systems. We have energy and power equipment space where they have very good order books, starting from cable and wires to conductors to gensets to the entire value chain. Basically, I think banks are likely to be big beneficiaries with the FCNR deposits coming, cost of funds reducing, NIMs improving maybe 3, 4, 5 basis points. I think these are the pockets you should nibble in. I think the fuel-sensitive pockets and the supply chain-sensitive pockets, you can wait a little bit. In my sense, broadly you should wait a little bit because this is a very extreme reaction coming, and I think at some point of time the market will start pricing. And so if crude stabilizes, I think there's not much reason to worry. But if we again go back to 3-digit levels, then I think we'll back to where we were in Jan-Feb.
Till crude stabilizes, that's the right way of looking at it, Gurmeet. But we just started seeing drops of FIs money coming in. Do you think this is also again going to scare away them, and they'll also kind of wait for crude to settle?
No, I think we never got some FI money. I think it was just a bit of rebalancing in the MSCI EM with Kospi falling almost 20%. Look at what is also happening to other emerging markets. I think the only solace here is that entire AI trade and semiconductor trade is also softening. So one pressure point which was selling India and buying AI, and I think that's reduced significantly. And as I said, if things stabilize over the next few days, I think this could be a good opportunity, but good to wait a little bit. I think the best thing sometimes to do is not to do anything.
Yeah, you said it. That's actually quite good advice. Gurmeet, thanks so much for taking the time, and pleasure speaking with you.
Thank you.
Right, Shivangi Sarda of MOFSL as well as Ashish Chaturmota of JM Financial joining us on this leg of the conversation. And Shivangi, quick question to you. Good afternoon to the both of you, of course, and thanks so much for taking the time. Shivangi, quick question to you. What would your response be if you were a trader with active positions in this kind of a market where things have flipped completely on their head in the span of minutes?
Yes, definitely. Very good afternoon. Thank you for having me. We've seen that the global cues have kind of dampened us, and the kind of spirit that with which we started the July series. So we've clearly seen that immediate support levels and psychological levels have been broken, but we'll obviously wait and watch. I think it would be wise to, again, not carry much positions overnight because of the risk that we are enrolling into. But we are looking at, the crucial 24,000 level mark. If it manages to hold above the same in the next few sessions, then it might be a reversal point from here, or else there would be some sort of weakness that could be affected by the global concerns.
Okay. Ashish, a very good morning, good afternoon to you. Just from the sense, I think it's just the way markets are doing, and I'm seeing my portfolio and probably fumbling. But, we've seen good momentum pick up in a lot of sectors, right? We've seen realty picking up very well. But right now, I'm just taking a look at the entire realty pack, and it's taking a knock, right? I mean, and it's across the board. This could be probably a one-off, as we were just speaking to Gurmeet before, and he said that this is probably an exaggerated reaction to is what we're seeing. 2 or 3 days we might see a cool off, but then what are the sectors that you're watching out for sure in this coming quarter where earnings are coming in?
Sure, definitely. So obviously, we are seeing a lot of volatility, but we need to focus on sectors and companies where the earning growth looks more, visible, and we believe that the sustainability as well as the predictability of earnings are very, very high. So from that perspective, if you look at first quarter, we have seen very strong growth coming into the credit side of the market. So the credit growth or the systemic loan growth was almost 17.5%, and we believe that most of these financials are trading at a very reasonable valuation. Obviously, the reason being because FIs were completely out of the market, and since these are more of FI favorite stocks because already there's an extreme over ownership of this space. So despite being trading at a very comfortable valuation, we didn't saw any kind of jump in the private banks, or maybe for that matter even the NBFC space. But in the last couple of days, we have seen very strong interest coming into this space, and along with that there's a trigger of this strong systemic loan growth. So we believe that banks and NBFCs, they are going to be they're going to remain as a top focus because they have strong weight in the index, and with very, very strong growth on the earning side plus reasonable valuation will make sure banks and financials will continue to do very well. The second space which we believe can do really well is the entire, I would say, consumption space. And when we say consumption, we are not great fans of traditional FMCG companies, but we really like some of the new age themes within this consumption theme because of the size of opportunity or the kind of trend which is picking up. So we believe that companies like Eternal, or maybe for matter Delivery, Nykaa, or Honasa, these are the companies which will see good traction. So we believe that any correction or a good correction in this space would be a very good opportunity to look into this space, because here we believe the TAM is really large and companies have started doing very well. So for example, Eternal, as compared to most of its peers, whether listed or unlisted space, is seeing a very, very strong growth on the Blinkit side of the business, or for that matter even the margin profile is significantly better, plus the dark store additions which it has done versus a lot of other players is very, very significant. So keeping this in mind, Eternal, Honasa, Delivery, this space looks very, very promising. Then comes the entire defense space. Obviously, Gurmeet was talking about this space regarding the strong Defense Acquisition Council order coming in. But what is more important is a shift which is happening. So earlier we were talking about Make in India. Now we are talking about design plus Make in India, and that's the margin profile of lot of these companies are going to go.
Got it. So it's quite a wide swath of companies that Ashish has just commented on. Let's delve a little deeper into one of the names that is in focus today. At least it was buzzing in trade after seeing a bit of cuts yesterday. I'm talking about Kalyan Jewellers. It dropped quite sharply in trade yesterday, but it has gained that ground back, up about 6% or thereabouts in trade today. The question is it still a high growth story? And the company has actually reported a pretty robust revenue growth, but investors are weighing whether the slower than expected growth amid international headwinds and valuation risks are something to worry about going forward. Mahima has some of the details that you should focus on. Mahima?
Alex, so as you rightly mentioned, it did fall around 6% yesterday, closed 6% lower, and has recovered from there and has, washed off the entire loss that it saw yesterday. But in terms of the bull versus bear scenario for this one, it's a perfect candidate for a bull versus bear, because overall it did see a revenue uptick of around 38% as per its business update, which was led by a strong same-store sales growth of 28%. But at the same time, the expectation of the street was that the growth will be around 50% mark, which did not happen, and that is why it did take a knock in trade yesterday. And this is on account of the performance being impacted because of Middle East Asia crisis. Now, in terms of demand as well, there was a robust demand despite of gold prices, which went up by 59% year on year. Plus, there was buyer growth that these jewelry companies have also seen. But at the same time, for Kalyan Jewellers, India growth was slower as compared to Titan, and this is for the first time in the last 13 quarters that has happened. Right, Kalyan growth has always beaten, especially the India business has always beaten Titan's growth. The next one is with regards to international business. It grew 30%, but overall the commentary suggested that geopolitical situation did hurt April footfall and has weighed on international business. So probably this number of 30% could have been better and could have aided the top line beyond that 38% mark as well. Lastly, in terms of the Candor business, that's one of the high growth business. It remains one of the key drivers for the company's growth overall. But in terms of where expansion goes, slower expansion, weak demand are the two key factors that all of these brokerages are watching out for, and that combined with the valuation that with Kalyan Jewellers is sitting at is slightly concerning. So this is the entire bull versus bear case scenario with regards to where Kalyan Jewellers go. Shivangi, I'll come to you on this one with regards to the charts for Kalyan Jewellers, because we've seen a downward momentum yesterday, an upward momentum today. What are you reading in the charts right now, and how should one position themselves for this one?
Well, looking at the technicals for Kalyan Jewellers, we've seen that this one has had a track record of being very volatile. So, if I'm to look at this space at all, Titan would be my preferred pick. And here, this one's comparatively quite resilient despite the market volatility and weakness. So this one would definitely be on the stock list. Titan is getting poised for a good up move. It's surpassed its previous hurdle zones, and it is trading very comfortably at the higher zones. So immediate basis, Titan is getting ready for 4,800 odd levels. And next stop loss that we could trail is 4,500 zones.
Okay, all right. I'm just wondering whether you have an opinion on commodities as well. Do you look at these charts? For example, crude oil. If I asked you to look at Brent crude and the way that it's gone up as much as it has right now, a reaction to the possibility of the ending of the ceasefire and now heading towards that $80 per barrel mark. What is your opinion, if at all, on Brent crude? Shivangi, the question's for you. Yeah.
Talking about, of course, it's quite important to factor in the global markets as well as the commodities in order to know the movements in the equity market. So tracking the crude oil, it will be very beneficial for us to look at OMCs, some of the aviation counters, as well as the paint counters. Crude oil might be in some bit of a pressure on account of what the global developments have happened in the last 1 hour. Now, I would recommend a little wait and watch here, because there will be a lot of euphoria around these sectors for the next few sessions. So once it settles down, but we will expect a lot of volatility in this zone, and it might spike up.
Okay, all right. So that's the view coming in on all of these commodities. We've seen an uptick of almost 6% in Brent now as we speak. But moving on, NDTV Profit caught up with Mahendra Nahata, founder and MD of HFCL, who shares insight on his company's AI play, order book, as well as infra investment in the coming quarters. Listen in.
AI is growing worldwide, and because of growth of AI, data flow is increasing immensely, which has led to the use of fiber optic cable, because you require some media for the flow of data. The kind of mammoth amount of data which is flowing, there is no other option than using fiber optic cable. So fiber optic cable being one of our main product area, that was a natural area of expansion for us. We have 3 factories producing fiber optic cable, including Hyderabad, where we are standing right now. And here we also produce optical fiber. Moreover, in our Chennai factory, in our Hosur factory, we produce different connectivity solutions for data centers. So what we are trying to be be one-stop shop for providing connectivity solutions for data centers, which includes fiber optic cable, different kind of smaller connectivity cables which are required inside the data centers, and different other passive equipment. So effort is to be one-stop shop for the data centers for connectivity solutions.
Mr. Nahata, you talk about data center solutions as well. There's billions of dollars that are flowing into India over the next few years by big tech companies, Amazon, Microsoft, Google, all of them putting their monies in India. But what we are still seeing is that the stock market money that is supposed to go and come into India is still in South Korea, it's still in Taiwan, right? There's no real AI play that investors are also complaining about. What is your message to investors that are seeking an Indian AI company play?
There are two kind of things here. One is the AI development as the artificial intelligence software or hardware, which has not happened in India to a level which was expected to be, which our political leaders have also paid good attention now, and they are trying that AI should come up in India in terms of development, like what has happened in US or maybe what has happened in China also. So I believe that the kind of software talent India has got and kind of semiconductor push government of India has given, India will also come up quite fast in AI, much faster than people expect. But to reach to the level what is being done in the United States, it will still take some time, because the data flow, because of AI, is very high in those countries.
Right.
But I am sure India will also catch up, because our population level is very high. Once you have more population, more people use AI, so that there will be requirement of data centers, and for that, fortunately, for fiber optic cable and connectivity solutions.
Okay, all right. So that's the management of HFCL. Remember, this is a counter that has had quite the volatile run. It's gained quite considerably, of course, over the longer term, but in the recent past, more often than not, it has faced a lower circuit. So there are no buyers as things stand right now in the stock, and there's quite a bit of selling that has come through. If you see the year-to-date chart or maybe the one-year chart, you'll see what I'm talking about. The stock has gained quite considerably, if we can pull that up. While we're talking about it, there you go. So this year itself, the gain is as much as 200+%. At one point of time, there were no sellers in the stock, and it was at upper circuit repeatedly for weeks together. But let's talk about exchange stocks. And here we're talking about MCX as well as BSE. Seemingly, both of them have lost momentum on account of the new RBI norms with regard to funding of brokers. Let's bring in Parth to talk about some of the key numbers here with regard to turnover and volumes. Parth?
Absolutely, Alex. Both of the listed exchanges, which are BSE and MCX, have seen some downward pressure in the recent times. Of course, NSE will be listing a few months later on, but BSE and MCX have both lost over 10% since June 2026. Now, the reason behind this underperformance is the sharp fall in premium turnover that both of these exchanges are witnessing. Now, the reason behind this falling turnover is a new RBI circular which came effective from the 1st of July. This new circular by RBI has banned banks from funding broker proprietary desks, which means that brokers can no longer borrow money from banks in order to trade. Now they need to face strict 100% collateral mandates for their exposures that they have taken in the markets. This has triggered an immediate liquidity squeeze in the markets, and of course for the high volume traders like algorithmic traders or high frequency traders, this is a very bad news, and this reducing leverage has suppressed the overall derivative volumes. If we check out the numbers as well, then the expiry date average turnover for BSE has fallen almost 20% in July versus the Q1 average. Also for NSE it has fallen 25%. For MCX as well, it has seen a downtick of almost 40%. So big downside in volumes and turnover is what we are seeing in the exchanges. Now the impact of this is not just limited to the exchanges, it has a rub-off impact on the brokers as well. There are names like Novama, there are other names like Angel One as well, because brokers are the medium by which traders will be placing trades on the exchanges, and if those volumes are not coming, then brokers will be impacted as well. The overall impact in terms of financial amount is difficult to know at this point of time, but the early trends are suggesting that this will create a huge impact going forward. Lastly, on the analyst view, BSE has around 61% analysts with a buy rating and a return potential of 15%, while in MCX things are a little bit better with 67% analysts having a buy rating and a return potential of 31%. So this is the reason why both of these exchanges are facing a little bit of downside right now.
Yeah, well, downside not visible in intraday trade at least, because both of those counters are trading in the green and have seen a spike incidentally. BSE now trading at the high point of the day, up about 2%. MCX is up about 4.4%. Ashish, view on the exchanges and specifically on BSE, I guess the other factor to bear in mind is the fact that it has run up in the year to date, and then now you'll see NSE coming through. So you could see some sector rotation as well.
Yes, so rightly mentioned. In fact, I think BSE was one of a very star performer within this entire financialization, or I would say the entire exchanges as a theme. And we believe that in the last 1.5 months, we have seen sharp profit booking, some short covering in today's trading session, but we believe that there's going to be a lot of lackluster movement which is going to be seen, because now NSE's listing will also happen, and now the average daily turnover has also for options has also come down. So put together, it is going to put pressure on the profitability front as well. So we believe that stock is going to enter into a consolidation phase. This is a good uptick. Maybe it can move towards 3850, 3900 zone, but ideally it's a sell on rise kind of opportunity which is coming in BSE as well as in MCX.
View on the charts then, sell on rise, but Shivangi specifically, what levels would you look to do that at?
For BSE?
Yes.
So BSE, we've seen that, of course, this has been a portfolio stock and this one's been quite on the run. Of lately, we've seen that from the last 3 to 4 odd weeks, there has been some profit taking. But overall, on the monthly structure, it is still holding on to the higher levels, and it is structurally quite sound. In fact, as of now, weekly basis, we've seen a good amount of retracement level from the key Fibonacci levels as well. So this one is a buy and decline as of now for me.
Okay, all right. Now, just shifting focus, the June quarter is expected to remain challenging for the IT sector, with analysts kind of forecasting muted growth across tier 1 companies, weak discretionary spending, and AI-driven pricing pressure. These are, likely going to weigh on the earnings of the IT sector. And we have Jasmeet joining by to give us a perspective and a preview for the entire space. Jasmeet?
Well, Mahima, thank you for that. As rightly said, we are expecting a muted Q1 for the company, though H1 is generally the strongest quarters for the strongest time for the IT companies, but this time the Q1 is expected to be flattish to muted. Now, in terms of the key trends that we are watching out here, is the first one AI-related commentary. So any AI deflation or the AI models pivoting from the actual pilot model to the product-based production model is something to watch out for. Secondly, we are also focusing on the discretionary spending. We did note HCL Tech in the previous quarter, which has mentioned that the overall spending is slowing down and the clients are moving away from the projects and delaying it. So that will be in focus to understand how the overall spending power is going across. And the third one would be the spending in terms of the guidance, where we're expecting Infosys and HCL Tech might trim the upper end of the guidance, as we have seen Accenture cutting down the guidance on the back of that weak spending, and also the Middle East issue, which will be a key focus. And lastly, would also focus on the ramp-ups, deal wins, and also the AI acquisition the company had done in the Q4 of how those are ramping up for the companies. Now, in terms of large cap companies, we do see a muted growth, a growth between 2 to 4% in terms of the revenue INR terms, but in CC wise, the growth is much more slower. In terms of the EBIT, we expect TCS and Wipro to have a degrowth in terms of the overall EBIT because of the wage hike coming in the Q1. And when you look at the mid-cap space, we also note all the mid-cap players to outpace the large cap in this quarter as well, but without any surprise. But the Coforge remains a key one to watch out, given it expected to grow by 90% and majority of the CC growth is coming from the acquisition that it had done. And apart from that, the commentary from Persistent would be a key focus on the back of that Nagora acquisition, which we had seen recently.
All right, Jasmeet, thanks so much for setting that up for us. And in fact, we're drawing to a close. So therefore, Ashish and Shivangi, thanks so much for taking the time today and for speaking to us. Pleasure speaking with you as always. The IT index, just like the vast majority of indices today, trading at the low point of the day, cuts of as much as 1.4%. But really the story is across the board, isn't it? You're seeing cuts of 2% for the benchmark Nifty 50. Just yesterday, we were talking about the possibility of 24,500 being taken out on the upside and the possibility of moving towards 25,000.
Yes.
That seems like it's far away now.
It's far away, and 500 points is what we've seen today. A fall of 500 points is not something that you see every day. 2% downtick on the benchmark itself. Bank Nifty also around the 56,800 levels now, down by about 2.4%. And the broader markets, well, they've also seen a significant
downtick. Let's pull those up actually. Pull the intraday charts up for the mid-cap index.
150 is down 1.5%, and the small cap 250 are 330 points. Though some recovery is what we've seen in the mid-cap 150, but not a very significant one. The small cap 250 also a tad bit of recovery, but still down by about 1.8%. So both of them have seen 300 points of a downtick, I mean, in just last, 1.5 hours?
Yeah, you know, the thing about it is, and I was thinking about this, Mahima, over the course of the last 1 hour or so, we've seen this movie before. It's actually panned out. You've seen this kind of a crack before.
Yes.
And I think the only thing that I can think about at this moment is that this too shall pass. The only issue is, what is the impact that it will have on companies, on the earnings that we were expecting would start improving in the second quarter. Once again, you're going to have to go back to the drawing board, and you're going to have to talk about the fact that crude oil prices, as we close, just pull those up. The crude oil prices once again hitting the close to $80 per barrel mark, and that's going to have a bearing on a whole host of commodities. We're at 78.7. That's had a bearing on the USD INR as well. The Indian rupee has an almost direct correlation with the price of crude oil, and so if it inches up, you can bet that the rupee is going to face quite a bit of selling pressure, and it's going to face weakening over the course of the coming days if there is no resolution in sight. So equity markets lower, crude oil prices up, bond yields potentially heading higher as well, even as we start with the earnings season and Tata Consultancy Services, Mahima, reporting numbers tomorrow. Just as we were talking about certain companies bucking the trend and reporting better than expected numbers based on the quarterly updates. Well, you can never predict these things.
And it'll be on their bottom line, right? Which is the utmost important.
Losing about 1.7% ECS. Let's see what they report. Of course, they're expected to report numbers in the second half tomorrow, possibly after the close of trade. But we'll keep you posted on everything else that you need to bear in mind. But from Mahima and myself and the team that put the show together, thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. Har Raaste Ka Superstar.
India's unshakable.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin sees cool off but stays above that $63,000 mark. US pushes strategic Bitcoin reserve strategy. Glassnode reports Bitcoin accumulation is building. And Solana hits almost $5.8 billion worth of tokenized asset volume in the second quarter calendar year 2026. Well, those were the top crypto headlines at this hour. How should you navigate the digital assets and manage risk and spot the next big trend? Let's hear it from Pratyush Shah, the Associate Director at CoinSwitch Ventures.
Yes, Ethereum has gained 11% over the past few days, and I think the biggest reason is the shift we are seeing in investor positioning. Bitcoin has already had a very strong run over the past year, attracting significant institutional and retail interest. As confidence returns to the broader crypto market, it's common to see investors gradually rotate into other large digital assets that have the potential to participate in the next phase of the market cycle. And Ethereum is benefiting from that shift. Ethereum is also benefiting from the fact that it sits at the center of a broader crypto ecosystem that includes decentralized applications, tokenization, and stablecoins, which gives many investors confidence in its long-term potential. That improving sentiment is also showing up in the way the market is trading. Ethereum has recovered strongly over the past few weeks and is now approaching the $1,800 price level, which has acted as a hurdle in the past. If buying interest remains strong and Ethereum manages to sustain a move above that level, it would enforce the view that confidence is continuing to build. For investors, the key takeaway is to understand what's driving the move instead of focusing only on the returns. Strong rallies can be exciting, but they're also accompanied by volatility. My advice would be to stay disciplined, invest according to your financial goals and risk appetite, and avoid making decisions based only on a few days of price action.
So the Ethereum has rallied more than Bitcoin recently, but what is driving that outperformance, and how should actually the investors think about it?
So the simplest way to think about it is this: Bitcoin is like the captain of the ship and Ethereum is the engine. When the captain changes direction, the engine usually follows. So when Bitcoin rallies sharply, Ethereum often moves higher as well. And when Bitcoin corrects, Ethereum usually comes under pressure too. The difference is that Ethereum's price moves are generally more pronounced, both on the way up and on the way down. That said, they don't move in lockstep all the time. Both assets are influenced by the broader factors like global liquidity, interest rate, expectations, investor sentiment, and overall flows into the crypto market. At the same time, Ethereum has its own catalysts. Strong ETF inflows, network upgrades, or higher activity across the Ethereum ecosystem can help it outperform Bitcoin during certain phases of the market. On the other hand, when market becomes more uncertain, investors often gravitate towards Bitcoin because it's widely seen as the most established crypto asset. My advice to retail investors would be to look beyond the daily price moves and understand what's driving the market. That context can help you make more informed investment decisions than simply following short-term momentum.
Thanks, Pratyush, for that. And now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about the crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that's going to get you a lowdown in terms of everything that has happened thus far in today's trading session. But before that, let's take a very quick look at what the markets were really up to as well. You know, you do have the last trade that ended deeply in the red after US President Trump declared the US-Iran ceasefire over, sparking a sharp risk-off mood. The Nifty 50 in fact plunged over 500 odd points. The Zentech stumbled more than 1,600 points as investors rushed to cut risk. Moving on then, let's talk about selling pressure that was widespread across the last trade, with every major sector ending in the red. PSU banks as well as FMCG stocks led the losses as risk aversion intensified following the sharp escalation in US-Iran tensions. Let's move on and talk about oil prices that extended their rally as the US and Iran exchange strikes in the Persian Gulf as well. You do have Brent that climbed towards $77 a barrel after Washington targeted more than 80 sites, raising fears of further supply disruptions. When you talk about crude prices, you did have the war premium really returning to the barrels in terms of factors to watch out for. You do have everything and anything in terms of commentary coming in from Hormuz as well in terms of those supply disruptions. Everything from Iran as well as Washington is going to be something to really watch out for in terms of key commentary as well, and we'll get to highlight when it comes to that commentary towards the latter half of the show as well. But for now, do remember that the war premium seems to have entered the barrel in about $80 a barrel for Brent, which is something that was just a forecast at the morning hours as well as something that you're seeing coming in for oil prices. Let's also move on and talk about pharma stocks that bucked the weak market trend, with Lupin and Torrent Pharma as well hitting fresh record highs, while Sun Pharma traded close to its lifetime peak also coming in. The rally was driven by the sector's defensive appeal amid broader market volatility and growing optimism over earnings. Investors are also betting on strong domestic demand, a healthy pipeline of complex generics and biosimilars, and opportunities arising from upcoming global patent expiries. Let's move on and talk about realty stocks that are making a strong comeback as well. The BSE Realty Index has in fact surged more than 43% from its 2026 low, has now turned positive for the year, outperforming the broader market. The rally has been driven by easing interest rate expectations, improving housing demand, and renewed buying when it comes to heavyweight real estate stocks. And speaking of heavyweights, let's also talk about some heavy lifting that one stock really did. When you talk about Orchid Pharma, about 8.5% uptick really coming through when you talk about this particular counter. And the company has signed a licensing and supply agreement with Russia's company as well to commercialize its novel antibiotic in the Russian market. And that's something that you saw really helping the counter as well. The agreement, subject to regulatory approval, gives the company exclusive rights to register and market the drug in Russia. While Orchid Pharma is going to be manufacturing and supplying the product, the partnership represents a potential opportunity of around $178 million, and that's over the next 10 years. Let's move on and talk about Interglobe Aviation, the parent of Indigo, that came under pressure after falling more than 3% in trade as well. The decline followed The release of the latest DGCA traffic data, which showed Indigo's domestic market share easing in the month of May. Sentiment was also hit by a fresh rise when it comes to global crude oil prices, raising concerns over higher aviation fuel costs that could weigh on profitability. Despite remaining India's largest airline by a wide margin, the twin impact of softer market share and rising input costs kept the stock under pressure. Moving on then, let's talk about oil and gas stocks that saw a mixed session coming in as rising crude prices reshaped investor sentiment. Shares of BPCL, HPCL, or for that matter even IOC fell up to 4% on concerns that higher crude costs could really squeeze refining and marketing margins. In contrast, you do have ONGC that gained as stronger oil prices are expected to boost earnings for upstream producers. The move is coming in as geopolitical tensions pushed crude higher, with investors reassessing the impact across different segments of the energy sector. Let's move on and talk about Tata Power that has outlined an ambitious growth roadmap targeting 1 trillion rupees when it comes to revenue, 10,000 crore rupees when it comes to profit as well after tax by 2030. And speaking of the company's AGM, you do have the chairman talking about how Tata Power really plans to expand its generation capacity to 30 gigawatts as well, while stepping up investments in clean energy. The company also plans to set up a new solar manufacturing facility in Odisha and is exploring opportunities when it comes to nuclear power and battery storage. The strategy is underscoring Tata Power's push to strengthen its leadership in India's energy transition. Let's move on and talk about some business news as well. US container imports rose 8.2% in the month of June as businesses rushed to bring in goods before expected tariffs and higher shipping costs as well. Importers also moved cargo early to avoid freight rate hikes linked to rising fuel costs as well during the US-Israeli conflict. With Iran, China led the surge, with import volumes jumping more than 27% on a year-on-year basis, highlighting continued demand despite growing trade uncertainty. Let's also move on and talk about Australia's largest telecom provider as well, Telstra, that also has suffered a major nationwide outage as well that disrupted mobile services, affected train operations as well, and left thousands of customers without connectivity. The disruption lasted nearly 12 hours before services were restored, and the telecom operator is saying that the issue was caused by a software defect linked to timekeeping servers at data centers in Sydney and Melbourne, ruling out a cyber attack as well. The company has in fact apologized, while the government has ordered an investigation after some emergency calls failed to connect. Let's move on and talk about India's hydropower generation that declined sharply in the month of June as El Nino-linked weather conditions disrupted rainfall across key river basins as well. According to S&P Global Commodity Insights, hydropower output fell by 6.3 gigawatts compared with the same period last year, as lower reservoir levels in fact reduce electricity generation. The shortfall is expected to increase dependence on thermal power during peak demand, even as renewable energy capacity continues to expand. And when you talk about this particular development, it's really highlighting the growing impact of climate variability on India's power sector as well. Moving on then, let's talk about some national news. Search operations have resumed in Kerala's Wayanad district after a debris slip at a tunnel construction site killed 3 people. Unfortunately, rescuers in fact are continuing efforts to trace 5 missing workers right now. And a day after the tragedy, you do have the Kerala cabinet that ordered a detailed probe into the cause of the incident. The probe is going to be examining both the technical as well as the legal aspects of the project to determine responsibility. And moving on then, let's talk about a major rescue operation that is underway in Pune as well after a building collapsed with around 15 people feared trapped under the debris. Emergency teams have rushed to the spot and search and rescue operations are right now underway. Officials are yet to confirm the cause of the collapse or the number of casualties for that matter. Let's also move on and talk about the national capital that is set for another day of wet weather, as well as the IMD has issued a yellow alert coming in for rain, thunderstorms and gusty winds. Light to moderate showers are in fact expected through the forenoon, with another spell likely during the evening as well. So that's something that you're penciling in, followed by light rain at night as well. The weather may cause localized waterlogging as well. Traffic disruptions is something that you could be accounting for. Reduced visibility in some parts of the national capital, also something to watch out for. Let's also move on and talk about Odisha Police rolling out a multi-layer security plan as well, coming in for the Rath Yatra when it comes to Puri as well. And that's something that you're looking at in terms of an important update. The Rath Yatra is scheduled for July 16, which is expected to draw lakhs of devotees. The arrangements include surveillance from land, sea and air with drones, anti-drone systems and enhanced crowd management measures as well. The Indian Navy, Coast Guard, CRPF, BSF, RPF and other agencies are going to be working together to ensure the festival remains safe, secure and well coordinated. Alright, then moving on, let's talk about PM Modi, who's begun a 3-day visit to Australia as well, coming in aimed at deepening the India-Australia comprehensive strategic partnership. During his stay in Melbourne, the Prime Minister is going to be holding bilateral talks with his Australian counterpart as well, meeting the Governor-General, addressing the India-Australia CEOs Forum and interacting with the Indian diaspora. Now the visit, let's talk about what that is going to also envisage. It's expected to further strengthen economic, trade and strategic cooperation between the two countries. Moving on then, let's talk about some international news. US President Donald Trump, in fact, has declared the US-Iran ceasefire over as far as he's concerned, and that's exactly the kind of wording that is coming in from him after both sides exchanged fresh strikes. Now, speaking at the NATO summit in Turkey, you do have him saying that he no longer wanted to deal with Iran and suggested further negotiations would be futile at this point in time, signaling a sharp escalation in the rhetoric despite diplomatic channels still remaining open. Let's also move on and talk about tensions in West Asia that have escalated sharply once again. The United States has launched a fresh wave of strikes, just to give you a little bit of background on Iran as well, and you do have this happening after alleged attacks on commercial ships in the Strait of Hormuz. In fact, according to US officials, the targets included air defense systems, missile sites, drone launch facilities and port infrastructure, and the number that you're looking at here is about 80 targets that were really hit, and that's something that reports seem to be suggesting here. Washington has also revoked a sanctions waiver that had allowed limited Iranian oil exports as well. And you do have Iranian media that has reported multiple explosions coming in the south of the country, while Tehran has warned that it's going to be taking all necessary measures to defend its national security, raising fears of further escalation in the region. Moving on then, let's talk about Ukraine that has signed 3 new drone cooperation agreements with Denmark, Estonia and the Netherlands on the sidelines for the NATO summit. You do have President Zelensky, who said that these deals are going to be boosting joint defense production, enable technology as well, and also expand weapons export cooperation. With these agreements, Ukraine has now in fact signed 9 international drone pacts, underscoring how its wartime experience has transformed it into a major defense technology partner. Let's also move on and talk to you about a very important conversation as we wrap up on this edition of the show as well. You do have NDTV Profit that caught up with Mahendra Nahata, founder and MD HFCL, who shares insight on his company's AI play, order book and infra investment in the coming quarters. Let's go across and listen in to slice up that conversation.
Right, NDTV Profit is here at the sprawling HFCL facility here in Hyderabad, and who better to understand more about this facility than Mr. Mahendra Nahata, the chairman and MD for HFCL. Thank you so much, sir, for taking time out for NDTV Profit. Firstly, sir, I want to get to me what HFCL is doing is it is in the middle of a transition from being largely a telecom infra player to now becoming a very large AI infra player as well. Talk to us about what the AI opportunity for HFCL is, sir.
Look, AI is growing worldwide. And because of growth of AI, data flow is increasing immensely, which has led to the use of fiber optic cable. Because you require some media for the flow of data. The kind of mammoth amount of data which is flowing, there is no other option than using fiber optic cable. So fiber optic cable being one of our main product area, that was a natural area of expansion for us. We have 3 factories producing fiber optic cable, including Hyderabad, where we are standing right now. And here we also produce optical fiber. Moreover, in our Chennai factory, in our Hosur factory, we produce different connectivity solutions for data centers. So what we are trying to be one-stop shop for providing connectivity solutions for data centers. which includes fiber optic cable, different kind of smaller connectivity cables which are required inside the data centers, and different other passive equipment. So effort is to be one-stop shop for the data centers for connectivity solutions.
Mr. Nahata, you talk about data center solutions as well. There's billions of dollars that are flowing into India over the next few years by big tech companies, Amazon, Microsoft, Google, all of them putting their monies in India. But what we are still seeing is that the stock market money that is supposed to go and come into India is still in South Korea, it's still in Taiwan, right? There's no real AI play that investors are also complaining about. What is your message to investors that are seeking an Indian AI company play?
There are two kind of things here. One is the AI development as the artificial intelligence software or hardware, which has not happened in India to a level which was expected to be, which our political leaders have also paid good attention now, and they are trying that AI should come up in India in terms of development, like what has happened in US or maybe what has happened in China also. So I believe that the kind of software talent India has got and the kind of semiconductor push government of India has given, India will also come up quite fast in AI, much faster than people expect. But to reach to the level what is being done in the United States, it will still take some time because the data flow, because of AI, is very high in those countries. But I am sure India will also catch up because our population level is very high. Once you have more population, more people use AI, so that there will be requirement of data centers, and for that, fortunately, for fiber optic cable and connectivity solutions.
With your revenue as well, sir, most of it is geared towards export. There's not a lot of demand for AI infra in India so far that we're seeing. What is your trajectory in terms of when do you expect that 70% to go to 80 or 90%, or do you expect that to come down and India to play a larger role for HFCL?
Look, what I see that next 2 years' time, export would remain about 70% or so. After 2 years, when these data centers which are being put up in India, they come to a critical stage where they start needing connectivities, like fiber optic cable or indoor connectivities. At that time, the demand would pick up. Export may go down in percentage, but may not go down in the quantity, because value may still go higher. If the demand is higher, then we may look at the future expansions also.
Mr. Nahata, you're also coming out with Optic AI, which is the end-to-end sort of solutions that are coming in from HFCL. Talking about your order book as well, what sort of demand are you seeing for those products from North America, from Europe, from those geographies as well?
At this point of time, just the fiber optic cables and indoor connectivity solutions, just the small patch cords or connectivity cables. Our order book for fiber optic cable and those kind of products is roughly about 15,000 crores. And I expect a significant amount of order inflow from hyperscalers, particularly in the US, in near future. Because demand is there, it's just the issue of constraint in supply and constraint in capacity, which we are trying to improve. As I have told you, that we are increasing our capacity. So future also, the export revenue is going to be significant for us.
Mr. Nahata, any infra investment plans that you have to meet that order book that you have going on about 15,000 crore rupees? You have 4 facilities. Any more facilities, greenfield, brownfield, that you're planning?
We will expand in the existing facilities, like we are doing in Hyderabad, like we are doing in Goa, we are doing in Chennai and Hosur. All these facilities, we are putting up more capacity. And moreover, we will be building a new facility for manufacturing preforms, which is the raw material for manufacturing optical fiber. As a matter of fact, we would be signing an agreement with a supplier tomorrow for the supply of machinery of preform. This is the first time I am giving this information. So, all this put together, the total investment has been planned around 950 crores. A major part of it is the preform and also the expansion of optical fiber and optical fiber cable.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
US and Iran are back on the brink as Donald Trump says that ceasefire with Iran is over after attack in ships in Strait of Hormuz. Tehran has also warned it will not tolerate any interference in the Strait of Hormuz, hinting further escalation. Oil prices jumped sharply as Trump announces that ceasefire with Iran is over. Brent crude surges over 6% and is hovering around $78.75 per barrel range. Market crashes sharply after Trump's remark with biggest intraday fall for Nifty in financial year 2027. Nifty closes in red, down almost 2%, erasing last 5-day gains. Jio Financial Services and Indigo are top losers in Nifty. All sectors have ended in the red. Axis Bank sees exit of 3 senior executives amid leadership reshuffle. Departures involve leaders from institutional banking, debt capital markets and trading operations. Government evaluates a phased shift to higher ethanol blends with E21 likely by 2027. Sources say that for E25, blending government awaits scientific assessment and technical validation before taking the next step. EPFO completes sites project database to 4 speedy claims and smoother access to services. EPFO 2.01 to go live this week. PM Modi leaves for Australia after Indonesia visit. He will hold bilateral with Prime Minister Albanese and address leading business leaders from both the countries. Traffic snarls after heavy rains batters Mumbai. Reservoir surges. The water stock in the 7 reservoirs supplying water to Mumbai has reached 41.36%. Messi's Argentina storms in World Cup quarterfinals with thrilling comeback win over Egypt.
and welcome. This is Profit 360 on NDTV Profit, and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But viewers, first up on the top story of the day. So tensions between the United States and Iran have flared up once again, with President Donald Trump declaring that US-Iran ceasefire is effectively over. Trump has said that he no longer wants to engage with Iran, calling further negotiations a waste of time, though he added that negotiators are free to continue talks if they choose. So the latest escalation follows a series of military exchanges. US Central Command has said that it struck more than 80 Iranian targets, including over 60 small boats linked to Iran's Islamic Revolutionary Guard Corps. Now, Iran in turn claims that it targeted US military facilities in Bahrain and Kuwait. The US action came after attacks on 3 oil tankers in the Strait of Hormuz earlier this week. So meanwhile, Iranian Parliament Speaker Mohammad Bagher has said that it is the United States that breached the truce. And let's first listen in to what President Trump had to say at the NATO summit in Ankara. The latest escalation comes just weeks after Tehran and Washington signed a memorandum of understanding aimed at extending the ceasefire and also easing the hostilities. But first up, let's look at what Trump had to say.
We attacked very powerfully last night the very dangerous people from Iran. They're sick. There's something wrong with them. We said, go and do your funeral stuff. And instead of that, they start shooting rockets at ships yesterday. And so we hit them very hard last night, very hard. I would say 20-1, 20 times tougher. I told them every time you hit, we hit. And of course, they're dirty players, so they go after everyone, probably including me. I've been #1 on their list for years. And they're a bunch of scum, you want to know the truth. They're scum. And so we don't like them. I don't like them. And they're evil people, and it's the denuclearization of Iran. And we're going to denuke it. We're not going to let them because they're crazy. And they can't have a nuclear weapon, and they go around killing people. They've killed thousands and thousands of our soldiers. They've killed hundreds of thousands of innocent people. To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. Steve Witkoff, Jared Kushner. But they have to come back to me. As far as I'm concerned, it's just a waste of time.
So those were some harsh commentary coming in by President Donald Trump. Now let's also look at the crude prices, because the geopolitical premium is back. Oil prices are soaring once again, with both Brent and WTI up 6%. Trump's latest comments on Iran ceasefire and uncertainty over the Strait of Hormuz have put supply concerns back at the center of the market. To discuss further, I'm being joined by Prameet Pal Chaudhary, South Asia Practice Head for Eurasia Group. Welcome to the show, Prameet.
Thank you.
So, Prameet, let's begin with President Trump's remarks. We've seen him change his stance on several geopolitical issues in the past, sometimes within a matter of days. We've seen him changing his stance. So should markets treat this latest statement on the ceasefire as a significant policy signal, or is it too early to conclude that diplomacy has broken down, between the two nations?
It's too early. We have to remember that the memorandum of understanding that was signed between Iran, or negotiated between Iran and the United States, was very vague. Unlike normal diplomatic agreements, which are very complicated and are very lawyer-like in terms of the details they give, this was really just a sort of broad set of principles and understandings. Unsurprisingly, they have now differed as to what these mean and how they represent them. Even the timing of these of the concessions made on both sides is questionable. Sorry. So it's uncertain. So it's not a surprise. I think that you will see repeated breakdowns between the two sides, in which they will disagree as to what exactly certain parts of the memorandum mean and what each side believes to have gotten out of the understanding. So in the case of Iran, for example, they will come in and say, look, we were expecting our sanctions to be lifted. That has not happened. The general license by US Treasury has not been issued. 58 million barrels of Iranian oil passed through the Straits of Hormuz, and after the ceasefire, they're not finding any buyers because nobody is prepared. Everybody's saying we haven't got the clearance from the US government. We don't see Israel backing down on its attacks on Hezbollah in South Lebanon. So in our view, this agreement, America has not gone through with its side of the agreement. The Americans will come into a similar point of view, obviously, and say that, well, the Iranians have to stop going around acting like the Straits of Hormuz is theirs. It's not. And that has to be clarified. So what you then therefore see is Iran carry out a set of very limited strikes on 3 ships. America respond to some degree, also limited strikes, much larger. There's a bit of a kabuki dance going on here. It's a violent one, and people get killed, but it's still kabuki compared to what could be happened. Trump making threats is nothing new, as you've said. He changes his tone within 24 hours.
Yeah.
So now you're going to have to sit down, Qatar, maybe Pakistan, somebody else sit down and say, okay, what exactly is the problem here?
Absolutely.
But I think for Iran, the fact that our sanctions have not been lifted is a very
All right. So, Pramit, just when markets thought that the worst was behind us, uncertainty has returned again. And so what do you think is worrying investors the most today? Is it the military escalation itself or the unpredictability of what comes next?
Well, the two combined together, but really it's the unpredictability. If you look at the amount of oil passing through the Hormuz Straits, it's like 13 million barrels, then 8 million barrels, and then 1 million barrels, and then 5 million barrels.
Yeah.
It keeps fluctuating. So if you are waiting on the other side, but what you are also seeing, I would argue, is that yes, oil prices have obviously risen, but they have not risen to a particularly high level. I mean, if the Hormuz Straits was seen to be permanently shut, oil prices should have gone well over $100 a barrel. Instead, they've jumped a little, and that there's a sense, I think, in the market that let's see whether or not this actually survives, because we've seen this game before. And I think the broad drivers that underlay the MOU remain in place. America is not prepared to use full military might to assert dominate Straits of Hormuz. Iran is actually in a very good position. It's been able to get its oil out there. It sees the Arab countries in the Gulf basically is telling them, okay, we accept that you're the king of the hill here. And all of the Gulf states are desperate to get back into business.
Yeah.
So the basic core of the agreement is still in place.
Absolutely. So, Pramit, the Nifty erased 4 days of gains in a matter of minutes. So, do you see this as a knee-jerk reaction right now, or are the markets really beginning to price in a prolonged geopolitical premium again?
I'm not certain whether I don't think, my sense would be, I'm not an expert on this, that they have not actually put in a long-term geopolitical premium. But I don't think it's knee-jerk in the sense that, look, one of the things that we will see in the Gulf, I would argue, is over the next decade or so, is that you're going to see the slow withdrawal of American dominance of the Gulf. So your primary source of external stability in the Gulf will be gone. You will have 3 centers of power, UAE, Saudi Arabia, and Iran, which will remain into some degree of contestation with each other. So every now and then you're going to see a problem in the Persian Gulf. And governments definitely are looking at that and saying, okay, we have to be prepared for the likelihood that, once every few months, the Gulf is going to explode a bit.
Right.
And maybe
Pramit, talking about the Strait of Hormuz now, which remains the biggest concern. So India has so far managed its energy supplies relatively well through diversification. But if this uncertainty really turns into a prolonged disruption now, so where do you see the biggest pressure points emerging for India?
So What we are, as you said, diversifying on energy. So Venezuelan oil back in the picture. 14 million barrels has been purchased by us, and we plan to buy more. We're seeing Russian oil, which at one point looked like it was going to start disappearing. The Russians have reintroduced a huge discount, so we're buying Russian oil. We're also buying American oil. American oil and gas is going to be, I mean, the real the hydrocarbon story of the next coming decades is the rise of North America. It is now by far the biggest oil producer. It is a region in the world. It is the largest LNG producing part of the planet. America is producing almost as much as Saudi Arabia and Russia put together in terms of crude. We're now looking at Australian crude probably coming in in the next 3 or 4 years. Canada, the new pipelines coming up. So yes, we can see a huge diversification taking place on that front. Our problem will be trying to work out where do you go spot, where do you go long term in terms of your purchases, given that prices will go up and down. And then the question, I think, is how much of reserves can you hold? We need to build up. We did not have enough. We had just a little bit of reserve when this conflict broke out, but we had underinvested, even below our own official targets, in building the necessary caverns.
Right, Prabhi. So that's a bit of a learning for India here, that we need to really work on our reserves, and we need to work in that domain. So clearly the situation remains highly fluid, and markets will continue to take cues from every geopolitical development. The key variables to watch now are the trajectory of the conflict, the security of the shipping through the Strait of Hormuz, and even the direction of the crude oil prices. So many thanks, Pramit, for joining us today, and sharing your insights with our viewers. So viewers, in fact, these geopolitical concerns are already paying out on Dalal Street as well. They have witnessed a sharp sell-off as investors reacted to the latest developments in the Middle East. And the Nifty 50 has tumbled more than 500 points today, while the Sensex has plunged over 1,600 points with heavy selling seen across sectors. Let me now bring in my colleague Parth to give us a detailed market roundup.
Nifty has closed in red for the second day in a row, losing almost 2% today and erasing the gains the index made in the last 5 days. Today, Nifty saw the biggest intraday fall the index has seen since the start of FY27. If we talk about the index constituents, then Jio Financial Services and Indigo were the top losers in Nifty, both of them losing over 5% today. On the broader market side, it has outperformed the benchmark, but it still closed in a deep red. Nifty Midcap 150 closed almost 1.5% down, which was led by L&T Finance and Jubilant Foodworks, which were the top losers in the index, both seeing a downtick of almost 6%. On the other side, Nifty Small Cap 150 also saw a downtick of 1.9%, which was led by Aegis Logistics, which was the top loser, hitting the lower circuit of 10% today. On the sectoral side, all of those sectors have ended in red, with most of them losing over 2% each as well. Nifty PSU Bank was the top loser, down over 2.5% today. And Nifty PSU Bank has ended in red for the 5th day in a row now. On the constituent side, Bank of India and Union Bank were the top losers of Nifty PSU Bank, both of which were down over 4% today. On the sectoral trend side as well, Nifty Metal, Nifty Pharma, Nifty Auto, Nifty Oil and Gas, Nifty Financial Services and Nifty Bank have ended in red for the second day in a row, while Nifty FMCG has snapped its 5-day gaining streak.
Thank you so much, Parth, for that. In fact, let's shift our focus to Axis Bank now, which is seeing a leadership cheer, as report says that 3 senior executives have quit the bank recently. My colleague Piyush is here with more details on this development.
Bloomberg today reported that 3 senior executives at Axis Bank, particularly in the trading department, in the treasury department, have put their papers. These 3 executives, according to Bloomberg, are Anil Agarwal, Vikas Shinde and Jimmy Tawadia. Now, these are not key managerial personnel, but they are senior executives, like we mentioned, part of the treasury team. On the other hand, Axis Bank has sort of become, the talent provider for the industry. We have seen how earlier, just very recently, recently Puneet Sharma, the bank CFO, put his papers to join HDFC Bank as its CFO. Last year we saw how Mr. Rajiv Anand, who was the deputy MD at Axis Bank, joined to lead IndusInd Bank after the whole crisis unfolded, and he took over as the MD CEO of IndusInd last year. Vivek Gupta, who was the wholesale banking head at Axis Bank, has joined Intellect Design Arena as Chief Customer Officer. We are also aware how in 2020 Pralay Mondal, who is the CSB Bank CEO now, he had left Axis to join CSB. Even Arjun Chaudhary, who had come in from Citi to Axis, joined Graham Finance as its MD CEO last year. We also saw Ravi Narayanan, a former Axis Bank official, joining SMFG India Credit as its MD and CEO. And finally, Mr. Jairam Sridharan also joined Piramal Finance from Axis Bank way back in 2020.
Right. Thank you so much, Piyush, for that. And in fact, viewers, the June quarter is expected to remain challenging for the IT sector, with analysts forecasting muted growth across Tier 1 companies. Now, weak discretionary spending and AI-driven pricing pressure are likely to weigh on the earnings. My colleague Jasmeet Singh is joining us to give us a preview for the IT space.
If you look at this particular quarter, generally H1 for the IT companies is stronger, but in this quarter we're expecting a muted to no growth for IT companies, and this would mark the fourth consecutive year where we are seeing no growth to low growth for IT companies. So here are the top 5 key trends that we are tracking down here. While the first one, we are unlikely to offer any meaningful relief for the IT stocks, given even the Accenture had cut down its guidance. So we don't see much movement in the market altogether, and already stocks have been penciled in the same as the stocks are down about 23% on Y20 basis. While the second thing would be the overall AI-led momentum. If it's creating the efficiency and if the stocks are moving from the pilot model to the actual delivery model, that's something which will be in focus. Well, the third is the old discretionary spend. We did know that HCL Tech call out there was some discretionary slowdown and the clients have moved down their budgets to the next year. So that will be something in focus of how that's planning for the company. And TCS being the first company, it will act as a bellwether for the entire sector and set up the context going ahead. Well, if we look at the fourth one, Infosys and HCL Tech, the guidance will be in picture given some brokers are penciling in. Infosys and HCL Tech might cut the guidance, the upper end of the guidance on the back of that slow movement in a deal momentum. And the last one will be the deal ramp-ups, acquisitions, pipelines, and how the overall momentum is setting up for the company. Now, let's quickly understand the Tier 1, that's the top large cap IT companies and what we are expecting from that. In terms of the revenue growth, in INR terms, we're expecting a growth between 1 to 2%, but this is in INR terms. The growth is much lower when you look at the CC terms, and it's negative 1.5 to positive 1%. In terms of the overall EBIT, we see impact coming in for TCS and Wipro, negative 3%, and that is on the back of the wage hike we'll be seeing in the Q1. And net profit is been divided between negative 1 to 2%. Now let's quickly look at the things that will be in focus for the large caps. For TCS, we'll be focusing on the Coastal Cloud acquisition of how that's adding to the inorganic growth for the company. For Infosys, HCL Tech, as we mentioned, the guidance will be in focus if they're trimming any guidance for the upper end of guidance for the entire year.
Viewers, the government is evaluating a phased shift to higher ethanol blends with E21 likely by 2027. Now, sources tell NDTV Profit that E25 will be considered only after scientific and technical validation. Now, India's ethanol capacity is sufficient to support higher blending targets, and my colleague Sesha is here with more details on the story.
Right, the government is likely to slow the proposed transition to petrol blended with 25% ethanol following concerns over the rapid rollout of E20 fuel. The nationwide rollout of E20 petrol has triggered a debate over mileage and the overall vehicle performance. Amidst these concerns, the government is evaluating a phased transition to higher ethanol blended fuels, with the rollout of E21 likely in 2027. Followed by E25 around 2029, according to sources. Now, however, the move to E25 will be subject to scientific and technical validation of the fuel and its use in vehicles. Petroleum Minister Hardeep Singh Puri has also clarified that there would be extensive consultations with stakeholders before any final decision is taken on the rollout. Sources say that India currently has an ethanol production capacity of around 2,000 crore litres, which is considered sufficient to support higher blending levels in the near term. The government also maintains that the E20 program itself was rolled out only after extensive scientific evaluation and is aligned with global best practices. Now, to give you some stats, 20% ethanol blending is estimated to save India nearly 4.5 crore barrels of crude oil annually, while generating foreign exchange savings of more than 1.9 lakh crore according to official estimates.
Thank you so much, Sasha, for that. And in fact, viewers, the Employees Provident Fund Organization has launched EPFO 2.01, which is a major overhaul of its digital platform, which is aimed at making PF services faster and more seamless for subscribers. So the upgrade brings all the member services onto a single unified portal, which enables the automatic transfer of PF accounts when employees switch jobs and even promises faster interest credit and quicker claim settlements. Now, the platform also expands auto settlement for eligible claims, allows members to respond to EPFO queries online, and also reduces paperwork by moving more processes online. Now, the revamp is part of EPFO's broader push to improve service delivery and also simplify the provident fund management for millions of subscribers across the country. And viewers, after...
Right, a massive update has come in with respect to the EPFO of the Labour Ministry, and what we're picking up is that the enhanced CITES, which is the centralized IT-enabled services part of the EPFO, is now complete. It is expected to be fully functional within a week or so. Let me give you a few salient features of how this is going to change the way people are withdrawing and how one could withdraw EPFO funds of their own. Now, the first one is the fact that the database migration for EPFO is complete now. So this is going to be a centralized database now. It's not going to be tied to regional offices like it earlier was. So access to data becomes a lot easier for users as well. What we're seeing is that about the fact that the EPFO annual interest credit, whenever it was notified, it used to take until October or November to actually reflect. But now it's going to be available by July 15. So that has also been expedited by the ministry. What we're also seeing is that there's going to be pre-validation of claims now. Earlier, a lot of members did not have much of an idea as to what sort of an amount they were eligible to claim. But now that is automated, and now they will have a lot of transparency in terms of what is the amount that they can access easily. Members can withdraw up to 75% of their limits now. What we also have is the auto settlement for advanced claims. The earlier limit was 1 lakh rupees. That has now been enhanced to 5 lakh rupees. So that is a big point as well. They've also introduced a facility to seek clarification online, and that is something that is a very interesting one. So less and less paperwork and more digital. That's what we're seeing from the government.
Right, viewers. So after days of relentless rain, Mumbai is beginning to see some respite, but the city remains on alert. While the IMD has downgraded its warning from red to yellow, it has cautioned that intermittent heavy to very heavy spells are still likely across Mumbai and its suburbs. Now, local train services are operating normally. Schools have reopened, but civic authorities remain on standby after widespread waterlogging and disruption over the past few days. Now, due to the rainfall, the water stock in the 7 reservoirs supplying water to Mumbai has reached 41.36%. In the last 24 hours, there has been a 12.44% increase in the water stock in reservoirs. Also, there has been a 24.44% increase in just 48 hours. And viewers, the centre is closely monitoring the evolving weather pattern and the potential impact of El Nino on the ongoing Tariff season, directing states to stay prepared with contingency plans, also ensuring farm input availability and closely tracking sowing progress. Let's listen into what Agriculture Minister Shivraj Singh Chauhan had to say on this.
El Nino के कारण जो कृषि की परिस्थितियां पैदा हो रही है, उस पर लगातार हमारी नजर है मानसून में देरी के कारण तुअर, सोयाबीन और कपास पर थोड़ा प्रतिकूल बोनी पर प्रभाव पड़ा है और अब किसानों को यह सलाह दी जा रही है कि इनकी जगह, क्योंकि अब देर हो जाएगी, तो मक्का, बाजरा और मूंग जैसी कम अवधि की फसल जो कम समय में आ जाती है उनकी बुआई को प्राथमिकता दें।
Viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933. सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933. सरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Presented by Suzlon, good energies that work.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where I get you the hottest companies and also the interesting stories about their growth, or is there any alpha to be made from the next stage onwards or not. But before that, try to guess the company which we are getting in KYC today. We have heard about it a lot. It's a Hyderabad-based defense company. A lot of defense companies are there which are based in Hyderabad. Of course, DRDO is there. There's an ecosystem. Also, the company has recently announced a drone system capacity expansion. Interesting, right? Let's look at how much returns the company has given. The stock is up 19 times in the last 5 years. And Motilal Oswal Mutual Fund has roughly 6% stake in the company. But What's the company we are talking about? The company in focus is Zen Tech. Recently it was in news as well. But why are we calling them? So many India first announcements this company is doing. We'll try to decode this company layer by layer. The first question is definitely going to be on the overall propulsion, the drone propulsion system. It is full Swadeshi. There's no China, only India. Other questions to be asked in our conversation would be decoding India's IDDM framework. I'll give you a hint, the management is involved in policy making as well. International expansion plans, though right now it is just 7%, but the way India is putting itself out as an exporter for defense is something to watch out for. Another important question we'll ask is the domestic order book. How the inquiries are shaping up. Is there a much more client confidence coming in the second quarter and the first quarter? The capacity utilization levels and the capex levels, what are they planning, or will they focus much more on the existing facilities itself? The acquisition plans, lot of startups, lot of new age service solutions around this defense theme is there, and they already have a good stake. So are they hungry for more? We'll have an entire conversation with Ashok Atluri. He's the chairman and MD at Zentech. It'll be a very interesting conversation, I must say. But let's try to understand, what does the company actually do? What are the important levels to look at? It's just not a drone company. It is a defense company, especially on the tech front. That's why we call it a defense tech company. Let's understand a little bit more about, this company. They have training, simulation and systems. Also, there are 4 other important services or products which they give. There is bundling also, counter drone solutions as the second portion. The third one, automated weapon stations. The fourth one, there's a very interesting and a lot of interest, the combat robotics and drones. This is the future I'm talking about, by the way. And the last one, R&D and production facility. That's what they have in Hyderabad. That's where the most of their work happens. They have applied for more than 200 plus patents and shipped over 10,000 systems. That's where a moat comes in. They have an arm, Vector Technics. They have recently expanded the manufacturing capacity as well to almost 3 lakh units annually as well. So these are the key details, but how does the order book picture look like? It's heavily skewed towards the domestic side, especially Ministry of Defense. The orders come in 93% of them. Minor 7% of the order book, it's roughly coming in from international. The order book, I'm going to give you those details, but it's a KYC rating for you. It's around 1300 crores. It's India's first integrated smart border suit. That's what they have announced recently. And also a lot of another announcements. They have the largest fully integrated drone propulsion manufacturer. They expanded their capacity, I mentioned. And one more India first announcement they have given. AI powered fully integrated anti-drone system. So you can see India first announcements are coming in from Zentech, and this is something which the street is quite bullish on. Apart from the recent announcements coming in from Zentech, let's also talk about the key investments. This is where I feel the alpha is there and the market might not have factored in that. Unistring Tech Solutions, they do electric warfare. That's the first investment. Second investment, RE Simulations and RE Labs, Naval Sim. So you can understand what's the value going, in the future. Third investment also I'd like to point out, TIS Aerospace. They are into drones. Fourth investments, these are the names, you should note it down. A lot of announcements are coming. Announcement recently came on Vector, also for propulsion tech. These are the ecosystem players, and the company has a majority stake. Yani ki consolidated numbers mein inke bhi benefits aayenge. Now speaking of benefits, what may work for the company? Strong industry tailwinds, India's IDDM program and various programs are there which may work for the company, and important acquisitions are at play. Management seems like more bullish on acquisitions also, and we have seen the benefits coming in these announcements. Now the FY27, the execution part is something where bullishness comes in from the street versus FY26 as well. Another important point is the debt reduction. So of course they are growing ahead, their order book is going, but the debt is also reducing, and that is also helping the perception of the stock. FIDI are increasing their stake in the company as well, and that's a proper thumbs up. But what may not work? So many things are happening. Will there be an execution risk? It happens in every business model. So that's what I have mentioned, that working capital days, they have increased. इतना काम कर रहे हैं तो पैसा भी आना चाहिए. So of course this is something which the company needs to work on, and the valuation, stock has gone up. It's expensive than the averages. That's what a little bit of concern comes for me when I am analyzing Zen Tech. But another way to analyze is through our KYC ratings, and I have twisted a little bit of our KYC ratings today. And today, of course, from the cash flow, we'll have out here will be order book analysis, but income statement, balance sheet would be there. And of course, look at that, return ratio, sorry, wouldn't be there. And also, let's talk about the shareholding pattern, how things have moved. I'm going to give you the DIFI's holdings coming in, and also the street cred, and the numbers are mind-boggling. That's sure, but you have to stay put with us. Valuations, we'll try to understand how things have panned out over the last 5 years and the outlook going ahead. Company ka soch, guidance aage jate hue kya rahega. Let's start with the first one, income statement, and see what has happened. Long-term analysis mein dekhe, it's pretty strong, good growth coming in. Of course, this is of course the CAGR growth I'm talking about, and these are almost 40% plus beat, PAT, EBITDA, and even revenue. So that is something which we'll be watching out for. Of course, sorry, this is the balance sheet which you're talking. If you could just get the income statement, and this is where we see the numbers. However, in the first quarter were kind of mixed, and the margin profile, it seems like that has changed as well. And because of that, I'm going to give it a neutral rating in my analysis. This is the number I'm talking about. At 43% it was in FY24, but the way the expansion is happening, there are expenses also, right? And that's where a little bit of weigh down in the margins do come. But nevertheless, it is still a high margin business, 35% plus. So that is something which is pretty neutral. Balance sheet, I really like. The debt levels are literally non-existent right now. That is aiding the factor. Cash balances are pretty much decent. So the capitalization is pretty strong. The equity base has also increased, and the institutional participation has gone up. So I'm going to give this a thumbs up when it comes to the balance sheet. After income statement and balance sheet, let's talk about cash flow, and that has also done well. And the payment terms, of course, from the government, the way things happen have improved a lot in the industry, and that's what we can see that, when I talk about the cash flow segment, be the operating from cash flow segment or even the conversion which is happening, this has also turned positive after gyrations coming in the year FY24 and FY25. So when you analyze the cash flow segment, you see a good way of numbers coming in. So I'm going to give this a thumbs up as well. So apart from the three basic numbers, the order book picture, this is also very much important, and it has been growing up slowly and steadily. It was around 675 crores in the second quarter. It has gone up, it's almost doubled by the fourth quarter itself, and almost 93% of it is domestic. So order book picture is pretty strong, so I have given this a thumbs up for it. So after these 4 ratings, I'll talk about the shareholding. Promoters, you see the stake was around at 55%. That has come down. But FIs and DIs have lapped up. A look at that number. It has gone up to 6% when it comes to the FIs and DIs. Motilal Oswal Mutual Fund has almost 6% stake. Some AIFs are there, but look at that. It's 10%. So good institutional ownership is there. And that is what actually is a positive sentiment as well. So I have given this a strong thumbs up. But let's talk about street cred. What returns has the company given to the investors? Medium term लीजिए, short term लीजिए और long term लीजिए. January from lows, the stock is up 52%. Congratulations. If you have made a medium term investment for the last 1 year, the stock has been largely flattish, and this year itself 36% return. But if you're a long term investor in this theme or in this company, you must have made money. Last 5 years, the stock is up 19 times. Look at that multi-bagger stock which has come in. I'm talking about Zentech here, and street cred, I'm going to give this a strong thumbs up. But remember, when stocks go up, the valuations also become expensive. 5-year peak valuations comes in at 12-month forward P of 64 times. Compare that with the 5-year average, it is 40, almost you could say 40 times, and currently slightly above that average. On the expensive side, it's trading at 45 times. But of course, the entire sector has, re-rated, but still expensive right now. So I'm going to give this a thumbs down when it comes to my analysis. The last one for you is the outlook. The management commentary is important. So I've taken that from the management commentary itself, which is already in the public domain. FY27 is likely to have a better, stronger execution as compared to FY26. Let's pull out the second point. Is the large orders are expected to be announced going ahead. They have been announcing a lot of expansion and tech, and this is what we are looking at. And capacity enhancement, that is also at play. But I feel the dark house, of course, after the product portfolio expansion, can be those important acquisitions which the company is doing. So these are the important outlook pointers, talking about the company and the industry as a whole. And I'm going to give this a thumbs up as well. But let's give you the entire picture. What are the total KYC ratings for Zentech for today? And it's largely done really well. A sea of green coming in, balance sheet, cash flow, order book, all have done well and shown good improvement. And on the other hand, we have, of course, the shareholding and street cred, which has done really well, especially the institutional participation coming in, stock being a multi-bagger, and also right now the momentum is strong, but because of that the valuations are not attractive, but the outlook, medium term and long term, remain really strong for the company and even the industry as well. So the total KYC rating is on the higher side of the averages. It is 6.5 out of 8. This is what I'm talking about. The company has done really well, and that's what the bullishness is coming in this counter. But there is a more to the story, and to do that, we'll be joined in by Ashok Atluri. He's the chairman and managing director at Zen Tech. But I would like to give you interesting snippet about him. Is a pivotal role he has played in shaping the national defense policy. That is a very important point. And also, he's the co-author of Buy Indian IDDM policy and make two categories as well. So it's a matter of pride for us to have a chat with him. Now we are joined in by Ashok Atluri. He's the chairman and managing director at Zentech. A lot of announcements coming in, but the recent announcement about the drone propulsion system, what does this mean for the company? Any kind of guidance you can give on that, sir?
The expansion of vector techniques of the capacity is something that we have been planning for a long time, and getting the announcement was in consequence of all the efforts vector team had done till now, and it's a complete stack of the propulsion system. And what we find is that the demand is not only for India but even from very, very advanced countries in Europe and in USA. And there are some proposals that are being evaluated by the Vector team for possible joint ventures with those companies at this point in time. So yes, in terms of again, this is going to be a very competitive business, and we expect while the absolute profits will be added to the companies in the consolidation, but I think the margins will be much more would be lesser than what we conventionally get in our systems like counter drone systems and simulators.
Ashok sir, how do you decode India's IDDM framework? What does this mean for the company as well as the industry? What are the changes we are looking now?
IDDM actually, again, I had only suggested to Mr. Parikar in 2015-16, and fortunately he was the only person who could get it, in the sense that he said unless it is indigenous design, Make in India by itself was not enough, and IDDM was required. But in addition, what he understood was IDDM is a category in which there may be only one player. Because when you're creating some IP for the first time, it could be India first or even world first. To ask for 3 vendors was foolhardy, and a clause was included in that single vendor is also acceptable. That was a phenomenally sea change, and no bureaucrat, no politician till then had accepted it with what Mr. Manohar Parikar did. And so, now cut to 2026, it has been evolving as a system. And I think now in the proposed DAP, this is being seen as the, most important category. And everything by default, they plan to categorize as IDDM. And unless, even for earlier, it was only for regular procurement. But what I understand is even for fast track procurement, OCPP, across all categories, this will be categorized as, default IDDM. So when IDT, it is categorized as IDTM, the focus of the industry will not be just, doing, TOT and manufacturing, but actually trying to do innovate and build IP within the country. I think that will be a big change. And I think, what India is slowly moving, exports will actually, will almost go, beyond what the government has set the target of 50,000 crores. If we really get this act together, and I think, we will become a net exporter of defense equipment in a few years if this is really focused and the intention is carried out.
Right, Ashok sir, let's talk about the export market. Right now it's below the 10% mark of your total order book, but the way India is being projected, for an exporter of, defense related products, how do you see this panning out for your company and even the industry?
So yes, again, what we are seeing in worldwide is that there is a lot of demand for counter drone system without, I don't have to preach that, in the sense that after Israel-Iran war, everybody wants, everybody says that Shahed drone won the war, and, everybody wants a counter to Shahed drone. But again, when we say, actually, we also build this hyperstrike, which tackles Shahed kind of drones. And it's much, much more powerful than, much more faster than the Shahed drone and counteracts very effectively. But again, the thing is that we should not be preparing for the previous wars, but for the next wars. So I think that's what we are trying to offer, not only to India, but also overseas. And in terms of simulators also, again, I keep saying that 5 years back, no one thought that there's going to be a war, but then the Armenia, Azerbaijan started, Ukraine, now, we see so even Thailand and Cambodia, the Buddhist nations are also fighting. So now the question is not, if, but when the war will come, and all the countries want to, prepare themselves for a war. And we have seen Agniveer, something that used to take 2 years. Using our simulators, they were able to compress it to 3 months, the whole training cycle. So everybody wants to prepare for war and faster. So, and we are that, sweet spot where, we do both training and counter drone systems. And, we are getting a lot of inquiries, and, but again, the materialization of order is what is important for us. And we expect that, probably by this year, and some good news will be there in that area.
Right, but let's move on and let's get our focus on the domestic side. That's where the bulk of your order is coming, 93% to be precise. But want to understand how the client confidence looking like, where is the demand inquiries coming, which segment, the action is there.
So, immediately, we have been saying that the simulator orders have to come through. So we expect that orders to, again, they're very close, but it's still not in the hand. I originally said that by first quarter we'll be getting it. But I think it's a matter of, it's not very late. We still feel that we are very close to start getting the orders. And that will be the first thing. But the second, the larger chunk, in addition to simulators, will be the counter drone system. And that will start happening in I think towards the second half of this financial year.
Right, and talking about the capacity utilizations, what are the numbers one should look for, and of course the future also what's happening there, and if any capex kind of amount has been earmarked?
So, for the current year, there is no requirement of expanding the capacity. I think we will be able to execute with the existing capacity. But for future, we are expanding. But again, as I said, that most of the production is outsourced by us to the supply chain. We have a very capable supply chain. But again, but the critical components and the final assembly testing and packaging is done at our location. So for that, we are increasing our capacity so that we can do even the quality checks, etc., at the vendor places and at our places are being upgraded as we speak. So I think the capacity constraint is being handled for the next year, but not immediately. We are, I think, sufficiently equipped. But for the next couple of years or so, we will start upgrading ourselves.
Of course, there are some price hikes also. How does this business model work? Is there any kind of a lag to pass on the rising costs as well? Just wanted to understand any kind of impact, Q1, Q2 for that.
So, the long-term, not only long-term agreement, once you get the order and, the electronic components and the, RAM, the memory prices, etc., have gone up. Fortunately, they are not that significant part of our costing. But, I think as we go ahead, that will have some, a couple of percentages impact on the profits of Zen. Significantly because we have export market at the, margin where is the place where margins are, we get substantial margins. So I think overall the impact may not be significant, but anyway, not more than a couple of percentage points.
Fair enough. But I feel there's a lot of alpha there in your arms which you have invested. Are you looking at any kind of acquisitions in any areas? Because that's where the street is very bullish on.
So, we raised through QIP about, about 1,000 crores at that point in time. So one of the, proposed usage was, buying of, acquiring companies which are, which actually fit into our scheme of vision for the future of the company. And in this regard, we are, we continue to look. We have acquired almost, 5-6 companies at this point in time. So there we are looking to acquire more companies. And, again, we are very conservative. We don't want to overspend and try to get something which would, hurt the overall company. And we know that there is a lot of euphoria and people are spending a lot of money. So we are very cautious. One of the companies that we acquired, ARI, in about a year plus back, we acquired 140 crores and now, it's generating profits of up to 40 crores for us. So, so we have to be very cautious. We can't be, and what is the value we are bringing to the company and and is it really synergistic with what we are doing? So if these two things happen, we will acquire more companies. And absolutely, to your question, yes, there is a lot of appetite for new companies. And, not only for existing technologies, we have some Pareto technologies in mind to go into the future. If there is something in that area also, we would love to acquire companies in that area.
So a lot of positive acquisitions is something which the management is talking about. It's always a pleasure to have you, Alturi sir, with us, and best of luck for the future. So that's the management coming in you could say, the very interesting take coming in from the management, especially on the acquisitions front from Zentech. Very interesting. But of course, remember the stock has run up and valuations might not be that attractive right now. For interesting stories like this, stay tuned to KYC and keep watching NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know.
Presented by Suzlon, good energies that work.
Welcome. You're watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani, and this is a show where we talk about mutual funds, personal finance, etc. And the topic that we've chosen today is the large and mid-cap mutual funds, as to why one should think about choosing them instead of separately maybe investing into a large cap or a mid-cap, and what are the pros and cons of investing in these large mid-cap funds. And to address this and to take this conversation ahead, we're now joined by Shreyas Devarkar, the head equity at Axis AMC, joining us now. Shreyas, thank you so much for taking out the time. My first question to you is that why should one opt for large and mid cap fund instead of separately kind of investing in large cap funds and mid cap funds?
Good afternoon, and thanks for inviting on the show. Actually, large and mid cap fund actually serves as a middle path for investors who find pure large cap too conservative and pure mid cap too volatile, right? And if you notice here, the requirement is the fund invest almost 35 to 65% in either large cap mid cap. So that is with the requirement of large cap and mid cap allocation. So you get minimum 35% exposure at a point in time, or maximum 65% at a point in time in these two categories. And the category combines exposure to established market leaders and emerging economies. So large cap are established market leaders in the large segments where growth is dependent on nominal GDP growth, while in the mid cap segment you are getting companies where there are optionalities, the companies which can outgrow the market. So that's where that combination is also good for the investor. In today's context, one more thing which has happened is the large cap is also has got derated relatively. So if you see the construct of large cap, which is banking, FMCG, oil and gas, and etc., most of these sectors have got derated compared to the pre-COVID level. Some of them are derated, some of them are closer to pre-COVID level or not substantially derated. So you are getting reasonably priced segment in the large cap, with obviously because of the lesser growth. While in case of mid and small cap, generally these companies are growing fast, but then their valuations are also high. So again, you are balancing on that front as well.
Got it. Just from a perspective of somebody who is building a portfolio, I mean, what is the gap that these funds kind of fill in? And from an overall portfolio perspective, what percentage of allocation should you make in these large and mid cap funds? I know that it depends on what type of risk profile the investor has, but in general, what is the view?
Sure. So this mandatory allocation structure, which is there in this fund, it ensures investors to maintain meaningful exposure to both large cap and mid cap, irrespective of the market sentiment, is more importantly, or short-term trends, because generally people tend to invest more in mid and small cap or any category when it is performing very well, while you are actually, because of the structure, you're investing in the both category. For SIP investor, the category offers a simple way to build a diversified market cap exposure without having to decide how much to allocate separately for large cap and mid cap. And this category combines structure with flexibility. While minimum allocations are defined, the fund manager can actively allocate balanced portfolio between this large and mid cap. So that's where it is continuously attracting the interest of the investor, as is reflected in the flows to this category as well. So that's where for investor with long-term investment horizon, it can function as a relatively simple and core equity portfolio solution that doesn't require frequent rebalancing across the market cap segment.
Got it. But Shreyas, we've seen in the last 1.5 years that, we've seen as to how there was pressure in the mid-cap segment, so the small cap segment as well, and the large caps as a whole too. There was a consolidation phase. There is still a consolidation phase. But from a perspective of these market cycles, because before that we saw a significant run-up in the mid-caps, significant run-up in the large caps as well, and the small caps as well. So considering these market cycles, how should one look at large and mid-cap funds, and what are the factors that they need to consider before kind of investing in one of these funds?
See, as far as market cycles are concerned, I will actually even take you even further back. If you go back in January 20, right, or before COVID, basically January 20 or end of 19, and that during that period, actually the 5-year and 10-year returns of large cap was much higher than the mid and small cap. It's not only short term, but even 5-year and 10-year. Standing today, if you do the same analysis, then obviously the large cap returns are lesser than the mid and small cap. What has happened in the today's context is today, because the mid and small cap, as far as growth is concerned, that is high, their valuations are high. While in case of large cap, because the growth is low, the valuations are reasonable. And that's where, in this context, if you mix the both, then you are neither too much sacrificing growth for valuation nor valuation for growth. And that's where this combination is suitable in the today's market.
Okay. The other aspect is, with regards to how, it also depends on who is managing the funds, etc. So if somebody is looking at a large mid-cap fund, is there a checklist in place as to what you should do? I mean, it can be a general checklist also while you're, assessing any mutual fund, but anything specific for large and mid-cap funds?
Actually, this category, and there are many other categories which are available here, because the exposures are well defined. So as I said, 35 to 65, right? So because of that, there is reasonable surety that you are at any point in time having a minimum exposure to mid cap and minimum exposure to large cap. So that way your portfolio is complete. Now beyond that, what checklist one can have, and that actually applies to any fund, and that's where we generally would look at how and which companies you get into. So generally, what are the philosophy with which the funds are being managed? What is the basically the outcome? Obviously, is the performance. That is one of the indicator. Other indicators are there are multiple statistical indicators are also available for the fund in terms of returns adjusted for risk. So there are multiple statistical indicators as well as available. So one can use those as well. But that applies to all the fund categories and not only to this.
Okay, you did mention that there's certain percentage of allocation that needs to be sticked to, right? So then, do you think that this constraint of allocation could be a disadvantage when the market is seeing a sharp correction?
Actually, I would put it as an advantage more because you're not taking much call on this market or a particular segment doing well or doing badly. Many times, what happens is, because certain segment doing very well, then the tendency is to allocate to that more based on the past return. And at the same time, the tendency is to not to allocate the segment which is not doing well. While here, it is a disciplined approach by design. And that actually, in my opinion, is an advantage rather than the disadvantage.
Okay. And in general, shares, you would recommend an SIP into this one. And if somebody, let's say, has a bonus that he or she has received, a lump sum is also recommended?
Generally, for any mutual fund category, we always recommend systematic investment. Rather than because already markets have done well over if not for 2 years. 2 years obviously returns don't look that good. But if you look at 3-year, 5-year basis, especially on a mid and small cap fund, the returns are handsome even now. So in my judgment, even the valuations are not really cheap per se. So at that juncture, it's always better to do a systematic investment than getting any lump sum.
Got it. And any particular risks that an investor needs to watch out for?
The risks are similar to the market risk, especially then one need to look at their own risk appetite, because as I said, the minimum exposure to mid cap is 35 to 65. And it is not just because of mid cap the risk is high. My point is that yes, you may be investing today in a segment which is relatively expensive. So tomorrow that segment can be large cap as well. So who knows the point? But point is that based on your risk appetite and based on your portfolio allocation targets and how long you want to invest into, based on that one need to choose any category for that matter.
Okay, Shreyas, thank you so much for taking out the time and helping us understand the concept of large and mid-cap funds and what should an investor look at when they're looking at these specific funds. Thank you so much once again for taking out the time.
Thank you very much.
All right, viewers, with that, it's time to slip into a very, very short break, but don't go anywhere. On the other side, we're going to talk about momentum mutual funds. What are these? When should you invest in them, etc. So we'll be right back after a short break.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Your Money Matters here at NDTV Profit. In the first segment, we spoke about large mid-cap funds, and now we are going to talk about momentum funds, because what we've seen the last couple of weeks that the momentum is back and momentum funds are also back in action. To try to understand as to what these funds are, when should one invest in these funds, and what are the things that you need to keep in mind before investing in these funds, we are now joined by Varun Fatehpuria, who is the founder and CEO of Daulat Wealth Management, joining us now, who will help us explain all of this that we just talked about. Varun, first of all, thank you so much for taking out the time. I'll start by asking the very basic question. Help our viewers understand as to what momentum funds are and when should one consider these momentum funds.
Yeah, Mahima, as you correctly pointed out, obviously momentum as a strategy currently is back in action. But I think it's important to sort of, take a step back and see what exactly momentum is and how does it differ from other category of equity mutual funds. So if we were to divide equity mutual funds, we could do that broadly in three distinct buckets. One would be your diversified mutual funds, which invests across large cap, mid cap, small cap. And the fund manager has the complete discretion to move between, let's say, market caps, depending on what the strategy is, and is taking an active stock call. So that's broadly your first category of diversified equity mutual funds. Second, we have the sectoral and the thematic bucket, where the fund manager and the fund house is taking specific call in regards to a particular stock in that sector or an industry. And in both of these buckets, there is an active fund manager call that's happening, right? So these are the more popular strategies today that we have within equity mutual funds. Momentum fits squarely in the third bucket, which is what we call as smart beta indexes. So this does not rely on the expertise, particularly per se, of the fund manager itself, rather than it is following just a predetermined set of rules. So let's say for momentum, the index or the Nifty indices actually calculates a normalized momentum score, and it applies that to the stock, and based on that filter, the stocks are actually filtered down to about 30 from the top 200 companies. So that's basically where I would say we would slot in momentum strategy, momentum funds. And simply, I would put momentum as a strategy works well, typically in a rising bull market. So think of something which has already been doing well. The momentum fund basically goes and buys that and stays invested for a particular period of time until the strategy changes.
Got it. So Varun, generally traders think of it this way, right? That if koi cheez upar ja rahi hai, to it will go up. That's the assumption when momentum is considered, right? And that's a trader's mindset. But for somebody who's starting off, who does not know as to how to go ahead and invest in stocks which are momentum, would you recommend these funds? Because generally the fact that to buy something which has already run up so much is very counterintuitive, right? So from that lens, how are you viewing momentum funds, and what should one consider before kind of entering these funds?
Right. So it's as you pointed out, absolutely, it's counterintuitive. The basic tenet of investing is to buy something lower than the intrinsic value, and then stay invested over a period of time to realize the fullness of returns. That's what you teach when you want to invest in stock markets. But here, momentum is sort of doing completely the opposite thing, where it is buying something which is already hot. So the mindset of, let's say, the general public is what happens when you end up buying at the peak, right? The thing with momentum, Mahima, is it usually captures the market cycle, the market trend, and the trend itself usually lasts longer than what most people expect it to be. So let's say if the company is having a good quarter, then it usually takes a certain amount of time for the entire good news to get reflected in the price of the stock. And that's what momentum as a strategy is essentially riding on. But I think it also usually comes with its own set of downfall, that if you end up investing at the peak of the market, then maybe for a elongated period of time, 18 months, 24 months, you could see a scenario where you have bought at the peak and then you have not realized any sort of meaningful return out of that strategy. And that's why it's usually better that, I think, rather than chasing momentum stocks per se, at least the risk tends to get a bit diversified if you are doing momentum as a strategy at the fund level, whether it is an active fund or an index fund. At least your risk gets dispersed across a wide variety of stocks compared to single stock picking.
Right. Varun, the other factor is that generally in a mutual fund, it's said that, mutual funds are looked at from a long-term perspective. And, in certain intervals, of course, you keep checking as to how they've done, whether it's time to exit or not. But for momentum funds, I think it's important for somebody who invests in a momentum fund to keep a track of what the markets are also doing. Because at the end of the day, they will have to make a decision as to when to enter and when to exit. So for somebody who is willing to kind of invest in these funds, what would your advice be in terms of market tracking and the way forward from there as to how they can take entry and exits?
So I would say usually in a diversified mutual fund, the timing element tends to get eliminated significantly. Let's say if you're investing through an SIP, but let's say even if you were to do an lump sum investment into a more broader diversified mutual fund, at least over a period of time, your risk sort of gets balanced out. What we did is we basically pulled in some data, Mahima, and saw how momentum as a strategy has worked in different market periods and cycles. So let's say if you invested in the momentum fund from the start of the bull market in 2023 September, right until September 2024, you would have gained about 65-66% return compared to about 32-33% for the Nifty 50. But let's say what happened if you invested at the peak of the market, which was September 24, until June of 2026, the momentum fund is down about 10% compared to Nifty 50 of 3%. So what this essentially is telling us that yes, timing element in a momentum fund, in a momentum strategy tends to be slightly more tricky, but it's more important given just the nature of the strategy itself and how it tends to run. So I think that is a critical point, I would say, what investors need to keep in mind so as to not have the risk of investing at the peak. If you think the markets are overheated, I think at that point in time, probably spread out your investments in a momentum strategy over a 6-month, 9-month period so that you can benefit from the correction. But let's say if we are in a period like right now where the markets have consolidated, have been through a time and a price correction, then obviously relatively momentum as a strategy could be slightly more favorable for your portfolio compared to more plain vanilla indexes or diversified mutual funds.
Got it. Okay. Varun, the other aspect in terms of risk, because one, of course, market volatility is the utmost important factor, right, for momentum funds or for that matter, any other funds. But apart from that, what are the risks that definitely one needs to watch out for if there's a checklist in place?
So I would say there are broadly just two risks that investors need to keep in mind. Number one, obviously, it tends to be significantly more volatile than a Nifty 50 or a broader index or a mutual fund. So it tends to come with its own share of ups and downs. It tends to be higher than what your regular mutual fund can provide you. And second are the drawdowns. So what I basically brought up from the data that I presented just a while back, since the drawdowns are significantly sharper, the recovery also takes that much longer. So just to put it simply, if your fund is down about 15%, it needs to recover about 17%, 20% to get to the high water mark, compared to, let's say, a more diversified fund which may not fall so much. So the recovery also takes slightly shorter period of time. So that is something that investors need to keep in mind, so as to, if you end up investing at the peak of the market, and that's what we generally see, that once momentum as a strategy is back in action, I think that is typically the time when investors also want to pile onto it. So that is something that I would request investors usually to avoid, and not just chase the recent past performance, because if the market cycle turns, if we enter into a phase where the markets are either flat or directionless or choppy, I think that at that point in time, momentum as a strategy could also falter.
Got it. Varun, the other aspect, because, and this comes from a fact that I track fundamentals of the company, but at the same time, I also look at technicals sometime. So for somebody who just looks at fundamentals of the company and has to say the particular stock that is there in a momentum fund is sitting on a very high P, very high valuation. Despite that, the momentum fund believes that, this is riding on momentum and the stock will run up further. So considering that dilemma, what should one keep in mind? Should they completely ignore valuations while kind of investing in a momentum fund?
Mahima, so what happens in a momentum fund is basically there is a very predetermined set of formula based on which the momentum score is actually applied. So the fund manager is not really taking a call over here. Whatever the formula basically ends up telling you, the fund manager goes and buys that in that much proportion. And that rebalancing tends to usually happen on a semi-annual basis. So let's say we enter a market which suddenly changes and the fund is still holding on to winners from the past. It would not be until the next rebalancing date when the fund would be able to actually move out of that and then rotate back into the newer set of winners. So there is obviously a time lag element as well, where the momentum strategy, could have a time lag and maybe provide you with subpar returns compared to other funds. So it is not really looking at what you pointed out as fundamentals, PE, PEV, dividend yield, free cash flow, so on and so forth. Simply based on what the formula tells, they just go and buy that in that proportion and holds that until the next rebalancing date, or once the newer set of winners actually come based on the formula that is applied. So I would say investors should not tend to focus so much on, let's say, from a fundamental perspective, what the momentum fund is holding, because it's really just, doing its job and replicating what the formula is telling the fund at the end of the day.
Just one last quick one, and that is that if somebody is looking at investing in these funds, what percentage of their portfolio should have exposure to momentum funds, and is this the right time to make an entry?
So I would say it's usually recommended that you think of this as a satellite position in your portfolio. So try and complement this with your diversified flexi cap, multi cap funds. What a nice analogy that I usually like to use is think of this as a spice rather than the main dish. And if used in correct proportion, I think it could act as a kicker in your overall portfolio return. So definitely not, I would say, over-index on momentum as a strategy just because it has done well in the last 2 months, 3 months, because you also need to have the holding power to see it over a 4-year, 5-year period, so that you can deliver that additional return compared to your more diversified funds. And as of right now, I would say, yes, given where the markets are, definitely this could be a good time to either initiate fresh position in a momentum fund, or if you're under allocated to it, then our advice usually is to stick to about 6 to 7% of your portfolio at best. So if you're under invested from that point of view, then this could be a good time to, top up and allocate to momentum.
All right, perfect. Varun, thank you so much for taking out the time and helping us understand the entire concept of momentum funds and when and where should one invest in. So thank you so much once again.
Thank you, Mahima.
All right, viewers, with that, an important, conversation that one needs to consider is with regards to motor insurance. Because of flooding, because of rains, a lot of cars are being damaged. And as to what does your insurance cover and what it doesn't, and what should you definitely look at in your motor insurance is something that Ridhima is joining us to tell. Ridhima, what have you picked up from your sources, and overall, what should one consider while having that clause of flooding or disaster in the motor insurance?
So if a tree falls on your car, how can you claim your insurance? So this comes under motor insurance, and comprehensive policy covers such damages. Tree damages come under the own damage section of the comprehensive policy. Now remember that third-party motor insurance does not cover damages done to your own vehicle. Now what can the policy holders do when such damage happens? So firstly, they have to report it to the insurer, as they need an intimation of 24 to 72 hours. And after that, you must take the pictures and videos of the damage done and must not get it repaired before the insurer does its survey unless advised to do so. Now what doesn't come under your policy? Now firstly, your deductions and your depreciation cost might have to go out of your own pocket, as this might not be covered under your policy, and this will vary policy wise. Now, while there are other add-ons like zero depreciation add-ons which can give you extra cover and save your money, other add-ons include engine protect and return to invoice that can also give you extra coverage during the monsoon period. Now the motor claims are already increasing every year during the rain, specifically due to waterlogging and flood incidents which damage the vehicles. And even if we see Mumbai right now, in the past 7 days due to heavy rains and waterlogging, around 1,100 trees have been uprooted and damaged, and that has also taken a toll on the vehicles, and there has been damage on that as well.
All right, Ridhima, thank you so much for getting us those details. With that, viewers, completely out of time on this edition of Your Money Matters, but do stay tuned in for more news and updates on the other side.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा. आप अपना देख लो.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means.
Presented by Suzlon, good energies that work.
Rajesh K. Hegde, Managing Director at KSH International, joining in. Mr. Hegde, great to have you on. Tell us a little about this new manufacturing facility and the kind of capacity that you have commissioned here, how you expect it to increase to your overall balance sheet.
Yeah, so the new capacity that we commissioned at the Supa plant, this is overall, it's going to be finally, when it's all done, it's going to be another 30,000 tons of incremental capacity, where the other three plants are contributing to about 30,000. So overall, we'll have about 60,000 tons. This is being done in two phases. The first phase, which we have already completed, which is about 14,000 tons, which takes our cumulative capacity to about 44,000 tons by the which is available for this entire fiscal year. And we are in the process of adding the balance 16,000 tons to take it to overall 60,000 tons of magnet winding wires.
Okay. And how does this add to your total capacity? Do you have demand for the additional capacity that you're adding locked in already?
Yes. So, like I said, I mean, overall, we'll have 60,000 tons of capacity eventually by the end of this financial year. And, primarily 75% of this is going to be more tilted towards the specialized winding wire, which is used in the transformer, wind generator segments. And also going into the 765 kV, feeding into the 765 kV and the HVDC demand. So, we do have, a good visibility for the full year, when it comes to the capacity.
So that's fine. What is the current capacity utilization that you will see?
So last year we ended at about around 71% because, we added the capacity more, in various phases. But overall, if you see at a company level, it was about 71%.
Okay.
Okay. Rajesh, Neeraj here. And I understand that copper pricing is not a problem for you because you are completely a pass-through. So let's leave that out. Right. I would love to know what's your view on the recent government changes on what is arguably your biggest segment, which is transformers, T&D, etc. Because now Chinese players have been given a 2-year window in that cohort. Now, if that comes in, manufactured in India, maybe does it increase the opportunity size for you? Have you already had some initial feelers, etc.? What's the sense there?
So the recent government ruling that the way we've interpreted it is that there are 4 companies that have been given this permission, of which one of them is a transformer manufacturer who's located in India, which is TBA. And the other 3 are more related to GIS equipment, where none of our products are actually used in GIS, in the GIS segment. When it comes to the transformer, segment where TBA has been given, I think the interpretation is that they will manufacture transformers in India for the Indian market, where I think, some time ago, there was some issue where they were not allowed to participate in the large government tenders. So, to cut it short, I mean, it will benefit us because TVA also happens to be our customer.
Okay. And one can see that while you've spoken fairly eloquently about the future in your con calls, your recent past performance has been very strong. Q4, in fact, in some sense, you could argue was a banner quarter for you. Do you expect that kind of momentum to continue for FY27? Because it does seem that everybody's talking about one thing, that there's probably going to be enough solar and wind capacity. There isn't as much transmission and distribution capacity to ensure that power reaches, and therefore this is a multi-year cycle. What's your sense of how you can have growth for the next 1, 2, 3, 4 years until India reaches that 2030 targets?
Well, if you look at our company, we are not just dependent on the local market. We are more a global player, where about 30% of our production is exported to global companies around the world. And all of this goes and feeds into the T&D segment. If you see, if you see this segment in India, coming to our growth, last year we grew at about 20% odd. We are, very positive about, achieving this kind of growth in this year because we have the capacity available with us also. And we've seen most of the customers are also having very strong order books. And I think that should help us achieve our target for this year as well.
Sorry, Rajesh, sorry, I'm a bit confused. Did I hear you say 20%? Because I thought that when I looked at the numbers, and maybe I'm wrong, correct me here, but I thought your revenues grew about 60%, your profits grew northwards of 60%.
I'm talking about
volume. Okay, okay.
Wise.
So what does that, okay, fine, excuse me. So what would that volume growth per se translate into in terms of revenue growth or EBITDA growth as the case may be? Because it's passed through for you.
So when you look at, last year we closed off at an average of about 67,000 rupees per metric ton, EBITDA per ton. Last quarter we closed at about 74,000. So obviously there's an upward trajectory out there. But going forward, we expect, there's a lot of things that contribute to the EBITDA per ton. Is the product mix that we do, the exports that we do. But we've, mentioned in our previous call also that we should be comfortable, between that 67 to 74,000 range that we have provided.
Okay, just trying to understand. What is the sort of demand outlook that you're seeing? Because your current demand is fairly strong. You spoke about not too much of an impact of Chinese companies being allowed to come in. But do you have visibility of sustaining those levels of demand, Mr. Hegde?
Yeah, so if you look at, 75% of our production actually goes into the T&D segment. And if you look at the T&D segment, right now, almost every customer of mine is in expansion mode or already expanded capacity. Some of them are doubling, and this is happening globally. It's not just in India. And we also, we are the largest exporter for specialized magnet winding wires around, from the country as well. So normally we work with these customers on a long-term basis where, some of these customers have vintage of almost 20, 25 years. So we expect, the same momentum, if my customers are growing, obviously we would also grow along with the customer.
Okay, thank you so much, Mr. Hegde, for joining in today and speaking with us. That was Rajesh K. Hegde, Managing Director at KSH International.
Kuldeep Jain, Founder and Managing Director of CleanMax, Johnson with more details on this commissioning and what does it mean for the time side. Kuldeep, thanks so much for joining in. You commissioned 530 megawatts in Q1, the highest ever in your history. Was this a one-off because of project timing, or does it indicate a structurally higher execution run rate?
So Neeraj, what we've guided is that this financial year, we will add a minimum of 1500 megawatt. We're obviously targeting a little more internally so that we can undercommit and over-deliver. But yeah, it's been a record quarter. Till a couple of years back, like two years back, 500 megawatt would be what we did in a year. Now we're doing it in a quarter, right? And it really is down to two things. One is record high demand from corporates for cheaper, greener power, right? And the second is, of course, we have over time ramped up our execution capabilities to be able to deliver at this scale. So both go hand in hand.
Okay. Kuldeep, what about, just wanted to understand the model that you have. You mentioned B2B. Usually B2B businesses would have lower ROEs, lower margins, and you are saying that you actually have a higher one. So could you just explain that model to us and the returns and how it will work?
So Neeraj, our model, I founded this company in 2011. Since then, 100% of our business is directly with corporate. So it's direct to consumer, the consumer being a corporate, right? It's direct to consumer. If you look at who are our consumers, about 83% of our clients are AA, AAA or multinational. So we are really serving the biggest and best corporates. 42% of our volumes come from data and AI customers. We in the last quarter alone announced new deals with Meta, Google, and Apple. As a result, our tariffs are higher. So, we have 2,600 megawatt contracted yet to be executed, but that is at a tariff of 3.81. Compared to in the utility segment, the comparable tariff would be somewhere about 2.75, but going direct to consumer, like in any industry, allows you superior pricing, allows you greater choice of customer, greater repeat business. And yes, because our comparison is with utilities, it is also then lower bad debts or lower receivable number of days. So, we get paid on time every month.
But I'm still inclined to ask you, why are tariffs higher? Because I think B2B businesses, tariffs would be lower, right?
So, Neeraj, in the utility business, we are the B2C. We are direct to consumer. Consumer is a corporate, but we are B2C. The alternative is you participate, what the utility companies do, they participate in a reverse auction with a utility who is a power distributor. So, they don't actually sell to a consumer, they sell in the wholesale market. And the power distribution company sells to the eventual industrial consumer. In our model, we sell directly to the industrial consumer. So the utility companies like an Adani Green or a Acme or NTPC Green are in the wholesale part of the market. We are in the retail part of the market. So logically, we enjoy a superior pricing, superior return on assets, return on equity.
Okay, so if that is indeed the case, could you give us a sense of the growth visibility? Because, I mean, you have a contracted renewable portfolio of what, 5.2 gigawatts or 5.7 gigawatts, and there's new contracted capacity as well. Could you talk a bit about that?
So, Neeraj, at least for the next 3 years, including this year, next 3 years, we see EBITDA CAGR at least 50% or more. Right? So, giving you a slightly longer term picture than just this year's capacity addition. But yeah, if you look at the amount of capacities we have contracted and the run rate at which we are putting it up, I think a 50% kind of CAGR for at least 3 years is pretty visible to us right now.
Okay, so 50% EBITDA CAGR. What about operational capacities? You've crossed 4.2. Where do you expect the operational portfolio to reach by end of FY27? 5.2 or higher?
Something like that. That's the guidance we have given to the street, that it will be about 5.2 gigawatt or so of total operational.
I hear you. Okay. Now, data centers, right, such as the STT GDC, Iron Mountain, Princeton Digital Group, etc. All of these are emerging as major customers for you in this category. How large can this whole data center opportunity become for you over the next 3 to 5 years?
So, Neeraj, if you just look at the pure rear view mirror outlook, the business contracted with data and AI clients grew 10 times in just 2 years. 10 times in 2 years. We grew from 240 megawatt contracted in March 2024 to about 2400 megawatt contracted with them. We've just announced big new deals with Meta, Google, and Apple, and continue to keep doing a lot more with all the data center clients we have, like Equinix, NTT, STT, Iron Mountain, Princeton Digital, L&T data centers, and so on. So all of them, they are growing tremendously. And we've had the benefit, Neeraj, for ever since we started, we've really focused on that segment. Our first rooftop project was for a data center. First solar group captive plant was for a data center. First wind project was for a data center. And therefore, we've benefited from the wave which has come because we've always been serving them. We've just grown with that wave.
Okay. Okay. So therefore, if data centers is good, you reaching 5.2, etc., 50% EBITDA for 3 years. If what happens post 3 years if data centers are indeed such a big opportunity for you?
I agree, Neeraj. And while it's not a prediction, here's an interesting number. When you say that someone's setting up a 1 gigawatt data center, right? Like, for instance, if Google is saying we are putting up 1 gigawatt in Vizag or any such example, each 1 gigawatt of data center requires about 6 gigawatts, 6,000 megawatt of renewables, which combines with about 3,000 megawatt of storage, right? So each gigawatt of data center requires a 40,000 crore rupee capital investment in renewables to supply about 75% of the electricity requirement of the data center. So 1 gigawatt of data center is equal to 40,000 crore rupees capital investment in renewables to supply. And therefore, if you think about, yes, end of this year will be 5 gigawatt and, then will be 7 gigawatt and so on. Yeah, those are immediate, those are locked and loaded. In our business, next 12 to 24 months is sort of locked and loaded. But if you look beyond that, yes, I agree that just the immensity of what is happening in that space. So if that space needs 10 gigawatt of data centers in the next 5 to 7 years, that's 60,000 megawatt or something like 4 lakh crore rupees of capital expenditure. And yes, today, we as CleanMax enjoy about 35% market share of all hyperscaler business in India. And hyperscalers are important not just because they are huge, big companies, but half of all the new energy contracts in North America entered into by the hyperscaler. So it's the market, right? And in India today, we enjoy 35% market share of the hyperscaler contracts in India.
Okay. And lastly, Kuldeep, with execution accelerating significantly for you, what will be the funding requirement for FY27 and 28?
So, Neeraj, given we just IPO'd, we listed in early March, we are well set from an equity perspective. So we have the equity capital we need for the next few years of growth, right? And of course, then in terms of debt or fundraisers, there's the standard borrowing program which comes with every project. We also have co-investment partnerships where with people like Apple as well as Osaka Gas, where we co-invest in renewable projects together. Both of these joint ventures have CleanMax with a 51% share, and Apple and Osaka Gas may have that 49% remainder share. So I think about 2 months ago, Apple invested 100 crores in that joint venture. And I think last December, Osaka Gas put in 200 crores in that joint venture. And of course, we intend to do a lot more with them. So, yes, in a nutshell, no new equity raises for the next 2 years. Lots of partnerships and co-investments, which we quite like that model. And standard debt raise program with banks or tapping debt capital markets.
Okay, Kuldeep, really good talking to you and all the best for the quarter. We look forward to talking to you maybe in our studios post your Q1 numbers. But thanks so much for speaking today. The stock showing that bit of a spike, something about what the management said appealed to a few investors, I reckon. Doing okay, great first quarter performance. Let's see if that continues.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important.
Manish Sontalia, Director and Chief Investment Officer of MK Investment Managers, joins us on the show. Manish, great having you. Thanks so much for joining in. I mean, this flare-up that has happened overnight, it's the last thing we needed, right? Because the markets were kind of getting used to a new normal for crude. Maybe earnings will show a good space. And then you have this impediment, speed breaker, whatever you call it. Does this mar the optimism, or is it a wait-and-watch approach?
I don't think it is a wait and watch, Neeraj. I think it's a buy on dip. The ceasefire has fructified. Yes, you will see flare-ups time and again because of the nature of the deal and the relationship between the two countries. But as long as Iran is able to transport oil through the Strait of Hormuz and Iran is able to supply and sell those oil to their partners, there shouldn't be too much of a problem. I wouldn't read too much into the restart of the Iran-US war. I think these things are part of the course. Yes, you would have ups and downs during the day, and For the moment, we can see that there is some flare up, but really I wouldn't be too much concerned. I think the deal is done, and yes, you will have frequent repercussions about violations of ceasefire and each party blaming the other side. But as long as the oil is flowing through that strait, we shouldn't be too much of a problem.
Okay, so having said that, then the focus shifts squarely to now, in the near and immediate term, to what comes out of the earnings season, right, Manish? Would that be a fair assessment?
Yeah.
Okay, and if that is the case,
absolutely.
How are you thinking about this quarter one? Because there will be a few winners, maybe a few losers, but could this be very similar to 2020, Manish, wherein when pushed to the wall, India Inc. shows its ability to be resilient around margins, even if not around revenue, and will that shine through?
Yeah, so it was widely anticipated that Q1 earnings is going to get dented because of the spillover effects of the war, and the war ended towards the fag end of June, and now the focus lies on how Q2 and Q3 would shape up. Having said that, I think Q1 looking at around 8 to 10% growth on the Nifty 50. That's par the course. Oil and gas is going to be a vulnerable sector out here. Metals is again going to be a vulnerable sector out here. But apart from this, I think things should be pretty fine. You have a lot of tailwind in terms of price realization playing out in the top line growth. There will be implications on margin compression across the board, but valuations have become far more palatable. So, except for IT, which is basically quite headwinded in the overall scheme of things, FY27 should be north of 10 to 12% sort of an earnings growth for Nifty 50, and the first quarter in that context would be around 10% sort of a growth. So, I think market would have to look through and would be broadly looking through the Q1 numbers because the implications of the war. Focus shifts on Q2 and Q3, but there will be certain sectors which will be quite resilient and certain sectors which will be feeling the pain. So that's how things are stacked up.
Where is it that you foresee pain, Manish, both on quarter one numbers as well as potentially the commentaries? Are there sectors wherein both of these things could mar the sentiment?
Yeah, so if you look at automobiles, the volume growth is going to be very good across PVs, two-wheelers, HCVs, everything. But margins are going to be an issue. Similarly, if you look at consumption, consumer names, there is going to be a tailwind in terms of prices that you'll likely see on the top line growth. We have heard commentaries from the staples companies talking about mid-teens sort of value growth on the top line for Q1. But again, margins are going to be an issue because of the crude-related derivatives that plays out on the raw material bill of materials of the FMCG companies. That is likely to be the case. Top line is quite muted even for the consumer durable space as we step into the first quarter of the result season, and margins again are going to be an issue. So these are some of the spaces. If you look about the treasury gains of company banks, that's likely to be somewhat impacted. But pharmaceuticals again, a whole lot of supply chain bottlenecks will have implications both on top line and margins. So these are some of the sectors where there's going to be implication on top line and the margins per se.
Okay, where is the reverse, Manish? Where is it that you believe that things could actually turn out to be good, both on the developments that are happening around the sector, as well as potentially the quarterly performance? Is there a space like that?
Yeah. So the whole world knows about these spaces. So these are advanced manufacturing, high-tech manufacturing, aerospace, defense, power transmission, energy transition, anything to do with them.
Okay.
Data center, and all of these will be seeing massive tailwinds on the top line, the EBITDA and the bottom line. The only question out here is that what valuations are they palatable? Because this tailwind is not only for this quarter, but the whole of this year and next few years. But what is it discounting? Is it discounting FY28? Is it discounting FY29 or 30? That is the call you have to take.
Okay, let me twist this and ask you, Manish, where is it that Manish Sonthalia is, in the current construct of the market, happy paying top valuation premium to a story which might be justifying FY29, because FY27 and 28 is just way too expensive. And there are plays like that, right? I mean, aerospace and defense, in some aerospace companies, the valuations are probably expensive even at FY29 levels, if you will. So where is it that you are comfortable within this expensive cohort, and why?
So energy transition is here to stay, right?
Okay.
So if you don't find valuation palatable from a large cap perspective or well discovered names perspective, you look into the mid and the small cap names. Same goes with deep tech, right? If advanced manufacturing, semiconductor, these are well discovered plays, the top line growth is going to be there, but valuations are probably discounting FY29 and 30. Look at robotics, deep tech, again the mid and the small cap space. So all these spaces are going to be relevant from an FY30 perspective. Where the valuations have not got fully discovered is the space that you want to be. And there are enough opportunities. You have to open and look with your eyes where these spaces are. And a whole lot of these names are available in the mid and the small cap.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K.
Presented by Suzlon. Good energies that work.
Hello and welcome to The Big Question. I'm Nisha Poddar.
Now, India's monsoon season trends have given rise to a situation, a critical aspect for the government to handle: our food security. Our Union Agriculture Minister Shivraj Singh Chauhan has highlighted that the delay in monsoon has had an adverse impact on the sowing season, which may lead to deficiency in several crops. So the big question tonight: will delayed monsoon cause crop deficit, and what's the impact overall? We will be exploring this with the experts to find out how grave is this particular situation, and can proactive measures really handle and contain the impact. But first, hear out the Agri Minister.
अल नीनो के कारण जो कृषि की परिस्थितियां पैदा हो रही है, उस पर लगातार हमारी नजर है। मानसून में देरी के कारण तुअर, सोयाबीन और कपास पर थोड़ा प्रतिकूल बोनी पर प्रभाव पड़ा है, और अब किसानों को यह सलाह दी जा रही है कि इनकी जगह, क्योंकि अब देर हो जाएगी, तो मक्का, बाजरा और मूंग जैसी कम अवधि की फसल जो कम समय में आ जाती है, उनकी बुआई को प्राथमिकता दें।
All right, so at a very early stage, we have really figured out that this could be one of the situations that the government may have to handle because of the delayed monsoons. And let me welcome on the show to discuss this very important topic. We have with us Soumyakanti Ghosh, who is the Group Chief Economic Advisor for SBI, G. Chandrasekhar, who's an agriculture economist, and Shiraj Hussain, who's a former agriculture secretary, also will be joining people from the industry. Let's begin this particular discussion. G. Chandrasekhar, when we look at this particular situation, how have we really capitalized on the information much ahead of the curve in such a situation, and that the agriculture minister has already sounded this particular bit off? How do you see the situation at this particular moment?
Well, I don't want to sound alarmist, but the situation is certainly one that causes concern. Is number one, you have had a close look at the rainfall from 1st June till the 7th of July. There is a nationwide 24% deficiency in monsoon, and particularly northwest, east and northeast are severely affected, facing serious deficiency in precipitation between 25 and 50%. Some pockets in South India are facing deficiency in precipitation. But be that as it may, what is important is the window for planting is closing rapidly. Probably over the next 1 week or 8 days, 10 days, that will completely close. And therefore, we need to make an assessment of what is likely to happen in the rest of July and the whole of August and in September. The acreages are lagging last year's level very substantially in case of pulses, in case of cotton, and in case of oilseeds. And therefore, the advice of the agriculture minister is right, is appropriate, that go for short duration crops. And then therefore, the situation really is that we have to brace ourselves for lower Kharif harvest. I don't want to go into the numbers at this stage. I'm not making any forecast of production or harvest because it's too premature, too speculative. But one thing is certain, we are going to produce or harvest crops much less than what we had last year's Kharif, and much less than the target set by the government of India for this Kharif. Therefore, we need to brace ourselves. But look at oilseeds. We are already very large importers of edible oil. 15, 16, 17 million tons of edible oil. We are already very large importers of pulses, 5, 6 or 7 million tons of pulses. But we will continue to import. We are already importing. Last year, we imported 5 million bales of cotton. For lower production of cotton we will continue to import. The silver lining in all of this, I see, is rice and wheat stocks with the government of India, with the Food Corporation of India and other state agencies. We have adequate stocks of rice and wheat. And even if there is a slight shortfall in production of rice, I think there is no challenge to food security as such this Kharif season.
All right, you very well explained the entire impact as well as the situation at the particular moment. Not sounding alarming, but definitely a concern to be watched out for. Yes. Siraj Hussain, being in the ministry and having handled situations like this, according to you, how grave is the situation? And sounding an alarm bell at the current juncture while monsoon or sowing season is still there, the runway is still there, do you think some of it can be recouped?
I do not think that the situation is grave, even though there was a shortfall of about 40% in June. But we have seen this in the past also. And in the first week of July, the rainfall has been very good, except in East UP and Bihar, as Mr. Chandrasekhar has mentioned. So if the rainfall continues to be good in July and August, including the overall quantum of rainfall and the distribution, then I do not think we will suffer any significant loss in production. I must say that in 2015-16, when I was Secretary of Agriculture, it was the second consecutive year of drought, and yet the loss in production was only about 5%. Now we are much better prepared. There are better varieties of seeds which are available. Area under micro irrigation is higher. Area under irrigation itself is higher by about 10%. So depending on what happens between now and end of August, we should be optimistic if the rainfall continues to be as good as it was in the first week of July.
Right. So Siraj Hussain, there is still time that we have on our hands at the current moment to recoup some of it. And probably that can be the proactive measures could really help. But at this particular moment, we definitely see that there will be a shortfall when it comes to some of the products. And as G. Chandrasekhar has already mentioned, that we already import some of the critical food products and we will probably import more. Coming to that point, because import is not a great word, at least in this financial year, because the import bill has already risen because of the crude oil prices. And with now the recent developments, it looks like it's going to be a volatile affair for this year. Soumya Kanti Ghosh, hearing the experts on the agriculture and also the Union Agriculture Minister, what is in your summation, is the outlook when it comes to the economic impact of this from two points of views. One is the rural demand, which is heavily based on the agriculture and the monsoon season. And the second one, and also important, is food being imported more given the current circumstances, and that being a burden on the economy as well.
Yeah. Thank you, Nisha, for having me on the show. I think before I start, I'll just take a minute to just list out some of the data points. I think till the end of June, the situation was quite grave, but there has been adequate rainfall over the first week of July. So now the overall shortfall as of today, the result just came, it is around 15%. So I think we have made it from a 40% deficit to 15% deficit as on 8 July is a very good achievement. The second point to note is that if you actually look into the history for the last 26 years, and that is the problem, that there has been only 3 El Nino years. I think in 2002 and 3, 9 and 10, and 18 and 19. So, and they were dry years also where there were not adequate rainfall. So all drought, there were years of drought, but all drought years doesn't turn into an El Nino war, which is the fear as of today. But if you look into India's food grain production, I think which was a point which was mentioned by one of the panelists, is that we have become a lot of self-sufficient in food grain production. In the last 10 years, we have not seen a single year where the food grain production has declined. But it's also a fact that if suppose this year turns out to be an El Nino with rainfall weakening as being forecasted in the second half of July and maybe in August and September, then we could see a decline in the food grain production, perhaps for the first time in 11 years. So this is the first thing. The second thing is, more importantly, is on the food inflation. The good thing is that food inflation, even if it's an El Nino year or a drought year, has almost become agnostic. Basically, food inflation doesn't behave erratically even in years of El Nino and drought. If you look into the data, there was only 1 year, if I remember, when the food inflation went past 10%. I think that, but that was the year when there was a significant measures to ramp up rural demand. I think that was just after the global crisis, when the procurement prices were hiked by 40%, there was a loan waiver, and also there was a pay commission recommendations. So if I look into all the factors, as of now, the impact on the prices doesn't look so concerning if you go by the past data, but we should be careful about that. And the other good thing, positive thing which I'd like to say is that there are reports which has been indicating that and positive development on the Indian Ocean dipole. If it turns positive, it was marginally negative, that could bring good news for the Indian monsoon. So overall, we'll keep our fingers crossed. But as of today, I think there is still deficient rainfall in most parts of the eastern and northeastern India. But hopefully, I think if we have a better spatial distribution, and even if we have a rainfall shortfall, the first shortfall, I think forecast has been made of 10% deficit. I think this is also the highest in the last 25 years. So even if we are having a rainfall shortfall, even if say it is higher than 10%, maybe 15% or so, but if the spatial distribution holds good, then I think we may be able to survive this this scenario as of now.
All right, we'll be able to survive this scenario, and there will be different paths of the impact as well. But G. Chandrasekhar, when we look at this particular scenario and the different districts and geographies being impacted differently, and therefore different crops being impacted, at the current moment, what are the contingency plans that the government can really take forward in order to avoid the situation?
The Agriculture Minister has repeatedly said the government has district-wise contingency plans already in place. And he's also said enough short duration variety of seeds are available. And therefore, the key to addressing the current challenge is to ensure that these short duration varieties are delivered to growers in districts which are facing serious rainfall deficiency. Because as I said earlier, the window for planting or sowing is closing very rapidly. Maybe another 1 week, 10 days max, it will close. And therefore, farmers should be and are being encouraged to go for short duration variety. But the input, the seed, which is the most critical input, should be delivered to them absolutely in time for them to plant.
All right, so that is a solution. Siraj Hussain, of course, the government has sounded this off, but how does the ecosystem generally respond to these kind of situations with the farmer community as well, having a huge amount of participation in terms of executing the plans that have been spelled out by the government?
Actually, the farmers know much better than anyone else what to do in case of lower rainfall. So many of these seeds which are of drought-resistant crops, kulthi, for example, or bajra, for example, or minor millets, these are already available with the farmers. And if better varieties, you remember that last year in 2024, August, Prime Minister had released a few hundred varieties which were claimed to be climate resilient. If those varieties are actually made available to farmers, then it will be of great benefit. But I must say that the position of reservoirs in southern India is still quite precarious. I was looking at the data in Karnataka, for example. Last year on this date, the reservoirs had 610 TMC of water, and this year they have just about 250. So we are not out of woods yet. Therefore, it is important that we continue to get good rainfall in the balance period of July and also in August.
All right. Soumya Kanti Ghosh, of course, it was a larger question that I asked earlier, but let's break it down. How are you seeing the economic health of the country, given the crude pressure that we have already seen, and with that added the deficiency?
No, I think, Nisha, I think again the Indian growth story has always been, positive, and it's basically, it's a tale of two halves. I think if you all remember, before the war started, or when the war started, there was a downgrade of forecast, including the Reserve Bank of India at 6.6% growth rate. But things have changed significantly after that. Oil prices have declined, and also the fact that the measures which the government of India and RBI has taken in terms of enabling capital inflows into the country. I think the problem with the problem was basically it was a capital inflow problem. Capital was not adequately coming in because of whatever reason, geopolitical uncertainties. And after the war, after these measures, I think there has been a reversal of capital outflows. Capital inflows has been quite consistent post the war. Even the initial report suggests that on the FCNB deposit mobilization, the initial numbers are also quite encouraging, and we believe that around 55 to 65 billion of inflows could come into the country, and the number could go even higher. So at this rate, I think Indian external sector will look much better. The current account deficit initially, which was projected to go more than 2%, will now decline significantly below 1.5%. The rupee will appreciate from the current levels. And most importantly, the numbers, most importantly and most surprisingly, the economy has continued to stay resilient. I think if you remember the last quarter growth rates, the number was at 7.8%, which was the highest, which was at least 50 basis point highest than the market estimates at the highest end. I think we are given out a number of 7.3%, but it was even exceeded by that. And the first quarter projections are at 6.8%, but if you look into the leading indicators, there are a little bit of moderation, but I still believe the growth ultimately could top 6.8%. So I'll not be surprised that if there is an upward bias to the growth forecast, which was initially 6.9%, the Reserve Bank downgraded 6.6%, it could go again towards 7%. But we have to note this with caution. There are a lot of uncertainties. Today also there has been some flare up in the Middle East, and this I think will continue. This geopolitical uncertainty of communication talks, communication breakups, markets being volatile, this will continue. But a good thing is that Indian economy has continued to stay resilient across all the shocks, and I think that's the best thing which could have happened to us on an overall macroeconomic front. So overall macroeconomics, I think there are uncertainties. Of course, there are uncertainties, but I still believe that, I will not be surprised if the growth is towards 7% in the current fiscal.
That's right, Soumyakanti Ghosh, because there are many moving parts, and even though this one may be a slight bit of concern, but on the other hand, the estimates were also on crude being above about $80 per barrel for the entire year. So we came down from that for a long period of time, and now let's see how the things really pan out. So there are many moving parts. We'll have to see what factor really is offsetting the other. Well, G. Chandrasekhar, when we talk about the water aspect, while the delay in sowing the acreage has been a concern, and that will end in 1 week. After that also, India is the biggest user of underground water. In terms of the reservoirs as well, now our reservoirs are getting filled. We are recovering from the earlier deficiency. How do you see this situation for the rest of the irrigation year?
This is, of course, a silver lining that our reservoir levels are rising, primarily because of heavy rains that we are witnessing over the last 1 week or so. But that's not the end of the story. Primarily because these reservoir waters will be used over the next 2 or 3 months, and therefore, what if there is further aberration in the progress of the monsoon in the second half of July and in August, etc. We don't know. We don't know how it's going to pan out. And therefore, it is not time to celebrate. It is time to be cautious. We have to remain optimistic, there is no doubt at all. But the water stress, in my view, is likely to continue. As our Siraj Bhai said, in the southern India, for example, reservoir levels are not satisfactory, well below the satisfactory level. Therefore, that's a cause for concern. Kerala, South Interior Karnataka, and in Maharashtra, your Marathwada region, they're all facing serious rainfall deficiencies, and therefore reservoir levels in those meteorological subdivisions are well below what they were last year. And therefore, it is a matter of concern. God willing, if the rains continue, the water will be replenished, but that only brings relief, which of course is important.
That's right. Siraj Hussain, you mentioned about the reservoir problem as well in different pockets, which will need different solutions. What are the different solutions that the government can really take to arrest this kind of a situation now?
See, the most important thing is the pattern of cropping and the incentives for various crops. So only the other day, Dr. Gulati wrote a very good piece in which he said that several state governments are giving bonus on paddy. 3,100 rupees in several states against the MSP of some 2,500 rupees. You are procuring too much rice and then you are giving it for ethanol at half the economic cost. So obviously a lot of change is needed in the incentives for various crops.
All right, a lot of change is needed in incentives, but long-term measures of solution also are required. Soumyakanti Ghosh, let me focus on one particular aspect, maybe too early to talk about, but it's earlier spoken than never. Food inflation has been a critical component of our inflation, and that has been a worry for a certain period of time in the middle as well. And now that it had really come down, and with this particular monsoon season and the way we are seeing deficiency, delay in crop sowing, do you foresee food inflation to be a problem for the larger part of this financial year after the monsoon season?
No, I think this is a very important point, Nisha. I think regarding the food inflation, as I said in the beginning, that food inflation has somehow been contained, and one of the possible reasons, which I think is also needs to be also accepted with data, is that there has been significant development in the rural infrastructure across India. So what is happening is now that the crops are, and there is also national highway, we are now getting constructed to the mandi. So the transportation of the food grains has become easier than it was earlier, the transportation and logistics. So that is one of the issue, that why this uneven distribution of food grains across the country in terms of the production, consumption and also the distribution is somehow getting addressed. But having said that, if you look into the past data also, even in years of drought and El Nino, food inflation has been contained earlier also. And I think I just, and that was only 1 year which I mentioned when the food inflation actually was in excess of 10%. So I am optimistic on the food inflation trajectory. But as I said to you in the beginning, that while this rainfall recovery is welcome, 15% deficit, but we have to travel a long distance. There are indications and there are reports, and I think for the first time in the last 25 years, the first forecast, the second forecast of the IMD has been at 90%, which has never happened. So even if you are able to get, say, maybe somewhere closer to 90%, because my sense is that the numbers could drop below 90% of the long period rainfall. So in that case, even if the shortfall says 15% or lower, only a good spatial distribution will be able to save us. But what is important to note is that I think if the deficit goes a little higher, food inflation, there could be some impact, but I don't think the impact, if I look into the past trends, will be that significant.
All right,
and
not
also
that.
The fact that
That significant, Soumyakanti Ghosh, sorry to butt in, but we have Nitin Puri, who's the founder of Kisan Se, who's now managed to join in this conversation. A quick take, Nitin, you are in touch with the farmers. Your company sells the organic food straight from the farms. We are discussing about the food deficiency that can really take place because of the delay in sowing, because of the delay in the monsoon season. What is the on-ground reality? What are you picking up?
Thanks so much, Nisha. I'll give you a slightly different perspective. India is actually home to thousands of native seed varieties in various crops, which are actually highly resilient to the kind of challenges that we are seeing today. We talk of El Nino, we are talking of the current monsoon deficit. There are so many rice varieties, for example, the Mapila Samba of Tamil Nadu, the Gorakhpur Kala Namak rice of UP. And in every nook and corner of India, you will find many such rice varieties which are actually stress tolerant, consume less water, and need much lesser resources than many of the so-called modern hybrid agricultural varieties need. Now, this is a kind of resurgence that is needed both at the consumer side to demand and ask for such products. And when those signals go to consumers through companies like Kisan Se, and there are so many other companies that are offering traditional natural food products, it incentivizes farmers to go for such crops that are actually climate resilient and which can actually ward off the ill effects of the challenges that we are seeing today through these discussions. And more people, more and more farmers, whether it's rice, whether it's
pulses, whether it's millets. There are hosts of hundreds of thousands of traditional Indian food varieties which can offer a very, very great alternative to ward off the ill effects and the challenges posed by climate change. That's my 2 cents.
All right, Nitin Puri, thank you so much for giving that 2-bit and a much bigger plan of action of not being dependent only on monsoon is the need of the hour, and that could be for a later discussion. Out of time completely on the show. Soumyakanti Ghosh, thank you so much. G. Chandrasekhar, Siraj Hussain, Nitin Puri, thank you for a very riveting discussion on a very critical matter of national importance. With that, it's a wrap on The Big Question. Thank you so much for tuning in.
Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Presented by Suzlon. Good energies that work.
It's a nasty war. Thousands and thousands, mostly soldiers,
are being killed. The battlefields, I see pictures and it's horrible. He thinks it's horrible. We all think it's horrible. And the president wants to get it done, and I believe that President Putin wants to get it done, and that should be a good combination. Thank you.
Mr. President, what is your assessment on Ukraine's strike on Russian oil refineries and military factories?
Where are you from?
Ukraine.
Phrase the question differently, please.
Ukraine deliver strikes on Russian military factories and on oil refineries, and they ran out of gas.
Marco, why don't you answer that? Because you're right in the middle of it.
Yeah, no, I think what you're discussing is the ability of Ukraine to reach deep inside of Russia and conduct strikes. Sure. I think that's one of the dynamics that's changed in this war over the last few months, and that is that Russians are finding it more difficult to defend their own airspace. And what we hope that means is that it's going to create the space now to negotiate the end of this war.
It's an escalation, but it's also an escalation that can help lead to an end. And,
Mr. President, what makes you think that Mr. Putin might be seeking for the settlement?
So where are you from?
Radio Free Europe's Ukrainian service. I'm from Ukraine.
Okay, good. Because I talked to him. I talked to President Zelensky, and I think that's all I've done. My whole life I made deals. That's, I guess, becoming president was making a deal, right? It was like a lot of little individual things. In the end, it's making a deal. And that's what I do, and I do it well, and I know when people want to make a deal. I think he wants to make a deal. And I do feel that President Zelensky would like to get back to rebuilding his country as opposed to, having all of this death and destruction. Ukraine has tremendous potential. He understands that. We talk about that. He talks about that more than he talks about the war. To me, I think you might find that more exciting than the war. It's brutal. The other's the beauty of it. I think he'll build a great country. I think he's going to build it. We have a little stake in that country now because we have some land in that country, but we have minerals. It's among the wealthiest. It's among the best land anywhere in the world for rare earth. And we have some rare earth. I look forward to taking advantage of it at the right time.
Mr. President, Europe to make Patriot missiles in Europe.
He's one of my favorite soldiers. I see him. He's central casting. Right? You doing okay?
Yes.
We see him at meetings. He's good. He's done a great job. Great job.
India's energy security during the conflict in Iran, India's transition to biofuel, and whether or not the larger debate around ethanol is more of a controversy being manufactured, or is there truth to some of those consumer complaints? To answer all of those questions is Petroleum Minister Hardeep Singh Puri in conversation with NDTV. Sir, thank you so much for taking out the time.
Thank you for having me on your show.
Sir, there's lots to talk about, from the ethanol debate to the latest that Donald Trump has done. But let me first address the biggest controversy that's happening. And then we also come into the latest in terms of Iran, given the fact that Donald Trump has said that ceasefire is over. First and foremost, the fact that there is now suddenly a raging debate with regard to ethanol, something that has actually happened months after the actual implementation, transition that has taken place. In your assessment, why is it that it's happening now?
May I take the liberty of, if you permit, qualifying your question to me a little, which is on why and timing. Just about 6 weeks ago, there was an equally strong, raging storm, and I use the word not controversial, storm on LPG, that cylinders had ended, there are no cylinders available. I was welcomed during the previous session in Parliament with reception committees wanting to gherao me because there were no cylinders. There was an assault at my residence on 4 occasions on cylinders. The question I asked then, which I ask you today, was there a cylinder shortage at that point of time? Were the complaints coming from individuals, or were these manufactured visual documentation on social media, etc.?
Okay.
Yes, we had a certain degree of anxiety on LPG shortages, because most of the LPG that we were receiving was coming through the Strait of Hormuz, and the countries producing LPG in the world are not many. A few of them, Saudi Arabia, UAE, etc., are again in that area, Qatar. And therefore, if the number of countries which supply LPG are constrained because of geopolitical strains, and yet we not only survived it, but we did rather well out of it. Equally, this controversy which you, and I use your words within quotes, E20, madam, has been around for nearly 2 years now. Nearly 2 years. Slightly short. I think E20 blend came into the market in April 2025.
Yeah.
So, April of 2025 to April, and we're already in the month of July. Okay. But I ask you another question. Before we reached 20% blend, we were at slightly less than that. And we were at E15 for 3.5 years, and I've never heard of any controversy then. Let me put it the other way around. Why does a controversy take place now? Especially, and I underline emphatically, there are 20 crore two-wheelers using E20.
Yeah.
20 crore. There are 20 lakh four-wheelers using E20. I don't call it a gut feeling, because people like me should not be going on gut feelings. But when I put everything together and I compile the evidence which is available, the fact of the matter is that we import 85% plus of our crude. Suddenly on 5th June, when we launched E85,
right,
in a limited number of stations, I think 47 in the National Capital Region, and we launched the largest selling, we launched means the company concerned, Hero Motors launched the largest selling brand as a conversion to E85. Suzuki Motors launched Wagon R, and Toyota Motors launched one of their hybrid using flex fuel, E85. My sense is that someone thought that if E85 takes off in India, this was on 5th June, which is World Environment Day, because things happened very rapidly after that.
Right.
Someone must have thought that, my God, if flex fuel takes off here, and EV already there is a thrust coming, etc., let's cast a doubt.
You're raising a very significant issue.
Well,
there,
I'm
sir.
raising it because you asked me very penetrating question.
True.
And I had frankly, before I came for the discussion, I kept, I appear in discussions with colleagues, individually, with newspaper correspondents. But I don't think we've had a firmer fix on the timing as we are getting out of this discussion.
True that.
Today we are on July the 8th.
Right.
And this controversy is about 2 weeks old, 3 weeks old. And it's not that on 5th June suddenly it arose. We saw signs of it. But I think the counter information which has been put out, that this is not something we've done suddenly, that E20 has been around for at least almost 2 years, that E15 has been around for 3.5 years. And by the way, in the last 18 months or 24 months, there have been no complaints.
Let me take some of those aspects that you pointed out. First, you said that there is a clear pattern towards fear-mongering when you linked the LPG fact to what is happening now. Do you think that this pattern in terms of fear-mongering or creating this kind of a fear psychosis, who's doing that?
Well, look, it's not for me to make those assumptions, or I can just point to some evidence. I went back to the LPG story only because fear-mongering comes naturally to people who have an interest in and a stake in trying to run down governance procedures, etc. You remember when we've had to face the pandemic, our vaccine manufacturing capacity had been almost, I'm talking about our domestic vaccine manufacturing capacity, it had been almost completely stopped in the public sector between, I think, 2010 or 6 to 10 or 12, thereabouts. Therefore, when we faced the pandemic, towards the end of 2019 and 20, we not only set up domestic vaccine manufacturing capacity, one plant in Pune, AstraZeneca, another plant purely indigenous in the south. We ended up making 220 crore vaccines and distributed most of them pro bono to free to our population, and exported also to 150 countries in the world.
So who's questioning India's credibility?
No, I'm coming to that. But where were some of our friends then? Modi ji, हमारे बच्चों की वैक्सीन कहाँ है? And I used to tell them that Rajasthan में आपकी सरकार ने कूड़े में फेंका उसको, पंजाब में उनकी सरकार थी, वहाँ पे मुनाफाखोरी. I'm not suggesting they are doing this. LPG, yes, they were in the forefront. When it
By they, you mean the opposition parties,
absolutely,
all of them.
they were in the forefront. In LPG, you can see the MPs lined up. You have that, and it turned out that there was no shortage of LPG. We had some anxious moments because the supply routes were choked. We took a number of steps. We ramped up domestic production. We diversified our sources of supply. We passed orders on the demand side. We moved to, many things. Domestic production went up from 35,000 metric tons a day to 54,000 metric tons.
Yeah.
A massive increase. But I come now to ethanol.
You know, the politics of it, you mentioned about opposition parties. Let me just quote exactly what Priyank Kharge, who's a minister in Karnataka government, has said, that this is actually an experiment on 3.6 crore Indians without adequate consultation. This is
What is an experiment?
The entire ethanol transition.
First of all, I would like to remind this gentleman you've named, the program of biofuel blending or ethanol blending is one that was started in the year of the Lord, much before we came on the scene. I was ambassador to Brazil in 2006, and I recall even before that, the Honorable Minister for Petroleum and Natural Gas, Shri Manishankar Iyer, statement, which I've seen played back on several of your channels, speaking in Parliament in 2005 that we would do ethanol blending, etc. Now, if they don't want to take the credit for it, I'm quite happy. But they should not distort facts. It is not an experiment. What he is referring to, possibly, and there was a lot of fear-mongering on that, the learned Attorney General, in appearing before the Supreme Court of India in a case which revolved around and was anchored in total procurement numbers, because there was a stay in the High Court of Calcutta, my apologies, in Karnataka, where a best endeavor clause in a contractual agreement was sought to be interpreted as a mandatory requirement.
Okay.
So he was saying that, look, he was appealing against that in the Supreme Court, and there he used the word experiment, but it's not in the context of blending numbers. He was talking in terms of quantity. And let me explain that to, and through you, to this gentleman and others who might be deliberately causing misconceptions and misleading people. When we wanted to do 20% blending, that was a target to be achieved by 2022. No, to 10% blending by 2022 November. We did it 5 months in advance.
Right.
We had a target of 20% blending, for which we'd made a calculation that you need to produce 11 crore litre, 1100 crore litres of ethanol. I stand corrected, 1100 crore. Today, the production capacity has gone way beyond that because of a number of steps taken. A, it was a successful program. Secondly, we diversified the feed. We went from C-heavy and B-heavy molasses to cover sugar syrup. We covered maize, etc. And there were offtake agreements signed with banks. Today, the total capacity is close to not the 1100 crore litres, but almost double that amount. So the learned Attorney General was responding to that as an experiment, that the country is trying to assess how much it needs, etc., and we are trying to calibrate that. Now he has misinterpreted that to talk about percentage of blending.
Okay, so you've clarified on that, but you know the larger point, which is that you've India has advanced the timeline. 2025 is when E20 came into being. It was earlier expected to be around 2030, and there are already now talks about E25 probably being brought in. The question that many are asking is that were independent studies conducted, given the fact that there are many individuals and consumers who are coming to light and saying that, hey, there is an issue with regard to engine, there's an issue with regard to my car, not performing properly. Independent third-party audits. That is what many are saying.
I'm very happy you're asking that question. Because the discussion today is on E20.
Yeah.
But E20 has been around for 2 years. My point is, why is the controversy coming now? If you are looking at independent studies for E25, that we haven't even launched yet.
Right.
We are conducting those studies now. Insofar as E20 is concerned, I can tell you one particular manufacturer, I think it was Hero Motors, they have serviced 1.5 crore vehicles using E20. Not a single complaint. Then, as I mentioned to you...
But complaint is for older vehicles, before 2023.
I'm coming to that also. In older vehicles, the evidence that came through was on 2 counts. Number one, these number of cars, vehicle service also covers that. But what you get there is that if you have a gasket which has to be replaced at 50,000 kilometers, because you are using E20 on an older vehicle, that is a vehicle prior to 2023, you can probably have to look at it at 30,000. But again, Gauri, madam, why were those complaints not coming now? They come after 5th June suddenly. Insofar as mileage drop is concerned, yes, this is well proven in terms of automobile engineers amongst the discussion there, those who are fuel specialists. Ethanol helps acceleration. Ethanol has an octane count of, I think, 108, whereas normal petrol has an octane count about 84 or so. So depending on the kind of octane, higher octane that you take, but the ethanol does result in some percentage of less mileage. But equally, automobile experts will tell you the driving mileage depends on a number of factors. Driving habits, the kind of vehicle you're using, the kind of speed with which you are going. If you are going on an empty track and driving at a consistent speed, I'm not suggesting you do that, but say 40 kilometers an hour consistently, without zigzags, without brakes, without red light, you'll get a slightly higher mileage. So driving habits are very important, but it is conceded ethanol will give you a slightly less mileage, which again depends on a number of factors. Now, I said somewhere that, listen, ethanol is not something which has been invented by us. It's not even been invented by the Congress party. Madam, 100 years ago, the Ford Motor Company, when it launched the Model T, I think it was called, was talking about ethanol usage. Ethanol has been used in all manner of engines. Ethanol has been used in F1. In fact, I think the standard fuel for F1 racing cars is E10. So I think there is a lot of deliberate fear-mongering, etc. And my simple response to this is, all right, prior to 5th June, prior to our launch of E85, how many complaints did you hear on ethanol blending?
You tell me, sir.
Well, I've been minister since, I completed 5 years ago, I think, one of these days. And to me, this was entirely new. A new set of people who have nothing.
Let's say there was a vehicle before 2023. Let's say it was purchased only in 2023.
Let's say 2021.
2022. Okay, yeah. 2021. So it's 5 years so far. If, let's say, it has reached that 50,000 mark when the gasket had to be changed, or it realized it was done sooner than that, you are saying none of those complaints ever came to light till 5th of June right now.
Ma'am, why should I say something unless I'm 100% sure on it? I'm not giving you my evidence. I'm giving you the evidence of auto manufacturers. I'm giving you the evidence of those who make two-wheelers, those who make four-wheelers. They've been serving. I'm giving you another independent. You're talking about independent study. How independent is independent? There is a person somewhere in Chennai. He's called Madras Mechanic. He's written an account, absolutely technical account. He said he has serviced, he has analyzed thousands of vehicles. He's never come across these. Yes, it is theoretically possible that if your car is running more than the average, first of all, it's very difficult to work out averages. You may own a car. How many kilometers a day do you drive your car? When does your car reach 30,000 kilometers as against someone who's driving, let's say, an Uber? Okay.
So it's
those are the only requirements that experience has shown, that if a car is really driven to its optimum use, and instead of 50,000 kilometers, you might have to change the gasket, which is a simple, inexpensive part, earlier.
Okay.
On very old, much older vehicles also, there may be some rubber parts which require alteration.
Okay. Which brings me to ask about the other aspect that many are saying, which is the aspect about choice. Given the fact that Brazil is an example that is being cited, Brazil also provided choice to its consumers. Should choice have been provided to consumers when the switch is being made, so that they can choose whether they want the E20 blend or should they want to continue with the other blend or the other fuels at the pump?
First of all, this question of choice reminds me about something else, but I'll refrain from giving that example. How many choices are there to the Indian consumer at the petrol pump today? You can have petrol, diesel. The petrol can be base feed E20. The petrol can be high octane, which is more expensive. He can get CNG, and now we are increasingly going to be looking at green hydrogen. So you've got 6, 7 choices. Now what they are suggesting in choices is not choice. It's not choice. It's something else. I want E5, I want E10, I want E15, I want E20. We went through the E5, 10, 15. Every petrol pump today, either whether it's in an urban area or in a rural area, is built on limited amount of land. And underneath, you have these big tanks. You can't mix diesel and petrol. You can't mix E20 and E15. There's not much difference between E15 and E20. So why do you want a choice at E15? All right, you may say, I want pure petrol. In case, take the pure petrol. Now will come the cost of it. Oh, that is very expensive. Well, listen, most of this, ma'am, is market determined. If the price of crude was yesterday 72, but because of the escalation and conflict, it shoots up, the price to the OMC will shoot up, and to the private retail refiner will shoot up. So today, choice is there. If your demand is, now I saw somewhere, no, we are satisfied with everything else, all that damage part is over, all we say is we want more choice. Well, if you want more choice, the market, I'll say the market will have to look at the logistics of that. I personally don't think they're even serious about that demand for choice.
So you think it is logistically not possible in India?
Look, I don't use words like logistically not possible or impossible. All I'm saying is that, please, let's look at the larger context. When we started the ethanol blending program, okay, we have saved 1,90,000 crores by way of foreign exchange.
Okay.
If the world goes into conflict, the only way you'll get Atmanirbharta is to use your own resources. And my concept of Atmanirbharta in the energy sector is, as the Honorable Prime Minister, Samudra Manthan, more E&P, and he's given us 89,000 crores for digging more wells, and less pollution. So if you have biomass and you have that, why would you not want to use it? In fact, you should want to use more of it, and less pollution.
So if it actually saves foreign exchange for the exchequer,
helps control toxicity.
You don't have to import that much oil. But should that then pricing flexibility be passed on to the consumer?
No, I'm coming.
If E20 is cheaper, then should the end consumer not get that benefit?
Let me first of all say, let's be absolutely clinical about shielding the consumer. I think the Prime Minister has one example in the world which shines. He's not allowed the cost to be passed on to the consumer at all. We are the only country in the world, apart from Japan, where prices actually are the lowest to rise. In the last 4 years, if you look at prices 4 years from now, 4 years earlier and now, prices have actually come down. Why? Because on 3 occasions, the Prime Minister cut the central excise duty. November 2021, May 2022, and I think 10th March was the latest. Now my difficulty is the following. Supposing this escalation which took place yesterday in the Iran, US, Israel, and all the other states, Gulf, in the Gulf, Bahrain, Kuwait, and what. Supposing this spirals, let's say you come to a situation where a country like India, which imports 85% crude, is not able to import the critical. We'll need something to fall back on. And this program is both cleaner in terms of, and let me again give you the example, because it's not just example of Brazil. No, Brazil did it over an extended period of time. I ask you one simple question. I was ambassador to Brazil in 2006. They reached 20% and more blending before 2006.
Minister, shifting focus away from ethanol to the other aspect, the fact that, the war in Iran has, there are now all signs that it will probably escalate once again. There's been an attack by US. Donald Trump is on record saying that the ceasefire is over. Your sense of preparedness for more uncertainty going forward, given the fact that there is likely to be more volatility? Well,
first of all, respectfully, my perception on going forward and the dangers, I mean, there is uncertainty, but maybe that's how I'm completely anchored in the hope that wiser counsels will prevail and the rupture of the ceasefire. I know I've heard terms like ceasefire is over, that both sides will see merit in returning back to the ceasefire. So I'm starting with that. But having said that, I think yes, should that not be the case, and should we be in a situation in which, how would you put it, that the escalation or rather the conflict escalates in a calibrated manner or large scale, we are fully prepared. But again, as I will qualify that by saying, as per current listings, we have diversified our sources of crude, our sources of natural gas, but more than that, I think very soon our own domestic production, E&P, will go up. And on LPG also, we have demonstrated during the last crisis that we are able to suddenly ramp up production. And then we've taken other measures. We are shifting from cylinder gas to pipe gas. We are using more, we've encouraging people to use other modes, etc. So I think, yes, in a qualified way, I'd say we are reasonably well prepared.
All right, so I'm going to wrap this up right here. Thank you so much for being patient and for taking all my questions. Thank you for your time on NDTV.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time. Many of the
Presented by Suzlon, good energies that work.
Hello and welcome to Bottom Line. I'm Nisha Poddar. Let's take you through the top headlines that we are tracking tonight. US and Iran are back on the brink as Donald Trump says that ceasefire with Iran is over and signals probably he will attack Iran tonight. Iran warns US allies, says anyone supporting US is legitimate target. Oil prices jumped sharply as Trump announces that ceasefire with Iran is over. Brent crude surges over 5% and is hovering around $78 per barrel range. Market crashes sharply after Trump's remarks, with biggest intraday fall for Nifty in this financial year. Nifty closes in the red, down almost 2%, erasing last 5 days of gains. Geo Financial Services and Indigo are the top losers in Nifty. All sectors end in the red. Axis Bank sees exit of 3 senior executives amid leadership reshuffle. Departures involve leaders from institutional banking, debt capital markets, and trading operations. Government evaluates a phased shift to higher ethanol blends, with E21 likely by 2027. In an exclusive conversation with NDTV Profit, Petroleum Minister Hardeep Singh Puri dismissed concerns over ethanol blending, saying E21 has been no complaints in the past 18 months. EPFO 2.0 goes live as EPFO completes the site's project database for speedy claims and smoother access to the services. Prime Minister Narendra Modi visits Australia after Indonesia for annual Leaders Summit to strengthen strategic partnership. Talks to focus on defence ties and critical minerals. Traffic snarls after heavy rains batter the city of Mumbai. Reservoirs surge, and the water stock in the 7 reservoirs supplying water to Mumbai has reached 41.36% now. Let's take it to our top story tonight. Well, tensions between the United States and Iran have flared up once again, with President Donald Trump really declaring that the US-Iran ceasefire is effectively over. Trump said that he no longer wants to engage with Iran, calling further negotiations a waste of time. He further said that probably US will attack Iran tonight. The latest escalation really follows a series of military exchanges. US Central Command said that it struck more than 80 Iranian targets, including over 60 small boats linked to Iran's Islamic Revolutionary Guard Corps. Iran warned that US allies can be potential target for supporting US. Let's first listen in to what the US President Donald Trump had to say at the NATO summit in Ankara.
We attacked very powerfully last night. The very dangerous people from Iran, they're sick. There's something wrong with them. We said, go and do your funeral stuff. And instead of that, they start shooting rockets at ships yesterday. And so we hit them very hard last night, very hard. I would say 20-1, 20 times tougher. And I told them, every time you hit, we hit. And of course, they're dirty players, so they go after everyone, probably including me. I've been #1 on their list for years. And they're a bunch of scum, you want to know that they're scum. And so we don't like them. I don't like them. And they're evil people, and it's the denuclearization of Iran. And we're going to denuke it. We're not going to let them because they're crazy and they can't have a nuclear weapon. And they go around killing people. They've killed thousands and thousands of our soldiers. They've killed hundreds of thousands of innocent people. To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. Steve Woodcock, Jared Kushner. But they have to come back to me. As far as I'm concerned, it's just a waste of time.
All right, that was the US President Donald Trump speaking on Iran and some of the choicest words used for Iranians as well. Let's also check crude because the geopolitical premium is back. Oil prices are now soaring once again, and that's bad news for India, with both Brent as well as WTI up over 5%, and Trump's latest comments on the Iran ceasefire and uncertainty over the Strait of Hormuz have really put supply concerns back at the center stage of the market. So that's a big concern really playing out. In fact, these geopolitical concerns are already playing out on Dalal Street, and markets witnessed a sharp sell-off as the investors reacted to the latest developments in the Middle East. Now, the Nifty 50 tumbled more than 500 points today, while the Sensex plunged over 1,600 points with heavy selling seen across the sectors. Let me take it through to my colleague Parth, who's joining in to give us a detailed roundup of the market action as well as the highlights for the trading session. Parth.
Nifty has closed in red for the second day in a row, losing almost 2% today and erasing the gains the index made in the last 5 days. Today, Nifty saw the biggest intraday fall the index has seen since the start of FY27. If we talk about the index constituents, then Jio Financial Services and Indigo were the top losers in Nifty, both of them losing over 5% today. On the broader market side, it has outperformed the benchmark, but it still closed in a deep red. Nifty Midcap 150 closed almost 1.5% down, which was led by L&T Finance and Jubilant Foodworks, which were the top losers in the index, both seeing a downtick of almost 6%. On the other side, Nifty Small Cap 150 also saw a downtick of 1.9%, which was led by Aegis Logistics, which was the top loser, hitting the lower circuit of 10% today. On the sectoral side, all of those sectors have ended in red, with most of them losing over 2% each as well. Nifty PSU Bank was the top loser, down over 2.5% today. And Nifty PSU Bank has ended in red for the 5th day in a row now. On the constituent side, Bank of India and Union Bank were the top losers of Nifty PSU Bank, both of which were down over 4% today. On the sectoral trend side as well, Nifty Metal, Nifty Pharma, Nifty Auto, Nifty Oil and Gas, Nifty Financial Services and Nifty Bank have ended in red for the 2nd day in a row, while Nifty FMCG has snapped its 5-day gaining streak.
All right, so it was broad-based selling pressure on the overall markets, all on account of the escalation of war and the crude prices escalating. Moving on, then Axis Bank sees leadership churn as reports say that 3 senior executives have quit the bank recently. Piyush is here to give us all the details. Piyush, tell us.
Bloomberg today reported that 3 senior executives at Axis Bank, particularly in the trading department, in the treasury department, have put their papers. These 3 executives, according to Bloomberg, are Anil Agarwal, Vikas Shinde and Jimmy Tawadia. Now, these are not key managerial personnel, but they are senior executives, like we mentioned, part of the treasury team. On the other hand, Axis Bank has sort of become, the talent provider for the industry. We have seen how earlier, just very recently, Puneet Sharma, the bank CFO, put his papers to join HDFC Bank as its CFO. Last year, we saw how Mr. Rajiv Anand, who was the deputy MD at Axis Bank, joined to lead IndusInd Bank after the whole crisis unfolded, and he took over as the MD CEO of IndusInd last year. Vivek Gupta, who was the wholesale banking head at Axis Bank, has joined Intellect Design Arena as Chief Customer Officer. We we are also aware how in 2020 Pralay Mondal, who's the CSB Bank CEO now, he had left Axis to join CSB. Even Arjun Chaudhary, who had come in from Citi to Axis, joined Graham Finance as its MD CEO last year. We also saw Ravi Narayanan, a former Axis Bank official, joining SMFG India Credit as its MD and CEO. And finally, Mr. Jayaram Sridharan also joined Piramal Finance from Axis Bank way back in 2020.
All right, now SEBI has amended its Foreign Portfolio Investor Regulations, or FPI regulations, replacing the dollar-denominated registration fees with a rupee-based fee structure. Now, under the revised norms, Category 1 FPIs will now pay 2.3 lakh rupees, while Category 2 FPIs will pay 23,000 rupees for registration. Now, SEBI has also revised the exemption application fee and made PAN-related disclosures more stringent by mandating the date of birth or incorporation, while the new fee